and I expect them to have their own reactions in time. We're very dependent on their supply chain. And so the idea that we could completely decouple, I think, is misguided.
I'm going to just put you on the spot really briefly and wonder, can you tell, because we're all friends here.
Sure, go for it.
Do you have a major regret about your work in AI? And do you also have a major single goal?
Yeah, my major single goal is to show that it is possible to create safe and ethical artificial intelligences which are accountable to humans. There is a possible trajectory where some groups may recklessly experiment with algorithms that can self-improve. And if in 10 to 15 or 20 years time, those kinds of AIs are set loose on the open web in a reckless way, then I can imagine that possibly causing serious harm. And so for as long as I can remember, almost 15 years that I've been involved in AI, I've been trying to raise awareness and concern about the possible ways in which it can go wrong. And part of doing that is to show a bunch of practical ways that it can go right, both with writing my book and laying out a series of containment strategies and things that we have to do in politics to improve our governance and regulation, but also in actually building and making Pi, which I think is hopefully going to continue to remain a very safe and controllable personal AI that can work for you.
Mustafa, thanks so much for coming in. Been a pleasure.
Thanks very much for having me. It's been great.
Toner, thank you so much for joining us. You're a director at Georgetown Center for Security and Emerging Technology, and you're also an OpenAI board member. Dan Wang, thank you so much for joining us. You're a visiting scholar at the Tsai China Center at Yale Law School, and you've been studying technology and China for many years now.
And we've just heard from Mustafa Suleyman, and he thinks that China's emerged as one of the biggest contenders in AI. So Helen, I'm just curious to start with, do you think we're overestimating China's capabilities?
It's certainly true that they're a big player. And it's also true that we shouldn't underestimate them and that we have a bit of a history of underestimating China's ability to innovate. I mean, I think 10, 15 years ago, the story, at least in Washington, D.C., where I'm based, was, yeah, China can't innovate. If they're producing things that look like new technology, it's because they've stolen them. I think that's clearly no longer true. At the same time, I think it's also very possible to overestimate them. And sometimes I think I see that as well. So are they a serious competitor? Yes. Are they eating our lunch? No.
So that copycat culture, it's fair to say that most people are thinking, we're past that stage. Dan, what do you think of that?
Well, I think it's certainly the case that China focuses on different things. So President Xi Jinping is, I think, a little bit less enamored with the internet platforms, with a lot of the cryptocurrencies, with a lot of the AI businesses that Silicon Valley specializes. He's also a little bit less enamored of Wall Street and financialization and hedge funds. And if I had to think about what Xi's broad views are, it would be much closer to being something like capitalism with German characteristics, which is much more about building cars, building hydraulic pumps, building heavy machinery, the heavier the better, about all sorts of these major industrial projects. And I think China is very much a leader in things that include electric vehicle batteries now, solar photovoltaics. It is making a lot of electronics products, and it is innovating on a huge sort of a lot of the automotive supply chain. But I think they have a little bit less of a focus on AI, and therefore there is not so much political direction anymore to really push forward these consumer applications.
I think it's fair, though, that some of those areas, the US is also innovating very, very strongly. So are there any areas where China is innovating significantly better than the US?
Well, I would say something like electric vehicle batteries, where China has something like the 70% of all global expansion, all global capacity of electric vehicle batteries is now mostly in China. When it comes to the clean technology supply chain, again, these very industrial projects, these pieces of heavy machinery, that is a little bit more the focus. I think the US is really strong in things that include semiconductors, artificial intelligence, biotechnology. These are things, the smaller things, where China is not so good, but there are big areas in which China is way outbuilding the US.
I mean, the semiconductors is getting significantly better in China. I mean, partly maybe as a result of the Huawei issue. Helen, what's your view on the semiconductor side of this?
So China's definitely been investing for decades in trying to have their own independent semiconductor supply chain, and they've been making some progress. The thing to know about semiconductors is there's a huge range of sophistication, from the really basic semiconductors, computer chips that go in basic devices, your smart fridge, your car, up to the kind of more advanced chips that might go in a brand new iPhone, up to very advanced chips that go in kind of the data centers, gigantic warehouses full of computing, which is what you're training advanced AI systems on. So China has made a lot of progress on the more basic end of the semiconductor sort of scale, and is still really struggling to hit the most advanced end. And that's where, it's not even, you can't even say the US is, alone able to create those advanced semiconductors. But what you have is an incredibly advanced global supply chain.
Many describe artificial intelligence and its development across these two superpowers as an arms race. Is that framework misguided, do you think?
I think it's a bit misguided. I think you really want to look at what kind of AI are we talking about, and in what way might it be a race. I think the place where it's clearest that it makes sense to think in a competitive framework is in kind of military domains. So, it's just true that the US military really wants to make sure that it is keeping pace with, and ideally a little ahead of, the Chinese, or a lot ahead of the Chinese military in terms of what technology they have.
Dan, Washington has taken some steps to curtail some of China's ability to get their hands on the cutting edge chips that really power these AI platforms. What's your take on that? Is that an effective strategy, or will China just find a way to build their own?
I think that China is going to try to figure out a lot of the way to build their own. A lot of the chip makers now have been under very significant stress from US sanctions dating back to about a year ago now, released by the Biden administration, that is really stopping their ability to access not just the high-end chips, but also the semiconductor production equipment as well.
And I think in general, it's really difficult to distinguish between what kinds of technologies should the US really not want China to be able to develop, and where is it fine. So, you mentioned, clean technologies before, where China, if you're looking at, manufacturing solar panels, as you mentioned, EV batteries, a lot of other areas, China is doing amazingly at that. And what you're starting to hear in some, US policymaking circles is that maybe that's a bad thing, that China is making a lot of kind of clean technology stuff. And I find that a little sort of tricky to reckon with, is at what point do we want to really shut them out or prevent them from being, able to manufacture anything if it's something good, useful that we can use. Of course, if it's technologies that we think have really significant military value, I understand, but then it starts, the lines between those categories start to get very, very blurred.
It seems like these tensions are just ratcheting it up even higher as time goes on. With each administration, they're intensifying. So to your point, if we do need these other technologies, solar technology for this transition into a greener future, what kind of happens next? How much do we place on kind of the AI arms race that could then potentially work against us in climate change? Is that a concern, or is that too far in the future still?
Well, a few months ago, Beijing did announce some export controls on certain solar technologies involved in making production wafers.
So it's already happening.
It is already happening, that there are some threats out there that, relatively speaking, Beijing has been pretty restrained against retaliating against American companies of the likes of Intel, of the likes of Tesla so far, but these things could escalate more.
How does the relationship between, the ruling party in China play out against the kind of the development of companies?
I think the Chinese system is definitely more top-down when it comes to AI development. You see less kind of individual tech companies like OpenAI or Google taking the lead, and more these kind of multi-institution partnerships, or maybe you have a university and a tech company and a government, department all collaborating on big AI projects. That's much more common in China. At the same time, China is a huge country, so there's a limit to how much the government can achieve from the top. So a lot of what you see is sort of Beijing providing direction, providing ideas, providing sort of signaling of this is what we in the central government would be excited about.
Dan, how would you compare how the Chinese government is handling AI with its people versus how they handled social media?
Well, I think President Xi Jinping doesn't necessarily view AI right now, a lot of these ChatGPT-like applications, as some of the most economically productive things that are coming into our society. So I think that President Xi looks much more at AI like he would at Facebook or Twitter, now known as X or whatever it is. These are platforms like TikTok that, if you're asking me, is something like TikTok or Facebook really increasing my personal productivity? Well, I would say actually it is really horribly detracting from my productivity. And so I think that a lot of these AI platforms right now create speech issues. When an ordinary Chinese person sitting in Beijing or Shanghai asks AI, well, what happened in 1989? Well, what do you think of socialism? What do you think of President Xi's performance? These AI tools are having a lot of challenges actually answering socialist correct values that are in line with the government's ideas. And so these are major speech platforms, first and foremost, and perhaps not really the economically miraculous thing that raises our productivity growth at the very moment. Now, it might happen later on. Right now, I think the party views it as somewhere between economically not that useful and potentially very socially destabilizing.
So from a consumer standpoint, AI is it can potentially create more problems for the Chinese Communist Party. But then if you look at it from like a surveillance standpoint or military type of AI applications, that's kind of in a different camp. Is that right?
Yeah, that's right. And I think they're definitely, I mean, one area where China is, I would say, leading in AI is on surveillance. They really have leaned hard into facial recognition, voice recognition, even gait recognition. So how you walk in a crowd, can they pick you out by that? I think in the West, there's been some development of these technologies, but with a lot of criticism from civil society, a lot of hesitation, sort of, I would say, like very yellow light. And in China, it's been blaring green light.
On the topic of WeChat, I mean, when we spoke ahead of this, I think we touched on the fact that there are some generalized misunderstandings about China's approach to social media and data and AI. AI relying on huge amounts of data, and the perception is that because of things like WeChat and similar things in China, that there's this huge pool of data that the population in China is just very happy giving over and is used to giving over, and therefore is just sitting around waiting to be exploited by AI. And I remember that you made a pretty significant point. It's like, that's probably not really the case. And people think that's the case, but it isn't. So I wonder if you could touch on that.
Yeah, I think people have this perception that because the Chinese government is very controlling and has a lot of access to what's going on in Chinese citizens' private lives, that means that there's these beautifully curated, extremely complete, large databases of information that can be used to train AI systems or to do other things. But for anyone who's ever worked with data, you know that cleaning data, structuring data, making sure that the right information is flowing in the right places is incredibly challenging. So it's both true that the Chinese government can get very detailed information on the private lives of its citizens if it chooses to, and also true that it's incredibly messy the way that works, and incredibly difficult for any given actor to get access to something. So, for instance, a company trying to train some AI model using data is actually subject to a pretty significant data governance setup in China, data governance regulations that make it really challenging to use customers' data for things it wasn't already designed for, or that you didn't already get consent for.
Which we learned from Cambridge Analytica scandal just as one case, and there are many others. That is not the case in the US. It's not the case in Europe. There's a lot going on. I mean, the EU's AI Act is pretty widely praised by some people, not everybody, but it's quite broad and far-reaching. But that's not the case in China, in terms of what you're saying.
So China's setup is now more similar to the GDPR that exists in Europe. So around kind of protecting consumer data and giving people the right to opt in to different uses. Of course, in China, there's always the exception, unless the security services think that you might be a dissident, and then they're going to get whatever they want on you. But in terms of kind of companies, they're certainly relatively restricted in what they can do.
Switching gears a little bit, Dan, I'm curious about how China's sluggish economic growth recently weighs into the government's calculus and how they're thinking about AI's potential to spark social unrest.
I think that the Communist Party is very much involved in trying to think about, how to control possible social unrest. I was in Shanghai in November 2022 when there were protests in the streets denouncing zero COVID, denouncing the Communist Party by name, that these were things that were erupting. And so I very much sign on to Helen's description of AI, that China is leading in the AI of censorship. It is leading in the AI of facial recognition. That right now it looks very much like the US is a place where ordinary consumers can tinker with and play around on a lot of these AI tools, whereas in China is mostly reserving these very powerful tools for its own use, potentially to control society. That right now China is in a moment of economic weakness. This might deteriorate further, this might get a little bit better, but there is always this presence hovering over there that the state security might ramp up its technology really to make sure that there are no socially destabilizing incidents.
Well, Helen, Dan, thank you so much for being here. It's been great to learn from the both of you.
Thanks so much.
Thank you very much.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. AI cheer. Stocks in Asia climb alongside U.S. futures after Micron's blowout sales outlook reignites confidence in the AI trade. Brent oil erases all of its wartime gains after flows through the Strait of Hormuz ramp up following progress on a U.S.-Iran peace deal. And U.S. Secretary of State Marco Rubio continues his Gulf tour, meeting with leaders of the UAE and Kuwait to reassure Persian Gulf allies of the strength of President Trump's deal with Iran. It's just gone 8 a.m. across the Emirates. I'm Abir Abu Amar in Dubai. Let's take a quick look at where equities are this morning. Euphoria back to the scene when it comes to U.S. futures. 0.6 higher. Asian equities 1.5% higher. Now, everyone yesterday was waiting for those Micron results, and they came and they delivered. Micron is expected fourth quarter revenue to be at $50 billion. That compares to just under or just over $43 billion for the consensus of analyst estimates. So that really solidified the fact that the AI infrastructure is still very much in the game, still very much in demand, and that caused the wider sector to gain. The S&P did close in negative territory, but those results came after market. And so we saw Micron trading in the aftermarket 16% higher, almost 16% higher. Asian equities already trading. The Kospi in South Korea was gaining 5% in the early trading hours. And then the sense of this AI trade getting back to the scene, but also lower oil prices are fueling this relief in Asian equities and Asian indices across the board. We'll have Winnie in just a few seconds to talk to us about the details there. And then Brent crude, $72.5 a barrel. We've erased the wartime gains. We've erased all the gains that Brent has seen. At one point, it was about $120, but that seems like something from the past. At this point, we're seeing Brent crude dropping over the past 4 or 5 sessions. And even before the deal, our energy team puts out that even before the deal was announced, a combination of strategic inventory releases, a collapse in demand from China, and a substantial number of tankers sneaking out of the Strait of Hormuz through the war had led to oversupply in some parts of the market. So that's quite surprising, and we'll talk about that in just a few minutes. And then when it comes to the U.S. 10-year yields, they're gaining only slightly this morning, 4.41%. Now we await those key numbers out of the United States later today. Personal spending and core PCE are expected to affirm the U.S. Fed hawkish tilt. That's what our Bloomberg intelligence teams think will happen later today. We're also keeping an eye on the dollar. It is at a 7-month high, causing declines in other currencies, and also keeping an eye on gold that was roaming around the $4,000 level earlier this morning. Now, for a look at what markets in Asia are doing, Winnie Su is in our Hong Kong studio. Winnie?
Good morning, Abir. Pretty positive session in Asia today, supported by the lower oil prices and, of course, those upbeat results from Micron's earnings. As you just mentioned, revenue forecasts beat expectation from analysts, but also equally important, we are hearing these long-term contracts with the customers. That's also ensuring investors that the earnings at this level is likely going to be sustainable and that the demand for memory likely going to be solid. Now, that's why we are seeing MSCI Asia here up by 1.5%, and that's coming after 2 days of declines with tech-heavy gauges in South Korea and Japan leading gains, while Hong Kong continues to underperform. Now, you flip the board and take a look at the chip stocks because, yes, overall supported by Micron earnings, but specifically we have SK Hynix here up almost 9%. It does have its the support from the news last night that they are considering listing $29 billion on the Nasdaq, and that is really supporting the company given that it will attract a new flow of funds, and also it helps to narrow that valuation gap with its major peers such as Micron. And you can see that interestingly we also have Kioxia rising on the back of them saying that they are considering listing as well next spring. Back to you, Abir.
Winnie Su in our Hong Kong studio with all those market details. Now, stocks in Asia are climbing after Micron's blowout sales outlook reignited confidence in the AI trade. Micron forecast revenue of around $50 billion this quarter, shattering the average Wall Street estimate of about $43 billion. Let's bring in Shah Capital's head of public markets, Arti Chandrasekharan. Arti, good to have you on with us this morning. We've seen this rout in tech stocks over the past couple of days. We've seen a rally yesterday fueled by Micron. My question here is, have we seen a peak in AI demand, or are we expected to see more downside play?
Whatever has happened so far in S&P was largely driven by momentum trade, more so compared to last year and the previous year. And this momentum trade is what has fueled the AI rally, right? But it has been validated by earnings. We have been getting absolutely great earnings, great capital spending, company guidance being time and again re-emphasized, reignited, and you have earnings revisions on the upside. So overall, it seems to be positive. My only negative point, or rather the cautious point that I would be super careful about as far as AI trade is concerned, is about all these AI companies turning to the bond market, raising debt, and that's actually pushing them into a negative free cash flow. And that's not across all the AI names. Some of the AI names like Amazon, Google, and even the likes of SpaceX. So that's something which we got to be very careful about while picking the names of the stocks.
So looking forward, when it comes to the AI game, are we looking at a productivity story? Are we looking at an earnings story? Are we looking at a valuation story of a bubble about to burst? What are the pockets you're looking at when it comes to AI?
Yeah, it's all about the productivity gains, obviously, and it is also validated from the earnings point of view. Valuation is not as expensive as it was the beginning of the year because you're seeing increasing earnings growth, you're seeing a fabulous earnings, and that's kind of keeping a check on the valuation. We would love to continue on the AI story. Be selective on the names that you pick. All names are not equal. Go for the ones which has a stronger visibility on the earnings and has a better balance sheet, doesn't have too much of debt, and has a positive free cash flow.
So let's move on to a little bit of monetary policy. We're really not getting much out of Kevin Warsh, or haven't gotten much out of his debut meeting as Fed chair. We've got important numbers coming out later today, PCE, personal spending as well. Do you think that will solidify a hawkish tilt by the Fed, or we're going to see things as they are? Hold for now.
I think for now it's going to be do nothing Fed. Right, for a while. But that being said, the most important thing is the Strait of Hormuz has opened up, and I hope it continues to be the way it is today. And if the flow normalizes and gradually things gets better, you're going to see inflation, PCE data, not immediately, not in today's number, definitely, because oil prices were still much higher compared to what it was today. But in the next 2 to 3 prints, inflation PCE would be much lower than what it is today. And Fed would probably get an opportunity in Q4 to get into a dovish tilt, or probably might even get a chance to cut, maybe in December or something. We still think there is a possibility to cut it, but it's totally going to be data dependent. It depends on inflation. It depends on the PCE numbers. But I think what pushed the inflation's high should actually come down as well, because oil prices are where it is today.
And so you brought up oil prices and the Strait of Hormuz. Do you think that it's becoming harder to gauge against geopolitical risk? I mean, we had officials in Iran saying that the Strait of Hormuz is never going to go back to the state that it was at before the war. Yes, we're seeing Brent at just around $72 a barrel now, but that is momentary, right? Do you think it's becoming more difficult to hedge against geopolitical risk? How do you position at those times?
It's not an easy thing. We are in totally a very different environment in the last couple of months. The physical market is not going to normalize. There is a period of adjustment because the mines have to be totally cleared, the shipping routes have to be restored, and even the producers have to be back to their output that they were producing pre-conflict. So there is going to be, I think the physical market is going to remain tight for Q3 as far as oil is concerned. That being said, I think we are still looking at a forecast of oil of between $70 to $75 for the second half of this year, mainly because we think if the Strait opens up the way it is even today, the demand side of the equation is not that very strong. So demand is likely to be muted from here to end of the year, but the strong demand is going to come from the countries like US, China, Korea, India, Japan, who's going to build their strategic reserves because they've been spending from the strategic reserves over the past 6 months. So they're going to build up on the reserves. So that's going to put a cushion or floor on the oil prices.
And the U.S. dollar, have you changed your mind about its position from a few months ago to now? The Bloomberg Dollar Spot Index is at a 7-month high. What do you think?
Last time when I came here in the early May, we did say that dollar decline was overdone, and that investment thesis played out. And we've seen a very strong recovery in dollar since then. I think the upside risk to dollar is very low at the moment. I don't see any reason why the dollar should go up, given that unless we see a resurgence in inflation, unless we see productivity gains going incrementally by a notch up, which is not going to be the case. So I think from here, I think our dollar could actually unwind most of its gains.
All right. No reason for the dollar to go up. That's your headline. Arti, thank you so much for your time today. That was Arti Chandrasekaran, head of public markets at Schwa Capital. Now, U.S. Secretary of State Marco Rubio has met with the leaders of the UAE and Kuwait. This is as he looks to reassure Gulf allies over the interim peace agreement with Iran. Tehran and Washington have so far made conflicting assertions about key issues, including the use of released funds and inspections of Iran's nuclear sites.
If they don't live up to those commitments, the president has a lot of options at his disposal, including, I'm not saying he's going to do it, I'm saying including reversing these sanctions. They've made very straight up commitments in Switzerland, and the president has been very clear they need to keep those commitments.
Joining me now is Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Stuart, I'm not going to ask you about the conflicting statements again. We'll change direction a little bit. Marco Rubio in the region this week. What can we expect to hear from him later on?
So exactly what we said yesterday. It's confidence building. You know, we're still here. We're still present. He's in Bahrain. I don't know if he's actually in Bahrain, but he's due in Bahrain this morning. He's going to be meeting with the GCC foreign ministers. I think that's exactly that. So, I mean, I think 2-3 key themes is we've still got your back. We're still invested in the region. We're going to stay here, and this deal will go through, and it will be to everyone's benefit. Quite whether they buy that is another matter, but we'll see.
Yeah, we've still got your back. I like that. And then moving on to the other side of this conflict, oil movement is swelling through the Strait of Hormuz. Some pockets of the market are actually oversupplied. To everyone's surprise, I would say. What is the latest on that?
Yeah. So I mean, it's really interesting. I mean, the oil market at the best of times is very interesting, as you know, but it is basically, it seems to be pricing imperfection in some respects. It's working on the assumption, as far as I can tell, that Hormuz is fully opened, it will remain fully opened, and there are no more problems to come. I mean, $72 or thereabouts is still reasonably high. We were probably kicking around the $60 barrel price level a couple of months before the war, but we're back to this notion of a glut. Now, quite whether it's all about a glut, we'll see. I think there are certainly some customers that seem reluctant to pledge to buy barrels until they have certainty over particularly the sanctions regime, particularly around whether the supply is credible and can be held. So again, it's something that will develop over the next couple of months. But as you said in your introduction, we've basically had a $50 a barrel drop in the price in a space of weeks.
Yeah, seems like we're back to fundamentals. I was just talking to Arti about how fast we've seen oil prices drop. Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Now, coming up, still with oil, erasing all of its wartime gains as supply flows through the Strait of Hormuz continue. We'll discuss the outlook on that next. This is Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. Brent crude has erased all of its wartime gains as the reopening of the Strait of Hormuz boosts oil supply. For more on this story, you are now joined by Bloomberg's oil and shipping reporter Wei Loon Soon. Wei Loon, good to have you on. Did the market underestimate the global supply flexibility over the past few weeks?
So this morning in Asia, we've been pretty amazed by how quickly oil prices have come down over the past few days. And if you take a step back and you think about it, and we have seen over the past few months that actually there seems to be a lot more supply than we thought would have been, even though Strait of Hormuz was closed. And why do we think so? It's because a lot of the Asian economies have been tapping on stockpiles, inventories to release crude stockpiles rather than importing them. So that's one. And then you have this big importer, China. It really dramatically cut down its crude purchases and really made a big shift into cleaner energy. And then you have all these tankers that we've written about going through Strait of Hormuz in the dark, right, to avoid Iran's attention. So all in all, actually, there has been more supply coming out from Hormuz than we thought would have been. And then you also have Brent futures crude prices trading on headline expectations. And this is where we see a lot of that prices giving up their wartime gains today.
And Wei Loon, the Iranian side says tolls in the Strait of Hormuz alongside Oman after the 60-day period. President Trump warns that those tolls would be unacceptable. What is the latest on that, and what consequences would that have on the Strait of Hormuz?
So a lot of the ship owners and the traders and the charterers that I've been talking to, they are still quite concerned about the status of Hormuz beyond the 60-day period, as you mentioned, because Iran and Oman have come out to say that they want to seek some form of fees for management. And of course, this is not acceptable to many in the shipping community. Before the war, the Strait of Hormuz is an open international waterway, and no country should have any legal right to enforce a toll or fees to transit that. And I think this will continue to linger in the back of the minds of shippers and traders. But for now, we do see some ships going in and out, and it's good that they're turning on their AI signals, and it helps the oil and shipping markets understand the situation better.
Yeah, certainly a big part of the negotiations over the next 2 months or so. Wei Loon Soon, our oil and shipping reporter, joining us there. Thank you. Now, Iraq has ordered a total production halt at its Key West Kurna 2 oil field due to a severe shortage of available export tankers. The shutdown is the latest sign that restarting the Middle East crude supply will face logistical hurdles, despite the recent U.S.-Iran interim peace deal. And coming up, we'll discuss Dubai Holding, which is looking to expand its AI ambitions with an investment in a European data center operator. We'll bring you the details on that story next. This is Bloomberg.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Welcome back to Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. Anthropic is accusing Alibaba of waging a large-scale effort to illicitly access its Claude AI model. According to a letter Anthropic sent to several U.S. authorities, Alibaba is allegedly using fraudulent accounts that undermine Anthropic's decision to keep its products out of China. Sources say the effort involved nearly 29 million exchanges with Claude between April and June through almost 25,000 fraudulent accounts. And OpenAI has unveiled its first custom AI chip developed in partnership with Broadcom. It's part of a bid by OpenAI to gain an edge by tailoring hardware to better run its AI products. Broadcom says the chip, called Jalapeno, is in testing and showing cost savings of roughly 50% compared with the typical AI graphics processing units. Now, Dubai Holdings is exploring an investment in private equity-backed data center builder H-Scale. The potential deal would mark a broadening of Dubai Holdings' European portfolio beyond hospitality, underscoring the growing appeal of digital infrastructure. For more on this story, we're joined by Alex Duller, Bloomberg Money and Power reporter. Alex, good to have you on from Abu Dhabi. What does this potential investment really tell us about Dubai Holdings' overall strategy?
Hi, Abir. Thanks for having me on. Yes, I think it's a really interesting story. Firstly, because it's quite rare to know what's going on inside Dubai Holding, which is kind of run and owned by the ruler of Dubai. But also, it kind of tells you the strategy of the company. So they're looking at taking a stake in the private equity-backed data center H-Scale. It shows you that they're looking to grow its portfolio into Europe. But typically, Dubai Holding has always been quite focused on luxury assets in Europe. So to start looking at data centers, I think is quite an interesting expansion of Dubai Holding.
And Alex, we've reported dozens of times about the AI push that those countries we're in have been taking over the past couple of years or so. We've seen Gulf investors deploy billions into AI. So what does the investment tell us about the overall Gulf appetite for AI-related infrastructure?
Yeah, so the United Arab Emirates is definitely a leader in terms of investing into artificial intelligence, for sure. We wrote a story only recently about MGX, the Abu Dhabi AI investor that raised billions of dollars. But I think it's also quite interesting because that investment into AI has always come predominantly from Abu Dhabi, and now we're starting to see Dubai get in on those AI investments. So I think it's a really interesting story and development for the UAE.
All right, Alex, thank you for the reporting on that. That was Alex Duller, Bloomberg Money and Power reporter. Now, before we head into our break, a quick look at where equities are this morning. S&P futures 0.5 higher, still 0.5 higher after Micron results. In the after hours yesterday, we saw the forecast on revenue of about $50 billion for the fourth quarter. Nasdaq 100 futures 1.7% higher. That is a whopping gain there. But Dow Jones futures are sideways, trading sideways to the downside. Euro Stoxx 50 futures are also trading sideways, but to the upside. And then oil prices are yet again lower this morning. Brent is at $72.6 a barrel. NY crude below $70 a barrel. And this is as the movement through the Strait of Hormuz continues. Now, coming up, as oil prices tumble to pre-war levels, we'll talk to Farouk Sousa, Goldman Sachs' MENA senior economist. That will be coming up next. This is Bloomberg.
We should not deny that change is coming. And change is not coming just in data centers and AI. As a world, we are building infrastructure, we're building energy, we're doing energy transmission, we're building next-gen manufacturing, we're ramping defense, and we're doing this thing called AI and data.
Yes.
We will see the largest need for capital ever. And that's what we've seen so far this year. And so now to your specific question, it's about underwriting. There are a number of very strong US tech companies who run diversified businesses, Amazon, Google, Microsoft, who are interested in seeing these centers built and are interested in not consolidating the debt on their balance sheet. And to the extent they are prepared to lend their credit, one can lend against those types of things and make sensible underwriting decisions.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. AI cheer. Stocks in Asia climb alongside U.S. futures after Micron's blowout sales outlook reignites confidence in the AI trade. And Brent oil erases all of its wartime gains after flows through the Strait of Hormuz ramp up following progress on a U.S.-Iran peace deal. And U.S. Secretary of State Marco Rubio continues his Gulf tour, meeting with leaders of the UAE and Kuwait to reassure Persian Gulf allies of the strength of President Trump's deal with Iran. It's just gone 8:30 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Let's have a quick check at where markets are trading at half past. U.S. futures still 0.5 higher. Now, that is a reversal from what we've been seeing in the market across over the past 2 days. Everyone was waiting for those Micron results, and they came yesterday. They delivered $50 billion in expected revenue for the fourth quarter. That compares with just over $43 billion for the analyst estimates. And so, again, blowout results for Micron, solidifying that AI trade and solidifying the need for AI infrastructure. So investors quite happy about that. The results did come after the market, and so Micron was about 15% higher in the aftermarket, trading on that sales outlook. And then Asian equities are seeing the euphoria out of the United States, and there's a sense of positive contagion there. MSCI Asia Pacific 1.5% higher. The Kospi in South Korea was gaining earlier this morning. Now we saw the tech sell-off over the past couple of days in Asia, led by markets across the board. We saw the Hang Seng in China enter bear market earlier in the week. And so now we're seeing the equities there turning higher. Brent crude prices lower yet again. Brent at $72.5 a barrel. NY crude had dropped below $70 a barrel, and that is as the movement of those oil barrels continues through the Strait of Hormuz. Our energy teams put out a very interesting story saying that even before the deal had materialized between Iran and the United States, a combination of strategic inventory releases, a collapse in demand from China, and a substantial number of tankers that were sneaking out of the Strait of Hormuz through the war had led to oversupply in some pockets of the market. So a bit of a surprise there, but we're continuing to monitor those negotiations between Iran and the U.S. And then the yield on the 10-year notes in the United States ticking higher slightly 1 basis point. We await personal spending numbers and the core PCE numbers from the United States later today to help us figure out if they will affirm the U.S. Fed hawkish tilt. This is according to our Bloomberg intelligence teams. We're also keeping an eye on the dollar. The Bloomberg spot dollar index is at a 7-month high, causing declines in other currencies. And gold, which we're also keeping an eye on, has fallen below $4,000 an ounce earlier. It is roaming around those levels now, but it's acted as a haven. Not long ago, it was above $5,000 an ounce, and now we're seeing it drop by over $1,000. But for the positive picture in Asian equities this morning, we've got Winnie Su in our Hong Kong studio for us. Winnie?
Yeah, morning, Abir. As you mentioned, a pretty positive picture here in Asia, with the MSCI Asia here up 1.5% after 2 days of declines. Yes, it is coming after these oil prices falling, and also, of course, the strong earnings from Micron signaling to investors that the memory demand will likely remain quite solid, and hence you can see that tech-heavy gauges leading gains today, with the Nikkei 225, in fact, up about 4%, outpacing the gains of the broader topics index, and also supported by the news that Kioxia, in fact, it is also considering listing its ADRs later next spring. Now, that is overall supporting the tech stocks, but when we look at the downside of things, we do see that the Hang Seng Index here down more than 1%. Hong Kong continues to underperform due to the lack of AI. We did have MSCI China and also HSCI entering a bear market earlier this week, but also we are 3% away from Hang Seng Index entering that bear territory as well. Now, flip the board, we take a look at what's going on in the South Korean market, because Kospi here leading gains in Asia, up more than 5%, specifically also supported by SK Hynix, up almost 10%, coming on the back of the news that SK Hynix is now seeking $29 billion listing on the Nasdaq. So that is likely going to provide more support in terms of the of fund flow into the company and also more sustainability with that memory trend. Back to you, Abir.
All right, Winnie, with those market details in Hong Kong. Now, turning back to the regional story, the reopening of the Strait of Hormuz following a U.S.-Iran agreement has rapidly flooded global markets with a massive wave of oil supply. Oil prices are dropping sharply, erasing wartime gains. Joining us now is Farouk Sousa Mina, senior economist and global investment research at Goldman Sachs. Farouk, good to have you on the show with us at the early hour in your time. Turning to Gulf economies and what is happening across the GCC, do you think that the equation has fundamentally shifted when it comes to those premiums or economic premiums that we talk about across Gulf nations after this war? How do we look at those economies in the aftermath of this war over the past couple of months?
Good morning, Abir. Yes, I mean, quite clearly the resolution of the war as it's progressing is a very positive thing for the Gulf economies as a whole. Clearly during the war, certain economies were much more affected than others, both from an oil perspective, either oil production or oil revenues in general, or from a non-oil perspective. And so we had the likes of Oman and Saudi Arabia doing relatively well, the UAE middling, and then of course Qatar, Bahrain and Kuwait being inside the Strait of Hormuz with no alternative egress, doing considerably worse during the conflict. Now, of course, as the conflict resolves, as the strait opens, as trade becomes more viable, then we should see a much more significant pickup in economic activity and, importantly, in revenues for the likes of Kuwait and Qatar and Bahrain. As well as for the others. Now, for the others, of course, with the oil prices coming down significantly, some of the compensating factors that have been in play over the course of the conflict, i.e. higher oil prices that have helped them navigate lower volume exports, that factor is going to be a little bit of a headwind, I think, in the short term. But over a 6-month period, inshallah, if the oil prices, if the Strait of Hormuz remains open, we'll settle at an oil price that should see fiscal and economic outturns improve significantly across the board in the GCC.
And Farouk, if the Strait of Hormuz remains open, and we just talked about the Strait of Hormuz being open, leading to oversupply even in some pockets of the market, if it stays open but the perceived risk around it is high, who sets to benefit and who sets to lose out of a scenario like that?
Well, I think quite clearly in the near term there was always a risk that we'd get a significant glut of oil coming out because there was a lot of oil on water north of the Strait of Hormuz and waiting in the Gulf to make a break for it effectively. And so that's kind of a dynamic that I think will play out over the short term. We don't really see that continuing in the longer term. In the longer term, of course, supply and demand fundamentals are going to be more important. On that front, we see a little bit of a surplus in terms of supply given the demand destruction, but we see a lot of that demand coming back as well. And in particular, we, as you said in the lead up to the story, you know, a lot of the balancing has come from a drawdown of strategic reserves. As those reserves are rebuilt over the next couple of years, any excess demand or any excess supply in the market is going to be picked up by those strategic reserves. So I think the key is really what happens with the Strait of Hormuz going forward. As you were saying, our view is that the Strait of Hormuz doesn't need to come back to 100% for the full amount of oil from the Gulf to come back into the market. Why is that? Because quite a lot of that is being diverted outside of the Strait, particularly with the second pipeline coming online in Abu Dhabi out of Fujairah. That is going to help allow a reduction in Hormuz flows, if that's the case, to be compensated by these diversions. And so overall, we're still expecting the flows from the Gulf to come back to pre-war levels in relatively short order.
Farouk, we've spoken about this a few times over the past couple of years, the diversification efforts in the Gulf countries. Do you think that where we're seeing Brent at this morning, around $70 a barrel, do you think that those lower prices, quite a substantial drop from the levels over the past couple of months, do you think that will help the diversification push, or are we going to be seeing other patterns take hold?
There's quite a lot there. Look, first of all, $70 a barrel, $72.50 as it is right now, is not necessarily the price that's going to be in place over the medium or longer term. We're seeing oil prices ending the year at around $80 a barrel, and we're seeing them coming closer to 70 by the end of next year. So I think, assuming this glut is temporary, we should see oil prices a bit more supported. The second point I'd make is that even $70 a barrel is significantly higher than what we were looking at, for as a forecast for the end of this year, for example, prior to the war, where we're looking at kind of the low 60s as being probably where we would end up with Brent. So in that sense, we are still in a higher oil price environment, and we think we're going to be higher for longer. The third thing I'd say is that the short-term oil price is not really the key driver of diversification strategy. Diversification strategies are 10-year, 20-year, 30-year plans. The key driver there is much more the long-term oil price, which hasn't moved very much, but more importantly, the strategic objectives and the deepness of the pockets of those who are driving those strategies. So I think, from that perspective, we should see a renewal in efforts, and as soon as the trade situation clears up, we tend to focus a lot on exports, on oil exports, on petrochemical exports, and so on. But we forget that imports have been very, very badly hit in the Gulf. 45% of imports into Saudi Arabia come from the Gulf Coast through the Persian Gulf. That kind of supply chain hit has meant a very significant reduction in economic activity, particularly in construction. So I think once we see a normalization in trade, we should see those strategies coming back on target.
All right, Farouk Sousa, we're going to have to leave it there. That was Farouk Sousa, MENA's senior economist, global investment research at Goldman Sachs. Now, coming up, the Iran war is testing investor confidence across the region. We'll discuss what it means for property market with Yassin Mansour, chairman and group CEO of Palm Hills Developments. That is coming up next. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The Iran war has added fresh uncertainty for investors across the region, testing sentiment in sectors from tourism to real estate. But despite the headwinds, developers are continuing to press ahead with major projects, betting that long-term demand and regional investment will outweigh the near-term uncertainty. Joining me now is Yassine Mansour, Chairman and Group CEO of Palm Hills Development. Yassine, good to have you on. Thank you for making the time.
Thank you so much. Thanks for having me.
Let's start with the impact of the war, the Iran war, the US-led war on Iran. How has it changed the dynamics in terms of what you do in the region? And then when it comes to deliveries, for example, how has it changed that?
It had definitely a negative effect on the cost of construction. We've seen things increasing. Egypt was on a trajectory of lowering interest rates. As you're aware, Egypt had the real interest, one of the highest in the world, at about 9–10%. This dropped to 7%, and then with what happened in the war, inflation kept going up. It went up to 15%. So now we are at real interest of 4%. So this has definitely had an effect on the MPC changing its policy of easing the interest rate. Having said that, the construction cost has definitely increased. And Egypt in general has suffered, of course, due to Suez Canal, which income has dropped by about 70% at one point. Yeah. Tourism definitely was negatively affected. We hope now with what's happening, things will improve. We see the barrel now dropping to $72. Egypt is a net importer of oil in general, which I think this will be very positive on the industry.
Yeah. And then focusing on, you're in the UAE, there is a tie-up that you have with UAE-led firms, and Ras Al Hikma, for example. Are we expected to see more of these collaborations, perhaps in the UAE itself with some UAE firms?
Yeah, I think the UAE in general and Egypt have had an excellent relationship together. The Emirates has done probably the largest FDI investment in Egypt of $35 billion. It's not only the investment that counts, I think, for us, but also I'm sure a very good job will be done by the Emirates in Egypt, which would encourage others to come. I've done a back-of-the-envelope calculation that the north coast from after Matruh to Saloum, which is the South Mediterranean on the Egyptian side, the price of land there at a reduced price will bring Egypt about $3 to $5 trillion. So this, I think, with what's happening, with the knowledge, with the company, Mudun is headed by His Excellency Jassim Al-Zoabi. I'm sure they're doing. I've seen the master plan; it's amazing. We're starting this project in the South Mediterranean again in Ras Al Hikma with Miran, who's a local developer in the Emirates. We see definitely eye to eye. As I say, always partnerships are about chemistry, and definitely the chemistry is there. I feel this is a changing point in Egyptian, not only real estate but tourism. Real estate in Egypt is anywhere between 22 to 32% of the GDP, depending on directly and indirectly. So it's a very, very big move. We haven't yet started sales, but we started what we call EOIs, or expression of interest. We have unbelievable demand. Actually, it's shocking to me personally, although I have around 30 years of experience in Egypt, but I haven't seen that before.
And so can you give us an update on your project in Ras Al Hikma Sanda? And then the other part of the question is, going forward in Egypt, where do you see the biggest pockets of opportunity? Is it residential, commercial, education? Because you've also dribbled in that as well.
No, I think Ras Al Hikma will be a game changer, not only for real estate development, but for Egypt in general. I feel extremely positive of the project. We have a minimum of 5-star hotels in the project. We have a famous club, Palm Hills Club, a sporting club that will be there. The highest return on investment for Egyptians was always the investment in the North Coast. Having said that, this investment, people use it for 2 months a year. So I think with what's happening in Ras Al Hikma in general, and our specific plans, this will move more towards a year-round destination. So we can imagine the return on investment for people being there and using these homes not for 2 months, but for 10, 11, 12 months a year.
All right. Well, thank you for that update. We look forward to seeing what you guys have in store next.
Thanks a million.
Yassine Mansour, Chairman and Group CEO of Palm Hills Developments. Now, coming up on the show, the biggest IPO in African history is fueling an investor frenzy. We'll have that story next. This is Bloomberg.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Abir Abu Omar in Dubai. Nigeria is gearing up for what could become the biggest IPO in African history as Aliko Dangote prepares to list Dangote Petroleum Refinery. The offering is attracting interest from everyone, from billionaires to first-time retail investors, in what could prove a defining moment for Nigeria's capital markets and investor confidence. We have our chief Africa correspondent, Jennifer Zapasadra, joining us from Johannesburg. Jen, why do analysts see this IPO being able to deepen the nation's shallow financial markets?
Abir, I think that's key, what you were just saying there. Shallow is really what we have seen in terms of the deepening of Nigerian capital markets. You mentioned just how significant this could be. Analysts that we've spoken to see this IPO potentially being the catalyst needed to really deepen what we see in Nigerian capital markets, but also capital markets more broadly across the African continent. You mentioned just what we have seen over the past few years. There have been economic shocks. There's also been currency devaluations that have really eroded some of the confidence that investors have in Nigeria's equities. And so potentially this IPO could be a bit of a turnaround. When we just compare what we see with Nigeria's capital markets to some of the others on the continent, right now Nigeria's market cap just for the capital markets, 22% of GDP compared to South Africa, which is about $240 145%. India, in comparison, 131%. So there is quite a bit of optimism, although analysts and investors do caution that although there is optimism leading up to this IPO in the next few months, it's going to need to be sustained. There's going to need to be more of a turnaround story in order to really have confidence that this is really going to be the way forward for Nigeria's equity index.
And Jen, just briefly, how much is the interest being driven by the energy outlook versus a retail investor frenzy?
It's a bit of both. We are seeing institutional investors and also retail brokerages trying to get a number of people from, as you were mentioning, the engineers, the first-time investors bought into this. But then also, of course, it is that energy story. You're looking at the refinery there, which got to full capacity just before the global crisis earlier this year in the Middle East. But it also should be noted just some of the confidence that investors have in Dangote Group's businesses. Right now, we have seen the cement business gaining more than tenfold since the initial share back in 2010. The sugar refinery more than doubled since 2007. And so, again, investors are hopeful that potentially this could be another net benefit, a net gain for them if they are first-time investors or also returning investors to the group.
All right. Jennifer Sapasaja, our Chief Africa correspondent, with the latest details. Now, South Africa has advanced to the knockout phase of the World Cup for the first time with a 1-0 victory over South Korea. South Africa will take on Canada in a knockout game Sunday at Inglewood, California. Now, that's it for Horizons Middle East and Africa. I'm Abir Abamar in Dubai. Stick around with me for Daybreak Europe. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Live from Dubai, this is Bloomberg Daybreak Europe. I'm Abir Abahmad with your top stories. Chip stocks lead a global tech rally as Micron's sales forecast crushes estimates, boosting confidence in the AI trade. Brent crude erases all of its wartime gains as flows through the Strait of Hormuz ramp up. Plus, NATO Secretary General Mark Rutte says President Trump is completely committed to the alliance despite tensions with some European leaders. We'll bring you our exclusive interview next. Now, before we start with the show, a quick look at where markets are trading this morning. Asian equities tilting higher by the second, 1.7% higher, led by the Kospi in South Korea that is edging higher as well, 5% or so after a tech sell-off that we've been seeing throughout the week. Micron's results yesterday came in and really solidified the need for AI infrastructure. We're also seeing Euro Stoxx 50 futures edging to the green this morning, 0.1% higher, and then Nasdaq 100 futures a whopping 1.8% higher. It was dropping throughout the week, but then again, the tech picture that was driven to more positive territory by Micron yesterday has driven these equity indices higher. And then if we take a look at where oil prices are this morning, Brent prices are at $72.6 a barrel. New York crude was below $70 a barrel earlier in the session. And this happens as we continue to monitor the movement of ships through the Strait of Hormuz. Our energy teams point out that some pockets of the market have actually become oversupplied. So some good news to energy markets this morning. And the Bloomberg US dollar spot index is dropping ever so slightly this morning, 0.1% lower. It is at a several-month high still, and we keep an eye on this Fed hawkish tilt and how it has an impact on assets across the board, but also on the 10-year yields in the United States that are edging higher this morning, 2 basis points higher. We await key economic data out of the United States, PCE, and personal spending set to come out later today in U.S. opening hours. Our Bloomberg intelligence teams point out that personal spending and core PCE data are expected to affirm the U.S. Fed hawkish tilt. And then finally, for some of the risk events that we're taking a look at this morning at 7 a.m. UK time, German GfK consumer confidence numbers set to be out. 7 a.m. UK time as well. H&M results were set to see those come out. And at 1:30 p.m. UK time, US PCE, as I mentioned, the inflation numbers there are going to come out. This is what we have for you today. Now let's set you up for the day. Asia stocks are climbing after Micron's blowout earnings and outlook. Let's go to Bloomberg's Winnie Su in Hong Kong for more details on what's happening in Asian markets. Winnie?
Good morning, Abir. A pretty positive day in Asia today, supported by the lower oil prices and also, as you just mentioned, these upbeat results from Micron. Yes, you had that revenue forecast beating estimate, but more importantly, long-term contracts with the customers really helping investors to gain further confidence that the level of earnings that we're looking at right now is likely going to be sustainable and that the solid demand of memory likely going to continue. That's supporting the MSCI Asia here up almost 2% after 2 days of losses. We are seeing gains being led by tech-heavy gauges in South Korea and Japan, while we are still seeing the downside in the Hong Kong stocks. Hang Seng Index here down more than 1%, and we are just about 3% away from entering the bear territory. Remember, we already had MSCI China and HSCI entering that bear market earlier this week due to the lack of AI exposure. So we will likely going to see how this underperformance continue further. Now, flip the board, we take a closer look at the chip stocks because overall, yes, supported by these Micron earnings, but also specifically, we are looking at SK Hynix here up almost 10%, the biggest gainer here in Asia today, with that news of the company seeking $29 billion of U.S. listing on the NASDAQ. We are expecting trading to start July the 10th, and that analysts right now are saying that this is likely going to help narrow its valuation gap with its global peers like Micron. And interestingly, similarly, we are hearing Kioxia here up about 11%, also saying that they are considering an ADR listing in the spring next year. Back to you, Abir.
All right, Winnie Su in Hong Kong with those market details as always. Now on Micron, let's get more details about it soaring in late trading after smashing expectations. Bloomberg market strategist Rahul Amin joins us now with more. Rahul, good to have you on. This was seen as yet another pivotal moment in the AI trade. Just how surprising were those numbers for you?
Hello, good morning. Yeah, so it was a great quarter for Micron. They obviously beat on the top and the bottom line. That wasn't a surprise because historically they've always beaten. And, you know, we know that memory supply and demand has been very, very tight given the AI boom. But what's been more interesting is the guidance that they gave and the qualitative comments that they made around supply remaining tighter for longer. And that has enormous implications for the stock in terms of the way it's valued.
And Rahul, we've also heard about SK Hynix. It's back in the headlines. Is it fair to say that memory chips are the runway star of the AI trade at the moment?
Very much so. So that's been the narrative that's formed over the past 12 months or so. Obviously, memory is a huge component in terms of the AI infrastructure boom, and there are only a handful of suppliers globally that can provide this, SK Hynix and Micron being two of them. So as demand ramps up, given the AI infrastructure boom, supply has been very, very tight, and that has great implications for pricing and obviously profit margins as well. The big debate, of course, is this just another kind of cyclical story, or has demand become more structural? And that's what the market's trying to work out. Micron, of course, gross margins above 80%, which is pretty incredible. And because they said pricing and supply is going to be tighter for longer, profitability is going to be in focus very much. So yeah, implications for SK Hynix as well, and of course Micron.
All right, Bloomberg market strategist Rahul Amin with those details for us. Now, sticking with Micron, the results are set to boost stocks in the United States session, with NASDAQ futures pointing to gains. Let's bring in Mark Cranfield, Bloomberg MLive strategist, to discuss more. Good to have you on. How important is the chip sector story to markets overall, Mark?
Well, if you look at some of the things that have been going on the past couple of weeks, you might say it's the only thing that matters to global markets at the moment. It's one of those rare situations where something that appears to be relatively isolated to equity markets has become a macro theme. And our colleague in New York, Cameron Christ, has been doing studies of how significant certain companies can be for the broader markets. And he rates three of them in particular, Micron, Alphabet, and Nvidia. They're so big and important. When their earnings come around, they can shift the dynamics across asset classes. So that's why people were looking so seriously at what Micron had to say as much as the numbers themselves. And you've seen the reaction, as your previous guests have been saying, that the reaction is huge in Asia today. It's boosted stocks across Asia, and it's also lifted the NASDAQ futures quite significantly, as you were saying as well. So you can tell that people are having to look at this from various angles here, what it means for the fixed income market, what it means for currencies, and also what it means for the equity space as well. So much money is pouring in to a limited number of companies here. It's sucking funds away from other places as well. And we're seeing that play out, particularly when you think about the Treasury curve. That's certainly the other side of the coin in terms of the money going into the equity space.
And Mark, we're also getting PCE data later today. How could those figures change the outlook of the market?
It's a huge number because it's the one that the Fed thinks about the most. They look at it very carefully in terms of their projections of where they see inflation going, how they help to set interest rates. For the time being, the market is still thinking that the Federal Reserve will raise interest rates at some time in the second half of this year. But what the PCE probably won't reflect is the fact that oil prices have come down significantly in the past couple of weeks. And that is changing the dynamics in terms of the outlook for where inflation is going. So if we see a PCE number which is in line or maybe a little bit softer, you could see a big drop in yields across the Treasury curve. If we get a high number, that's probably to be expected. And it will very much depend on what Fed Governor Walsh has to say in terms of where he thinks that's leading the inflation picture for the near future. But we're at this kind of inflection point where the drop in the oil prices has become very important. It's not fully priced into the market, and we're waiting to hear what Federal Reserve people have to say in terms of how they read that for the path going ahead and whether they really need to raise interest rates or whether they can dial it back because they're more comfortable now that the war is past and inflation will start to ease as petrol prices and other oil-related factors come down in the United States.
All right, Bloomberg MLive strategist Mark Cranfield, thank you. Now, still ahead, the biggest U.S. banks pass the Fed's stress tests and ramp up payouts for investors. We'll bring you the details on that. But first, oil falls back to pre-Iran war levels as the increased flow of shipping in the Strait of Hormuz drives supply. That is coming up next. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Brent crude has erased all of its wartime gains as the flow of shipping through the Strait of Hormuz ramps up following progress on the U.S.-Iran peace deal. Let's bring in Bloomberg oil and shipping reporter Waylun Soon to discuss what is happening in the Strait of Hormuz. Waylun, good to have you on. Look, as shipping returns to Hormuz, could we see a drop in oil even further?
So we have shipping gradually returned through the Strait of Hormuz as of now. And we do see certain ships going in and out. But beyond the 60-day peace deal between the US and Iran, the status of Strait of Hormuz remains to be determined, right, as is the case of tolls that Iran pledges to take. But in the meantime, oil markets have found workarounds. And as we have seen during the war, prices have stayed have not shot up as much as we expected. And on the other hand, we have like demand destruction happening across different economies, especially in China, where we see a big shift away from fossil fuels into cleaner fuels. So overall, we do expect oil prices to trend lower, but how the supply production will ramp up to meet demand that has been affected by the war so far still remains to be seen.
And Wei Lun, when it comes to the tolls across the Strait of Hormuz, if that were to happen, what consequences would that have?
We are still trying to find out what Iran is planning to do with that. But if any form of financial payments were to be made to Iran, that would construe a certain kind of sanctions risk that would have serious implications for shipping as a whole, because there are many actors that are involved in ensuring the safe transit and delivery of a cargo from point A to point B. Any form of financial payments to sanctioned entities would expose them to U.S. penalties. For now, the U.S. has waived some form of sanctions for Iranian oil and the delivery of it, but that's only within a very small window, which is until end of August. And at any point in time, the U.S. is able to rescind that sanctions waiver for now.
All right, Wei Lun soon with those shipping details that we've been keeping an eye on. Thank you. Now, NATO Secretary General Mark Rutte used a visit to the White House to try and ease tensions with the United States after President Trump lambasted nations in the military alliance for a lack of support in the campaign against Iran. Rutte displayed posters that featured gold lettering and bright red bar charts labeled, quote, the Trump trillion, to highlight the increase in NATO spending since Trump first took office. The Secretary General spoke exclusively to Bloomberg shortly after the meeting.
What I believe is to be fair when leadership is successful. His leadership is successful, and what I wanted to show today is that it's successful in three ways. One, on Iran, degrading nuclear capability. Two, on NATO, not only getting the allies to deliver, to commit to 5% defense spending, but also to deliver on the spending, and that's clearly what is happening at the moment. And third, by taking that coat, that mantle of being the leader of the free world. And when he meets in Ankara, he will meet with all the allies, but also 10 countries there as guests from the Middle East, from the Indo-Pacific. A total combined GDP of $70 trillion, 2.5 the size of the United States. Absolutely there to hear his views, to get his thoughts on the next steps we collectively have to take.
Well, of course, the financial aspect of this and the investments into the defense industrial base are one part of it, Mr. Secretary General, but there's also the consideration of actual human capital and U.S. military forces that are currently stationed all around Europe. Obviously, we have now seen withdrawals and considerations this administration is making about moving troops around further. How do you avoid anything being chaotic in nature as that plays out? And how does Europe make sure that it's able to adequately defend itself in a surprise scenario? What are those preparations like?
I think the United States is doing that. So let's first agree that the United States has to take care of multiple theaters, not only Europe, also, for example, the Indo-Pacific. And if a situation would occur where they have to defend both sides of the equation, both the Indo-Pacific and Europe, they have to avoid a situation in which they have spread their resources too thinly. This is why Europeans have to step up. This is NATO 3.0, a stronger Europe and a stronger NATO. That means that the US will stay involved when it comes to the nuclear umbrella, but also when it comes to the conventional. But over time, what you now will see, and this is a structured process, is that the Europeans are taking over more and more of that leadership role. For example, when it comes to the 3 combatant commands, they will, over the next 18 to 24 months, move from American generals and admirals to European generals and admirals. So that's also an example of Europeans stepping up. But also when it comes to Ukraine, the fact that the US is still providing all the support, but paid for by Europeans and Canada, which is only fair. So Europe stepping up, the US staying heavily involved when it comes to the conventional nuclear deterrence in Europe.
That was NATO Secretary General Mark Rutte speaking to Bloomberg shortly after his White House meeting with the president. Coming up, we'll look ahead to results from H&M as the retailer looks to turn its fortunes around. More on what to expect next. This is Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Welcome back to Bloomberg Daybreak Europe. Clothing retailer H&M reports second quarter earnings this morning. The stock is down some 12% year to date amid concerns over weak consumer sentiment and poor spring weather across northern Europe. Let's get more details with Bloomberg's Rafaela Lindeberg in Stockholm. Rafaela, good to have you on. What are we expecting out of these H&M results due in about an hour or so?
Right, flat sales, I would say. If you look at Bloomberg consensus estimates, analysts are becoming increasingly concerned about H&M's inability to generate more top-line growth despite all its efforts. And sales are expected to have remained roughly flat in the second quarter. We'll also be looking out for comments on how the turnaround plan is progressing in terms of costs, especially how the Middle East conflict might be affecting input costs and the supply chain heading into the second half of the year.
And so how would you say H&M would be comparing to competition around Europe?
Yes, competition in fast fashion is pretty brutal, as we all know, and H&M's feeling the pressure from the industry leader Zara on one side and the ultra-low-cost rivals like Shein on the other side. But if you look back a decade, H&M and Inditex had pretty similar sales and were more or less seen as peers. Today, Zara is much larger and much more profitable, and they've been much quicker to adapt to consumer trends and changes in shopping habits, and they have a supply chain that allows them to react much faster. And much of what H&M is doing right now is trying to narrow that gap.
And speaking about the CEO, Daniel Erver, he took over in 2024. Do investors still have faith in the strategy that he's following?
Well, the CEO has done a pretty good job of making the company more efficient, lowering inventories and improving profitability. But the share price is still down. I think it's about 9% this year. Investors want to see more evidence that he can restore sales growth, especially with a renewed focus on H&M's core women's wear business that he initiated when he took over 2 years ago.
Raphael, the Person family keeps buying shares. What is the market reading into that?
Well, the Persson family already controls more than 80% of the voting rights but they've been stepping up share purchases over the past few years, and that has, of course, triggered speculation and expectation that they might be looking to take the company private at some point in time. That is not something that has been confirmed or officially announced in any way, but it's a theme that comes up frequently in discussions around the company.
All right, Bloomberg's Raphael Lindenberg with the latest on what to expect from H&M results due later today. Now, on to some of the other stories that we're following today. Volkswagen has agreed to sell a majority stake in its heavy diesel engine unit to Bain Capital, ending one of Europe's most hotly contested private equity auctions. Volkswagen says the deal will generate proceeds of around 7.4 billion euros. The automaker says it plans to keep a 49% stake in the unit in the medium term. Now, Alibaba shares fell in Hong Kong after a Bloomberg scoop revealed that Anthropic is accusing Alibaba of using thousands of fake accounts to illicitly access its Claude AI model. The company said it was the biggest attempt so far by a Chinese company to piggyback on the work of a top U.S. labs. That's according to a letter that Anthropic sent to several U.S. senators and White House officials. Now, before we head into the break, a quick look at where markets are sitting this morning. It's green across the board. MSCI Asia Pacific about 2% higher, led by the AI bellwether in South Korea, the Kospi. We're seeing a rebound across the board after those Micron results really delivered yesterday. $50 billion in expected revenue for the fourth quarter. That compares with an analyst estimate of 43 or just over $43 billion for the fourth quarter. Euro Stoxx 50 futures is 0.3 higher this morning. We await the opening in about an hour or so, a couple of hours. Nasdaq 100 futures 2% higher. They've been ticking higher by the second. And again, those Micron results really solidifying the AI infrastructure game. Now, we turn to see what Brent prices are doing. They are ticking lower for a fifth day because of the war in the Middle East and the impact of the receding war in the Middle East. The U.S. dollar is flat, and the yield on the 10-year Treasuries is ticking higher. Now, coming up, we'll talk about Andy Burnham and the clear path for him to become the next Prime Minister. That is coming up next.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg. Live from Dubai, this is Bloomberg Daybreak Europe. I'm Abir Abamari with your top stories. Chip stocks lead a global tech rally as Micron's sales forecast crushes estimates, boosting confidence in the AI trade. Brent crude erases all of its wartime gains as flows through the Strait of Hormuz ramp up. Plus, NATO Secretary General Mark Rutte says President Trump is completely committed to the alliance despite tensions with some European leaders. We've brought you the details on that exclusive interview. Now, a quick look at where markets are at half past. We're still looking at green across the screen when it comes to equities. MSCI Asia Pacific 1.8% higher. Euro Stoxx 50 futures 0.3% higher. And Nasdaq 100 futures really rebounding there, about 2% higher. We've seen drops across tech stocks in the United States all of the past 4 days or so. And then with Micron's results yesterday after market, not only did the stock surge about 16% in the after-hour trading, but it led this positive contagion across equities in Asia and in the U.S. futures picture this morning. Now, if we flip the board and take a look at where oil prices are sitting, Brent is trading very close to $70 a barrel. It is at 72.7, so actually ticking higher, still losing for the day. It has been losing over the past 3-4 sessions as tensions in the Middle East ease and these negotiations between Iran and the United States keep going. But also we're seeing swelling movement in the tanker and shipment movement in the Strait of Hormuz. And then the Bloomberg US dollar spot index is flat to the downside. It is at a 7-month high. It is creating some weakness in other currencies around the world, so something to keep an eye on. And then the yield on the 10-year notes in the United States is 2 basis points higher. We keep an eye out for economic data that is coming out later today. That's PCE and personal spending data, to see what ramifications that has on the Fed hawkish tilt and whether we're actually going to see the Fed raising rates by the end of this year, keeping the hold and see stance for the time being. Now, for some of the front page news that we're keeping an eye on, the Wall Street Journal leads with a story asking whether any productivity boost from AI will come soon enough to temper inflation caused by higher prices for memory chips driven by data center demand. The Financial Times says 2 of the UK's biggest trade unions are increasing pressure on Andy Burnham to not select Energy Secretary Ed Miliband as Chancellor, arguing his North Sea oil policy has damaged jobs in the sector. But the Times says Miliband is playing a key role in developing economic policies for Andy Burnham as part of his transition team, particularly those plans with fiscal implications. And you can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DayBGo. Now, influential figures within Andy Burnham's circle have urged the former major and likely the next UK Prime Minister to break up the Treasury to go and refocus the government's agenda on growth.
According to long-time ally Richard Lees, Burnham will seek to pursue, quote, flexibility within government spending and borrowing rules. I'm now joined by Modupe Adebembo, economist at Jefferies. Good to have you on. Thank you for joining us from London. The UK currently seems like it's between weak growth and above target inflation. How does a premiership of Andy Burnham change the outlook for, or the meeting in the middle between those two things?
Thank you for having me, Abir. I think it's interesting because, as you mentioned, the UK has faced a lot of challenges, weak growth, high inflation. And I do think that when we're looking to a change in the Prime Minister, one of the things that markets are really focused on is exactly what their economic policy will be. And that's why markets, I think, continue to be focused on exactly who the Chancellor will be. And the fact that we don't have a kind of clear indication at the moment, I think, is sending some signals to markets. But I think ultimately we need to understand what potentially Andy Burnham's focus will be on growth and what his focus will be on other sorts of policies. Because I do think that from a UK perspective, the political risk and the political uncertainty that we've seen manifest over the last few months has weighed on economic growth. It has meant that even at the margins, growth has been slightly weaker than we would have anticipated. And that's something that I think could persist if we don't see more certainty going forward.
So I mentioned in the intro that he's going to be likely seeking flexibility when it comes to those fiscal rules, kind of setting apart from the course that Rachel Reeves had taken. How realistic is that really?
Well, I think the challenge is that, of course, fiscal rules, they are kind of designed, they're made by construction, so they aren't necessarily something that has to be, they have to stay the same. Of course, they can change, but we have seen quite a few changes in the fiscal rules. Rachel Reeves herself, when she became Chancellor, shifted the fiscal rules, and actually markets took that change quite well. But I think the challenge is that if we continue to see changes in fiscal rules, it may be harder for markets to kind of understand the reason that the rules are changing, and they may just see it as a reason to increase borrowing. I do think that if we are seeing an increase in borrowing, for example, to increase investment into growth kind of heavy sectors, that is something that I think markets may be a bit more comfortable with, but there are still risks. The UK, of course, when you look at gilt yields, is paying quite a high kind of premium to borrow. So that's something that I think Andy Burnham and the team have to take in mind when they think about making these sorts of shifts.
And so shifting course a little bit about the BOE. First, what do you think it does next? And do you think that the BOE is more worried about inflation persisting rather than slowing growth?
I think it's interesting because, of course, as you mentioned, the kind of energy outlook has been extremely volatile. But it does look like we're starting to see some of the energy pressures start to come off. I think that's important because for the Bank of England, what we've heard so far is that they're looking and they're worried about second round effects, but they're also looking at the fact that the labour market in the UK has been weak and the fact that growth has been a bit more subdued than they would have anticipated. So I do think that the Bank of England isn't in a position where they want to hike imminently, and I think that the Bank of England are likely to remain on hold. And I actually do think that, you know, if some of the developments we've seen in energy prices kind of persist, we could be talking about the Bank of England delivering cuts quite soon.
Modupe, I'm in Dubai, so I feel like I need to ask you this question. If those energy-led concerns from the Strait of Hormuz do continue to alleviate, does that get the situation in the UK better when it comes to the growth outlook, or do the domestic challenges, will they prove to be more important?
So I think it's interesting, actually. I do think if we see a slight easing in some of the energy pressures, there will be a lot more kind of strength in the economy. Because actually, when you look at some of the indicators that we look at, so if you look at PMIs, in the UK, they have been weak, but actually they've broadly remained in expansion territory. So I think the underlying drivers of the UK economy actually remain very solid. I do think that energy has played a a big role in slowing some of that activity, and the fact that energy prices as well in the UK are quite high has been important. But I think the other challenge I see is around the politics. So I do think that if we were to see a continued easing in the energy outlook, it would be really positive for UK growth. But I don't necessarily think it would mean that UK growth would be kind of significantly higher, but I do think it would be a real improvement, which is, I think, welcomed.
So do you think that investors are at all underestimating the risks that rates could stay higher for longer in the UK? Is that something that you think is being actively underestimated, or is that not something you're thinking about?
No, I would actually say it's probably the opposite, because if you look at pricing, market pricing of rate expectations, markets have been expecting the Bank of England to hike this year. I think now, given the easing in energy prices, it's close to one hike that markets are pricing, but we've seen it go up to around three. So I think markets think that the Bank of England will deliver hawkishly. I don't think that's the case. I actually think that the Bank of England will remain on hold, and I think that they are biased towards cutting. So I actually think that the monetary policy outlook is probably more benign than investors are expecting.
So for Andy Burnham and for the UK in general, over the next 6 months, what would you say is the most important economic indicator that we have to look at? Would it be inflation? Would it be the labor numbers? Would it be growth?
That's a really good question. I think for the next kind of few quarters, the most important thing that I would be looking at would be investment. Because I think investment is not only a vote of confidence in the economy, but it's something that will, in the future, help to produce more economic growth. It's something that we've seen some weakness in investment, especially when you look at the kind of levels compared to previous years. So I think investment is one of the key areas that I would be looking at. And I also think we've heard more and more Andy Burnham talk about investment, but also talk about investment being kind of spread across the country. So I think those sorts of things, if they start to improve, will be very positive for the UK outlook.
All right, Modupe, we're going to have to leave it there. Modupe Adebembo, economist at Jefferies, thank you for your time today. Now, coming up, the biggest banks in the U.S. pass the Fed's stress tests and ramp up investor payouts. We'll unpack the results of that next. This is Bloomberg.
Anything we do in Africa is going to be more risky than the US. I think the approach we want to take is, how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation was a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Welcome back to Bloomberg Daybreak Europe. The biggest U.S. banks have boosted their dividends after passing this year's Federal Reserve stress test. The Fed exam, developed as a result of the 2008 financial crisis, showed that all the banks tested would maintain enough capital to withstand a hypothetical economic downturn. Let's get more with Bloomberg Global Finance reporter Laura Noonan. Laura, good to have you on. Talk to us about the results that we saw this year.
Morning. So thank you for having me. So what this result showed in a nutshell was that the 32 biggest US banks have a ton of capital. Now, we already knew this. This kind of quantified that. So they showed that if there were a big economic crisis and these banks collectively lost $708 billion, they would still have more than enough capital to meet the thresholds which regulators have set as a safe level of capital. So this is really showed what the banks hoped it would show, which is that US banks are currently awash with capital. They have lots of it. Banks argue this means that the current regulations they have are too strict and that they should be allowed to return some of that capital to their shareholders, which, as you said, is what they have started to do.
And Laura, what does the test really tell us about the likes of JP Morgan, Morgan Stanley, the biggest banks in the United States?
So they all have a lot of capital, and what you've really seen with this is a continuation of the deregulation story leading to massive payouts to investors. So we saw last night 3 of the big banks, so JP Morgan Chase, Goldman Sachs and Citi, all increased dividends by double-digit percentages, so big increases in dividends. We've seen this since the deregulation push started. While banks talked a lot about the need to loosen regulations so that they could lend more, what we've actually seen is record payouts last year, and this is a continuation very much of that story. This is also the first year where the stress test results did not bind banks' dividend or payout policies. And that is why we saw those 3 banks coming out so quickly, because normally they would wait a while they worked through everything. This time, the Fed has changed the architecture around the stress test so that it was more of an advisory stress test. I mean, there was a note from one analyst saying this was really a nothing stress test because it didn't actually restrict what they could and couldn't pay, unlike other years. And that is also part of this big effort in the US to reduce the burden of regulation, which we've seen under the Trump administration.
All right, there you have it, a nothing stress test. That was Bloomberg's Laura Noonan with the latest details. Now, moving on to weather stories, a heat wave gripping Western Europe has led to record temperatures this week. Climate change is increasing the frequency and intensity of heat waves on the world's fastest warming continent. The Network for Greening the Financial System, a global central bank group, has published a report warning that more frequent and severe climate shocks will make it harder for officials to look past their economic impact. To discuss further, I'm now joined by Edwin Miller, Bank of England and NGFS climate economist. Edwin, good to have you on. I don't know what it feels like to be in the UK right now, but I'm hearing from a lot of my friends that it's incredibly hot. You've just published a report about how to tackle climate change as policymakers. What are the key takeaways from that?
Thank you very much. Yeah, as you say, it's really hot in London, and that only emphasises the point that we're making in this report. The report's targeted at central banks, and they holistically discuss the implications of climate change, both in terms of physical risks and the transition to net zero. It discusses implications for central banks and in particular for monetary policy strategy. Whereas you say the impacts of climate change are increasing and becoming more severe, and that can present difficult trade-offs for monetary policy. So in particular, they can introduce shocks to the economy that present trade-offs between stabilising inflation and output. And these are the types of shocks that can be particularly challenging for monetary policymakers to manage. In many ways, they're similar to the energy price shocks that we've seen in recent years. And the report aims to provide a holistic discussion, both for central banks and monetary policymakers as they increasingly grapple with these shocks, but also for anybody who's interested in the macroeconomics of climate change, how that might change in future. And we bring a wealth of academic studies, innovative modelling, and a theoretical discussion to try and unpack these issues for central banks.
So in the UK, Edwin, how speaking of these shocks, how would you say the UK, for example, compares with other countries, whether in Europe or around the world, to be equipped to deal with those climate-led shocks?
I think that's a great question, and the advantage of this report taking place in the Network for Greening the Financial System is that we can reflect not just a UK perspective, but a global perspective. So the NGFS represents around 150 central banks and supervisors from around the world. And something that we've worked really hard to do in this report is to reflect the perspective of emerging markets and developing economies. Because emerging markets tend to not only be more vulnerable to climate shocks, for example, because their economies could be quite focused on agriculture, but they also are generally less well equipped to deal with them, with less fiscal capacity to introduce spending in response to the shock. So something that we've tried really hard to do in this report is to unpack the implications not just for advanced economies, but for smaller emerging markets.
So do you think central banks are underestimating the inflationary impacts that could be brought about by climate change over the next decade or so?
I think one of the key factors for central banks to think about is the uncertainty around those inflationary impacts. It's very challenging to model over these long-term horizons, given both the uncertainty of climate change and the uncertainty of the economy. What we bring in this report is some new modeling to try and look at the implications of both physical risks and transition risks and help central banks understand them. But perhaps more importantly, we set out a framework for central banks that's very flexible and can be used both in response to different shocks in future, but also before the fact as central banks are beginning to think about these issues. And a key part of that, and something that we unpack in the reports, is around communications, where there's really an opportunity for central banks and monetary policymakers to be on the front foot communicating about how they might interpret these shocks, how they might respond when they happen, which will make their response easier to manage when shocks do occur.
And Edwin, something interesting that was brought in the notes is that droughts, you mentioned, are the most inflationary, while floods are the most deflationary. Why is that?
It's a great question. So droughts in particular often affect agriculture and have large-scale impacts across the economy, which can lead to broader-based inflationary pressures, whilst floods, on the other hand, can be more localized in their impact. And the impact of droughts in particular on food prices is one of the key ways that we see transmission of climate shocks, both to individual economies but also across borders. If we take the UK as an example, some of the exposure of the UK to climate change is through the fact that we import a significant portion of our food. So shocks that are happening in distant parts of the world, far away from the UK, can have spillover effects to UK inflation, and that's similar for many other countries.
All right, Edwin, we're going to have to leave it there. That's Edwin Miller, Bank of England and NGFS climate economist. Now, plenty more is coming up. Stay with us. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Human intelligence is unbelievably efficient. You know, in terms of in many ways you can measure that. Energy efficient, obviously, but also data efficient. So there's some spectacular things that the brain is doing that we still don't have anywhere near those capabilities, I would say, in AI.
Demi Sabi is Google DeepMind CEO and co-founder, speaking to Bloomberg's Francine Lacroix about human and AI from the Cannes Lions in France. Now, before we head out to the end of our show, let's take a look at some of the charts that we're taking a look at today. One is about U.S. tech lagging behind some of its peers. This chart is plugging U.S. tech sector against MSCI Asia tech and EU tech. So quite surprising there. The talk has been about the U.S. tech over the past few days, but it's really lagging behind some of its peers in Asia, where the Kospi is, and it's the best performing equities gauge so far this year. Now, if we flip the board, we take a look at some AI infrastructure charts, and that is who gets paid after chips. We've got 3 companies, Quanta, Eaton, and Vertiv. The chip story has been all over the market this year. The memory chip story, Micron results yesterday solidifying that AI demand. And the AI rally is set to lift some European tech stocks at the open, including German semiconductor maker Infineon, which is gaining on TradeGate this morning. Shares finished lower yesterday on this week's tech sell-off, but are up more than 100% year to date. You can see it right here. Now, the opening trade is up next. Stay around with us for that. This is Bloomberg.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court that aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Good morning. It is Thursday, June the 25th. Here's what's on the agenda. Micron's blowout earnings reignites the market's AI memory. Oil tumbles to pre-war levels on signs of oversupply. And Team Burnham mulls revamping the BOE and breaking up the Treasury.
Let's track it through, Tom. Let's talk about why we are as risk-on as we are this morning and focus on the key drivers of that. Micron is the main one, coming out of the United States overnight into the Asian session. You can see the Kospi back on track, rallying hard overnight on the back of that story. We've got that tracking into Europe. I'll come to that in a moment. The other key driver is Brent, basically back to where we were at the beginning of the Iran war. We're now trading 72.49 on that crude contract. Gulf contracts are showing a glut, basically, in this market right now. How long does that last for? How deflationary could that be? Disinflationary could that be? So Brent crude is the other factor. How does that roll into the European stock story this morning? Well, certainly the chips trade is likely to have a fairly solid day today, but Europe in aggregate unlikely to deliver that. We're only up by 0.3%. But there's some big momentum drivers out there this morning that we need to focus on. We'll do that right now because the countdown to the opening trade starts right now.
Good morning. So, Micron delivers. Arguably, we have shifted to a point in time where the markets are more sensitive to the memory story than the GPU story, the NVIDIA story. This is about Micron, and it delivered with revenues, Guy, forecast in the current quarter, $50 billion, margins of 85%, locking in deals 3 to 5 years, and the CEO saying, and I'm quoting, "We currently do not have line of sight as to when memory supply will be able to catch up with increasing demand."
Okay, so this is inflationary. This is massively inflationary for the entire AI story. That has to be the takeaway from this. Memory is costing an awful lot of money. If you want it, you've got to pay up and you've got to wait. Those seem to be the two main stories that we take away from the Micron numbers.
Are you looking for the bear signal in a positive AI story?
If you look at the Mag 7, who are the funders of this, right? These are the guys that are spending the money. Ultimately, it's the debt holders increasingly that are spending the money. They are having to pay up. And it is going to cost them so much money to get what they want from Micron and all the others going forward from this. They've got to figure out how to make money with their product, which I think is going to be the struggle here. This is inflationary. The front page of the Wall Street Journal this morning talking about the inflationary impact of all of this. This is the third wave of inflation that effectively we're seeing here. And to your point about the contract distance here, it is going to be sticky for ages. This is the narrative that we're now looking at. These prices are going to go up and they're going to continue to go up going forward from here. My takeaway from Micron is, yeah, the AI trade is back on, but it's going to be expensive and it's going to be inflationary.
There's two sides to this story then.
Yeah.
And these are contracts that are commitments. Their customers are taking the cost. They're taking that increase in price. They are not able to break these commitments. There's about $22 billion that's already been committed as part of 16 agreements. There's a total addressable market that they're flagging of about $100 billion just with high bandwidth memory, not including NAND and DRAM as well. So yes, the AI momentum there. And we'll talk about PCE in the next couple of minutes because that is tied in, of course, the broader inflation story.
This stuff goes into everything. This stuff doesn't just go into it. The difference maybe between NVIDIA and Micron is
Yes.
that Micron serves a much wider market. And it's all the devices that we all use. It's the cars. It's everything that this memory is used for. So the broader impact in terms of the inflationary narrative is there.
Is oil, though, proving some downside pressure when it comes to the inflation story?
Yeah, that's the flip side of all of this. So it's fascinating to watch what is happening here. You've now got a market that has completely changed. We're back to where we were at the beginning. And that's, I think, the key difference here between what you're seeing in the memory story and what you're seeing with the oil story. You look at the Gulf contracts, they have moved significantly into contango, i.e. front month trading at a discount. So you've completely flipped the shape of the oil curve in terms of what you're seeing. There is a lot of oil out there at the moment. The market's basically just moved past this. The market says we're done with the Iran story. We're done with higher oil prices. We can move on from that. I don't know whether that is necessarily going to be the narrative. The geopolitics seems to have, again, faded from people's memories quite quickly, but we're still in a very tense negotiation between Iran and the United States. Where that goes, I don't know. But the market's definitely moved on. That is the narrative.
We're back below $70 a barrel on WTI. We're at $72 a barrel on Brent. You've got Donald Trump, maybe arguably with some justification, calling on the oil companies to pass on the lower cost at the pump as well. So the political pressure is coming through ahead of the midterms, of course. And it turns out that more oil's been shipped through the Strait, maybe, than we had thought, even during the conflict. And there's all questions about insurance and demining, but so far it seems that a lot of oil is getting through the Strait. In some parts of the market, you're looking at oversupply. If you're looking maybe for the case for stronger oil into the back end of the year, maybe it's the inventory story, the fact that those are at multi-decade lows and they'll have to be restocked at some point. But for now, most of the calls are for lower prices on oil.
The temptation is always to run from one side of the boat to the other, and it does feel as if the oil market has done that quite quickly. And to your point, the medium-term picture looks like one of refilling tanks, a situation in the Strait of Hormuz that may include tolls. 25 cents a barrel is a number that's being talked about. That's got to be factored in $25 a barrel. That's what's being talked about. That's a huge chunk of change. So medium term, maybe the oil price is sustainably higher. But at the moment, the market's just gone, we're done with this. Let's move on.
Is this arguably a more benign picture for the potential incoming Prime Minister of the UK, Andy Burnham? Lower oil prices, maybe a BOE that can stay on hold. Maybe the next move for the BOE is a cut. But what we're hearing from the team around Andy Burnham, a team that has given many out there some reassurance in terms of their credibility, but nonetheless some pretty significant changes that they're thinking about pushing through when it comes to the BOE, a closer coordination between the Bank of England, according to our reporting, amongst some of his team, with the Treasury, a greater focus on growth, maybe even breaking up the Treasury. So you have one department dedicated to growth. Maybe that department is even physically moved to somewhere like Birmingham or Manchester. Another part of the Treasury focused on the fiscal side because they're worried, they are concerned, the likes of Andy Haldane has talked about this, that the fiscal side and the fiscal focus for Treasury is constraining that ability to deliver growth and allowing, or at least making the Treasury more conservative than it needs to. So maybe some significant changes for the BOE, maybe for the Treasury as well.
Does it matter who's Chancellor then? That's the question. Does the Chancellor have line of sight over both of these two economic departments? Do we have two different ministers, effectively, one running fiscal, one running growth? I don't know. But that's the challenge that I think we're looking at here. And maybe that's why we've not seen yet an announcement when it comes to the Chancellor of the Exchequer.
Still waiting.
That role could be downgraded.
Still waiting for that name. Rachel Rees has been talking today, saying she doesn't want to preempt Andy Burnham, of course, and his team. And we're still waiting, of course, for the potential incoming Prime Minister of the UK to outline his economic plans next week. But there we go. So maybe significant changes coming through for the BOE and Treasury, potentially. On the earnings front, we are going to focus on the retail space with H&M. Henny's coming through with second quarter operating profit coming in as a miss, guys. So in terms of Swedish krona, 5.9 billion Swedish krona. The estimates had been for 6.35 billion. So not an insignificant miss there in terms of second quarter operating profit. They see full year net stores reducing, it seems, by 80. In terms of pre-tax profit, 5.28 billion. That's a little bit weaker than the estimates as well. Net income of just shy of 4 billion Swedish krona in the second quarter.
So Europe looks light in particular. America looks a little light in terms of the revenue lines that they're talking about here. But it looks like America, as Western Europe, has definitely been a little light as well. So it'll be interesting to see what the kind of geographical breakdown ultimately looks like. Let's talk about what we're going to be talking about throughout the rest of the show. We've talked about inflation, we've talked about Micron, we've talked about the consumer. We need to get kind of that plugged into the market narrative. Laurent Van Billon, Allspring's Global Investments Senior Portfolio Manager, is going to be here to talk about the kind of fixed income side of the fence. Sebastian Redler, Bank of America's Global Research European Equity Strategy Head, is going to be joining us, get his take on what is happening here. Yotam Segev, Kaysera's co-founder and CEO. What are we going to be talking about there? We're going to be talking about cybersecurity. That is front and centre right now. And music as an asset. We will focus on that with Evan Bogarts, Seeker Music's CEO, a little later on in the programme, Tom.
OK, let's look ahead at what else we are watching throughout this Thursday. NATO Secretary-General Mark Rutte meets US members of Congress after having that meeting, of course, with the US President yesterday. 9 a.m. UK time, the ECB publishes its economic bulletin. At 1:30 p.m. UK time, US data coming through, including, of course, PCE, that Fed's favoured price index, of course, personal income, initial jobless claims and GDP. So a host of data, but arguably the most important will be that inflation number, PCE, and that gauge coming through.
How high does it need to be to force the Fed to raise rates? How high does it need to be to justify the current rate pricing that we've got at the moment? How much momentum is there in the inflation data? Oil is going to fade from it, but is the services side really where the story is? Is this AI build-out story where the inflation is ultimately going to be coming from on a more sustainable basis? It's going to be really interesting to work our way through these numbers.
Because that is the story. It isn't just the oil and energy story. It's also the fiscal stimulus in the US. It's also the relative resilience of the US consumer. And it is, and this is something that you're underscoring at the top of the show, what we're seeing in terms of that capex spend from AI. So all of those feeding into the inflation story, with around 3.5% is the number that is expected in terms of PCE. Core PCE expected around 3.4%. And in terms of the index at the headline level year on year for the month of May, 4.1% is the forecast. So that is the data that we're expecting, of course, later today, and we'll be breaking that for you with all the market reaction, of course. Coming up, Anthropic accusing Alibaba of illicitly accessing its Claude AI model. We'll discuss that Bloomberg scoop. Plus, the NATO Secretary-General insisting that President Trump is getting the alliance into better shape. We bring you some of our exclusive conversation with Mark Rutte. Up next, we're going to be joined by Alex Jekov, head of G10 FX strategy for Europe at BNP Paribas Markets 360 on a week of dollar strength, even if today it's a little down. If you have any questions of your own for our guests, send them to us on IB+.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Morning, welcome back. 45 minutes to go until the opening trade here in Europe when it comes to the equity story. In terms of the picture we're watching at the moment, FTSE's a little soft, not much tech there. Elsewhere, Europe is kind of drifting sideways. Tech is expected to do well, but certainly not as well as we've seen overnight coming out of Asia. The Korean market, Japanese market, there's been a bunch of stories out there that are producing some very hot numbers this morning, and it's all based largely on what we're seeing with Micron. Let's talk about what we're seeing in the FX landscape at the moment. The dollar has been one of the big beneficiaries of late. Today, maybe a little bit of weakness. We're coming back. We're down by just a touch when it comes to the Bloomberg Dollar Index at the moment. And as you can see, we're beginning to climb back. Is this morning a buying opportunity? Let's ask that question to Alex Yakov, head of G10 FX strategy for Europe at BNP Paribas Markets 360. Good morning.
Morning.
Buy the dollar?
We think so. I think at the moment it's all about the Fed, and especially so for FX. We've had a view that the Fed can start hiking in December, deliver 3 consecutive hikes.
Consecutive hikes?
Consecutive hikes. But the risk is that that starts even earlier, so potentially in July. Not our base case, but we have to take it into account for our market views. And usually for FX, the dollar tends to rally when a rate hike cycle gets priced, and then usually sort of flattens out once they start delivering rate hikes, which means we think we're in for a summer of dollar carry.
How far does it take us?
In the case of dollar yen, for example, because we think most of that dollar strength is going to be pronounced in low yielders, so a dollar higher versus low yielders. In the case of dollar yen, we think we can be in a 165 to 170 range.
Euro?
And in euro, we wouldn't be surprised if we trade towards 110, but ultimately we think that euro can rebound and be a bit more resilient.
I'm still kind of meditating on your take that you're going to get 3 consecutive hikes from the Fed. Just unpack what gets us there.
So we've had a framework for some time that the unemployment rate moving towards 4% means the Fed need to hike because they'll see wage pressures. And the unemployment rate is moving towards 4%. But what surprised even us is at the Fed meeting, this very strong focus on price stability. They said in the statement, the end of the statement, quite clearly, the committee will deliver price stability. And that's an unambiguous statement, in effect opening the door to rate hikes. So to us, you don't need much more new information for them to start hiking. But I think the lack of forward guidance, if you will, makes it a bit tricky for the market to know exactly when the timing is of the first Fed hike.
OK, so you talked about the yen. And potentially 170 is where the yen gets to. What does that assume around intervention and the effectiveness of any additional intervention?
So we think dollar yen's going to be primarily driven by fundamentals, less so other factors. When we look at
as in economic fundamentals, not the yield differential that we're seeing,
including the yield differential.
Okay.
So we've had a framework where if the BOJ is behind the curve, and the BOJ is behind the curve, FX needs to gradually weaken over time. And that's basically what we're seeing, and we've not deviated from that framework. Now we've had a kicker of the Fed potentially hiking, which is going to just accelerate the move higher in dollar yen that was there to begin with. I think if you do see intervention, of course we'll see pullbacks in dollar yen, but ultimately the fundamental story for dollar yen is a bullish one. Now, in terms of flows, what you're seeing in the data out of Japan is continued buying of foreign assets, and that's also something that weighs on the yen.
Does the BOJ not have... That's very domestically unpopular. So I'm just kind of curious to see. I appreciate that we've now got a dovish government, but nevertheless, at some point, can it go beyond one side? Like, how far can you push this one?
I think it's very clear that it has to be a gradual move rather than a sharp move higher in dollar yen. But to us, there isn't a real bull case in yen. For example, if we think back 2 years ago to when we had the yen short squeeze, you had large yen short positioning build. This time around, it's very different. The market is nervous about intervention, so the market is not as short yen. So we think
right. So it's a smoother curve.
Correct.
113 on the euro. Do you assume that the ECB is done at this point? Where does euro dollar end the year then with this view on stronger greenback?
So we don't think the ECB are done. They can deliver one more hike in September, but we have to look at it through the lens of what happened during the war. During the war, oil prices went up. The front end of the euro rates curve repriced very sharply, as it did elsewhere, but especially so in Europe. And that actually supported euro rather than it weighing on euro, which is something that a traditional framework would have thought because of the growth impact. So the counterfactual, or the opposite, has to be true now. As oil prices come off and the ECB is priced to hike less or potentially not hike at all, although that's not our base case, then euro will be under some pressure.
Do we get to parity, potentially?
I think it's a stretch to say we get to parity. Usually for euro to trade to parity, you need full current account deterioration, akin to what we saw in the energy crisis of 22. I think this is probably too far.
We're back to where we were before the war in terms of the oil price. Was the market just correct to look through it? Was the market correct to be as optimistic as it was that a deal would get done? That's what it looks like with hindsight at the moment. What do we learn from it to plug in going forward from here about oil's importance and its effect?
I mean, it's always easy in hindsight.
It is,
markets.
2020 cabinet.
Yeah, absolutely. Our view from here is basically that we can trade to 70, but then ultimately we'll need to rebound closer to $80 a barrel, and that's where oil will settle. In terms of the lessons going forward, perhaps you can say the market was right to look through it, but at the same time, you never know what's happening with geopolitics at the time. We can say that for FX markets, the reaction that we saw was quite small relative to what we would have expected. So the dollar rallied by a lot less than our models would have suggested that it should.
Why? What do we get wrong there? What did the model get wrong? Let's blame the model.
We think one thing the model got wrong is that the underlying flows in FX were skewing bearish dollars during the war. So there was still some global investors reducing dollar exposures. So we saw it, for example, in Korea with retail investors buying fewer U.S. equities. We saw it in Australia with the domestic institutional funds increasing their hedge ratios. So there is some evidence still of bearish dollar flows during the war, and I think it's why the dollar didn't trade as well as it perhaps should have.
Just final quick question. Buy or sell the pound right now?
We think neither. Euro sterling is going to be in a range around 86. We had a bearish view, but we've moderated that since. You've got lower political uncertainty, and so it's less clear. It's a bearish trade.
Great to see you, Alex. Thanks very much indeed for joining us. Alex Yakov from BNP Paribas Markets 360.
OK, meanwhile, NATO Secretary General Mark Rutte has used a visit to the White House to try and ease tensions with Trump after he criticised military spending. The president, of course, from European nations. The Secretary General spoke exclusively to Bloomberg shortly after that meeting.
What I believe is to be fair when leadership is successful. His leadership is successful. And what I wanted to show today is it is successful in three ways. One, on Iran. Degrading nuclear capability. Two, on NATO, not only getting the allies to deliver, to commit to 5% defense spending, but also to deliver on the spending, and that's clearly what is happening at the moment. And third, by taking that code, that mantle of being the leader of the free world. And when he meets in Ankara, he will meet with all the allies, but also 10 countries there as guests from the Middle East, from the Indo-Pacific. A total combined GDP of $70 trillion, 2.5 the size of the United States. Absolutely there to hear his views, to get his thoughts on the next steps we collectively have to take.
Well, of course, the financial aspect of this and the investments into the defense industrial base are one part of it, Mr. Secretary General, but there's also the consideration of actual human capital and U.S. military forces that are currently stationed all around Europe. Obviously, we have now seen withdrawals and considerations that this administration is making about moving troops around further. How do you avoid anything being chaotic in nature as that plays out? And how does Europe make sure that it's able to adequately defend itself in a surprise scenario? What are those preparations like?
I think the United States is doing that. So let's first agree that the United States has to take care of multiple theaters, not only Europe, also, for example, the Indo-Pacific. And if a situation would occur where they have to defend both sides of the equation, both the Indo-Pacific and Europe, they have to avoid a situation in which they have spread their resources too thinly. This is why Europeans have to step up. This is NATO 3.0, a stronger Europe and a stronger NATO. That means that the US will stay involved when it comes to the nuclear umbrella, but also when it comes to the conventional. But over time, what you now will see, and this is a structured process, is that the Europeans are taking over more and more of that leadership role. For example, when it comes to the 3 combatant commands, they will, over the next 18 to 24 months, move from American generals and admirals to European generals and admirals. So that's also an example of Europeans stepping up. But also when it comes to Ukraine, the fact that the US is still providing all the support, but paid for by Europeans and Canada, which is only fair. So Europe stepping up, the US staying heavily involved when it comes to the conventional nuclear deterrence in Europe.
Okay, NATO Secretary General Mark Rutte speaking exclusively to Bloomberg yesterday.
Okay, what else do you need to know this morning? Let me update you. At least 32 people have died after 2 earthquakes struck Venezuela. The quakes toppled buildings in Caracas, knocking down power lines and damaged the capital's main airport. A magnitude 7.2 quake was followed less than a minute later by an even larger tremor measuring 7.5. Very rare. The biggest US banks have boosted their dividends after passing this year's Federal Reserve stress test. The Fed exam, developed as a result of the 2008 financial crisis, showed that all of the banks tested would maintain enough capital to withstand a hypothetical economic downturn. And Alibaba shares fell in Hong Kong after a Bloomberg scoop revealed Anthropic is accusing Alibaba of illicitly accessing its Claude AI model. Anthropic claimed that a campaign by operators linked to Alibaba targeted Claude's most prized capabilities. The company said it was the biggest attempt so far by a Chinese company to piggyback on the work of top US labs. Thoughts?
That this is not the first frontier lab to have accused China of doing this. We've heard this from Google DeepMind, we've heard this from OpenAI. In fact, the 3 of them are working together to coordinate on this issue. It is a real issue. They certainly see it as a real issue, and that's one way that they think that China has gained this advantage. And the risk is that China then produces much cheaper, open source and open weight models that they can ship into the US. Now, our own team at Bloomberg Intelligence is suggesting this actually raises the risk for China that you get those bans in the US market. And that's why you're seeing the likes of Alibaba and others falling today.
Okay.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
"30 minutes to the start of trading here in Europe, equity trading. Let's take a look at what we've got. At the moment, we are not looking that excited here in Europe after a exciting session in Asia and obviously the Micron narrative coming out of the United States overnight. Euro Stoxx 50 futures are up by a little bit. We're up by 0.3%. The FTSE 100 is down. Energy could be a factor there. The CAC is absolutely flat, Tom.
The bond markets are largely unmoved despite that continued downward price direction for oil. So you're seeing the benchmark German 10-year currently at 286, unchanged. Over in France, you've got BTPs in Italy, I should say, trading at 359 on the benchmark 10-year over in Italy. Over in France, on the 080s, currently at 362, also largely unchanged. A little bit of yield up and selling pressure on treasuries towards the back end, but that's after a kind of recent rally, of course. So at 441 right now in the US benchmark 10-year, and that is as the lead up, of course, to PCE. So maybe some more volatility when we get the inflation gauge out of the US later. The Federal Reserve's preferred inflation gauge is expected to show that prices rose faster in May, reinforcing bets the central bank will raise interest rates later this year. Joining us now is Lauren Van Billion, Plus Fixed Income Strategy Senior Portfolio Manager at Allspring Global Investments. Lauren, good morning. Given that we had a hawkish tilt, many interpreted it that as a hawkish tilt last week from Kevin Walsh and team at the Fed, does a stronger inflation print today on PCE reinforce bets that the Fed hikes?
First things, let's talk about last week's Fed meeting very briefly, because I thought it was absolutely fascinating. And yes, market read has been very hawkish. To me, it was more a Federal Reserve Committee sending a message to a new chairman, and the new chairman respecting that, right, not pushing back too hard at the press conference. But we know there's all these task forces to come, and we know there's going to be less communication or forward guidance going forward. So it was a very hawkish reaction, and I'm not sure the meeting was hawkish enough to justify it. Today's PC is going to be super important. I've spoken before about one thing we watch really closely is that shelter and housing gauge, because that's sort of where we see that disinflation coming for this year. It's really interesting to see where that month-on-month number is sitting, because with oil prices coming down, how quickly does that start to feed through to inflation? And is that what bails the Fed out looking into Q3?
So that's interesting. You're looking at services, you're looking at housing, and yes, the energy price story is moving in a different direction, a more benign direction. What expectations, what are you assuming as you forecast on inflation about the price impacts of the CapEx spend on AI?
Oh, that's a big question. I mean, that CapEx spend for AI is not going anywhere. That's absolutely going to be a tailwind to US growth for some time to come. And globally, although the US certainly has the edge there. I think it's difficult to put it into the inflation numbers. I think all we can do is take it month by month and see where that trend takes us.
Do you think it is going to be inflationary? Like, it looks like it.
Over the short term, I think yes, the pressure is there. Longer term, I still prefer that argument of a productivity boost and disinflationary. But I think the timing is very uncertain. So I think short term is more likely to be inflationary, and then we get that disinflationary benefit sort of over the longer term.
Yeah, I guess it's when does the longer term arrive is the key question around that. Surprisingly, gilts have done very well recently. Does that persist?
Yeah, I think the market was quite relieved not to get an outright leadership contest out of Labour. There's certainly risks looking ahead, right? We need to know who's going to be the next chancellor. We need to know the new administration's priorities, what they're thinking, the fate of the self-imposed fiscal rule. I think short term, there's room for gilts to continue to outperform, particularly if that external environment is supportive. The BOE has had a couple of bits of good news recently. So pricing there on rates has eased a little. I think there's still reason to be nervous, but maybe it's more about the currency than sort of short intermediate gilts. Maybe it's more the currency and sort of long dated.
Yeah. So if you do long dated, is that where you want to be positioned when it comes to the curve and gilts? You don't want to be at the front end. You want to be more at the long end. Is that the stronger opportunity right now?
I think those 2.5s, even 10s, I think are interesting to me. I think 30-year makes me a little bit nervous just with that amount of duration that's sitting there. But I think the rest of the curve, depending on your risk profile, of course, can be quite interesting. Where I think the UK curve is interesting is that there is still about just over a hike priced in for this year, but it's sitting very much out in Q4. So the 10-year still looks fairly stretched in terms of valuations, but it does require kind of that constant trickle of neutral to good news out of UK politics to behave itself.
Okay, so 2.5s, 10s, steering clear maybe at the 30 right now. US Treasuries, what's looking appealing there, if anything?
Now that is a good question. It has, an amazing move yesterday to end the day. We have been over the whole of the energy price shock, we have been modestly adding duration, ex-US and in the US, but it has been more in that sort of 2 to 5 year area of the curve. Again, it's that very long end of the US that makes us a little bit nervous, just given the fiscal pressures and overall debt dynamics, and that's true pretty much everywhere. So we've been adding more in that sort of belly of the curve, and even really recently have been rebalancing, taking profits on some of our ex-US positions to drip back into the US. So we think you are being compensated for all the risks, right? Real yields absolutely kept pace with the rise in inflation, and with that energy price shock potentially now exiting, right? Bonds look pretty well positioned.
Okay, let's talk about that a little bit more. Why do I want to own bonds at the moment? This is a genuine question. Is it because of the yield? Is that enough? Am I getting good enough compensation when it comes to owning the bond market at the moment? Because demand is enormous. Because it doesn't look as if bonds are going to play that balancing role in my portfolio at the moment. What is the case for the bond market?
Well, we have seen them play that balancing role this week, right? There's been this little wobble in equities, and bond markets have really behaved very well. And I think bonds are offering yield, which they haven't for a good long period of time. And that's a yield whether you look at in both nominal terms or inflation-adjusted terms. So I think there's still, right, people need that liquidity. There's that outright yield. There's inflation-adjusted yield. So I think there's a number of reasons to own bonds, whether that's sovereign or corporate. Right, corporate credit spreads are tight, but they've behaved very well.
Yeah.
And I think if you can be active with your security selection, if you can be careful on your duration, there's a lot of opportunity there.
If we were to see equity markets rolling over, what would bond markets do in that kind of scenario? If we do see a drawdown, what happens to the bond market in that kind of a narrative? If we see a growth shock, what happens in that kind of a narrative? If we don't see a growth shock, but we do see equities coming off, what do we get? What questions are you being asked about that side of the ledger?
Yeah, I mean, we've seen that this week, right? We've had that wobble in equities, and sovereign bonds have gained ground. We've been through, hopefully, the worst of the energy price inflation shock, right? And the growth shock, that sort of demand destruction, is coming into view. So I think the risk reward on bonds is shifting more favorably. Yes, we've seen a little bit of monetary tightening out of the ECB. But again, I think the pricing, do we even see one more out of the ECB? I think that's questionable, listening to comments this week. That inflation shock was always going to happen faster than the growth shock, which is played out exactly as expected. And now we're seeing that sort of growth, that negative pulse on growth coming into view, right? Services PMIs, a favorite of mine, but I think potentially significant. And in that scenario where you've got that inflation risk receding to some degree, and that sort of growth, that negative growth shock coming into view, that is a good setup for bonds.
You talked about the opportunities in credit as well, and how that's been, and I'm quoting you, well behaved, Lauren. Do you see the spreads being compressed further from here? How do you see that story evolving, and what parts of the credit space look most attractive, and what are you avoiding?
Yeah, excellent question. Yes, I mean, credit spreads have been very well behaved, right? We're at sort of historic tights, and every little sort of blip higher gets met with really strong demand, and that does seem to be a running theme, right? There's a lot of money waiting to be put to work in the credit markets, and yes, spreads are tight. That all-in yield is very attractive, but you can be thoughtful about where you're putting that money to work, right? Structured product, I think, is still very attractive. We're looking at higher quality corporate credits, really strong balance sheets, limited duration, plenty of cash generation. I think areas like that will really be additive to any portfolio over time. I think there's absolutely room in the high yield space to add value, but it does require an active manager who can be very nimble and is spending a lot of time on security selection, being quite thoughtful. I think European credit, or at least European high yield, maybe struggles a bit more if the European economy does take a more serious downturn. But again, right, for an active manager, there will be opportunities.
Active, that's all I hear at the moment out of the fixed income space. You've got to be nimble. Lauren, great to catch up. Thank you very much indeed. Lauren Van Bilger, Senior Portfolio Manager at Allsprings Global Investments. Coming up, what are we going to
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US, or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
Welcome back. Asian stocks, at least most of them, climbing this morning after Micron delivered blowout earnings and outlook. The largest US maker of computer memory chips surging in late trading after its quarterly sales forecast crushed Wall Street estimates, helping revive the broader AI trade. Let's bring in Anthony Stevens, our markets reporter in Hong Kong. Anthony, there was never a problem with demand. There's not a problem this quarter. There's not going to be a problem next quarter. This seems to be pretty bullish in terms of the broader uplift that we're seeing when it comes to the memory story and the numbers from Micron.
It's not just the demand, it's the margins that they're getting from the demand, right? We're talking about 85% margins in the fourth quarter and a visibility into the years from this strategic customer commitment. So the market in Asia is really grabbing hold of that commitment narrative, that margin narrative, and that's why you're seeing this huge pop in Hynix and Samsung and also some of the memory names on the mainland in China. Remember, China has 2 big memory IPOs coming up later in the year that will seek to play to this theme. You know, what Asia loves about this story is that this margin expansion speaks to a supply shortage that can be kind of externalized to the broader semiconductor ecosystem. So if Micron has this kind of money to throw around, $50 billion in the fourth quarter, then supply chains names like semi-equipment names, chip materials in Japan can really rally. And we're starting to see that trend really push on as you guys come into trade today.
Yeah. Okay, look, what this looks like to me, Anthony, is a massive wealth transfer from the shareholders of the hyperscalers to the shareholders of the memory makers. Is that what's happening here? Because that looks like the trade. Is it basically just short hyperscalers, long memory?
Yeah, we're seeing like half a generation of free cash flow from the hyperscalers being returned to shareholders. Unfortunately, it's not their shareholders, it's the shareholders of people who are in Hynix, Samsung, Kioxia, and Western Digital, right? And you're spot on as far as that transfer is concerned. Now, in the US, hyperscalers are still net up. They've just fallen off the wagon in the last quarter. In Asia, the story is much worse when it comes to the Chinese ecosystem. And I think the Chinese ecosystem really tells you a much neater story. The people spending on the AI, they continue to see their share prices declines. HS Tech is in a bear market, and the people getting spent on in the Chinex market and in the China semiconductor space, those stocks are up 100% plus on the year.
Yeah, you do wonder at some point whether or not the hyperscalers just go, enough is enough. But we'll wait for that moment. It may come at some point. Anthony, great stuff. Thank you very much indeed. Anthony Stevens, our market reporter, joining us out of Hong Kong. Let's turn to today's markets in 3 minutes. Mark Cudmore is here. Mark, what do you make of Micron?
Obviously, incredible earnings. And as Anthony just outlined there, the margins there are very impressive. I think this kind of, reaffirms the story that the AI capex bubble is still got plenty more to inflate. And the recent volatility we've seen is just that. We're in this kind of volatile end phase of the bubble inflation. And again, that volatile end phase can last for many months. Again, the benchmark here that we looked at for prior bubbles is normally about 6 months, and I'm kind of seeing the start of that bit happening in May. So maybe we kind of go through towards the end of the year on the AI capex bubble. Now that's all just kind of a rough guidance framework. I think we continue to watch those earnings, future earnings for kind of when we've got a sign that the capex bubble is going to burst. But until then, as Anthony just outlined, you know, that there are names in Asia and Micron also in the US that are making real hard money here, like hand over fist.
Mark, is some of the investment flows that we're seeing going into some of those chip makers coming from Bitcoin and gold and silver, or is that much more a dollar story? Because gold and silver are getting whacked again today. Bitcoin's at around 61,000.
I think it is more a dollar story. I think that's a dollar and real yield story. So with the collapse in oil prices, we're seeing a rapid kind of decline in inflation expectations, inflation swaps, which means we're not seeing the same kind of, the decline in yields is a bit smaller, and therefore we're basically seeing real yields stay very elevated compared to the last year or so. And that combined with the strong dollar is weighing on precious metals and on crypto stocks. I do think it's true that before, when we got dips in those kind of assets, retail got excited to buy into those dips, but they're just ignoring them. They're not the fun casino to play anymore. It is AI meme stocks, which is perceived to be, you know, really high volatility with a positive skew. And so, yes, there's no attention to buy the dip in those, but I don't think it's about money directly coming out of them to go into AI.
Inflation data later today. How could that change the market narrative?
I don't think that's probably, going to be a big issue. I think this is one that we're kind of expecting. I think what's more is kind of the Warsh signaling that we get over the next couple of months, knowing that he doesn't want to provide too much signaling. But people are got used to the last kind of 15 years of Fed guidance and of over-interpreting everything muttered by Fed officials. And I think that's quite a weird setup where we're going to have Warsh trying not to guide the market, but he will be kind of, all his words will be parsed. And I say that in reference to the fact of Sintra next week. And I think that's more relevant than the backward-looking data on inflation, given that the inflation dynamic is changing very rapidly with the way that oil prices are coming down very quickly. So we're seeing a real kind of change in scenario than we were assessing even only a month ago.
Okay, really interesting that the meetings of Sintra next week could be more important for the markets than the PCE today. We'll see if that transpires. Bloomberg Markets Live Executive Editor Mark Cudmore. Mark, always appreciate your insights, of course. Remember, you can get up-to-date analysis and more insights from Mark and the rest of that fantastic team. Just go to MLive Go on your terminal. Let's get your stocks to watch right now. Charlie Wells with an eye again on tech. Charlie.
Tom, all eyes are on that European tech story because of those Micron earnings that really blew past expectations. Those have lifted a lot of these tech-heavy Asian indices. And so what I'm watching this morning, does this screen of red, these European semiconductor companies had a bad day yesterday, does this flip to green in just a few minutes on the back of those Micron earnings? Because what we know is if Micron is doing well, that could bode very well for the likes of ASML, which provides a lot of that semiconductor equipment to Micron. So really, this is a dominant theme going into today, looking at European tech. But let's flip and take a look at another company. We've got VW in focus because Bloomberg is reporting that Bain Capital is going to acquire, has agreed to acquire a controlling stake in VW's Everlance. Now, this is a heavy diesel engine unit of VW. They produce those engines, those marine engines, for the sort of craft that carry a significant majority of global trade. So we know that VW's share price has been under pressure. They're trying to streamline operations, hence offering this controlling stake to Bain Capital. And we know that this could give VW over $7 billion. They need the cash as they try to streamline operations. It simplifies the business. And this was a hot auction. This was a hot auction for private equity. Private equity firms, we know that they're heavy into tech, but they're also looking to diversify into industrials. And this gives Bain Capital that controlling stake in Everlance. So again, watch VW. Does that help to kind of turn the story around even just a little bit here at market open? Let's end on H&M. They had earnings out this morning. Those disappointed. We know that H&M has been struggling. They are in a very heated rivalry, I'm going to use a pun there, with Inditex, the Zara parent. You can see here this year so far, Inditex really pulling ahead despite the fact of a weak consumer. H&M has really been struggling with strategy. Let's flip and take a look at Charles Allen from Bloomberg Intelligence talking about the strategy. They've really tried to shift into to women's wear, and that really has not been working so well. We know that Inditex, our arch rival, is able to really move from design to shelf much quicker than H&M. So that's a struggle that we're likely to hear about in the days ahead.
Charlie, great stuff. Thank you very much indeed. Just want a quick comment on EasyJet. So EasyJet currently trading into the market this morning at kind of 540. Castle Lake, the USP firm, is offering 650.
Yeah.
EasyJet has rejected that.
But
it is actually talking about the fact that maybe actually giving access to the books could generate a higher offer. There is slight questioning around the ownership structure. Remember that the Castle Lake is a US firm, therefore has an AOC issue in terms of ownership. It's got to have a...
What's an AOC issue?
It's an operating license. Basically, to operate in Europe, you have to have a European operating license that has to be owned by Europeans. So therefore, there's an issue around that. Castle Lake are trying to get around that, but they are pushing out the deadline for this bid now, which is interesting. So they're basically saying, come and have a look, take a look at the numbers, see what they look like.
So is that a softening? Is that a softening from the board?
It does feel like it's a slight softening, but it also points to the possibility of a deal. And the stock is at kind of 540, 650. So you go even higher than that. That's why the stock is called up this morning between 5 and 10% in terms of what I'm seeing this morning on the numbers that we're projecting.
July the 5th seems to be the new deadline. Yeah. So we look for that move. No doubt energy prices low. Oil is going to also help the broader travel space as well. We continue, of course, to watch the miners. We were talking about the fact that gold and silver, gold back below 4,000, silver comfortably below 60 right now, and also, of course, what's happening in the tech space as well. So all of that, of course, in focus. As we look at European futures, currently pointing up by 0.3%. It's a much brighter picture when it comes to the US, though, with the Nasdaq now called up a full 2%.
Yeah, it's a tech rate. Basically, Europe doesn't have it. It'd be interesting to see how SML trades this morning. Infineon, those kinds of names could have a better day in terms of what we basically can extend out of the Micron narrative. Basically, super hot demand for chips. It continues to be the story. Anyway, we will give you all the numbers and bring you any surprises. We will find out in a few minutes' time what we are watching. But certainly, it looks like a more positive picture this morning. The opening trade.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Anne-Marie Hodern in Beijing, China, and this is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Of June, 2 minutes to go until we start trading here in Europe, and let's talk about the setup that we have got. This chart is completely irrelevant. I'm joking, it's not completely irrelevant, but it's largely irrelevant. This is the picture yesterday out of the United States. That's where we closed, that's where we finished. The problem is, though, that after we closed, we got the micron numbers. The micron numbers were sensational. Asian stocks go flying to the moon again. US futures are pointing sharply higher. That is the narrative that we are dealing with this morning, rather than what we're watching here. Europe is a little more nuanced. There's a number of factors we need to fold into the European picture this morning. So let me show you futures here. We are a little bit subdued. Maybe that does have something to do with the chart that we're looking at here. Maybe I'm over-interpreting the picture. But the Eurostoxx 50 is up by 0.4%. We're expecting tech to do very well today. That is the narrative that you're going to see around the world. But there's other stories you need to fold in. You've got a oil story that is coming down. That's going to weigh on London. You can see that there. You've got a mining story that is seeing gold coming down quite sharply. That's going to weigh maybe on London as well. You've got H&M you need to fold in. That's a factor you need to be aware of. And you've got other stocks that we need to be talking about as well. So, Tom, what do you got?
Stocks to watch. So, focused on what is happening with tech. I'm just looking at the supply chains for Micron, and so ASML is right at the top of the list. So look at ASML, but also look at companies like Air Liquide over in France. It's a big supplier as well to Micron. So on the back of those blowout earnings, those could be a couple of stocks. BE Semiconductor as well that could benefit on the back of those blowout earnings, as you said, around Micron. HM, so this was a miss on the earnings coming through, so that company appearing to struggle across some of its geography. So we watch H&M. EasyJet, really interesting, rejecting a fourth offer from Castle Lake, price of £6.50, so a big premium there, but keeping the door open to Castle Lake to come back. So that's another company that we're focused on, Guy. Okay, so we've got some single stocks we need to focus on. Let's give you the index numbers and show you what the open looks like here this Thursday morning here in a very hot Europe. FTSE 100, flat. Nothing really to see there at index level. Below the surface, though, I suspect we're going to see plenty of activity. It's going to be interesting to see how the miners, the oil trade, goes today. It's going to be interesting to see how EasyJet works its way through what is becoming a really interesting takeover story. Stock 600, up by 0.1%. There's no clear, obvious kind of narrative in Europe in the way that there is in the United States this morning, with the Nasdaq futures up as sharply as they are, with the Asian trade obviously delivering what it's done overnight. Europe is not the same kind of a beneficiary. The AEX is up, though. Tom's point about what we're seeing in ASML this morning could be a solid story. ASML, supply chains into the Micron story, and so many other companies as well within that memory space. So AEX is the big beneficiary. We'll wait for the DAX in just a moment. Elsewhere, a very flat open, pretty much as anticipated here in Europe. Tom. So across your sectors, tech is firmly at the top of the list. Gains for that sector of 1.4%, and that is outstripping all the other gains coming through on a sector-by-sector basis. The second best performing sector right now is construction materials, up 0.4%. But again, technology head and shoulders above that with gains of 1.4%. And ASML is certainly playing that part, and a significant part. That stock is up now 4%. That is really significant, of course, given the market weight of ASML in terms of the points move as well. On the downside across your sectors, basic resources, we had flagged this to you given the pressures that we're seeing across the likes of gold and silver. I'm just checking copper and iron ore prices. Iron ore also down 0.9%. Copper, though, is up just 0.1%, but it's the pressure on iron ore that is probably weighing on basic resources. So that sector down 0.9%, followed by media down 0.7%. But really, it's the basic resources story. Weaker tech with strength for Europe, and some gains coming through there across the board, across some of the big tech players here in Europe.
So the stock 600 is up by 0.88 of a point, OK?
Yes.
In terms of the points add at the top end, you've got ASML adding 1 point. So just in terms of the kind of the magnitude of the impact you get from ASML when it really moves, you are certainly seeing that today. What is interesting is that SAP is down pretty hard. So it's a software hardware story that we're watching very carefully this morning. We're seeing a reversal of the trend that we've seen over the last few days, which has been into the safety of the pharma space. That is reversing. Astra, Novartis, Roche, those kinds of names. Nestle also in the mix there as well on the downside. And then you've got the energy trade. It is softer today by some significant margins. So tech up, pharma down. Pharma's pretty much under-owned still at this point in time. And you have luxury coming off. You've got energy coming off. It's kind of these other big heavyweight sectors under pressure.
Let's get some more analysis and bring in Sebastian Rader now, Head of European Equity Strategy at Bank of America Global Research. And Sebastian, we want to get your views on the European equity space, but let's start with the chip story and the revival, it seems, to that AI momentum trade coming through from Micron. Does this have further to run? How comfortable are you with the numbers that we're seeing from Micron and what it tells us about the demand picture? Does the chip story have further to run? Is Asia still the clear beneficiary on that story? I mean, Micron, a US company, of course, as well. Is that where the leadership remains?
I mean, it's definitely where the leadership is for now. And also, if you take a look back, this is what's been driving markets in a way that we've never seen over the past 2 decades. We have an absolutely momentum-driven market where everything that is hitching its ride on this particular train has done extremely well. Everything else has fallen by the wayside. So we have very high dispersion. We have a K-shaped equity market. But everything in the tech space looks very stretched. And ultimately, the question is, who's going to pay for all this capital expenditure, for all this capex that is basically fueling the Micron demand? And the answer is, it's going to be the end user who uses AI. And the question is, what's the pricing power there? What's the willingness to pay? And I think the profitability projections that you have currently look very optimistic. You're expecting peak global margins. You expect margins in tech that you've never seen before. And the question is AI a high-margin business that can fuel all this capex boom that is going on at the moment? And the projections that we're seeing look very optimistic.
OK, I mean, Guy Johnson has views on this. And to be fair to Guy, he brings us up almost on a daily basis, this question, the gap between the ROI and the spend that's coming through on capex. What is that what is the window then, Sebastian, in terms of when that really hits and when that becomes a problem? Because so far it is not become a problem.
That is true. So I think we're seeing 3 data points, I would say, that suggest we're getting closer to when it's a problem. And then we get into very dodgy territory where you look like these boom and bust cycles that you've seen in the past. And I think we all have to open our history books to see what happened to the railroads in the 1880s, what happened to the radio boom in the 1920s. And the 3 data points that we're seeing is the frontier model labs have started to increase their prices. Everybody loves AI if it's for free, but now they've increased their prices. And what we've seen is we've gone from token maxing to customers pulling back, rationing. Secondly, if you want a high-margin business, what you need is scarcity. You need to have a product that nobody else has. But what we see is a proliferation of model providers, cheap, open-source Chinese models. If you're trying to raise your prices on this AI product that everybody wants, but there's a cheap, low-cost option that people can route 80 to 90% of their traffic to, then you've got a problem. You've got basically a ceiling of how high prices can go. If you do 800 billion of capex over the next 12 months, you better have pricing power. You better have a high-margin business. But this is not the cloud. This is not an oligopoly with a few providers. You've got 20, 25 very strong providers that are within 5 IQ points of the frontier models. This is not a high-margin business as far as I can see.
But isn't that tomorrow's problem? Today we're dealing with the boom.
Yeah. So what you're seeing already, the hyperscalers they've of course jumped a bit on Micron. The hyperscalers, the people who pay this 800 billion, they've underperformed the market by 15%. They're at a 1-year low. Map the semis against the hyperscalers, the guys who get the spending versus the people. There's a big gap now. So what the market seems to be saying at the moment is the hyperscalers potentially won't see the returns on that investment. So what are you going to do? Are you going to keep spending, or are you destroying value? Will you have to pull back? But the people who receive that spending, they're basically still priced for all of this to come through. There is a big gap there. And so...
Yeah. But I'm a portfolio manager. Yeah. I'm sitting here watching us chatting about this. On a day-by-day, week-by-week, month-by-month basis, I'm judged on whether or not I'm under or over the market. Absolutely. I got to chase it, haven't it? Yeah. That's why it's a momentum market.
Absolutely. So it's the biggest momentum market in 20 years. High momentum versus low momentum has outperformed by 40% this year. So what I'm saying is, you think it's painful to not be part of this. But if the moment this breaks and the moment you're basically positioning yourself for something that will not happen, it's going to be even more painful on the way down. So there's pain either way. You have to choose your pain. Or as one client in Switzerland who's done this for 30 years told me in a very witty way, he said, we are going to have to survive twice. You have to survive on the way up, and then you have to survive again on the way down, and you need very different survival skills.
Okay. How do you survive on the way down?
You look at the trades that have been left behind that are very cheap, like the staples, like pharma. Staples is the sector with the largest negative correlation to the AI trade. These are businesses where the underlying business logic still works very well, but they don't work in this cyclical environment. The moment it turns, the moment customers tell us we're not willing to pay that much for AI, the moment that customers route their traffic away to the cheaper models, the moment that the first hyperscaler says, actually, I'm not sure I'm creating value here, let me take down that CapEx number, there are a lot of defensive sectors that are waiting to roar.
I keep coming back to this question, is that an absolute trade or a relative trade? Do I outperform on the way down? Do I just not fall as far? Or do I actually benefit by being in those spaces?
I think if you look at the deflation momentum, once that breaks, the idea that you create absolute value, I think is very sanguine. Yeah. It's really about trying to protect yourself as much as you can.
So just a smaller drop, basically.
It's a smaller, maybe you're even flat. But in that environment, clearly, it's not about creating upside. It's really trying to avoid the downside.
In Europe, in the here and now, we've got a more dovish, it seems, a slightly more dovish interpretation from Christine Lagarde. We've got oil prices falling. We've got a US economy with European exposed exporters to a strong US. What's not to like in Europe? So we've got oil back to pre-war levels. This is surely a moment for European stocks to gain.
So I think for us macro researchers, we have to basically put aside, I think, our normal models about the normal fluctuations of the cycle. If you just look at the cycle, you think it's fantastic. You avoided the energy supply shock. The US labor market looked very weak at the start of the year. It's looking significantly better. And there's a lot to like, as you say. But then you have to ask two things. What is already priced in? Risk premium at a 20-year low and record margin expectations. So what you already have priced into the markets, the corporates over the next 12 months will be more profitable than they've ever been over the last 20 years. And then you have to ask yourself, is there any good news that has not yet been discovered? Or is there potential bad news that is basically being ignored? And what I'm saying is these margins will only come through if the hyperscalers keep spending, if you discover that AI ultimately is a high margin business. If not, you're pricing something today. We're talking
about European margin expectations.
European margin expectations at 11.5% are higher than they have been at any point over the last 20 years.
And they're dependent on the hyperscalers.
And because that's what I'm saying, is in Europe, the momentum, everything that has been hitched on this AI trade, which is capital goods, construction materials, mining, utilities, the margins have gone up. And therefore, you've got expectations for this to be a golden age of corporate profitability that will only happen if AI turns out to be a high-margin business.
Okay. Again, stepping back, there's a lot of... this sounds like a highly volatile environment. Can I use options? How can I use options to protect myself? What can I do here? To your friend in Switzerland's point about the upside and the downside, is it worth at this point basically selling some of the upside to protect myself on the downside? What am I doing here if I'm worried about that kind of two-way risk that effectively you're talking about there?
So what I would say is one interesting protection way to have a balanced portfolio is look at the cyclicals that have not participated in this. If the cycle
I get that. So that's but that's still an absolute trade.
It is. So what I'm saying is, I would say the bonds look interesting at this point. Everybody expects hawkishness, but the underlying reason for the hawkishness, which is based supply disruptions from the war, very high oil price, that has melted away. So look at bonds. Bonds have rallied very strongly. I think there's scope for this to continue, especially if some of the capex numbers disappoint. I think options definitely very interesting. Buy some downside protection. The interesting thing is, of course, nobody wants to do that because people have lost a lot of money on this over the last 4 years. And apart from that, you've got, at least on a relative, you've got a lot of really interesting pair trades in a market that is more stretched and has more dispersion than we've seen at any points over the past.
Did I just hear correctly that the equity guy thinks bonds are a good idea at this point?
Yeah. I think they are.
So bonds are going to protect me?
They protect you. It depends on what risk you're worried about. If you think we're going to overheat and the Fed has to hike several times, then clearly they're not going to protect you. If you think that this current level of capital spending with tech investment at an all-time high and very questionable unit economics, if you think this has gone too far, then bonds look interesting.
There you go. Sebastian Redler, Head of European Equity Strategy at Bank of America Global Research. Such a pleasure. Always nice to see you. Thank you very much indeed. OK, let's take a quick look at what we are watching here in Europe. This is what the Core 6 looks like. As you can see, you've got a very big upside coming through for the likes of ASML. Schneider's up as well. The Rheinmetall's stabilising a little bit after yesterday's trade. But names like Nestle a little softer this morning. So that's what we're watching. Let's talk about the tech trade in more detail. Charlie's got what we need to watch there.
Thank you very much, Micron. That is what these European tech names really seem to be expressing this morning in the market. We know that ASML is a major supplier to Micron, and Micron's blowout earnings and forecast are really bringing a lot of positivity to that European tech sector this morning. We're seeing a lot of green here from these major semi and semi-equipment companies. So again, this was expected. I think the key question is, how high does this go today? That's what we're going to watch, the amplitude of the gains for European tech in that semi space. Speaking of amplitude and altitude, let's flip to EasyJet, because we've been watching this stock over the past couple days here with that Castle Lake offer. That's the U.S. alternative asset investment company. EasyJet has rejected for the 4th time an offer from Castle Lake, but it's looking like, according to Bloomberg reporting, they could leave the door open to give Castle Lake a little bit more time to see what comes of that, giving a little bit of an extended deadline there. EasyJet shares up well over 5% this morning, but EasyJet basically saying, you got to offer something more. This is just not enough. So again, the market digesting that in a positive way. We had earnings out this morning from H&M. Let's bring those up. Let's bring that share price for H&M up as well, down over 1%. So again, those earnings missed expectations. H&M has been struggling in the market. They've really been competing with a lot of these sort of cheaper rivals, the Primarks of the world, but also some of those rivals that have, slightly better supply chain operations. I'm thinking about Zara, parent Inditex. So again, a struggle there. H&M also contending with cooler weather in some of the key markets, especially at this time. When we're thinking about the weather, it's really hot outside, but that cooler weather ate into some of those earnings for H&M. I want to end on Moonpig. This is a little bit of a surprising one. That's that UK card, that online gift retailer. They're up nearly 9% this morning. This is also an earnings story. So they had earnings that analysts really like. JP Morgan talking about how Moonpig, at least so far, has been at a really positive valuation. They really like their profit growth and their cash generation as well. So again, Moonpig solidly in the green this morning.
Charlie Wells, thank you very much indeed on some of the individual stocks on the move this Thursday. Coming up, as we've been hearing from Charlie, a disappointing earnings print raising questions about H&M's turnaround strategy. We'll get more details.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers, and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech. Every weekday, only on Bloomberg Television.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back to the opening trade. We are 17 minutes into today's session, and the optimism on the back of the blowout Micron earnings is lifting the picture for European stocks. Currently across the benchmark, 0.4% is the gain coming through. ASML's performing very strongly. DAX is up 0.4. The FTSE 100, though, here in the UK, 10,461, largely unchanged. We're also keeping an eye on the retailers.
And as a Maritz, H&M reporting weaker than expected second quarter earnings, posing a fresh challenge to the Swedish fast fashion retailers' turnaround efforts. CEO Daniel Evers' efforts to revive growth have come under increasing scrutiny this after years of, let's call it, uneven performance from the business. We're joined by Bloomberg Global Business reporter Jennifer Creary now to discuss what the takeaways are. What are the takeaways? It's another quarter of underperformance.
Yeah, I'd say it's a bit of a mixed picture, though, and there's some nuance to it. So on the face of it, of course, weaker than expected results. If we look at operating profit, that came in at almost $610 million. That missed analyst estimates. But H&M is saying that that figure was affected by one-off costs relating to operational changes in sales and marketing. So what those costs are, whether they're AI, whether they're job cuts, we're going to find out more about that in a management call happening right now. But if we exclude those one-off costs, then operational profit actually rose 11%. Having said that, sales fell 3%, despite analysts predicting that they would remain flat. So taken as a whole, what that tells us is that H&M is making progress in its operational turnaround. It's becoming a more leaner, agile organization. It's dealing with those inventory problems that it struggled with in the years after COVID. But it's still struggling to really find a winning formula for sales growth. In other words, in order to kind of boost demand for its clothing.
So the call is just starting, actually. Evers saying still not where we need to be on sales.
Exactly, to your point. So the efficiency is coming through, but sales are down, as you were saying, more than 3%. So what is holding them back on the sales story then?
I mean, that's the big question, right? H&M is kind of struggling to find its place in the market. You know, on the one hand, it's being squeezed by lower-cost rivals like Shein and Primark that has a more attractive price offering. On the other hand, it's being squeezed by the likes of Zara, which, you know, is a bit more expensive, but it's able to put its products out into the market a lot quicker. It's a lot trendier, and it's generally performing a lot better as a brand. So, you know, H&M needs to find its its place in the market. It's also struggled with the crisis in the Middle East. It warned in Q1 that, you know, that the higher prices for consumers are going to dent overall consumer confidence. So it's kind of being squeezed on all fronts, and it really needs to find its place in the market.
So what is the macro read here? If I'm looking at this from a sort of macro perspective, what does it tell me about the consumer and the consumer story in the United States and the consumer story here in Europe?
Well, the consumer has a lot more to choose from nowadays. You know, there are more brands, but also, you know, when they're being squeezed by inflation, by cost pressures, you know, they're able to opt for cheaper rivals. And H&M really needs to find a way to become a quicker, more agile organisation to cater to those consumers.
Jennifer, thank you very much indeed for breaking down the H&M story for us and the broader read across as well. That stock currently down a little over 1% right now. Bloomberg's Jennifer Creary. Now, the CFO of German autos supplier Aumovio says negotiations to secure memory chips for next year are proving difficult as AI companies consume supplies of the key components. Aumovio is the former Continental unit that makes vehicle radar sensors, camera systems and connected cockpit electronics. Jutta Dunges spoke exclusively to our very own Anna Edwards at a Bloomberg New Voices event in Frankfurt.
We see prices for chips memories going up, but this is not the trigger for that is not the Middle East crisis. This is a trend that we have seen before, triggered by the development of the data centers, as I explained. You mentioned helium. This is something that I also learned was new for me, that when you get explore gas, that this is a side product, helium, and if gas infrastructure is destroyed, then you are lacking helium as well. And that is needed to, as you said, produce the memories. Compared to what we have seen before, memory prices going up because of the overall shortage because of AI, this is only a very minor effect, I can say. And our suppliers are not basically sitting in that area, so we are not affected by that. So for us, it's more second round effects, energy prices and logistic cost.
Are you forced to, those contracts you have for chips, though, are you forced to pay higher prices? Is it more difficult to get hold of them? Because we cover data center stories day after day after day on Bloomberg, and everybody is after those memory chips.
I think we need to differentiate.
Different chips,
so for 26, we are almost fully covered when it comes to volumes. We have also, to a very large extent, fixed the prices that we need to pay, and that we did early on. So for 26, we are doing okay. There is an increase, but we are also talking to our clients and negotiate prices to recover the cost that we see, at least to some extent. So this is how we deal with that. And then for 27, the story is a bit different, where it's really difficult to get the volumes procured, and we have started early on this year to reach out to our suppliers. What you see is that nobody is willing to agree on prices. Obviously, they want to keep the upside. What we do is, in close cooperation with our customers, with the OEMs, to understand what are the volumes that will be needed for 27, and we try to procure them now. And what we need to make sure is that we have the agreement with our customer that whatever the price will be, there is a fair share of the burden.
Okay, that was Aumovio CFO Jutta Dunges speaking to Anna Edwards at the Bloomberg New Voices event in Frankfurt. And a reminder as well from her that there is still this continued shortage. They're seeing it as well in terms of chips, and it's not just HBM, it's NAND, it's DRAM as well. It's across the board. And of course, that in light and on the back of the Micron earnings that we had and the expectations that, you know, the analysts out there saying that pricing is going to remain high at least, and shortages at least through 2027. But there are companies looking to take advantage of the market enthusiasm around the chip
Everybody's So what is interesting now is you've got a whole bunch of Asian firms basically looking at US markets and saying maybe we can fund some of our growth through the pools of capital that exist in the United States. But that pool of capital is getting more and more difficult, I would argue, over the medium term. You've got governments looking to obviously deal with their funding story. You've got the hyperscalers looking to deal with their funding story. You've now got these Asian companies looking to tap into that same pool, effectively, of capital. Is there enough to go around?
Yeah. So SK Hynix is looking to raise more money than Saudi Aramco did in 2019. So it would be amongst the top 5 IPOs ever, with the ADRs planned in the US. How, is there the liquidity for that? And then there's Japan's, what is now Japan's most valuable company that makes pretty standard memory, Kaishia, which is also planning, and they're thinking early 2027. So is the momentum still going to be there? Is that market going to be open for them?
The hyperscalers have not only gone to the debt markets, they're now going back to the equity markets as well. They're not retiring equity, they're expanding equity. That's a story that you need to pay attention to. You've got massive IPOs coming. Look, I've just had SpaceX, but there's more coming. OpenAI, Anthropic are coming towards the market. Huge demand again for equity shareholders' money. They're all trying to target the same pool of capital.
Coming up, we are going to get to a different angle on the AI story. This is around cybersecurity. As companies adopt these AI solutions, what are the cybersecurity risks? How do you mitigate some of those? We're going to be speaking to Yotam Segev, who is the CEO of Sierra, one of the most highly valued cybersecurity privately held startups. That conversation is coming up after the break.
Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in Season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch Season 2 on all these lovely channels.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Happy Thursday. This is the opening trade. We are 30 minutes into today's session. You're seeing modest gains coming through across the European equity space, certainly helped by the Micron story, earnings that beat, raise and beat again from Micron. So you're seeing gains across the benchmark of 0.4%, and certainly the tech names, most of them in Europe are playing their part. Certainly ASML is, and many of the providers of kit. ASML gets about 7% of its revenues from Micron selling tech into that company. The DAX is currently up 0.3% over in Germany, the CAC current over in France, selling 4 points. You're flat essentially here in the UK, the FTSE 100. It's energy that is proving a bit weaker, and basic resources as well. Guy, what are you seeing?
It's dramatic in Asia, it's dramatic in the United States. Here it's certainly more balanced. 315 up, 259 down. Fairly balanced market is what we're seeing in the stock 600 this morning. Let's talk about the upside of that market. Let's talk about where we're seeing some green. You've got ASML, as Tom was already talking about, having a very solid session. Big points gain adding to the stock 600 today. When ASML moves by nearly 4%, you are going to get some movement on the upside. EasyJet rejecting another Castle Lake offer, kind of softening the line though on that offer. Remember, the offer's kind of currently around 650. We're at 567 at the moment. So there's a lot of headroom. So the market's still pricing in the fact that this deal could fall apart, and certainly pricing a lot of that risk in. But we are up by 5% today, and if we inch towards that, does that gap close? And it could close quite rapidly with a fairly big move to the upside. 3i's out with an update this morning. That stock has been well received as well. We're up by nearly 10%, 9 and a bit, 10% on 3i this morning. Downside, there's a bit of downside out there. H&M, we've already talked about the narrative just a moment with Jane Creary. The stock is down by 4.48 at the moment. There's certainly top-line weakness, and they're struggling to figure out how to solve that top-line weakness problem. SAP, software companies are really struggling right now. You take a look at what is happening with Microsoft. Microsoft's had a terrible month. SAP is down by another 1.62% today. And CSG, again, falling once again, down by over 3% this morning. So we're watching that stock too. But SAP is kind of, you think you've got ASML at one end, you've got SAP at the other end. Those are the kind of balancing factors in this market this morning, Tom.
Yeah, the hardware versus the software story again, and that divergence. Here's what else you need to know this morning. Bain Capital has emerged victorious in one of Europe's most hotly hotly contested private equity auctions with an agreement to buy a controlling stake in Volkswagen's heavy diesel engine unit. The buyout firm will acquire a 51% stake in Evolence. According to a statement from Volkswagen, the German carmaker said the deal will generate proceeds of about 7.4 billion euros and that it intends to keep a 49% stake in the medium term. Tech stocks, as we've been discussing, have jumped after Micron delivered a blowout earnings report, and Outlook, the largest US maker of computer memory chips, surged in late trading after its quarterly sales forecast crushed Wall Street estimates, helping revive the broader AI trade. And Bloomberg has learned that Google is set to lose 2 more leading AI researchers to rival Anthropic. Sources tell us Jonas Adler and Alexander Pritzel were viewed internally as key contributors to Gemini. They are the latest in a series of high-profile departures that risk potentially undercutting Google's position in the AI race. Guy.
Let's stay in that space. Anthropic has accused China's Alibaba of waging a large-scale effort to illicitly, quote, access its technology using thousands of fraudulent accounts. The company has said that they're seeing basically the biggest attempt so far to effectively piggyback by Chinese companies of the work that is coming out of the top US labs. How big a risk does this pose when it comes to the cybersecurity story? The frontier labs in the United States are obviously producing technology at the moment that poses and opens up the door for cybersecurity risks to grow. So what do you do with that if you've now got Chinese companies on the front foot as well? Yotam Segev is the co-founder and CEO of the cybersecurity startup Cyera. Good morning.
Good morning.
Nice to see you. If the Chinese get hold of US technology out of the labs that we're seeing coming out of the United States, the frontier labs, closed source, highly advanced technology, do they become a bigger threat going forward? How do you think about this epic arms race that is being fought between the United States and China when it comes to the cybersecurity story?
Certainly, and I think we've all seen the steps that the US government has taken to try to delay that from happening. At the same time, it's an eventuality. It will happen sooner or later. The technology will be prevalent and will be available to many, many people in all countries. And I think that this is really a time to double down on the defenses and make sure that our organizations, our governments, our companies are setting up the right foundation for success to really protect themselves from this eventuality.
How does that work? Because you have really advanced models that are capable of finding flaws in current security that is being used. And I'm wondering how, as a cybersecurity firm, you deal with that. The models are so good at finding the threats. Can you stay ahead of that? How do you stay ahead of that? Is it possible to plug all the holes?
So first I have to say that it's even worse than that.
Okay,
I think Mythos and the whole vulnerability story is a super important story for society and for our organizations, but it's only the first chapter in the book. The book has many more chapters that are going to unravel over the next few years, and they're going to challenge every aspect of cybersecurity as it has been done before. And every aspect of cybersecurity is going to need to reinvent itself, of IT management, IT hygiene, and things that we were able to get by with are just not going to make the cut anymore.
Is this a fund? I just want, in terms of framing this, are we right now in a fundamentally new era when it comes to cybersecurity? Then,
absolutely. I think we used to fight humans, and now we're fighting machines. We're living in the Terminator movie, and we better get ourselves ready because it's going to be a much, much more intense battle.
So if Mythos is chapter 1, and we have many more chapters to come, Mythos is both defensive and offensive. On the defensive side, why would an enterprise use Mythos for defensive capabilities instead of using your product? What is your moat if these models keep improving?
So defense, when done well, is done in depth. You need many, many layers of defense in order to really achieve security. Any layer by itself will always be unsatisfactory. So Cyera is focused on the data, identity, and agentic layer. That is a completely different layer than the vulnerability and infrastructure layer which Mythos deals with. All of our customers need both. They need to be able to protect their infrastructure, and as they have been doing and are doing, but they also need to be able to protect their data, to monitor their AI, to control what AI sees and what AI does. That is a completely different challenge than the one that Mythos poses in front of them. It's going to be critical because the attackers are no longer human. If a human used to stumble into an organization from a cyber perspective, start to look around, learn at a human pace, reconnaissance, understand what they're trying to achieve in that organization, today it's going to be an agent doing that. It's going to be doing it so much faster than what our defenses were built to deal with, that you have to streamline, you have to automate a lot of the fundamentals of cybersecurity that we used to handle manually. They're all going to have to become fully automated, fully agentic, because only machines will protect us from machines. It's not going to be, we're not going to be able to keep up as humans.
There's a tension as well, isn't there? Because the enterprise customers that you have, and your customers includes the likes of AT&T, Peloton, Nordstrom, Chipotle, they need to adopt AI very quickly, but also they need to assure that adopting AI, and particularly agentic AI, is not going to compromise their data and their cybersecurity. So are those companies, are enterprises generally, are you seeing a slowing in terms of their ability to adopt AI because of those risks?
Certainly, and when you think about this whole AI revolution we're living with, it's so misleading, because as consumers, as individuals, we have the power to use the technology as we wish all the time. But when you look at that technology as it comes into play in a big organization with sensitive information, with customer information, with intellectual property, with regulation, it's a completely different world to actually implement and get this technology to deliver value in a way that we can trust. Trust is the missing layer for AI. And when I look at Sayera's role in the market, it's to provide the infrastructure for AI adoption in the enterprise. That AI infrastructure is the ability to trust these agents, to trust these AI technologies. And that trust today is missing. It's not there.
Is this industry under-regulated? Is AI under-regulated at the moment?
I don't feel like AI is under-regulated. I feel like the companies understand the risks very well and are taking, significant steps to make sure that they're doing things in a secure and responsible way. I'm not sure that regulation is the best driver to get us there. The reality of the friction with the attackers, the ability to lose sensitive information, the ability to create production outages, the risks of AI adoption are so real and so tangible to these organizations that they're taking the steps that are necessary, even without regulators forcing them to do so.
The risks sound absolutely enormous, and we're talking about critical infrastructure here, we're talking about corporate data, we're talking about personal data, health data, all those kinds of things feel like they're very exposed at the moment. If this is chapter 1 of the book, what does chapter 3 look like? What does the end of the book look like? Kind of where are we going with this? Because the rate of change, the second derivative on this, feels like it's picking up. So how quickly are we going to get to chapter 2, chapter 5? How fast is this going to evolve?
I think it's going to evolve at the pace of AI, and we've seen that pace so far. It's a very, very rapid pace. At the same time, cybersecurity is a maturing industry. There is some maturity in it already, and we know how to do this. This is not, we don't need to reinvent the wheel.
Yeah.
This is, everything is known. It's hard work. It takes a lot of investment. Mostly what we need to see is we need to see the mindset for enterprise leaders, for government leaders, that investment in AI has to go hand in hand with investment in security. If you're going to invest $100 million in your AI transformation initiative, and none of that is going towards up-leveling your security, the gap is getting wider and wider.
How do you... if I'm investing 100 million here, what kind of numbers do I need to invest? CEOs are watching this. Are they underspending at the moment? I'm sure you're going to say yes.
Definitely. No doubt about it, because the investments in AI are coming on top of many of the existing IT investments. Yeah. We're seeing these massive AI transformation budgets. I was just here in Europe, Paris, Frankfurt, London, meeting with chief AI officers, chief data officers that are getting to drive these organizations into the AI age. They have access to a lot of budget. But the CISOs, the chief information security officers, are not getting that budget easily. And they need to adapt to a world where the attack surface is growing tremendously. There's so many new risks being introduced into the organization at a rapid pace, and they need the help and they need the ability to deal with that.
Can you give us some concrete examples of where some of the most obvious vulnerabilities are right now? If you were leading an enterprise right now, what would be keeping you up at night?
Yeah. So
in a real material sense.
One example that we're seeing constantly, right? You roll out AI in the corporate sense. Microsoft Copilot, Gemini, Claude Cowork, ChatGPT with access to your data. You think about it as a corporate capability. My employees will be more efficient. They'll use these capabilities. The distance between the corporate side of the house to oftentimes the operational technology, the critical systems in banking, critical trading systems, in other critical infrastructure, literally the operational technologies that run those services, the distance is almost non-existent. The AI can and is touching those systems very quickly, so much so that we're seeing organizations telling us we rolled it out and we rolled it back because we got scared. It was too close. We didn't feel like we had the right controls in place, and we had to roll back and reevaluate before we take the next step forward. So security today is absolutely a challenge that needs to be overcome for these organizations. It's also an opportunity. I think that AI can lead us to a world that is more secure, not to a world that is less secure. But it requires a change of mindset. If we keep doing the same things, we're not going to get there.
But the good guys can win.
The good guys can win.
Okay, Yotam, thank you very much indeed. Yotam Segev, co-founder and CEO of Sierra, recently raised $600 million, valued at about $12 billion US. Coming up, we discuss AI in the music industry with Evan Bogart, Grammy award-winning songwriter and CEO of Seeker Music. Do not miss that conversation. It's coming up next. This is Bloomberg.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. When you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
Let's get back to the AI story with a different angle. Shares of stock photo company Getty Images soaring as much as 145% earlier this week after it announced a licensing deal with OpenAI. The company's shares had previously been hurt by the AI scare trade, but now are seemingly benefiting from the AI link-up. Could this work in other areas of media? Let's focus on the music industry now. Very pleased to say we are joined by Evan Bogart, CEO of Seeker Music. Seeker is backed by M&G, and Evan is a Grammy award-winning songwriter, producer and music executive who has contributed to the careers of Beyoncé. You may have heard of her, Rihanna, Eminem and many more leading artists.
Who are they?
Evan, we'll have to educate Guy on this.
Yeah.
He's
new
a big
artist. New artist.
Yeah.
You guys probably haven't heard them yet.
Breakout artists.
Of course,
we'll all be very familiar with these names in a few years' time. Guy Johnson will. Amazing track record in the industry. And now with this focus and this partnership with M&G. And so we were talking there about AI and licensing. What is AI doing to this industry and your asset class that you're trying to build out? How's it changing things?
Yeah, I think interesting thing that you mentioned that about Getty Images. You know, I think AI is a huge topic in the music industry in every sector, right? Is it a benefit? Is it a disruption? I think it's a bit of both in the music industry. I mean, historically, the music industry has gone through these short periods of disruption where new technology comes in, and then these really long-term periods of growth. And I think we're right at that turning point right there, where these record labels and publishing companies are putting licensing deals in place, similar to Getty Images with OpenAI, and guardrails to protect the music and protect the IP. And once that's in place, I think we're going to see significant revenue growth in the music industry for both the industry as a whole, but also for music creators. I think personally, like AI as a music creation tool is exciting. But AI as a theft tool is not. And I think there's a growing sentiment with these new generations of music fans and consumers who are kind of pushing against like AI-generated music, but they embracing it and loving it as a tool to create music. You think about it as like a musical instrument in the same way that when synthesizers came out or when drum machines came out, people were like, drummers are going to lose their jobs forever.
I remember that.
But now drummers use drum machines in their sets, right? And so I think as it gets embraced, as the guardrails are in place, as the licensing deals are in place, I think people will embrace it more, and it's going to significantly drive revenue.
Because there's a debate as to whether or not a catalogue becomes more valuable because it's a set of data that can be trained on, the models can train on, or less valuable because AI can just generate new songs at a much cheaper level.
Look, we own catalogs by some of the most legendary artists in music, like Joan Jett or Christopher Cross. I think at the end of the day, if somebody wants to listen to I Love Rock and Roll by Joan Jett, I think they want to listen to that and not like some kid's AI version they made in their bedroom. Right?
See, that's about.
Now you brought Guy in.
Yeah, we're in the right era now. So music as an asset class. Music as an alternative asset class. Where's the value within the industry?
You know, music is an asset class where the product increases in value every time somebody falls in love, or every time somebody's heart breaks, or they get a new job, or they lose that job. People find comfort in music. And people, you know, celebrate with music, right? It's just a part of their lives. It's a part of the fabric, right? So if you think about it in that sense, it's, you know, every time we get music placed in a TV show or a film or an advert, or if we get new artists like a Rihanna or Beyonce, or in our case, like Drake or Shabuzi, you know, or Pink Panthers recently with her song Stateside that one of our songs is used in. When they're reimagining these songs, it's increasing the value, right? And if you think about it in that sense, like there's these stable cash flows that royalties.
That's the bit that I'm getting to. How do you quantify it?
So every time a song gets played or performed or streamed anywhere, it generates a royalty, right? And sometimes they're small royalties, but they add up, right? And even organically, as the music industry grows, it's continuously growing. And I think some experts have predicted it will grow 3 times by like 2030 from where it is now in global recorded music. You know, organically, the passive cash flows that it throws off are stable, and they'll continue to grow organically. In Seeker, what we've done is we've built an active management platform on top of those stable cash flows. With M&G and with Proof Fund, we've built this active management strategy where we drive that value. We get the songs placed in TV and film and sync. We get the songs recorded by Drake and by all these big artists, and we're constantly working at driving that added value.
You go to them?
We go to them. With our extensive network and our experience of understanding how to make records and how to place records.
What catalogue that you don't own now would you love to own?
A lot of them have been acquired by other people, even before we started Seeker. But, God, at the top of my head, like Madonna, the Beastie Boys, I don't know, stuff like that.
Okay.
Yeah.
The Beastie Boys brought Guy Johnson
Yeah,
back
Beastie
in.
Boys, if you're listening.
How do we compensate artists then in this when models are trained on their songs? How should the fund trained models be thinking about compensating artists and the owners of the licensing owners?
Yeah, I mean that's the licensing deals that the record companies and publishing companies are putting into place with companies like Suno and Udio and companies that have made headlines, right? I think those deals are in place to be compensated for the artists, right? And I think that, of course, just like every period, if you go back to Napster, every little mini period of disruption in the music industry, someone's gone out there and disrupted it, and then deals have come into place, and then the music industry...
Udio are pretty controversial amongst the artists.
Yeah, sure, of course, yeah. And so I think that those deals, but there are people putting them in place. Like there's a lot of the companies that have put deals in place with Udio. I know there's lawsuits with Suno, but there's also deals being put into place with them as well. And I think once we're through all of that, it's going to be, honestly, I think AI is going to be a significant source of consumption. I think people are going to look to AI to customize and deliver them bespoke music.
Okay. I've learned a lot. Evan, great to see you. Thanks for stopping by.
Thanks for having me. This is great.
Come anytime. Evan Bogart, Seeker Music CEO. Thank you very much indeed.
OK, Guy Johnson's going to take us out with some Beastie Boys. No, looking ahead, what else is happening throughout the day? NATO Secretary Mark Rutte, Secretary General, of course, is going to meet US members of Congress at 9 a.m. UK time. Meanwhile, the ECB publishes its economic bulletin at 1:30 p.m. UK time. US data, including, of course, that inflation print, PCE, the price index coming out, personal income as well, initial jobless claims and GDP. But before that, a check back on the markets.
Yeah, markets are doing... certainly Asian markets had a cracking session overnight. Micron drove that. It's going to be interesting to see how US markets open a little bit later on. Nasdaq futures certainly sharply to the upside. Let's get a take now from Adam Linton from our Markets Live team. Are we back on track? Is the AI trade back on this morning?
Yeah, I mean, it definitely feels like that. I think, earnings estimates were relatively high, but sentiment this week was actually relatively low. And in the end, none of this really matters because the results were just that solid. And, it rounds off an earnings season on a positive note for the tech sector, and it will probably carry us through until the next earnings season, with the key takeaway being that hyperscaler demand, which is translated into memory demand, does remain relatively strong. And, obviously, unless there is some breakthrough which allows memory to use a lot more of an efficient clip, this memory shortage is going to persist. And, that's, we've seen optimism of SK Hynix looking to list in the US. So it's good if you're a price setter, not so if you're a price taker. I think you were speaking to Anthony earlier about, for the hyperscalers, what does it mean for them? There's like a broader industry thing here as well. I mean, if you're an auto producer, consumer electronics, your input, exactly that. So this is going to be something that's increasingly thematic. But for the short term today, you're going to ride Asia, you're going to ride the US, less so Europe. Obviously, we've talked many times lack of a tech sector, but also if you look back over the past few weeks, the rally that we have had with Hormuz optimism rising has been incredibly narrow. It's basically all financials, and participation has been relatively low.
So the other side of the inflation ledger is oil, and prices are down again, $70 around about for WTI. Brent is down again today. How much of oil didn't hold the equity markets back when it was moving higher. Is it a catalyst when it moves lower?
It kind of depends to some extent on what market you're looking at and also what the respective central bank function is. I mean, today, obviously, we have PCE. Yeah. The trading setup for that is very different to what it would have been this time last week in the aftermath of the hawkish FOMC. We're going to see an acceleration in prices, but today could potentially be where things kind of top out. Obviously, we won't know that today. We'll see how that kind of plays out. The pace of descent is far from assured. We still have higher energy prices than last year. US fundamentals are relatively strong. And we just don't know much about the Fed reaction function at this stage, do we? It's under new leadership. We saw, Walsh talk tough last week. But ultimately, is he going to keep, validate the hawkish bets that are in the market at the moment? Or is he going to potentially waver a little bit further? And, obviously, he was brought into the Fed to lower rates by Donald Trump. We've seen him kind of up the ante on that front as well. And so, we'll get more clarity from Sintra next week, which could potentially be more important for the market than the PC data today.
So he's speaking on the 1st. I think it's in the afternoon. He's on the main panel. Kevin Walsh we're talking about.
Yeah, he says he doesn't want to give forward guidance. So
so basically that panel now becomes super important in terms of if we're not going to hear very often from him when he does appear, it's going to become more important. But is he really going to tell us anything when he does it? I don't know. It's going to be interesting. But then you get more volatility because parsing him is going to be even more difficult.
Adam Linton from our Markets Live team. Thank you very much indeed. That is it for the opening trade. The Pulse is up next, though. Guys Johnson's sticking around with more Beastie Boys. Stay with us. Markets are up 0.4%. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Tech stocks soar as Micron smashes estimates with its sales force in a sign that the AI-fueled growth story has much further to run. Brent crude, though, falling back to where it was before the war in Iran as oil flows through the Strait of Hormuz ramp up rapidly. And advisors to Andy Burnham urge the would-be Prime Minister to break up the Treasury in the UK to refocus on the government's agenda on growth. Got to watch for that story to develop. Let's talk about where we are with the markets this morning. As you can see, you're looking at a fairly positive picture when it comes to US futures. The Nasdaq's up even more, I have to say. When it comes to yields, you're seeing a little bit of a sell-off this morning. The euro-dollar rate is flat as a pancake, but we're sub 114. And Brent crude trading at 73.09, down by another 0.9%. The European market map looks a little bit like this, fairly flat compared with what we've seen certainly out of Asia. London market going nowhere in a hurry. The CAC's up 0.1%, unexciting. The DAX though is up a little bit more. You're seeing certainly some of the tech trade doing well, and the standout story this morning in Europe is over the border in Amsterdam. You've got the AEX up very nicely on the back of what we are seeing from Micron. And the ASML read across into that story. So let's show you Micron pre-market. We're expecting big numbers here when it comes to this trade. And as you can see, we are certainly getting them. We're up by 18% nearly on Micron overnight. It has delivered a blowout set of numbers. But what does this mean for the wider economy, I think, is a question that we need to explore. And we'll certainly do that throughout the program. OK, we've got a Micron story. We've got an oil story. Let's get going. Lots to talk about.
makers and market movers. This is The Pulse.
Morning, how you doing? You're watching The Pulse. I'm Guy Johnson in London. It is 9 a.m. in London. It's 4 a.m. over in New York. It's going to be a busy day stateside, I can tell you that. We've already seen a solid session in Asia. European chip makers are now soaring. This, after late last night, Micron delivered a blowout set of numbers. The largest US maker of computer memory chips reporting a quarterly sales forecast that crushed pretty much all of Wall Street's estimates, helping revive the broader AI trade that has been put under pressure over the last few days. Bloomberg market strategist Ruel Amin joining us now to discuss. That was good.
Good morning. Yeah, it was a great set of results. I think the key thing, though, they're always going to be expected to beat because demand for memory has been so strong. The guide was also very strong. But I think the reason the market is getting so giddy is the qualitative comments that management made around the tightness of supply beyond 2027. And that really reflects, demand perhaps is becoming more structural as opposed to just being cyclical.
This has been a highly cyclical industry. Historically, this has been massively cyclical over the last few years. Is there evidence that it's now not?
Exactly, yeah. And that's what the market's grappling with. I think the demand continues to be very strong. But supply is obviously very tight. There's only a handful of players globally that produce these chips, Micron being one of them. But supply remains tight. That gives them an enormous amount of pricing power. And that's just feeding through to profit margins.
What you've now got as well, though, is some of the Asian players in this space looking to access US money. Everybody wants to access US money. So you've got massive IPOs coming through. You've got, obviously, demand from governments. You've got demand from the hyperscalers. And now you've got SK Hynix and companies like that looking to access that pool of capital as well. Is there enough to go round?
I think so. I mean, the AI trade has just been enormous over the past 18 months. And like you say, people are trying to access this capital. I think in the US, there's a lot of excitement and fervor around this trade. So there is enough capital to go around, in my view.
OK. Amin, thanks. Sorry, Ruel Amin, thank you very much indeed. The view from the Bloomberg market strategist. Let's get another take on what is happening here as well. You've got Brent crude erasing all of its wartime gains. The flow of shipping through the Strait of Hormuz ramping up following, obviously, that progress that we are seeing in the US-Iran peace talks. You put that with Micron, and you've got a pretty solid earnings story, plus also a pretty decent macro backdrop to work with this morning. The momentum trade, therefore, is back on. That seems to be the narrative that we're watching this morning. Christian Keller is the head of economics research at Barclays and joins us around the table as well.
Morning.
Micron is a macro event in so many ways. You've got an AI trade that is on steroids at the moment and is consuming huge amounts of capital. Is that inflationary? When you look at companies like this and what they're telling us about what we are seeing in terms of the demand picture and the prices they are going to be able to demand for their products, when you think about where the inflation narrative comes from, is it actually from oil and the narrative we've been watching, or is it from this AI trade?
By the way, it's if you look at a consumer basket, everything goes in there. So now it's a matter of which factor will be stronger. I mean, I think you laid it out very well. This is now, Micron in general, the semiconductor cycle, it's a macro story. It's an AI build-out story, and that's very important. And we do see, obviously, that, the chip prices eventually find themselves in a part of manufacturing goods, and that will be inflationary. At the same time, we got the good news from oil that hopefully energy, in a way, will not be as inflationary maybe as feared before. And very importantly, there's still some very fundamental drivers, and that is the U.S. labor market, where, we've seen firm job growth, but not really yet the kind of wage growth that would make a central bank concerned about, that kind of really underlying inflationary push.
So what are we going to get out of PCE data out of the United States a little bit later on? What picture is that going to give us, do you think?
Look, we looked at it. It is going to go higher. We do think core PCE is going to be above 3% for the end of the year. This is why markets, after what Kevin Walsh said at his first meetings, they look at his rhetoric, they look at core PCE being significantly above 3, and they say, well, he has to hike. We think he will try to get around it, with a better outlook now in oil, etc. We think they stay on hold, but the market has priced a hike.
The risk to the upside. So
the risk is to the upside, clearly.
Yeah, on rates.
On rates, yes.
How should we read him? Genuinely, and it's going to become harder to read him. But there's all kinds of different arguments floating around about his seemingly such strong statement on price stability. What is your take on that?
Yeah, that I think was maybe the key surprise to markets, his kind of a focus on an inflation-focused reaction function, if you want. And markets didn't expect that. They thought he would rather try to be a bit softer, obviously, given that he was chosen by a president who has been very keen on lower rates. Now, that's the first point. Then the second one is he got around a lot of the difficult question by appointing committees, so he could postpone them. Tough question, what do you do with forward guidance? Let's have a committee decided. Balance sheet, huge question. Let's have a committee. So ultimately, that bought him time, but the answers he still has to deliver. I think on forward guidance, it's clear it's gone. The statement is shorter. The dot plot, we think, will go. On the balance sheet, we do not think he will make that step to going away from a kind of this framework where you have ample reserves towards a much smaller balance sheet. That would be a huge step.
He's going to be speaking on the main Sintra panel.
Yeah. I'll be there next week.
Next week's on the 1st. Okay, so what do you want to hear there? Do we get more nuance? Or does he just kind of, again, push back? Every time we hear from him, what are we looking to learn? And is he going to be harder to read, do you think?
Well, one main concern is exactly what you just indicated. He's harder to read. He takes away forward guidance, and we're going to a world of higher volatility. That's what most people you speak to who are in rates markets. I think this is a clear indication of higher vol. Maybe we go back to the days where you have no forward guidance. Remember Greenspan? People were looking at how big his bag was, etc.
I do remember those days,
So, he probably, at Sintra, I would expect, needs to try to answer some of those questions he didn't answer and just push to committees. Because ultimately, people want to hear his view as well. He cannot just delegate it and then say, let's see what some committee comes up with.
Yep.
And it's a panel. It's not a speech he gives.
No.
So, therefore, he may get away again with relative generalities. But I think the main thing is markets will see whether he reconfirms that inflation focus, which in some way makes him suddenly much more like a Lagarde at the ECB, which has only one mandate, and that's price stability.
Do you think the Fed now effectively has one mandate until it gets inflation down to 2%? Does it? Does it matter which side of the decimal point we're arguing about here? If it has a 2 to start with, is that good enough, or does it need to be 2?
Look, it still has a dual mandate, but I think he rightly so didn't emphasize a dual mandate that much anymore because the labor market does look much better. We had a clear turn in the labor market. If you had a situation where either the labor market, worsens a lot, or it would actually tighten, if it, for example, does go beyond 4% or so on the unemployment rate, clearly they would have to hike. So I think the dual mandate is still there, so it's still not an ECB. But for now, with core PCE so far above its 2%, and having been there for, 5-6 years now, not being a target, I think there are at least temporary, very, very much focused on inflation.
Elizabeth Schnabel out this morning. More rate hikes to come. That's the message she's trying to convey. Do we just get 2 here from the ECB? Is that enough? And is there a danger they only actually end up delivering 1? If oil prices come down, is September... I don't think we're talking about July anymore. Is September... How certain is it, do you think, we need to see another rate hike?
We think they will still do one. The rhetoric from those who have something to say at the council seems to be, look, yes, oil prices are coming down, but we're also seeing PMIs picking up. There's more confidence. I think they still may be concerned that some of the cost pressures that has kind of ramped up will now, in a more higher confidence environment, be rolled over from the pass-through better from the corporates into the end prices. So I think there's this argument to still do one more, but the chances that they'd stop then at 250 are very, very good now.
And when do the cuts come?
Well, we think they'll be on hold all the way through 27, because 250 is still what they consider at the upper band of the neutral rate. For them to cut then, would really imply that the economy is getting worse. And we don't see this. We're actually seeing Europe, not in a stellar way, but still accelerating, improving from here.
It's great to see you. It's always great to see you. Thank you very much indeed for coming to see us this morning. Christian Keller, Head of Economics Research, joining us from Barclays. We are going to return to that subject of what is happening with the oil price in just a moment and get a sense of what is going on in the Gulf. You want to know about what is happening here? There are a few people around the world that you want to be talking to. One of those is our next guest. The former US Secretary of State, John Kerry, will be joining us. We'll get his take on the draft Iran peace deal. We'll also talk about climate policy as well. In some ways, these two conversations are linked. Has the Iran war and the high prices that we've recently experienced actually accelerated the green revolution that Europe and elsewhere we're going to see maybe as a story? Anyway, that conversation is coming up next. John Kerry is going to be joining us. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars, Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Welcome back. 14 minutes past the hour. We're likely to see a very strong story develop a little bit later on in the United States. Nasdaq futures are up really sharply on the back of the Micron numbers. So we're going to keep an eye on that. In some ways, that takes us to our next story, which is what is happening with Amazon. Amazon has just announced that it's going to invest an additional $13 billion in India for the AI story to develop further by 2030. It's interesting. Obviously, some of this is based around what we are watching in terms of visa development in the United States and how tricky it is to get some of the data scientists into the country as a result of that. The other factor as well to bear in mind is that the hyperscalers are spending huge amounts of money, and Micron is one of the big recipients of this. So it's going to be interesting to see how they manage costs, these giant hyperscalers. Amazon certainly within that mix as well. So we'll come back to that a little bit later on. Let's talk about what we are seeing in the UK this morning. Influential figures, we understand, within Andy Burnham's circle have urged the likely next UK Prime Minister to break up the Treasury. What they want is a refocusing of the government's agenda on growth. So what you are likely to see here is maybe the Treasury's responsibilities, and the Treasury is hugely influential here in the UK, into a growth / sort of economics unit and a fiscal unit. Now, some would argue, why are you rearranging the deck chairs? Maybe you actually just need to get going and get things moving. But that is what people like Andy Haldane are pushing for. Now, Matthew Bunny, UK economist at Bloomberg Economics, joins us now to discuss. What do we know? How well developed are these ideas?
So, I mean, we know that institutional rearrangement is one way that an incoming Prime Minister could set the tone for a new era. In practice, I think, there's precedent for this in other G7 countries, but there is some kind of implication that rearranging the deck chairs, as you say, will fix the UK's problems. There's also an implication that in its current format, the Treasury doesn't really focus on growth, which I would suggest is just simply not true. I mean, the real drivers of the UK's low economic growth are long-standing low productivity and a series of painful economic shocks we've seen over recent decades. So We'll really need to see the meat of Burnham's policies to assess if this is going to be a tangible, a long-term solution. The other proposal we've seen from Burnham's camp, which is important, is a secondary remit, or strengthening the Bank of England's secondary remit to focus on growth. So the BOE's primary goal is to target 2% inflation. They have a secondary, softer target around supporting the government's growth agenda. So putting more of a focus on growth could be seen in some corners perhaps as weakening the bank's inflation-fighting credentials. That's why any change to the Bank of England's remit will need to be made from a position of strength.
OK. Does this make, just back to the kind of the first story a little bit, does this make whoever is Chancellor next a less important role, potentially a less important role? Or would the Chancellor have oversight still of all of this?
I mean, that's a good question. I think the policy detail is still very light at this stage. And we know that the pick for Chancellor is going to be an important decision for Burnham. And there's a lot of speculation at the moment as to exactly who that will be. The big question, I think, that is central for Burnham to decide at this stage is what will happen with the fiscal rules. So he's said that he's going to stick to those fiscal rules so far, but what's becoming increasingly apparent as a more left-leaning figure than Keir Starmer, who wants to spend more, is there's a clear tension there with where he's going to get these funds from, because if it can't be borrowing, it needs to be taxes. And he's committed to Labor's manifesto on tax, which rules out raising any of the big four revenue raises of the UK. So there is a real question as to how much wiggle room Burnham has to kind of push forward his policy ambitions.
Matt, great stuff. Thank you very much indeed for updating us. Matt Bunny, UK economist at Bloomberg Economics. Let's turn back to geopolitics and talk about what is happening there. The US is seeking to reassure allies of the strength of an interim peace agreement with Iran. There has been widespread criticism, we understand, in Washington that the Trump administration has conceded too much to Tehran in terms of the financial benefits and sanction relief to get the Strait of Hormuz open. Both sides, of course, we understand, made contradictory statements about the nuclear inspections that could take place. We are joined now on Bloomberg Television and on Bloomberg Radio by John Kerry, who, of course, is the former US Secretary of State and the man who helped negotiate the nuclear deal with Iran back in 2015 during the Obama administration, the JCPOA. He was also the US's first special presidential envoy for climate and is here, of course, for London Climate Action Week, which is taking place, as we see, it's getting quite hot outside. John Kerry, thank you very much indeed for joining us this morning.
Thank you.
I want to come back to the climate conversation in just a moment. And I actually think there is a link that we can maybe develop a little bit with what we're seeing in Iran. But starting with the Iranian situation, you have huge experience of kind of how to negotiate with Iran. Mm-hmm. And there is much criticism now that the United States has given too much away to reopen the Strait of Hormuz. What is your read?
Well, my read is, first of all, that this is a war that never should have happened, never had to happen. It's a war of choice in which the president's stated rationale for engaging in this war has changed many times. We've gone from the people rising up to having not just regime change, but a transformation with respect to the region by monetizing and weaponizing the Straits of Hormuz, which had nothing to do with any of the discussions we had previously. And you also, regrettably, have not a peace agreement. I mean, people need to stop calling this a peace agreement. It's not a peace agreement. It's a temporary halt while they try to find whether they can get agreement on nuclear, and in the meantime, open up the Straits. Now, you know, we all want that to happen. I mean, obviously, the world has been completely distorted, the economies of the world, by virtue of what's happened with the Straits of Hormuz. So that's an urgent necessity for everybody. But getting that done does not prevent a nuclear weapon. It doesn't stop the nuclear program, which can continue, we've learned, historically, through very, very difficult circumstances. I mean, you can't bomb the knowledge away from the scientists who work on it in Iran. So, yes, they've discombobulated the availability of any of the enriched uranium, but the fact is that the deal that was in place prevented them from developing a bomb because we had inspectors, we had a process. You don't have any of that today.
So do you expect the deal, and we'll come on to the timing in just a moment, the deal that could be negotiated here to be any improvements on the JCPOA?
Well, that's just becomes pure speculation. I don't know. Nobody knows at this point. I think it's going to be...
You knew how hard it was to get there.
It is going to be exceedingly difficult to get the Iranians to give up more than they had in a prior agreement.
Right.
And that prior agreement was the strongest nuclear agreement in history.
Yep.
It had checks and balances, had an ability to be able to inspect on demand. We had the ability to be able to say, we suspect you're fooling around in that particular neighborhood. We want to go in there. We had a process already predetermined and written with the United Nations for exactly how that would unfold, and you had to have a right to do it. We had the ability to bring back all the sanctions. So it really seems to me, as a matter of logic and common sense, that if you're concerned about that prior deal, President Trump had ample opportunity to bring it to the Iranians, to put it on the UN agenda, to talk about, well, we need to renegotiate. We don't like this or that. Let's renegotiate. But no, instead of any renegotiation of any value, instead of putting an alternative set of options in front of the Iranians, just started bombing.
Are the Iranians more influential now? Do the Iranians have more authority now?
I don't know whether they're more influential, but they certainly have more control of their country and more control by a much more radical hardline group.
Yep.
What, again, the administration ignored is the fact that Ayatollah Khomeini actually stood up to the IRGC and told them, we're going to do this deal. We're going to have a deal. The IRGC hardliners did not want any agreement with the United States, and they certainly didn't want to take away the option of having a nuclear weapon. They wanted a nuclear weapon, and there was reason to be concerned about that, but the Ayatollah not only issued a fatwa saying we will never have a nuclear weapon, but he signed on to this agreement, which, on the day that Donald Trump pulled out of the agreement, the Chinese intelligence, Russian intelligence, U.S., German, French, British, and EU all agreed this agreement is working. And it wasn't just the United States by itself doing this. It was a group of nations, all of which worked very hard to build this strongest agreement ever.
Could you replicate it in 60 days? It took you a long time.
Well, I mean,
it took you a long time to get it done, didn't it?
You could take the same pieces of paper that were already there, put them on the table, and jumpstart. I mean, there are all kinds of ways to streamline if that's what they want to do. But the president seems to have said he didn't like it. He didn't like that. So we have to wait and see what he's going to come up with that actually goes further and is stronger.
Let's talk about the other bit of why you're here. Actually, probably the primary reason why you're here, which is talk about what is happening with the climate story. Do you think, ironically and amazingly, that actually the war in Iran, which sent oil prices sharply higher, limited our ability to access hydrocarbons, has accelerated actually the move towards renewables?
Yes, no question.
Okay, so a positive byproduct that comes out of it. How big a change do you think that could be? Like in terms of the understanding, just everybody now knows of this bigger choke point and the restrictions that could apply to it in the future. Does that change the mentality of people that were wavering, do you think?
Absolutely. No question in my mind. I've already seen that in conversations that I've had in the course of the week here in London. But it's also very clear that the whole marketplace, the global marketplace, has now made a decision to proceed forward to try to provide firm energy that is not further harming the planet. And that's very clear now. Bloomberg had an article, I believe, at the World Economic Forum this past year, and the headline was, you know who believes in climate change, and underneath it, the stock market. There was another article, the Wall Street Journal, earlier in the year, which said, and I quote it, big headline, the energy transition is now unstoppable. And I think if you talk to knowledgeable folks who are in the business world, well, they don't make a lot of noise about it right now. They're not trying to attract attention to themselves. But they are moving forward. UAE, for instance, which led the COP in COP28, an oil and gas producing country with a big company called ADNOC, that they are building out 19 gigawatts of battery storage and have put 4 new nuclear plants online and have one of the largest solar fields in the world. And they are determined to be producing what's called firm energy. Firm energy, energy that isn't interruptible, that doesn't stop because the wind's not blowing or the sun's not shining. It's there. And that is where the world is moving now. With the AI data centers, there's just massive demand for energy. And that energy can't come as fast as everybody wants. One of the key components now that's pushing decisions is speed to power. How do we get to have power faster in order to win the AI race? In addition to that, you have other options that people now see, that solar is cheaper, renewables are cheaper, and renewables are better and better now. And like Texas, which has its own grid, is now massively building out onshore solar and wind. And they do it not because of the climate. They do it because it's good business, because it's a way of lowering prices and providing stability to the marketplace.
The argument that sometimes I hear in Europe, though, is I look at the United States. So here in Europe, big push for the transfer into renewable energy, but it's expensive. I hear what you're saying about solar and grid parity and all that kind of stuff. But at the moment, energy is more expensive here. And it's less expensive in the United States. The United States has some renewables, but it uses gas a lot. It's got sort of abundant supplies of gas. And the US economy is booming, and the European economy is stagnating. And a lot of that is down to energy prices. So yes, we can make the transfer, but we're not getting the economic benefits from it. How do you short circuit that? How do you deal with that?
Well, you have a company here called Octopus, and that company provides an incredible amount of energy to people in a very organized way without having its own plants, because it mediates. It has an ability to be able to distribute.
But the cost of energy here is higher than it is in the United States.
Well, it is higher because you don't have gas, you don't have that ability. Exactly. But you do have offshore wind in the North Sea. You also could be building, and I think this is one of the big ideas that ought to begin to be applied to Europe, you could build a much larger inter-Europe network. You could use wind from northern Germany, or you could, I mean, there are all kinds of options here with a big connection.
But the argument, so one of the arguments that is raging in the UK at the moment is, should we drill in the North Sea? And the argument basically is we need to get lower energy costs now. In the future, yes, we should have renewable, and we should race towards that. But right now, shouldn't we use all the energy we have and our capabilities to produce that to lower energy costs to boost the economy? Isn't that a legitimate argument right now?
Well, as long as it's done in the context of a real plan that is going to transition you away, and you're not building major gas and alternative fossil fuel infrastructure.
Should we be drilling in the North Sea?
Because that's ultimately going to wind up being stranded assets. So what you really want to do is move faster to try to embrace some of the other available technologies. And that's why, I know a fellow who started a company called Emerald AI, which NVIDIA is now partnering with, along with Salesforce and other big companies, because they know how to come in and use software and interconnectedness to provide firm energy to people. You don't have to build out that combined cycle gas turbine in order to do it. So as people are rushing rapidly to build out these AI centers because they're critical to growing market share and winning in the marketplace, they're learning that there's an ability to do that with new technologies and other options. Storage is getting better. Storage is potentially a massive game changer with respect to whether you need to drill or not drill or use fossil fuel. So Europe has huge options in front of it, I think, that are better than long-term planning of, drilling to the last drop and pumping to the last drop. And if you can't learn a lesson from what's happening outdoors today and all through Europe, I mean, every decade for the last 40 years has been the hottest decade until the next one comes along and is the hottest decade. Now we're down to hottest days ever measured. And I think if you can't draw examples, insurance companies are now pulling out of insuring in certain states in the United States. They're not able to, you can't charge enough to pay for the risk that you're taking on a global basis. So I think, the business the business case is what wins here. Not let's do good for the environment or I don't hear that anymore. I hear people saying you can win in the marketplace, and we're proving to people. We have I work for an entity called Galvanize, which is a fund, and we're out there investing. We invested not so long ago, last year, in a company, a couple of years ago actually, one of the first investors in a company called Fervo. Fervo just went public a week and a half ago, 2 weeks ago, doing very, very well. And guess what? It got a $400 million loan to do business that's a non-recourse, no guaranteed loan, which banks don't do unless they know there's business in front of them. This company has big offtakes already, signed contracts with big people who are saying, on such a day, you're going to be providing us energy. So the world is changing much faster than people know and think. And the really smart folks are taking their money and putting it into this new energy structure. There are all kinds of other examples besides Fervo. In my home state of Massachusetts, we're building, there is being built a fusion plant. And they will be providing electricity commercially this year. Fusion has always been the holy grail and hard to get to. So I'm telling you, right now there are CEOs all around the world who are not pulling back in their budgets. They're going to continue to do sustainability, but they're not going to do it in a bragging sort of big public way that attracts attention from people who want to whack you.
On that point, we will leave it. Thank you very much indeed for stopping by to see us. We really appreciate it on such a hot day out there. John Kerry, the former US Secretary of State, of course, and former US climate envoy. Let's stay with the theme. President Trump has demanded more loyalty from NATO allies and reiterated his disappointment that European countries did not allow the United States to use their bases for the war in Iran. Donald Trump was speaking as he hosted the NATO Secretary General Mark Rutte at the White House.
I just want their loyalty. We don't need their money. We don't need anything. We have the most powerful military in the world by far. But I just want loyalty. You know, we're so loyal to them. We're always fighting for them. We have thousands of troops all over Europe. In Germany, we have 50,000 troops. And then you want give us a little nudge, give us a little kiss. We don't want much. And they say, no, we can't do it.
Donald Trump. In response, the NATO Secretary General turned on the charm, of course. He came to the Oval Office armed with flashy visuals, we understand, labelled the Trump Trillion. Take a look at this. And the Trump 47 effect to highlight the increase in NATO spending since President Trump first took office. Mark Rutte spoke exclusively to Bloomberg shortly after that meeting.
What I believe is to be fair when leadership is successful. His leadership is successful, and what I wanted to show today is it is successful in three ways. One, on Iran, degrading nuclear capability. Two, on NATO, not only getting the allies to deliver, to commit to 5% defense spending, but also to deliver on the spending, and that's clearly what is happening at the moment. And third, by taking that code, that mantle of being the leader of the free world. And when he meets in Ankara, he will meet with all the allies, but also 10 countries there as guests from the Middle East, from the Indo-Pacific. A total combined GDP of $70 trillion, 2.5 the size of the United States. Absolutely there to hear his views, to get his thoughts on the next steps we collectively have to take.
Well, of course, the financial aspect of this and the investments into the defense industrial base are one part of it, Mr. Secretary General, but there's also the consideration of actual human capital and U.S. military forces that are currently stationed all around Europe. Obviously, we have now seen withdrawals and considerations that this administration is making about moving troops around further. How do you avoid anything being chaotic in nature as that plays out? And how does Europe make sure that it's able to adequately defend itself in a surprise scenario? What are those preparations like?
I think the United States is doing that. So let's first agree that the United States has to take care of multiple theaters, not only Europe, also, for example, the Indo-Pacific. And if a situation would occur where they have to defend both sides of the equation, both the Indo-Pacific and Europe, They have to avoid a situation in which they have spread their resources too thinly. This is where Europeans have to step up. This is NATO 3.0, a stronger Europe and a stronger NATO.
That was, of course, the NATO Secretary General Mark Rutte speaking in Washington to Kayleigh Lyons. Joining us now for an exclusive interview, joining from Berlin, is Germany's Deputy Defence Minister, Neil Schmitz. Minister, thank you very much indeed for your time. We heard from President Trump just a few moments ago saying that he wants loyalty from European countries. Is that how you see the relationship, that Germany needs to be loyal to the United States?
Well, I think we all need to be loyal allies. We are all in NATO, and we have shown over the last decades that European allies have been up to the commitments they made under NATO, be it in Afghanistan or in other places. And now it's about burden shifting. And we have been crystal clear about our commitment to step up our efforts in defense spending. We are well underway. All NATO members have now reached 2%, which was the previous goal. And Germany especially is well underway to reach the 3.5% core target spending, core spending target. So yes, we are loyal to NATO, and the US can trust us to be a good partner when it comes to preserving European security.
The Chancellor, Friedrich Merz, yesterday hosted European allies peers and Rutte, I understand, remotely, to discuss what the message would be from Europe going into the Turkey meeting, the NATO-Turkey meeting, which is coming up. President Trump will be there. What was the net result of that meeting? What is the message that Europe would like to convey?
There are two messages we want to convey to the NATO summit, and especially to President Trump. One is that we have understood the call for action, that this is not only about words, we are taking action in enhancing and expanding our defense budgets here in Europe. Burden shifting is already happening. And the second point we would like to make is about European security, about NATO efforts to support Ukraine when it comes to counter military aggression from Russia. This has been an ongoing joint effort by all NATO member states for more than 4 years now. And indeed, we have seen new mechanisms of funding for Ukrainian military support coming up over the last year, especially Pearl. And we want to make Pearl a success story. And European NATO allies are committed to Pearl, especially Germany is very much committed and has announced a new Pearl package where we want to contribute to.
Minister, I look at the news over the last few days and the last few weeks, and one of the things that really stands out is that it's harder to rearm than maybe we first thought. Germany has committed significant funds to its rearmament program, but delivering the weapons turns out to be harder than we first thought. We saw yesterday that story developing when it comes to the frigate story and the switch that you made to TKMS. We've also seen it, obviously, with the jet fighter program, the next generation jet fighter program. Is it proving harder to rearm than you first thought?
We have to admit that we have a long way to go to ramp up our defense industry, especially the production capacity of our defense industry. This applies to all European nations and, to a certain extent, even to the US. That's why we also need to consider how to pool manufacturing capacity across NATO nations to step up manufacturing capabilities across the board inside NATO. And yes, in the case of the new frigate, we had to acknowledge that delays, technical problems, price raises demanded from us to stop the project and to return to a well-proved concept, the so-called MECO class, to provide our Navy with an yexcellent frigate on time and to meet the NATO capability targets Germany is committed to.
Will you be seeking compensation as a result of that switch? Kind of how does it affect the German financial situation?
Well, first of all, we cut the losses with a not well-going project, to be very frank. And we believe that for the price tag that is attached to the Mako class frigates, we get good stuff readily available, very swiftly available to our Navy. And in terms of budget pressure, it's less expensive than the continuation of the F-126 project.
Okay, let's talk about jet fighters. Germany, in the form of Airbus, was partnering with Dassault in the form of France in terms of the FCAS program. There is now talk, and certainly the Leonardo CEO was making this point yesterday once again, that Germany should join the GCAP group, which in the past, this group has produced a series of fighters, the Swing-Wing Tornado, the Eurofighter. Do you think Germany and Airbus should make that move now and join that consortium?
That's too early to tell. We have different options to be discussed and to be reflected upon now with the change in the FCAS project. Of course, GCAP is one of the potential options, but there are other options available. What is important for us is that we are going to be able to build a sixth generation fighter jet here in Europe. This is a very important expression of European sovereignty in a military key technology field. And we have a lot of very, very high potential, high-tech companies available in Germany and other European countries that can build that type of fighter jet. And we will very, very soon find a way forward. This has to be decided this year.
This has to be decided this year. So when are we going to get that announcement? And what are the other options if it is not going to be the GCAP consortium?
Well, there are, of course, some elements of the FCAS project that can be continued. This has to be discussed with the Spanish and French partners. We have a very capable European military and aircraft and industry. And so now we have different options that need to be looked at. So it's too early to give you an exact answer, but we are eager to find a solution very soon because time is very important in this matter.
So a decision this year. Minister, thank you very much indeed for your time this morning. Neil Schmidt, the Deputy German Defence Minister. OK, the biggest US banks, to switch gear, have boosted their dividends after passing this year's Federal Reserve stress test. The Fed exam, which was developed, remember, as a result of the 2008 financial crisis, showed that all of the banks would maintain enough capital to withstand a hypothetical economic downturn. Let's cross more to get more on this story to Ven Ram, cross-asset strategist at our Bloomberg MLive team. Basically, we've got another test that everybody's passed, and therefore everybody can deliver their dividends. This is a very complicated process. Jamie Dimon says it's a complete waste of time. Is there any evidence that it is a complete waste of time?
I think it's a bit of excuse me, Tom. I think it's a bit of an overstatement to say that it's a complete waste of time. I think that they have had their utilities. I mean, as you mentioned, Tom, this came in the wake of the 2008 financial crisis, and there was a definite indication then that there was a need for it, which is why they opted for it. And I think that, having moved further away from the crisis era, I think there is a case to relax those guidelines maybe, but I do think that you've got to stress test banks' capital and assume and ask the question, what happens to their capital buffers if there is going to be a downturn in the housing market, if there is going to be a downturn in loan provisioning and all those things. So I think that, to completely cast aspersion on the fact that whether or not we need these stress tests is a bit unwarranted, I think.
OK. Ben, thanks for the update. Greatly appreciate it. Cross-asset strategist at Bloomberg MLive, Ven Ram. OK, coming up, we are going to speak to a Stanford graduate who wrote a book about Silicon Valley's grip on the university. And what lessons can we learn from it? That conversation is next. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Welcome back. You're watching The Pulse, 49 minutes past the hour. The changes brought about by AI are triggering a backlash amongst college students, worried about the technology's effects on both their education and their future. The concerns have prompted anti-AI marches, petitions, and boos, apparently, we understand, the graduation ceremonies. As Gen Z's mood on AI sours, a new book documents Silicon Valley's grip on college campuses, Stanford University in particular. Stanford University graduate Theo Baker's reporting for this school paper led to the resignation, remember, of the university's then president. Baker then turned his college experience into a book. You can see it in front of you, How to Rule the World. He joins us now. Good morning.
Hi there. Thanks for having me.
The book is in so many ways about Stanford and the incredible story that Stanford has become, for good or bad. Mm-hmm. It has this amazingly kind of laid-back, laissez-faire sort of atmosphere, but this amazing industry that basically exists around it in the form of VCs, etc., that are looking for the next big thing. As you've kind of mulled and ruminated on kind of the benefits and the disadvantages of that, what is the conclusion that you've come to? Because a lot of people here in Europe look at Stanford and go, that's great, we want some of that. And I'm really curious to get your take on kind of whether or not actually it's a good thing or a bad thing.
Well, it's both, right? Stanford has made this Faustian bargain with Silicon Valley. One has enabled its ascension like no other institution of higher education in the world in the last few decades. Billions of dollars have flowed into the campus. Dozens of new buildings have sprung up. And by the way, building new buildings in California is very hard, but Stanford somehow manages. And that's because of this no-boundaries relationship with Silicon Valley, one that has yielded so much innovation, and yet, by the same token, as I write about in this book, so much fraud.
Okay, so there's a definite downside. But if you think about what would be a better model, is it possible to figure one out? How does the relationship need to change?
Yeah. So it needs to start with transparency, right? What I chronicle in this book is power at every level, effectively. The teenagers who come in and are foisted with something called pre-idea funding, wherein they are handed hundreds of thousands of dollars or millions of dollars before they have a glimmer of a concept of a company, all the way up to my reporting on the president of Stanford and the fight for accountability there in papers that had not been scrutinized for years. What I learned is that Silicon Valley has encouraged a system where cut corners allow you to get ahead. That's the real problem here, right? It's not just the unconstrained ambition, but that is not coupled to the guardrails that prevent bad behavior in getting ahead.
But it has produced an awful lot in terms of what has come out of the system. How, if you are a European university, a UK university, the UK's got Oxford, Cambridge, Imperial, like some great universities here. They've never had this kind of ecosystem around them in the same way that Stanford has. What is it? What would you do if you were running those universities? Because what we talk about here is the inability to get ideas out of universities and to scale them and to get them into the kind of size and scale that Stanford has produced. How do you replicate the Stanford model without the bad bits that go with it?
Well, very easy question. The truth is, right, that Stanford is what it is because Silicon Valley couldn't exist without it. Right? Yeah. It grew at the Stanford Research Park. It grew at the university. The first early tech giant, Sun Microsystems, was literally named for Stanford University Network. Right, so this relationship goes back decades. It's not accidental. I think universities need to understand, right, that Stanford is sort of the bleeding edge of a trend that we see really sweeping the rest of the world, which is the corporatization of the university model, in which to some degree you can see students as a monetizable product. Right, that these institutions. Is that desirable? I think it comes with some severe trade-backs, right, trade-offs that universities, right, especially in the United States. We've had a few years of deep challenges, and all of them seem sort of unrelated until you realize that they strike at the same central issue. What does the university actually stand for today? Yeah. Is this a place to learn or a place to get rich? Until universities understand, how to articulate their values, how to prevent themselves from becoming muddled in this desire for profit above all else, that problem persists.
So European universities, which ostensibly still appear to be a place to learn, that's a better model.
Well, it's certainly a different model, right? And so Stanford, right, has produced something that no other university has. There's a reason that you see more 10-figure companies coming out of it than anywhere else. My goal is for people to understand that Elizabeth Holmes, right, of Theranos infamy, is just as much a product of this university and the thinking that it breeds as Hewlett or Packard, right? That these things are part of the same set of incentive structures.
Okay. In terms of where we go from here, then, what do you anticipate will happen? You've shone a light within the process. What do you think will come of that?
Well, AI, right, is this great accelerant. It takes all the trends that have already been brimming there beneath the surface and accelerates them to an extraordinary degree. Part of that is the stratification. The most valuable researchers are more valuable than ever before. The guy who taught me how to shotgun a beer freshman year dropped out, started an AI company, which was valued at $1 billion 6 months later. Right, but it also makes it harder for entry-level positions to get going. I think everything that we're seeing on universities right now is just sort of blown up to a much bigger degree as we're trying to figure out how to confront, the latest and greatest AI developments.
Do you think? How do you think your generation, coming out of college right now, struggling with the job market, you hear about it all the time, perceives AI? Is AI now my competition if I'm of this cohort? Am I competing against AI? How do I compete against AI?
Yeah. Look, I was a coder, right? That's how I entered Stanford University. And I can tell you, right, that AI is going to be much better at doing the low-level tasks that junior engineers, typically would have handled. That Stanford actually saw its computer science enrollment go down for the first time in over 2 decades last year, right? Which is a very, very dangerous warning sign for a university that has placed all of its eggs in this basket, right? So that actually is a warning sign, I think, for European universities to understand. If you make this pact with the devil, if you understand that technology is going to be fueling your progress, well, it's a very capricious thing to make a deal with.
Theo, thanks for stopping by. Really appreciate it. Really interesting book, really interesting insights. Thank you very much indeed. Theo Baker, author of How to Rule the World. Stanford University has not responded to our request for comment on this. Okay, let's talk about some of the technology that we are watching this morning and the effect that it is having. Take a look at what Micron is pre-market. We're up by 16.43%. The numbers yesterday, absolutely blowout. But think about the implications of what you are watching here. This is a company that traditionally has been cyclical, talking about long-term contracts, talking about a margin that is through the roof. Basically talking about inflation within a system that really can't cope with it right now. This is not just the hyperscalers that are hoovering up this stuff. It is also stuff that goes into everyday devices. So think about that when you think about the macro picture that you need to look at when it comes to Micron. But Micron certainly is having an effect around the world. You've seen it overnight. The Kospi bouncing back really sharply. Names like SK Hynix up very strongly. One of the biggest suppliers into Micron is ASML. That's why we're seeing outperformance in the Amsterdam market today. It is drifting into other markets as well. The DAX is having a slightly better day today, but the Stock 600 today is not seeing the kind of push higher that we're seeing elsewhere in the world. And there I'd draw your attention to what we're seeing in terms of the US futures picture at the moment. S&P's up by 0.6%, Dow's flat. Take a look at the Nasdaq, up over 2%. The AI trade, it seems, is back on this morning and back on with some degree of force. We get PCE data out a little bit later on, talking of that inflation story. The Qualcomm CEO is going to be joining Bloomberg. That conversation coming up at 4 p.m. Looking forward to that conversation on Bloomberg Tech as well. Up next, it is Bloomberg Brief. Hope you've enjoyed the show. This is Bloomberg.
Politics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, succession starts now.
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
It's 5 a.m. in New York City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The AI trade coming back strong. Micron reviving confidence with a blowout forecast. Flush with supply, Brent crude erases wartime gains as traffic ramps up in the Hormuz Strait. And treasuries and the dollar slipping ahead of consumer spending and jobless claims data later. Let's get a check on markets around the world now. Back where it began in Asia, let's get over to Winnie Su for the latest. Winnie?
Bonnie, lots of excitement in Asia's chip space today, especially after those upbeat earnings from Micron. Now, we also have SK Hynix here surging, and in fact, it is the top contributor to Asia's gains today on that plan to be listed in the U.S. next month. Now, investors are expecting this listing to help narrow its valuation gap with its global peers like Micron. But also, interestingly, we have similarly Japan's Kioxia planning to be listed in the U.S. as well next spring. So it does ask that question about how sustainable this AI trade is actually going to be going forward. Now, flip the board, we zoom out and take a look at the broader Asia market because we have MSCI Asia here up about 1.5%, also supported by the lower oil prices. And we do have tech-heavy gauges in South Korea and Japan leading gains, while the likes of Hong Kong continue to underperform.
All right, Winnie, thank you so much. That's Winnie Su in Hong Kong. Now let's get over to London for a look at Europe with Justina Lee.
Good morning, Bonnie. We're also seeing a risk-on day in Europe today, with the Stoxx Europe 600 up about 0.5%. And of course, it's also led by a lot of those tech names, with tech being the best performer subsector today. And now when it comes to currencies, as you mentioned earlier, generally it's an up day, it's a down day for the dollar. And so we're seeing strength in the euro and also in the pound. Now, of course, we've spent a lot of time this week talking about UK politics. And it does seem like generally from the fixed income markets, there hasn't really been a freak out. And I think part of that reflects the fact that, you know, a lot of this news has been priced in. And if we flip the board here, we can see that actually 10-year gilt yields have been falling this month, you know, reflecting more a lot of those macro forces, like the fact that, you know, investors don't really expect, you know, that many rate hikes anymore in the UK. But of course, we're also watching UK politics. But at least there seems a bit more clarity in terms of the picture going forward, with not a lot of competition for the PM seat, and also the path kind of pretty clear for Andy Burnham to take over. Bonnie.
Justina, thank you. Justina Lee there in London. Well, markets here in the US have been on tenterhooks for a couple of days. It's fair to say Micron saved the day and perhaps even reshaped the AI narrative with its massive margins, and it's solving essentially of the conundrum, locking customers into contracts for up to 5 years, so potentially getting rid of the boom-bust cycle. That has the Nasdaq rebounding today. Micron itself up 17% in the pre-market. As you can see, Nasdaq rebounding. The Russell not so much, but bear in mind the Russell hadn't seen the sell-off, and it's been outperforming the rest of the indices month to date. And then we have S&P futures up 0.7% as well. Obviously, the S&P also benefiting from banks upping their dividends by 10 to 15%. Banks in general have been underperforming the indices this year as well. In terms of yields, not too much movement here. Everything else seems to be sort of pattering along nicely, including the reopening of the Strait of Hormuz. And you're seeing the 30-year yield just at 4.86, up about 2 basis points, but still very, very narrow spread there between the 2s and the 30-year yields. And in terms of oil, we're right back down to where we were right before the war. 75 on Brent, 69 on New York crude. It's quite the picture for oil. All right, let's get to some individual movers this morning. Some big ones. Over to London and Chloe Melly. Chloe.
Good morning, Bonnie. Of course, as you were mentioning, this AI trade is back on. We've got this enthusiasm now back after the weakness that we saw yesterday. And of course, a big part of that is being driven by Micron, which came out with this very, very upbeat outlook, confirming this growth runway for AI. And so we are up about 16% this morning. Moving on to another company that is also riding this very positive take wave this morning, and that is Qualcomm, that has come out with also a very strong outlook. And that really confirms for investors that the company has been really able and successful in diversifying away from its core phone business and more towards AI. And so we're up as well quite strongly there for Qualcomm. And finally, Alphabet is down this morning slightly, as it is said to be losing 2 very high-profile AI researchers to Anthropic. And of course, given how competitive of a market this is, this could impact Google's ability to really stand out in that AI market. And so we're down about 1.2% this morning for Alphabet.
Chloe, thank you so much. Chloe Melly there. And coming up in this hour, we're going to dig into those Micron earnings with Sanjeev Rana of CLSA. Also, more in the AI trade with Robinhood CIO Stephanie Guild. Micron then soaring in pre-market trading after its quarterly sales forecast crushed expectations, and so did all of the other numbers. Let's get more with Bloomberg's Ruhel Amin. Ruhel, it does seem like we dodged a bullet yesterday. Things could have been very, very different. Is there some lesson that we should learn from this?
Yeah, very much so, and good morning. Yeah, so I think the market did obviously expect a very strong quarter from Micron. AI demand for memory chips has, of course, been very strong and supply has been tight. But what's more interesting is obviously the guide. The 4Q guide was well ahead of expectations, but also the qualitative commentary from management who expect supply to remain tight beyond 2027. And that has enormous implications for pricing power, gross margins, and ultimately the stock and valuation.
Ruel, does this mean that we're now sort of in the memory chip performance of the AI narrative, and where does it move to from here?
Yeah, exactly. I think the big question for memory and Micron more specifically is this still a cyclical stock and a cyclical industry, or has AI transformed the economics of the industry into one where demand is more structural? Because if it is the latter, then again, these stocks are going to be valued very differently. And that's partly why we've seen such a strong run year to date. Profitability is extremely strong. The street is modeling 80% plus gross margins. And I think the view at the moment is that AI demand is here to stay. And actually, it's more structural than cyclical. Now, that's the key question that the market's been grappling with.
Absolutely. Ruhel, thank you so much. That is Bloomberg's Ruhel Amin. Sanjeev Rana is head of Korean research at CLSA. He and his team put Samsung Electronics at a target price of 540,000 won. SK Hynix also massively upgraded. 3,700,000 Korean won is the price target there. And Micron has been raised to $1,700 US, up from $1,320 after yesterday's earnings release. Sanjeev joins us now. Sanjeev, sure, we have seen Micron try to solve this problem of the commodity type cycle, right? But what if a customer comes along and says, we've paid for all this memory, fine, we're just not going to use it anymore. We're changing strategy, we'll take a one-off write-down. Can that happen?
So, as Micron said, and Korean suppliers have also been saying that the contracts these companies are signing, they're quite different from the past. So there are legally enforceable contracts, and there are some strict penalties. And in many cases, these companies are also paying upfront payments. So I believe it will not be easy for these companies to get out of these contracts. But more important thing is that why these companies are signing these contracts at record high prices. The simple answer is that their priority is no longer the performance or cost, but reliable access to memory, capacity availability, and long-term supply certainty. So no wonder memory has become the most critical and strategic layer in the entire AI stack.
Sanjeev, presumably these memory chip companies will be expected to iterate on their products, right? How fast do they need to come up with better products, better solutions in order to hold the territory they have?
So currently there are only 3 major memory suppliers, and in terms of technology, they are pretty much at a similar level, I would say. Of course, there are small differences in terms of product mix and technological capabilities, but not much. So in that case, I don't think there will be any disruption, coming along. And there are some concerns that innovations in algorithms side could lead to some lower than expected demand. But I don't agree with that view. Actually, algorithmic innovation has been going on for a while now, and what we have seen is that has helped drive AI's adoption. So overall, our view remains that memory demand will remain very strong in the coming years, especially when you consider the requirements for agentic AI systems.
So Micron says it has 16 strategic customers. Is that enough variety? Would you like to see that number increase, or does it need to?
Oh, it will definitely go higher. I mean, as the company said, they have signed 16 strategic customer agreements, and they represent about 20% of their DRAM volume and 30% of the NAND volumes. But when all other contracts currently under negotiations are completed, they expect like 50% plus of their revenue to come from these strategic customer agreements.
So, if memory makers need to be valued, as you say, at AI foundation infrastructure provider level, how much upside does that imply across the board?
I think all these 3 memory suppliers are still trading at single-digit PE multiples, but most of the semiconductor stocks, except memory, they trade at anywhere between 15 to 40 times PE. NVIDIA trades at 20 times plus. I see no reason, like with all these contracts that we are seeing, that just provides long-term visibility, and that will enable suppliers to flexibly adjust their capex, so that will mitigate price declines and enhance profit visibility. So in that sense, one would expect that these stocks should be at least trading at double-digit multiples, and in the longer term, I think we can look forward to multiples like 15 to 20 times.
Wow. Well, as you say, visibility is huge, and now we have a lot of transparency. At what point will the likes of Micron, SK Hynix, all these other companies be able to, or at least not be able to, surprise the market? And at that point, does the market punish them? Because it seems like a beat and a raise is no longer good enough. You have to beat, raise and surprise.
I think the earnings surprise cycle will come to an end soon, given these companies are now signing long-term contracts. More than half of their revenue will be coming from these contracts. So the room to surprise is quite limited, although in the near term, I would say that the trajectory of memory prices remains very solid. I think memory prices will be going up higher than expected. This is what our channel checks have been suggesting. We just had a very big Northeast Asia conference that was attended by 400 investors and of the more than 80 corporates. And our checks suggest that in the near term, memory prices are likely to go higher. So that is one of the reasons, like Korean suppliers, for example, are not in a hurry to sign these long-term strategic agreements, because they think maybe in the next 1 to 2 quarters prices could be going up like maybe 20-30% more. So better to sign the contracts then. And I'm sure Micron will also see the benefit of price increases in the coming quarters. So in the near term, definitely earnings, that there is room for surprise. But yeah, in the longer term, the story is that memory is becoming so strategic, and the value, like AI, isn't just causing an increase in demand. It is reshaping how memory creates value. And I think this is what investors need to understand.
Sanjeev, how material is it for Korean companies like Samsung and SK Hynix that Korea has definitely got some market structure instability issues, and that's been evident all along, but particularly in March and again 2 days ago?
I'm sorry, I didn't get your question.
Korea's issues with its market stability, does that portend problems for the likes of SK Hynix and Samsung?
Okay. So actually, Samsung and Hynix are not more than 50% of the index. So the way their share prices move, the Kospi index moves accordingly. So there is a very high concentration risk, and this is what investors are worried about. And a lot of investors, they can't have more than 10% of their portfolio in a single stock. But given the performance of these stocks in the last 6 months, 12 months, foreign investors had to sell. So they have been selling more than like almost 100 trillion Korean won in Samsung and Hynix in the first 6 months of the year. I think that selling could continue, but that's purely, for risk management purpose. And like fundamentally, these companies still remain very cheap. In the last 12 months, we have seen Samsung and Hynix consensus earnings going up by 700 to 800%. So in that sense, one could argue that valuation multiples have barely moved.
All right, Sanjeev, thank you so much. Wonderful to get your opinion this morning. Sanjeev Rana of CLSA, upgrading all of those micro chip makers. Now, to other top stories trending on the terminal this morning. Iraq says it could eventually leave OPEC unless the group allows it to raise its oil production quota. An oil ministry spokesperson says Iraq remains committed to OPEC, but the group should allow the country to increase its production to meet its needs. The remarks come just a few months after the UAE quit the group so that it could pump more. The European Union has signed off on a U.S. trade deal ahead of President Trump's July 4th deadline. The agreement would eliminate levies on U.S. industrial goods and some agricultural products. In exchange, the European Union would face a 15% tariff ceiling on its exports to the United States. Anthropic is accusing Alibaba of a large-scale effort to, quote, illicitly access its Claude AI model. In a letter sent to Alibaba and U.S. officials, Anthropic says the Chinese firm used thousands of fraudulent accounts to target Claude's most valuable capabilities for use in its own chatbots. Coming up, big U.S. banks boosting dividends for their investors after passing the Fed's stress tests. More on that next. This is Bloomberg.
how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersachi in El Ula, Saudi Arabia, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bloomberg Brief. I'm Bonnie Quinn in New York. All of the 6 biggest US banks passing the Fed's annual stress test. The lenders increasing their investor payouts then, with Morgan Stanley hiking as much as 15% in its dividend per share. Bloomberg's Van Ram joins us now for more. Van, the banks have been not performing so wonderfully year to date, right? The S&P index has definitely lagged the broader index. The BKX, the KBW index, maybe up 11%, but that's still, you know, just a relatively okay performance. Where is the weakness coming from?
Well, I think that, you know, this rotational trade into banks is going to continue, because I think that what has been happening of late is that investors have been rotating out of chips and rotating into some of the more sedate sectors, as you might put it. That is one of the beneficiaries has been banking. But these banking stress tests, to give it some context, Bonnie, I think that they were obviously founded in the aftermath of the 2008 financial crisis, and I think that they probably lived through the peak utility, but I think that it is still an important diagnostic tool to see how banks will fare against if there is a downturn in the housing market, and I think for that reason it continues to be important.
Yeah, absolutely. Well, I'm sure investors will be pleased with the upping of the dividends. Data later expected to show, you know, an uptick in personal income spending, but also gains in top line and core PCE. How much of a material impact will it have on FOMC committee members' views?
I think that obviously it's going to be very pivotal to their views. I think a sustained overshoot is not going to be tolerated by this committee, especially given Wash's latest pronouncements that he will fix inflation. And if he can continue to get numbers above 3.3, that will be worrying for the Fed, because they've penciled in a rate of 3.3 for this entire year. So to the extent that there is an overshoot of that estimate, we are already well above the Fed's target rate for a long time. But if we are overshooting the estimates today, I think that's going to be pretty grim boding for treasuries. We have kind of rallied in the past few days, but I think that the rally is kind of outliving and it's coming to its end, natural end.
We'll see what impact it has on the curve. Ben, thank you so much. That is Bloomberg's Van Ram in Dubai. Coming up, updates from a pair of devastating earthquakes in Venezuela. Your front page news next.
my old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years, and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start in the third floor or the lobby. You actually have to start in the basement.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Bloomberg Brief, I'm Bonnie Quinn in New York. Time now for your front page news. First up, the New York Times leading with the latest on the 7.2 and 7.5 magnitude earthquakes in Venezuela, the largest since 1900 and likely more deadly. Dozens of buildings have toppled. 32 people are confirmed dead so far. Rescue efforts are frantically underway. The U.S. is coordinating a response with the interim government in Caracas. Next up, on the Washington Post, the U.S. Senate's reversal on Iran. The chamber rejected a resolution that would have forced President Trump to end the war. The vote came after the president criticized Republicans of undermining Iran negotiations. And finally, Bloomberg reporting on NATO Secretary General Mark Rutte's Oval Office visit aimed at easing President Trump's anger with the alliance for its reluctance to support the Iran campaign. Rutte brought posters with gold lettering and bright red charts showing higher NATO defense spending since Trump's first term. Rutte spoke with Bloomberg after the meeting.
What I think is important is to be fair, and fairness dictates that this president is really doing a huge amount of work to get NATO in better shape. He had a big success last year in The Hague with the 5% spending commitment.
Mark Rutte there speaking to Bloomberg. Let's check on these markets after a very nervy 2 days, right? That massive sell-off that began in Korea, bled into the US session, and then all eyes were on Micron's earnings last night. Well, Micron very definitely calmed nerves, and S&P futures are pointed higher, but Nasdaq futures are pointed even higher still. Not quite perhaps at the level that we were at pre all of these jitters, but we might get there. The dollar index just easing off slightly, and the 10-year yield up almost a couple of basis points. We do get that data later, by the way. Coming up, we're going to be speaking with Stephanie Guild of Robinhood.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy. in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. The AI trade coming back strong. Micron reviving confidence with a blowout earnings. Flush with supply, Brent crude erasing wartime gains as traffic ramps up in the Strait of Hormuz. And treasuries and the dollar slipping just a little ahead of consumer spending data, also jobless claims in 3 hours. So let's take a look at these markets then, because after a very nervous couple of days, you see NASDAQ 100 futures pointed higher. And how this morning? Micron is up something like 17% in the pre-market. It just blew the lid off earnings. Margins were over 85%, almost unheard of. It's able to price higher. It's also able to lock in customers for 3, 4, 5 years. You saw it over in Korea as well. It hasn't quite reclaimed the highs pre the sell-off, but it's right back in the vicinity. And we're also seeing the Russell 2000 perhaps catch up, not as much because it didn't see that sell-off that we had seen in the NASDAQ. Let's move to some other asset classes because we also have economic data today that investors are going to keep an eye on. The 2-year yield barely moving, the 10-year yield up almost 2 basis points, same for the 30-year yield. So we'll see what we get in terms of PCE data. And then Brent crude continues to come down, 72 and change now. Can you believe it? New York crude below $70 a barrel, and Bitcoin, it dropped well below $60,000 a coin yesterday, right back at 61 and change. Let's get to some individual movers now. A fascinating pre-market. Here's Chloe Melly in London.
Good morning, Bonnie. We've got Micron shares surging this morning, up more than 16% after delivering those blowout results and having this very strong, very upbeat outlook. And this now means that this AI trade is very much back on. We are seeing that reflected as well in some tech stocks in Asia and Europe, and really confirms that this AI growth is not going anywhere for Micron. It is also a very similar story for Qualcomm, which has also delivered a very upbeat outlook and is also up this morning at Qualcomm in pre-market trade. It is a company that has managed to really diversify away from its really core business, which was around phone chips, and move more towards this AI business, which has been, of course, very beneficial. And finally, we are going over to Alibaba, which is down this morning after Anthropic accused it of illicitly trying to access its AI models and really undermining potentially the decision from Anthropic to keep its products out of China. And so we're down for Alibaba this morning, almost 3% in pre-market trading. But we'll be watching out for any further developments on that story as well, which is very interesting.
Chloe, I imagine all of these China companies can't wait for the day when they're able to catch up with the US on AI. Chloe Melly there in London. Let's get back to Micron then. Shares higher by double digits. That's an understatement after a stronger than expected quarterly sales forecast, pointing to continuing momentum in AI demand. Joining us now is Jake Silverman of Bloomberg Intelligence. It wasn't just the sales forecast, it was literally everything, Jake. Micron managed to beat, raise and surprise. How many more quarters can it do that for?
Yeah, we're about halfway through 2026 now. Our view is that they're going to be able in a tight supply and demand environment now through at least 2027. And a lot of this is just simply because the entire industry, not just Micron, that includes Samsung, SK Hynix, the three of them account for the majority of at least DRAM capacity and a very large portion, at least the majority as well, of NAND. And so as a result, because none of them can really build capacity fast enough to meet the demand that we're seeing from AI, it's high bandwidth memory. It's also DRAM that goes into server products, but it's also in our phones as well, and a lot of consumer, pretty much every consumer product. And so, considering that the fact that they can't build this capacity fast enough, and demand keeps going up, it's hard to see when this stops in the near term. So, conservatively, we think it's through 2027 at this point.
Boardroom, and you're talking about bringing capacity online, building factories, getting other factories, amped up. Would you not be a little bit nervous that at some point some of this demand goes away, whether it's through pricing or just the fact that companies decide they can't afford to go all in on AI and change their strategies?
Yeah, of course. Look, we've already seen some demand destructions. If you think about PCs and smartphones on the lower medium tiers, as memory pricing has increased, if your bill of materials cost is usually $200 and suddenly what was usually a small portion of that suddenly doubles, triples, quadruples in price, and your margins are already thin, it's going to result in reduced production or reduced demand, one or the other. So we've already seen that to some extent, but AI has more than offset that because we've seen higher intensity, more memory per AI server. High bandwidth memory reduces capacity for standard DRAM because it requires more wafers per die. And so, yeah, look, of course, there's a concern. I think right now the biggest concern isn't so much would there be less demand for PCs or smartphones. It's more so AI CapEx. So while AI CapEx continues to grow, while memory becomes a larger percentage of that, that suggests that we're going to see continued memory demand. On the other hand, could there be a slowdown? Of course. I mean, look, we've seen past cloud cycles. Is this a little bit different than that? Yeah, I think that's probably the case. But we've seen cloud spending decline or slow down tremendously in some years, even if the trajectory is generally up and to the right. And so that is a concern for Micron. On the other hand, they've also been signing a lot of these, they call them SCAs, these long-term contracts. I think they average around 3+ years, include data center, consumer, automotive customers as well. And that's locking in floor pricing at favorable margins. If you look at prior cycles, they've peaked at around 60% gross margin, Micron. Now they're guiding to 86%, but it looks like these SCAs are locking in at least 60% gross margin. So that's, while it might be a concern for investors for sure, it does point to maybe a smoother cycle on the other side.
That's for sure. Jake, thank you so much. Jake Silverman of Bloomberg Intelligence. Joining us now is Stephanie Guild, CIO of Robinhood. Stephanie, it seems like we dodged a bullet, and I'm wondering if there's a lesson that we can learn from this, because essentially not that much has changed today, except one memory chip maker has said that it has some customers. But yet the market may have very well sold off in a very substantial way if Micron hadn't surprised.
If they hadn't greatly surprised, huge expectations. It had expectations of 1,000% earnings growth quarter over quarter. And expectations are everything usually. I think it just shows you that we are going to go through these fits and starts in the marketplace because we are taking an agentic world that progresses very fast and puts it against a physical world that can't move as fast. And I think that's what makes people nervous, is that stock prices are up a huge amount. people have made a lot of money, investors have made a lot of money by being invested in these names. And if there is some hiccup, even if growth was 850%, that's still huge, but if it's already in the stock price, and I think that's what you'll have, a lot of these fits and starts.
You know, one of the first rules of investing is you don't understand what you're investing in, you have no business being there, right? Now, if Micron, even after the sell-off, was very close to its record, and this morning we're seeing it up 18% in the pre-market, I mean, literally being completely repriced after yesterday, we have no idea what's going on in the AI sphere, and we shouldn't be investing in it, correct?
I mean, I don't know about that. I just think that it can be continually underestimated, the amount of money that needs to be spent on things like memory, on things like energy, infrastructure. SK Hynix put out a piece yesterday basically talking about, don't forget about all these other things that need to be done in order to make this all work. And I think that can be continually underestimated, and that's why I think it's hard to understand.
Well, and we keep getting catalysts too. I mean, the latest one is going to be SK Hynix, with its IPO, and then potentially, its inclusion in the SOX, and it's just on and on and on. How many Robinhood customers are in one of these memory chip makers or one of the hyperscalers?
Micron has been our most popular stock over the last week, and when it was selling off, along with sort of the whole AI trade, they were going into it. They were buying that dip pretty ferociously. So it's been
happening a lot. It's retail buying the dips. Any concern that this might all go wrong at some point?
Sure. I mean, you to your point, like, you don't know when expectations will catch up with reality, and I think we've seen that with a stock like Nvidia, right? Like, that was something that kept surprising, and now at this point, the last couple of earnings calls, it sort of met expectations, and the stock hasn't done very much. So I think that we will get to that point at some point, but I'm not sure yet. But I do agree that the amount of equity supply that is coming into the market, it's not just new IPOs, but it's also, new issuances to fund all of this from stocks like the Mag 7. And that's where I started calling them the Meh 7, because, they used to be the cash cows, and investors just have to change the way they think about those companies.
Speaking of issuance, we have to talk about SpaceX. So I'm sure your customers were fascinated, and we all are, with the daily price. Now, there was a lot of sort of negative, maybe narrative speak before it went public. Be careful, everybody. This, IPOs don't always do well, and so on and so on. What did the Robinhood customer do? And after we saw the 50% increase and then the drop back, have they been getting out?
We saw a little bit of trimming, but not so much. We had our customer base was enthusiastically wanting to participate in the IPO. We were able to provide shares to our customers, probably not as much as maybe they wanted. But I do think that the rules for SpaceX had been changed relative to other ones. And I think that's why, if you look at history, you would say be careful. But I think our customer base has shown, Tesla used to be the #1 stock, most traded. It hasn't been, because Micron and SpaceX have taken that over. And I think it really is, like, if you believe in the long-term story, which a lot of our customers do, and in Elon, that's enough, at least for now.
You're at the coalface of a lot of the meme stock type trading, right? And we're seeing it a little bit with Wendy's. I mean, we saw a huge increase yesterday. It's already up 16% of the pre-market. How do you prepare for a day like that? Do you treat that kind of trading any differently to other trading? And I mean, do you see in aggregate, is money lost or made on those kinds of trades?
I think in the beginning, the money is made because it is, I do think the stock market in some ways, you can call it a meme stock, but in a way it's like a voting machine. Like Wendy's has nostalgia. Other names that have become meme stocks in the past have had nostalgia for a certain subset of our customer base and retail in general. And I think that's what they end up saying, like, no, save this company. I mean, that's what I was kind of reading across the Reddit threads and X. And in preparing for that, we just really try to maintain as much liquidity for our customer base and support what they want to do. We don't.
Robinhood strategies.
Yes.
This is another way that you want to support your customer.
Yes.
It's a digital choice for them, if you like.
Yes.
And are you using AI in those choices?
We do incorporate AI into our investment analysis. We have a human team, and we have a quantitative investment process and then a qualitative overlay, and we talk to our data using AI essentially.
What kinds of stocks are in there? I mean, do you have an allocation in every sector, or how does it work?
We are pretty diversified. We have about 50% of our portfolios in ETFs, and that some of them are thematic internationally, for example, because we don't have international stocks on our platform besides ADRs. And then we have single names in them, about 50%. And I would say a good portion are in the AI infrastructure trade, but we do have allocations to healthcare because we are finding interesting opportunities there. And Natera yesterday had a good day. And then we have some energy names as an offset.
We do have to leave it there, but very quickly, in the prediction markets on Robinhood, how's the World Cup doing? Is it blowing away?
Oh, yeah, it's very popular on our platform.
Okay. Stephanie, thank you so much. Stephanie Guild there of Robinhood. Now to other top stories trending on the terminal this morning. Iraq says it could leave eventually OPEC unless the group allows it to raise its oil production quota. An oil ministry spokesperson says Iraq remains committed to OPEC, but the group should allow the country to increase its production to meet its needs. The remarks come just a few months after the United Arab Emirates quit the group so that it could pump more. The European Union has signed off on a US trade deal ahead of President Trump's July 4th deadline. The agreement would eliminate levies on US industrial goods and some agricultural products. In exchange, the EU would face a 15% tariff ceiling on its exports to the US. Amazon is increasing its investments in India by $13 billion. The new investment will expand the data center capacity of Amazon Web Services in Mumbai and Hyderabad. Amazon's cumulative investments in India from 2010 through 2030 are now set to surpass $88 billion. Coming up, President Trump pushing for an $88 billion spending package. We'll break down that bid next. This is Bloomberg.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Yeah, probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
For the first time in 3,000 years, we are finally going to have peace in the Middle East. We're going to have peace in the Middle East. Since the agreement, the stock market and your 401ks are skyrocketing upward, and oil prices are plummeting downward today. It hit a new low, and the world is a much safer place.
President Trump appears to have won over some key Republican senators on the Iran war. The Senate has rejected now a resolution to end the war after a pretty heated private lunch with Republican lawmakers. The meeting resulted in Senators Bill Cassidy and Rand Paul changing their votes. Joining us now from Washington is Kate Ackley of Bloomberg Government. I mean, essentially symbolic, Kate, because the war is all but ended anyway. But what happened?
Well, yesterday, President Trump was on Capitol Hill to meet Republican senators, as you said, for their lunch. And there was a sort of a heated exchange, especially with Senator Bill Cassidy, who, you recall, President Trump endorsed his opponent in a primary. So, he's kind of a lame duck now. And we've seen that with some of these Republican senators who are no longer still, running for re-election for whatever reason. They sort of decide to stand up to Trump. There was this heated exchange, according to our reporting, during the lunch. But you're right. By the end of the day, by late into the night, Senator Cassidy had sort of switched his vote, if you will, and so did Senator Rand Paul, who I think voted present on that. So said, he wanted to give the president a chance to do these peace negotiations with Iran.
What does it mean for the housing bill? Because the president wouldn't sign it, really partially because of all of this. And it was one of the pieces of legislation that actually was getting done this year.
Right. I mean, this had a complete bipartisan support. And you saw, from Senator Elizabeth Warren, a Democrat from Massachusetts, to, many Republicans, a very overwhelming bipartisan vote in support of that housing legislation aimed at trying to make housing more affordable for Americans. What President Trump said yesterday, and there was this whole backdrop set up for a signing ceremony on Capitol Hill with flags and the whole deal. And then that was scrapped. So what Republicans have been saying, in the last 24 hours is that they think President Trump will sign it within this 10-day window. They're not expecting him to veto it. If he does not sign it, nothing happens in 10 days, then it is enacted. So, but it really puts it into, a little bit of uncertainty, some chaos. Basically, what we heard from some Republicans on Capitol Hill yesterday was, this was a victory, a bipartisan bipartisan bill being passed by both the House and the Senate, something that isn't easy to do in this Congress. And then they were ready to celebrate, and then this happened. President Trump has said part of the reason that he postponed this or scrapped the signing ceremony is because he wants to see movement on a big kind of sweeping voter ID measure called the Save America Act. That does not have bipartisan support. I think there's going to be continued negotiations, but just a lot of tension and drama here in Washington this week.
Sure, and I mean, I guess there's always pressure exercised on caucuses to get into line, right? And perhaps this was one of those moments. But Trump is also looking for $88 billion for more war efforts, also farmer aid. How is he going to get on with that?
Well, that's another situation where you do not see support from Democrats, so they'd have to use their sort of party line measure to get it through the Senate, where you would otherwise need 60 votes to get something through the Senate. That also has some funding for to fight Ebola in Africa, as you mentioned, the farmer aid, and of course the big war effort with to replenish the munitions that have been used in the Iran conflict situation. And you see that is sort of if Democrats are not going to support it, it's basically a proxy vote on the war itself, which Democrats have been very critical of and opposing. So again, just a lot of fighting within the Republican Party, but also, of course, ongoing between Republicans and Democrats in Washington.
And Kate, it just happened in the last 2 hours. hope you've had a chance to see it, but the EU has given the US trade deal a final approval ahead of President Trump's, stated deadline of July 4th. So I guess that's one more item out of the way, and relations trade-wise with Europe should continue pretty amicably. Is that fair to say?
But, trade and tariffs have been a signature piece of policy for this president. And we've seen, in European countries, as well as businesses, international global businesses, seeking, lobbyists here in Washington to help them navigate this situation. So there's been a lot of people involved in trying to either find workarounds or trade deals or, make bargains. It does seem like there's usually a way to find a path forward. So we'll continue to watch that for sure.
Kate, thank you so much. Across all of the topics for us today, that is Kate Ackley of Bloomberg Government. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
So we got Micron earnings out of the way, but it's not over yet. First up today, we have US PCE, personal income and spending, also jobless claims, all of that data coming at 8:30 a.m. Eastern. Then we have $44 billion of 7-year Treasury notes going on auction at 1 p.m. And then a host of Fed speak, Bowman, Williams and Goolsbee all speaking today. In terms of some movies before the bell, Micron extending gains after that blowout quarter and blowout guidance up more than 16%. We'll see if it reaches another record today. Qualcomm, a little bit of a halo effect, seeing data center sales at $15 billion by 2029. You're going to see that across the tech space today. And then Bio-Techne, Merck is going to buy the company for $11.3 billion. Here's your macro picture. Futures higher, treasuries wavering before the data.
very famous dogs. You have they look like balloon kind of figures to some extent. How do you make those?
In the case of the balloon dog, I blew up a balloon dog. So I had this balloon, which is kind of like a latex type of piece, molded it, cast it, and then blew that up in scale and put it into a clay, and eventually had that transformed into stainless steel.
So when you have a balloon dog, let's say, a regular size one or then a big one, did people say, Jeff, you're crazy? Were you shocked that people were willing to pay very high prices for this?
When I was making my first balloon dog, one of the purchasers was Eli Bro. And originally I thought I could make a balloon dog for around $300,000 that I could manufacture. It's a large piece, over 10 feet long, or 12 feet long, 10 feet high. But it turned out that the fabricator came back to me and said, you know, Jeff, I can't do it for $300,000. It's going to be $650,000. But eventually, then they raised the price again, and they finally brought it up to 1.6 million. And I told Eli that this is the reality of it. I showed him everything, and he ended up paying for the production costs.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
Insight with Haslinda Amin, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
What we all know is that earnings estimates continue to rip higher.
2026 earnings are going to be okay.
The chip names have done a great deal of the heavy lifting.
If we see a broadening, that would be a healthy sign in this market.
We think there's probably more weakness coming through the summer months.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Thursday, more fuel for the bulls. Equity futures pushing higher. Micron crushing estimates as Wall Street banks are getting a green light to boost payouts. Crude is declining, wiping out a major wartime rally heading into the latest read on inflation.
Will that be enough to dampen the enthusiasm that we're seeing in so many parts of U.S. equity markets as well as certain parts of the economy? And that's emphasized by what we saw from the stress tests as well as Micron earnings. Yes, on one hand, it is disinflationary that oil prices are coming down. Still, core PCE is set to come in at 4.1%, which would be the highest since April of 2023. And some of the contracts that are leading to these elevated prices are locked in for the next 5 years. So it doesn't seem like that is going to be anytime soon.
Pricing power, margins. Check out Micron this morning. 85% margins over at that company.
If anyone was doubting just how much pricing power they actually had, well, they're not having a good day today because ultimately they proved all doubters wrong, and it came in with a $50 billion of revenue in the fiscal fourth quarter. That compares to $43.2 billion. When you start beating by $7 billion, the net expectations for some of the net margins was far below that 85%. They can control a market. They can lock people in for the next 5 years. They can get upfront payments, and still they are running out of chips to sell.
85% for gross margins is insane. It not only beat their own expectations, it also beat what they did last quarter. A year ago, 39%, that's how much they were up. And this also beat NVIDIA. It's starting to feel like Micron maybe has a little bit of the new cool kid on the block, the new NVIDIA of the street.
Stock is up in the pre-market by 16%. Good news there. For the banks, good news there. For crude, good news there. Check out crude, WTI and Brent this morning. WTI in the 60s, 69, Brent 72, wiping out the wartime rally. A 60+% move at one point, all gone.
All gone. So basically, we are back to pre-war levels. At the same time, the AI trade is continuing, and that is why there's so much positivity and momentum. You know, Jim Reed of Deutsche Bank put this in one of his notes. It's not just the fact that oil keeps moving. It's the fact there's a lot of officials coming out. The president this week had said this, and a number of other individuals, Marco Rubio, Secretary of State, individuals in the Gulf, said also they don't see Iran having a tolling right now. They're not tolling for these vessels, which basically everyone is starting to feel like maybe we are somewhat going back to normal when it comes to the Strait of Hormuz.
So I think this is good news, but there's always something to worry about. Thank you, Torsten Slok, over at Apollo, with this quote. The narrative in markets is changing from lower oil prices mean lower inflation to lower oil prices mean more demand in an already overheating economy, which means higher inflation.
Yeah. You're even hearing this over at the ECB, ironically enough. Isabel Schnabel coming out and saying we can't let up our vigilance on inflation even if oil prices are coming down. This, as the ECB's Christine Lagarde at least, has a different tone. Nonetheless, this is sort of the push-pull of markets right now. On one hand, you've got Micron able to charge whatever they want for people who can't get enough of their memory chips. And on the other hand, yes, you have one disinflationary input from oil prices. How does this come out? How do people see core PCE? How many people are going to say we're seeing peak acceleration in inflation versus the people saying, hold on a second, it's services sectors, it's also the rare earth metals and a whole host of other components.
Apparently things are so good it's bad. Equity futures this morning up by 0.75%.
My kind of thinking.
On the S&P 500. Coming up this hour, Sebastian Page of T. Rowe Price as tech bounces back. Terry Haynes of Pangea Policy as President Trump clashes with Republican senators. And Angelo Zeno of CFRA as Micron is breathing new life into the AI trade. We begin this hour with stocks pushing higher following a boost from Micron's blowout earnings report. Sebastian Page of T. Rowe Price writing AI is an expanding theme from GPUs to other bottlenecks along the data center supply chain, as Buzz Lightyear said, to infinity and beyond. Sebastian joins us now for more. Seb, welcome back to the program, buddy. Are you just saying stay on, grip tight, keep riding this bull?
John, when I wrote my notes, I didn't think you'd pick up on the Buzz Lightyear quote. I'm going to be honest. We have an expanding trade from bottlenecks to, more and more bottlenecks. You're looking at cooling, at electrification, at aerospace, at gas turbines. We're invested in those bottlenecks. We think it's a trade that has legs. Look, the AI build out, a lot of people mentioned those forecasts on your show, but we're looking at $3 trillion by 2028. So it's a trade, and it's going to continue to go, in my mind. The key question right now is, when is this going to show in AI users' margins? Now, we have 300 analysts on our platform. I read their notes, but now I use AI to read their notes, and I ask AI, where are we seeing companies in our own proprietary research that are increasing their margins because they're using AI? Now, I've seen estimates out there, John, that are, I think, exaggerated. But anecdotally, we're starting to see this as well in the users of AI. This will be the next leg. So I think the technology revolution will continue. I'm conscious as I say this, I sound a little bit like Dan Ives. But yeah, we're long U.S. large cap growth stocks.
So I'll push back just a little bit, and I'll give you the alternative view on things, Seb, where the economics of all of this get a little bit complicated. So the cost to build out capacity is increasing. We can see that evidenced by some of the margins at some of these companies at a time when the end user demand is getting a little bit fragile with regards to pricing overall, and they're rationing spending on AI. How's that going to make sense going forward? What do we need to rationalize here?
Look, as long as the products keep improving, and they are, there is tremendous demand for it. It looks to me like we're still scratching the surface on demand and usage of AI. And by the way, John, I completely take the point that this spending is gigantic and free cash flows are coming down really fast for a lot of the hyperscalers. But, if you think about it, the price earnings on the Russell 1000 growth, we were in the 30 range. We peaked at 30 several times over the last 5 years. John, we're at 22. So there is, trust the market. There is an adjustment here that's been made. This is in the bottom for Russell 1000 growth valuation. This is in the bottom 30% of the last 10-year range. You can also play AI bottlenecks, by the way, in other areas. You can also play them in small and mid cap, which we're long too. We have this barbell between U.S. large cap growth and small and mid cap. We're talking about the golden component. Once you have a component that becomes a part, just a bottleneck, a part of that electrification, power supply, data center, whatever it is, your company stock goes vertical. Also, emerging markets, a lot of people mention this on surveillance. Emerging markets are becoming part of that trade. So yeah, I mean, it's a position you need to balance. You need to diversify the risk in the portfolio. For example, I still think there's inflation risk in the portfolio, and at some point that becomes part of the, supplying the energy to AI. That becomes part of the picture.
We'll pick up on that in just one second, Seb. You're talking about trying to race to find the next bottleneck where you can see stocks go vertical, akin to what we're seeing with Micron this morning. I just wonder if people truly are understanding, or if it's a healthy technical to just have a rolling ball of cash. On one hand, people are chasing who has pricing power. On the other hand, Google shares down 8% this month. Microsoft poised for its worst monthly loss going back to 2008 of 19% losses. The payers of this bill are getting penalized. At what point is that a warning sign?
I mean, it is absolutely, Lisa. You have winners and losers, and this is why skilled active management and fundamental research is working here. You're going to have software companies that are going to be disrupted, but you're going to have companies that, I think increasingly the next leg of this is along the bottlenecks to eventually the handoff to the users that are going to create real efficiency. I see it in our company. We're creating efficiency. We're improving our processes. It's really that's going to be the next leg, and that's what is going to keep it going. And again, I go back to the fact that it's not, a lot of this increase in leverage and borrowing and decrease in free cash flow margins, a lot of it has been adjusted in the price. 22 relative to the 30 range in prior episodes over the last 5 years, I think is pretty good for Russell 1000 growth.
So, Seb, could you justify the investment in further AI if the borrowing costs were higher in the face of inflation, in the face of some of this acceleration that we're seeing in other components and price components that everyone's trying to chase?
Well, the reality is that this $3 trillion in spending, a lot of it is generated by companies that still have a ton of cash. I don't like the comparisons to the dot-com bubble, but we're nowhere near the level of corporate leverage in aggregate that we had. So yes, there is some borrowing, but if you look at the metrics by historical standards, it's not a very high level of leverage by historical standards. And there is tremendous capital that's available, as we're seeing with IPOs and those debt issuance. I think there is demand for the end product. At the end of the day, that's what really matters. People want to use it. There are billions of users already. They're just scratching the surface. I'm doing roundtables with investors, and I realize a lot of them, my peers, a lot of them are just starting. It makes me happy because I feel like we're really ahead in how we're using agents and so on in our investment process. But also it makes me think that as long as the demand for the end product is there, people are willing to pay for it. We'll go through ups and downs. We'll go through episodes where tokens get more expensive and people go to cheaper models and so on. But the trend is our friend here, $3 trillion spending by 28. Again, Lisa, I didn't think I'd come in this morning and sound like Dan Ives, but we do have a long position in U.S. large cap growth. And, we do believe in the AI bottlenecks and the expansion of that trade.
You also are concerned that even with oil prices becoming lower, that you actually think there's still a lot of inflation baked into the system. Is the Fed potentially having to maybe hike going to be an issue for where you see the market going and your Dan Ives bullishness this morning?
Yeah, look, Marie, if we get like 25 basis points, 50 basis points of hikes, I don't think that's a big issue for markets. I do think generally, though, inflation right now is underestimated as a risk. You had the Torsten Slok quote earlier. I would argue that he's right. I would agree with that. Yes, oil prices are coming back down really quickly. My view is that there's pent-up inflation. There are lots of lags in inflation data and in inflation itself. You have from fertilizer to food, from freight and insurance to transportation to industrial production to the final goods, from fiscal stimulus to demand. There's lots of lags that are working their way through. By the way, the last 3 months on the rolling basis, the headline CPI is up 8% if you annualize it. You're not supposed to annualize 3 months. It's noisy data, but still 8%. But the shelter for the last 3 months is 4.8%. There's also a lagged effect here with prior rent increases. Now, put all of this in context of the fact that the break-even for the one-year horizon is 1.7%, and the one-year inflation swap is 2.2%. So in my mind, it's still an underestimated risk, especially for the next 3 to 6 months. In the long run, yeah, we'll normalize. But I think the market is underpricing the inflation risk. I guess we have a print this morning. We'll see. I watch surveillance often with a 12 or 24-hour lag. And I'm mindful that some people come in and make forecasts a few minutes before the data release. I'm not going to make that. I'm not going to do that this morning. It's always interesting to listen to it after the fact when you know what happened. But as a general trend, I'm not talking necessarily PCE, maybe 4% this morning, but as a general trend, the inflation here is underestimated by the market based on the pricing you see in break-evens and inflation swaps.
Not enough to upend this rally, though. Seb, it's good to see you. Sebastian Page of T. Rowe Price, at least not for now. For now, CapEx takers over spenders. We'll catch up with Osin Kwon of Wells Fargo later this morning. That's his trade. That's the trade that's worked. You mentioned the hyperscalers. The likes of Meta and Microsoft, those stocks are in a bear market. They've really struggled. Micron is not a struggle. That is surging this morning.
You've been talking about the transfer of wealth, and right now the market is embracing the transfer of wealth and trying to look toward who has that pricing power, who has the next 85% pricing power. I can give advice, and I will charge you something, and ultimately, maybe I can make an 85% profit margin.
90% margins, Bramo.
Yeah.
For you.
Yeah, exactly.
Obviously, Micron up by 16 to 17%.
Just kidding.
In the pre-market. Equity futures right now up by 0.8% on the S&P 500. With an update on stories elsewhere this morning with your Bloomberg Brief, Vonnie Quinn has more. Hey, Vonnie.
Good morning, John. Back-to-back earthquakes devastating Venezuela. The biggest quakes in the country's history, toppling buildings in Caracas, knocking down power lines and damaging the capital's main airport. At least 32 people have been confirmed dead and more than 700 injured so far in the quakes. All of the biggest U.S. banks passing the Fed's annual stress tests, allowing them to boost buybacks and dividends. The exam, which is a result of the GFC, assesses how 32 large lenders would withstand a severe global shock among scenarios. The Fed saying the results underscore the strength of the banking system. Micron shares surging in the pre-market, the largest U.S. maker of computer memory chips giving a quarterly forecast that easily topped Wall Street estimates, signaling an AI-fueled growth run remains strong. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie in about 30 minutes' time. Up next on the programme, struggling to maintain a united front.
We're very proud of the party. I don't like a few people, but that's okay. I think you know who they are. I'll give you that information someday. But for the most part, we have a really well-unified party.
Did someone call him brother yesterday at this meeting?
Yes.
OK. Terry Haynes of Pangea Policy can translate all of that in just a moment. Live from New York City this morning. Good morning.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Crushing estimates, 85% margins. More on this name throughout the program. Micron in the pre-market up by 17%. Here's the follow-through. A snapshot of equities here in the US. Equity futures pushing high on the S&P 500 up by 0.8. Outperformance on the NASDAQ up by 2.2%. Under surveillance this morning, let's head to Washington. Struggling to maintain a united front.
We're very proud of the party. We like our leader. We like everybody really in the room. I don't like a few people, but that's okay. I think you know who they are. But I'll give you that information someday. But for the most part, we have a really well-unified party.
So here's the latest this morning. The president showing some solidarity with GOP senators after a closed-door meeting devolved into a shouting match on Capitol Hill. One senator saying the president was, quote, mad as a murder hornet. Bloomberg's Tyler Kendall joins us now for the latest. Good morning, Tyler.
Hey, John, good morning. I mean, to be a fly on the wall for this closed-door contentious meeting yesterday between President Trump and Senate Republicans, there are really two issues at play here. The first is that yesterday President Trump abruptly canceled this signing ceremony for the recently passed bipartisan housing bill, which Republicans want to campaign on. He says he's not going to sign that legislation until they put forward his voter ID Act. But at this point, that doesn't really seem like a plausible outcome. Senate Republicans have been telling President Trump for months that the votes are not there, though House Speaker Mike Johnson is headed towards the White House later today. That's something to watch, as it appears they're going to try to take some of these provisions and get it through the partisan reconciliation process, but it's not totally clear that will even pass the budgetary standards. The second issue is the one that you mentioned, that we just saw the Senate rebuke President Trump over the conflict in Iran, with 4 Republicans crossing party lines. That included Senator Bill Cassidy, who recently lost his re-election bid after failing to secure President Trump's endorsement. He told reporters that they got into a heated exchange, saying that he, quote, lost his temper, but that he matched President Trump's tone and volume. John, still, it does appear some progress actually might have been made. Yesterday, Cassidy abruptly switched his vote on a separate war powers resolution after he received a briefing at the White House, and so did Senator Rand Paul, who said that he understood President Trump's argument in the room yesterday that without a unified Congress, the U.S. could lose leverage at the negotiating table.
Tyler, appreciate the update. More from Tyler throughout this morning. Live from the nation's capital, Terry Haynes of Pangea Policy joins us now for more. Terry, welcome to the programme. Is this more than just about war heading into the midterms?
Good morning, John. I think I think it's perfectly normal that the pot boils over sometimes. I think people would hopefully not be surprised that privately, people talk to each other pretty frankly in politics, and this certainly is the case today, particularly with people that the president didn't support. But the through line is a couple of things. The through line is it's not really about the war so much as it is the not tying the president's hands in negotiations. That became very clear, and it's also about the path forward, which has a lot to do with funding for the war. It has to do more broadly with funding for defense of $1.5 trillion, and that's really all that's on the table for the rest of the year, because regular spending will be put off until after the midterms.
Terry, though, is this just normal getting things off your chest? You have one senator saying that luckily no one got stabbed, Senator John Kennedy, and he was a little nervous that they put out the metal utensils instead of plastic ones. Trump called Senator Cassidy a lunatic, and that was the senator that kept addressing Trump as brother. This feels more than just airing some policy debates.
Well, it's as you all know, it's Cassidy was not supported by Trump and going in to his primary, and indeed lost. The president's made a decision that what they're going to do is do everything possible in the midterms to stoke turnout. They made the judgment. I'm not defending the judgment. I'm just saying they made the judgment that having somebody other than Cassidy in the senatorial seat would, for the election, would drive more turnout. And they've done that in a number of places. Texas, of course, is another one. And so they're focused on that fundamentally. The Senate is a co-equal branch of government. Do I expect Senator Cassidy and other disaffected senators to like any of that? I don't. But, this is a big boy game, too.
Terry, what's going on with the housing bill? housing was supposed to be a national emergency for this administration. They need to deliver this before the midterm elections. It has bipartisan support in Congress, as Tyler mentioned, yet the president won't sign it.
Well, the housing bill, is bipartisan in Washington is a lot of things, and one way is to get bipartisanship is to make sure that very little gets done. That nobody thinks the housing bill is a panacea or a huge step forward, but it is something that's been hammered out over months. It's something that both parties wanted to do and to run on, and there's kind of two camps in Washington. One camp is, I want to run on a record, so as much as I have on the record of achievement as possible. The other is kind of aspirational, and that's the SAVE Act side of this, where Trump wants to hammer people, wants the SAVE Act. He's not going to get it, but of course that also allows him to stoke turnout and hammer the other side. So you've got people in Washington that want to run on achievement. They're being denied that. But on the substance, nobody thinks this is a great leap forward. I mean, the Wall Street Journal's been editorializing against it for months.
Terry, who do you think is facing the bigger internal fight heading into the midterm elections, the Republicans or the Democrats?
Well, I don't think I would say the Democrats, but the Democrats aren't really fighting. You've got a situation where the left progressive socialist side of the party, which is where the money and the energy has been for a few years, is basically sweeping centrists away. And that's going to be a big problem for them in the midterms, because it's going to make it a lot harder to go after the 40% or so of undecided voters, or people that don't really care about the ideology. They just want results. Well, the big reason why you end up in kind of this populist world that we're in now is because for the last generation, the establishments in both parties haven't really achieved very much, and people are really, really tired of it. I think the Republicans at the end of the day are going to be quite united, frankly, for a variety of reasons. I mean, they've got redistricting advantages. They've got money advantages. The war ending and oil prices going down, of course, helps them. I think they've largely equalized the turnout advantage. And on top of that, you've got kind of what I called yesterday, pin the tail on the donkey, literally, of who the crazy party is. And by November, what this is going to be about is who the crazy party is. It's probably not going to be the Republicans in a lot of purple states.
Terry Haynes, thank you, sir. Terry Haynes of Pangea Policy with the latest. For establishment Democrats, it's Operation Ostrich right now, pretending the New York primaries didn't happen. That's what's sad about the spat with the Republicans in the last 24 hours. This shouldn't have been the headline. Shouldn't have been the headline at all. The headline should have been what happened here in New York.
The truth is that both parties right now are facing a real fight for the heart of that party. And yes, President Trump has taken a lot of that for the Republicans. Underneath, though, a lot of disagreements.
What's hilarious is you have Senate Majority Leader Chuck Schumer saying the election showed a, quote, great unified party. I think it's quite the opposite.
Sure. Coming up on the programme, Angelo Zeno of CFRA as Micron breathes new life into the AI trade.
we are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel. And energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Snapping a three-day losing streak on the S&P 500, hopefully a little bit later this morning. Futures positive by 0.8% following some really strong numbers from Micron. We'll get to that in just a moment. On the Nasdaq, there's your outperformance. You know the why. On the Nasdaq this morning, futures up by 2.2%. Let's turn to the bond market. 2s, 10s and 30s. Nice rally across the curve in yesterday's session. Small bounce back up a single basis point on 10s to 440. Some curve flattening, some bull flattening into this market was a story last week, a story again in the last 24 hours. The flattest yield curve since spring of last year at the close as of yesterday.
Yeah, and this comes as you see a growing willingness, at least perceived, this perception of this in markets, of Fed officials to hike rates in the face of what we're seeing. I go back to what we were talking about yesterday. How much is the equity market and the bond market singing from the same hymnal, given the fact that right now the bond market's pricing in almost 2 full rate hikes for this year, while stock markets continue to move past it? How predicated on the idea that maybe the Fed is all talk and no action? How predicated is the stock market rally on that idea?
Sebastian Page at T. Rowe Price with us about 30 minutes ago. Super bullish, growth stocks in America, super bullish large caps. Said he sounded like Dan Ives, said that repeatedly, and at the same time he's worried about inflation and the prospect of an upset with regards to Fed rate hikes later this year. Can you hold those two thoughts at the same time going into the rest of this year?
If you take a look at flows over the past week, and Bank of America put out a great tracker citing EPFR data, it shows that people withdrew a significant amount from U.S. equities and put a lot of money into U.S. bonds. Right now, people are chasing the income that you can get from bonds when you see yields going up, particularly at the front end, and that is leading to a little bit of a diminishing of the risk appetite around the edges for the high-flying stocks. I mean, does this continue? Is this just a head fake? Does it really matter? We'll continue discussing that.
A break below 420 in the last 24 hours at the front end of the yield curve. Let's get to the move in crude. WTI and Brent wiping out the wartime rally. Just unreal to see WTI back in the 60s. 69 this morning. Brent crude, 72.
We're down some 40% where we had the peak highs when it came to the Iran conflict. And that is because every single day we continue to see good news of vessels actually being able to traverse the Strait of Hormuz. And things are looking like they are slowly getting back to normal. I don't want to be someone who puts just a ton of risk out there, but we have to remember we are in the middle of a 60-day ceasefire. We also need to take stock of where we're going to be the end of August. Does this just continue? Or potentially, if Trump's not getting what he wants, do we go back to some sort of kinetic fighting? At the moment, no one's thinking about post 60 days of
Nobody
the
wants to
ceasefire.
think about that.
So, and the fact of the matter is barrels are moving, and that's good news. Price is down.
Brent crude down by 1.3% this morning. As we count you down to the opening bell, 3 hours away from the cash open with your morning movers. Yahira has more. Hey, Yahira.
Hi, John. The stakes were high and Micron delivered. Shares are soaring 17.5% in the pre-market after it issued a blockbuster forecast and said that gross margins jumped to nearly 85% last quarter. Its CEO saying that there's still no line of sight to supply catching up with demand. He expects shortages to continue beyond 2027. Another name helping to lift the chip trade this morning is Qualcomm. Shares are soaring 11.5% in the pre-market after the company said that it sees $15 billion in annual AI data center sales by 2029. It's a dramatic shift for a company that made its name in supplying chips for smartphones. Now it's chasing the AI infrastructure boom, saying that Meta will use its new data center processors. And IBM out with some news just in the last few moments. Shares are rising 4.2% in the pre-market after it unveiled what it says is the world's tiniest AI chip technology, a new sub-1 nanometer design. It's still in the research stage, but the breakthrough could eventually lead to faster, more power-efficient, smaller chips once they become commercially available. John?
Yara, thank you. That stock has had a great run. We add to that this morning. On our radar this morning, our top story, Micron. Shares surging in pre-market trading. The chip maker's earnings crushing estimates, lifting the tech sector and reigniting the AI rally with demand for memory showing no signs of slowing. That stock is up by almost 18%. Elsewhere, Wall Street's biggest banks boosting dividends after passing the Fed's annual stress test, giving billions back to investors. All 32 banks tested showing they could withstand a hypothetical economic downturn. And finally, President Donald Trump going after big oil.
It's ExxonMobil, it's Chevron, it's Shell, it's BP, it's a lot of them. They're not reducing the prices commensurate with what's happening. We are doing a big investigation on it.
The president ordering the DOJ to investigate the company, saying gas prices should be $2.25, the national average right now holding just below $4 a barrel.
Look, we talked about this yesterday about how this harkens back to another era under a different president where there was a lot of job hunting of the oil majors. I will say it highlights the shifting alliances and allegiances right now with President Trump and a number of erstwhile allies, whether it's the oil majors who previously were in the White House talking about what's going on in Venezuela, talking about how much they were pumping in the incredible preeminence of U.S. oil markets. Also Trump and Bibi Netanyahu at the same time. Like, there are all these fissures at this moment where it's Operation Get to Midterms, and there are a couple of key components, in part, large part, getting oil prices down.
$4 a barrel, I should say $4 a gallon, before anyone gets too excited. But yeah, big spread between that and the $2.25 the president's after.
I don't think we've seen $2.25 since January of 2019. So we're going way back to where the president is trying to think where gas prices should be. The issue is, of course, is that what you are filling up right now in your car, if you were going out today and filling up your car, is oil that was purchased when the premium was much higher. It takes a little bit longer. There's going to be a supply chain lag. But the fact of the matter is, gasoline prices are still below $4 a gallon. I can't even name on my hands the amount of people who said to me, Trump is going to take out the Biden high of more than $5 a gallon because of the conflict. And we've never got there.
Financial literacy to get in the way of a good political argument down in Washington, D.C.
Sorry, I forgot about that.
Regardless of what party they're in.
We've seen repeatedly,
right.
And it clearly is in bold relief heading into the midterms.
Let's get to that stock story. Micron this morning, shares surging in the pre-market. The company's record earnings, signalling there's more AI growth ahead. Angelo Zeno of CFRA raising his price target on the stock to $1,500, writing the breadth of margin expansion showcases that favourable pricing dynamics extend beyond AI-specific applications. Angelo joins us now for more. Angelo, welcome to the programme. The number of the morning, and we've talked about it repeatedly already, is 85. 85% margins. Angelo, the question we've got to ask with regards to that is why this stock is still trading at a discount to other names in its industry group.
Yeah, and John, I think the answer to that is nobody believes it in terms of the margin trajectory, and we don't believe it either. I mean, I don't think you can sustain an 85% gross margin for the memory industry for, an X period amount of time or several years out. I do think they can sustain that for the next couple of quarters. I think more importantly, though, is when you kind of look at this company, it has completely changed. I mean, it has been transformative in nature when you look at some of the long-term customer agreements that they've just signed, about 16 of them, the improvement in terms of revenue visibility from that, as well as the free cash flow trajectory. We're looking at north of $200 billion in free cash flow over the next 3 years, and what they're now going to be able to use that free cash flow for, and that's going to be buybacks. And then when you kind of look at the balance sheet of this company, I mean, it's completely changed relative to what we've seen in the past. So even though, at some point that margin trajectory is going to let up, at this point in time, the way we're looking at it is even when you get that rollover, the trough margins are still going to be well above the peak margins that we've seen in prior cycles.
Angela, does it make sense to you that all of the semiconductor stocks are trading in tandem, that because we saw good results out of Micron, SK Hynix rallied by more than 10%?
So the memory, the memory bucket, yes. I mean, that makes sense to us. I mean, clearly what benefits Micron is also going to benefit SK and Samsung. So to that degree, I think it makes sense. You're going to see similar type of results, I think, from those two. When you start thinking about things maybe from a broader perspective, I do understand the fact that, hey, listen, it is a positive, I think, for the broader semiconductor industry, because if you've got bottlenecks, you've got kind of that. I think the implied view is, hey, listen, at this point in time now goes into 2028, or at least Micron is kind of giving you the thumbs up that that's going to take place. That does, bode well for the overall broader semi trade.
I guess what I'm getting at is it normal for stocks to go up or down by 20% every single day when people have a different sentiment or a different potential rumor coming out? And the inability to really price a name that has been on an absolute moonshot, that has basically tripled in value and then some over the past 12 months. Yeah. And it just goes to the lack of understanding of this exponential type of growth and how you price it.
Yeah, no, I think you make a fair point. And listen, I think, when people saw the NVIDIA situation over the last 3 years or so, I think people thought that was kind of a one-hit thing and we'd never see it again. And then you kind of look at what Micron's doing here, and it's even more pronounced than what we saw out of NVIDIA, which is just absolutely astonishing. But when you kind of think about just the wild moves that we've seen, I think it's one of those situations where nobody wants to be. No one wants to get caught holding this thing at the peak of a cycle. And because of that, you've got extreme volatility. I think what you're also kind of trying to figure out, or what the street's trying to figure out, is, again, what mid-cycles look like, what does normalized earnings trajectory look like? And because of that, there's just extreme volatility that you're going to see across the entire semiconductor industry, and even more pronounced on the memory side. So I think that's a lot of what's going on at this point in time. So do these wild swings make sense? Not necessarily, but given the uncertainty that's out there, we understand why that's happening.
Angela, could we get your reaction to their mega margin? Is this the peak of their gross margins?
I don't think it goes much higher than this in terms of gross margins. I do think you kind of level out here in the mid-80s. Again, I think there's some sort of limitation in terms of how far you can go in margins. Maybe there's some surprise quarter here over the next couple of quarters where it goes a little bit higher than that. But, as you kind of, again, you look towards maybe a longer-term trajectory, I'd say, now, potentially mid-70s look like something that's more realistic in nature, where, again, that's something that I didn't even think would have been possible here 2-3 years ago. So, again, you're looking at potentially peak margins. But when you look at that free cash flow potential, you look at the amount of stock this company can buy back given that free cash flow, and if the stock doesn't go higher, you're potentially looking at them, reducing their share count, let's call it at least 15 to 20% here over the next 2 to 3 years. Again, that provides some sort of gravitational pull to the upside here. So I don't think you necessarily need to see margins go higher. I actually think you can see margins actually level off and pull back from these levels to see the stock to continue to work.
Do you have an update on the mega fabs that are coming to market? I mean, it's a very local New York story. When can we see that actually start impacting the company?
Yeah, I mean, you're seeing them definitely pour more into the construction side of things here over the next couple of quarters. You're not going to see anything, I'd say, extremely pronounced probably until 2028, late 27 into 2028. So it's going to take time for a lot of these investments to really start showing up in terms of the additional capacity that's out there. And again, another issue and reason why we continue to see this memory bottleneck that's out there. Not to mention, when you kind of think about the complexity of this capacity coming online and what it takes to actually build high bandwidth memory, it soaks up and absorbs so much of that wafer capacity out there that again, we could end up being in this kind of tight environment here well past 2028 in many respects.
Angelo, it's got to catch up. Angelo Zena there of CFRA. Micron up by 18%. Bramo asking about the Kospi. You can have a good fundamental story. You build up leverage around it, contributes to volatility. Check out the Kospi. That's the story in South Korea right now. The domestic investors, not just the international ones. The Kospi this week is still down by about 1%. It's almost flat on the week now. Dropped by 10% on Tuesday. We saw a massive move on Wednesday, up by 3%, up again by 5% again this morning. We've seen wild swings all week.
And there are different kinds of dynamics there in terms of the retail investor, as you've mentioned, that are levered up and have been investing or pulling back, and that creates an even bigger swing every single day. But you just start to wonder, how do you price a story like Micron when it's also Western Digital, it's SanDisk, it's SK Hynix, it's Samsung? Everything is kind of wildly swinging in one direction or another, and all it takes is a discussion of where you're accelerating production at one company that has specific factors. That might have been to compete with China. This might be Micron's 5-year agreements with some of its clients. I mean, how much is bespoke? How much is sort of, do they have a moat around this? And how much is commoditized? There just aren't that many companies that actually do it.
The stock this morning up by close to 18%. Let's get you an update on stories worldwide this morning with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. In the UK, advisors to Andy Burnham are encouraging the would-be Prime Minister to consider reforming the BOE and breaking up the Treasury. Burnham hasn't laid out his vision for the British economy, but a business lobby group is warning against tax increases. NATO Secretary-General Mark Rutte meeting President Trump in the Oval Office, seeking to ease Trump's frustration over allies' reluctance to support the Iran war.
This president is really doing a huge amount of work to get NATO in better shape. He had a big success last year in The Hague with the 5% spending commitment.
Trump reiterating his disappointment with European allies for not allowing the US use their bases during the Iran war. Shares of IBM jumping in pre-market trading after the company unveiled the world's first sub-1 nanometer chip technology. IBM calling the achievement a, quote, landmark moment in computing, pushing technology beyond the nanometer era to the scale of atoms. And that is your Bloomberg Brief. John.
Vonnie, thank you. Appreciate it. More from Vonnie in the next hour. Up next on the programme, facing down the inflation squeeze.
Right now, the problem is inflation. This is an American per people that is going to have to contend with ongoing inflationary pressures in core services all the way to food.
Inflation data out a little bit later this morning, 8:30 Eastern Time. Up next, Nita Richardson of ADP.
Wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in Season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is, like, very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation.
Watch season 2 on all these lovely channels.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
More data this morning, 8:30 Eastern Time. Check it out. PCE, the next read on inflation. Going into a contentious few months building for this Federal Reserve. We'll get jobless claims as well. Look out for that. Apparently the labour market right now, not a problem for this Fed, so we'll move on pretty quickly. Let's see. Equity futures right now in the S&P 500 just about firmer by 0.75%. On the Nasdaq, some massive outperformance, up by 2.2%. Heading into that inflation data, check out yields, 2s, 10s and 30s. 2s this morning, a break of 420 yesterday. We're down to 415 so far today. Under surveillance this morning, facing down the inflation squeeze.
Right now, the problem is inflation. This is an American per people that is going to have to contend with ongoing inflationary pressures in core services all the way to food. There is a lot of breadth under inflation, and who's bearing the challenges of that? Well, it's low and middle income Americans.
So here's the latest this morning. PCE data due out in just under 2 hours' time. Rising costs continuing to outpace wage growth. Nita Richardson of ADP writing inflation continues to weigh so heavily on sentiment. Years of higher prices, even alongside rising wages, have shifted how households experience this economy. Nita joins us now for more. Nita, welcome back to the show. The energy problem, it feels like it's going away, but is the inflation issue here to stay?
Well, it has been part of 5 years of our recent history, and I think that's what's hitting Main Street quite hard. You know, the Wall Street stock market, they can look at today's numbers and project forward, but what consumers are doing is they're looking back to what they could afford a year ago, 2 years ago, maybe even 10 years ago when it comes to housing, and they see that they're not keeping up. The BLS reported that real wages are declining in May, year over year, and from April to May. So the accumulation of these higher prices are really what consumers are trying to absorb. And Jonathan, I'll have to note that the savings rate right now is the lowest it's been since 2008, when people were losing houses in mass and most were underwater. And yet, you know, with a booming stock market, we're at the same level of savings rate. And I think that number in itself shows the pressure that households are under right now.
John was mentioning, Neela, how one thing that people have pointed to is that you're seeing increasing momentum in the U.S. labor market, and wages are starting to pick up at a level where suddenly people might be able to offset the increase in prices. How much is that continuing? How much do you see that as being sort of the ballast behind the inflation story?
Well, at ADP, we're a payroll company, so we see that wages have been steady. They've been holding for job stayers at around 4.5%. That's fantastic in terms of the level. But Lisa, again, it's about the accumulation. The job increases that most people experience are not enough to combat 5 years of rising prices at the clip that we've seen them rise over the last 5 years. And prices are always rising. We always know that. Wages generally keep up, but absorbing them is becoming harder and harder. And I think that's what's the disconnect here. Yes, wage growth is pretty robust, and the labor market is fairly stable. In fact, it's probably one of the most stable labor markets in U.S. history. I'll even go out on the limb and say that. And yet, it's the inflation picture, that backdrop, is still eroding the confidence that you see in workers because they can't keep up.
Neela, if that's the case, are you saying that it's not possible for this level of inflation to be sustainable, and that ultimately, especially with savings running dry, people are going to start to push back a little bit more? You're going to see more demand destruction?
Yes, and I think that's already occurring. Look, Lisa, one of the ways that people actually increase their wages to keep up with inflation is by changing jobs. But if the labor market is it's steady, but in some ways very stagnant, you're not seeing a lot of hiring, you're not seeing a lot of turnover, that means there's less opportunity to actually get that pay bump by changing a job. So what do you do next? Well, that goes back to your budget. What can you afford? What can you cut? Maybe it's that vacation. But it is a change in how people are experiencing the economy, even if their wages are going up. And that's the important part. They may have a job, they may see wage increases. It's still not enough if the overall economy is becoming more and more expensive.
Neela, with a little bit of heat taking off of gasoline prices, do consumers save that, or are they just going out and spending that elsewhere?
Maybe some can save that. Maybe some can save what the gas price is filling up the tank. But my suspicion is those funds will be diverted to where else we're seeing higher inflation. I'm a little disheartened by higher rental costs, for example. That was supposed to be going down over the last year. We're seeing a pickup in those fees. So there's plenty of places to put that gas savings, and we're not sure that energy prices are out of the woods yet. So there's a little bit of uncertainty of how long lower gas prices will last.
Anita, do you think the Fed has a role to play here?
Yeah, they always have a role to play when it comes to inflation. That role is to maintain price stability, as everyone at the Fed is very laser focused on. But the question, the transmission mechanism, Jonathan, is generally through the housing market. And that's where the Fed doesn't have the strength of the toolkit that they used to, because there's not a lot of inventory. There's not a lot of home buying. The average age of a new home buyer back when I was a housing economist was in their early 30s. Now that I'm focused on the labor market, it's early 40s. And so people are not experiencing that low interest rate or housing environment or wealth accumulation for another decade than they used to. And I think that has an effect on Fed policy and its transmission in the Main Street.
Nita, it's good to see you. Really thoughtful stuff, as always. Nita Richardson there of ADP, heading into PCE data later this morning at 8:30 against the backdrop of a debate around the Federal Reserve potentially hiking later this year.
Yeah, and you ask a good question, which is essentially what is the mechanism that a Fed rate hike will have in bringing down inflation in areas that might be somewhat independent of those rates? How many people do we talk to that say that these companies are going to keep spending on all of the different AI-related capex, regardless of whether interest rates are 25 or 50 basis points higher?
As we know, housing is supply constrained, but supply constrained for many reasons, including the lock-in that some people have, the golden handcuffs of a 2-3% mortgage.
Yeah, I don't understand. Yeah.
And the lack of building in certain markets too.
Yeah, no, and look, this is true. And some people did get in with low interest rates, and those people are not moving, and the rest of the world is suffering the consequences.
What can the Fed do about that? That's the issue I've got with all this.
I mean, they could raise rates significantly, torpedo growth of prospects, lower long-end interest rates, and
sink the long end.
Boom.
Getting some of that flattening at the moment.
Not quite that extreme.
Just a little bit. Equity futures right now up by 0.75%. Up next, we'll catch up with the bullish Osun Kwan of Wells Fargo, alongside Brian Gardner of Stifel, Heath Terry of Citi, Megan Swiber of Bank of America.
Every weekday, Bloomberg puts a spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise ahead or Gattaca?
Maybe somewhere in the middle.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
What we all know is that earnings estimates continue to rip higher.
2026 earnings are going to be okay.
The chip names have done a great deal of the heavy lifting.
If we see a broadening, that would be a healthy sign in this market.
We think there's probably more weakness coming through the summer months.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your scores, the price action looks like this. Equity futures on the S&P on track to snap a three-day losing streak. On the S&P 500 up by 0.8%, on the Nasdaq 100 up by 2.3. Thank you, Micron. In the pre-market, thank you, 85% margins and absolutely crushing estimates. That stock is up by 18% in the pre-market. Heading into this, the rate debate. The tech trade is fine based on this so far this morning. Later this morning, 8:30 Eastern Time, PCE setting up the rate debate at the Federal Reserve.
How much is inflation coming from other inputs other than oil? How much is this independent of what the Fed can do? How much is this dependent on the AI trade? And how much does this depend on people being able to buy Hermes and Ferragamo ties? At a certain point, you look at all of this and you start wondering how much we are looking at an overheated economy that the Fed can do something about, and will they be willing to, given that they have a lot of task forces discussing all of these things?
The U.S. consumer, according to Paul Donovan, and maybe that's individuals that have been on this show or anchor this show, have shown an impressive determination to keep shopping throughout the tariff and oil price shocks. And we have actually seen individuals just look through the tariff price shock. And now the oil issue is becoming so much easier. We are erasing the highs we had before the start of this conflict.
This is Paul Smith on the sale.
Oh, yeah?
Just for the record.
Is it tailored?
No, this is not.
Oh, wow.
No.
I think it's going to. This is a Thursday tie. I'm not saying anything.
Why are you going after me this morning?
I'm not going after anyone. I was just saying that, you look at the high-end goods, they tend to be increasing at a faster pace, and that's boosting inflation.
You got to get on wait lists these days to get some of these high-end goods.
Don't throw stones if you're sitting there in Belmont, all right? Equity futures right now in the S&P up by 0.8%. Coming up this hour, Sun Kwon of Wells Fargo, after boosting his outlook for stocks. Heath Terry of Citi, as Micron's blowout earnings ease AI concerns, and Megan Swiver of Bank of America, her team calling for 3 rate hikes later this year. We begin this out with stocks rebounding after Micron's results reignited enthusiasm for this tech trade. Sun Kwon of Wells Fargo raising his year-end price target for the S&P from 7,300 to 7,950, writing sentiment has reset, providing room for upside in the AI trade. We continue to prefer CapEx takers over spenders. Oh-Sung joins us now for more. Oh-Sung, good morning. My word's not yours, but is that Micron over Meta, Micron over Microsoft?
Yeah, no, it's semis over hyperscalers, basically. So CapEx takers over CapEx spenders. We have this funny chart that shows the relative performance of CapEx growers. So if you were to go long top 50 stocks in the S&P by CapEx growth and rebalance each month, you would have just underperformed almost every month. Meaning the market hates, stocks that are in an investment cycle, which are basically hyperscalers today. So I think the easy trade still is to own AI infra, semis, and some of the construction companies and power, things like that, over hyperscalers.
When does the overspend inform the spending? When is the pushback by investors? You say investors hate it, but the stocks, the companies keep doing it. Yeah. When does it stop them? When do they look at this and say, you know what, it's time to pull back?
I think it's way too early for that. I mean, we have seen this movie before, right? During Q4 last year, the market started pushing back on hyperscalers' CapEx. They didn't care. The market is pushing back now. They don't care. They're actually raising equity. I think it's way too early for that. I think as long as demand, token demand and compute demand overall outpace the supply, which is the case right now, I think they're going to continue to invest.
One of our listeners put this Micron CEO quote at me from the conference call that I thought was pretty amazing. Our customers are recognizing that supply shortages in memory and storage will take considerable time to improve. We currently do not have a line of sight as to when memory supply will be able to catch up with increasing demand. The idea of what some of these companies are able to charge is mind-blowing. How do you even begin to price in what the valuation of a company like that is, given the fact that maybe over the next 5 years they could have 85% margins, but in 10 years there'll be another Micron and another one that will be flooding the zone with supply?
Yeah, I mean, it's going to be very difficult to value these companies. The thing is, if you look at multiples, they're not expensive. They're actually cheaper than where it was about a year ago. So it's really driven by profits, and these profits, as you saw last night, it's still very, very strong. I mean, that's really why we're bullish on equities overall and why we upgraded our S&P target. It's really because of profits. So we were basically neutral about 2 to 3 weeks before we turned bullish again last week. And the reason why we were neutral was because sentiment was euphoric and there was inflation concern. Sentiment has now reset. Our sentiment indicator is actually firmly neutral. Inflation risk, oil is down to 60s. So I think inflation concern is going to subside as well. That's why we turn bullish.
I want to pick up on that. Is oil prices declining enough to offset the inflation that we're seeing, say, in memory chips or other components related to the AI build-out and other people who are earning maybe some of the payouts to go from Google, say, to Anthropic, and then they can pay for whatever they want?
Yeah, I mean, for the overall economy, memory prices and some of the inflationary pressure that we're seeing from the buildup isn't that much. It's really the consumer and what they see when they fill up their gas tank or when they go grocery shopping. And with oil down to $60, 60s, I think the inflationary pressure is going to subside over the next 2 months, and that's going to alleviate some of the concerns for the macro cycle.
But you don't think they save it? They actually go out and spend it, the consumer?
Yeah, I mean, the savings rate is pretty low, and they're going to continue to spend on the economy. And we highlighted 2 tailwinds that not many people or actually nobody's talking about for the second half of the year. One of which is the tariff refund. So we were skeptical too that the refunds were actually going to go out, but over the past month, there was $25 billion of checks being issued to the importers. And total collected under IEEPA was $165 billion, which is about 50 basis points of GDP. So if that actually goes out to companies, and during the Q1 earnings season, about 40 companies talked about tariff refund, and 8 companies actually recognize it as earnings. So I think as we move into the second quarter earnings season, I think more companies are going to be talking about it, and I think that's going to boost EPS even more.
What's the other tailwind that no one's talking about?
It's Trump accounts. So starting in July, Trump accounts will be open, and people can fund their kids' Trump accounts, and the government is going to subsidize about $1,000 for each kid born from 2025. And we estimate about $20 billion of equity inflows just from Trump accounts. And that $20 billion is going to be price-insensitive flows that happen mostly in July and August, concentrated in U.S. equities, really large caps. So it's going to benefit tech over others, but it's going to be a pretty sizable tailwind for the overall market.
So they're the tailwinds. Let's talk about some pushback. So this came from JP Morgan, who also raised their price target on the S&P 500, but acknowledged the following. We've reset the bar higher, heading into earnings season again, making it more difficult for companies to significantly surprise to the upside. The takeaway seems to be that things are so good, they can't get better. Where do you stand on that?
I mean, I think the bar has been risen, but historically, when we actually see EPS getting revised up into earnings, companies actually tend to beat. So the earnings momentum, it typically continues, and I think Q2 earnings season, I think companies are going to beat even the higher bar. And I think that's going to continue to push the market higher.
Do you think that broadens out beyond the obvious places?
I think so. Yeah, I do think the market's going to broaden out a little bit. We still prefer semis and AI infra over others. So we were actually more in the camp that things are going to broaden out more meaningfully before the Fed. And the Fed sounded a little more hawkish than what we had initially expected. And I think that is a headwind to the broadening trade, not necessarily to the index, but more for broadening. So I do think it's a headwind, but cyclicals have some catch up to do. So I think the market is going to broaden out a little bit, but not as much as what we had expected before.
Sounds like this is another example of the bond market thinking that rate hikes are in the coffer and equity analysts saying, no way, no how, you guys are just wrong. Is that correct?
The way we interpret the bond market into the equity market is, I think it matters more for the breadth of the market rather than the index level. As long as they're not necessarily hiking this year, I think the market is actually going to do well. Our house view is that they're actually going to be on hold. So if that actually plays out, then I think the market's going to be okay. And even the hiking cycle is not that bad. I mean, I think, I forget the exact stat, but during the tech bubble, I think it took, like 150 basis points of hike before the tech bubble actually popped. So, it lasted through the hiking cycle during the tech bubble. And, I think one or two hikes is going to be okay.
This is just fascinating to me, John. We heard this yesterday from Daryl Kroc, I know from the same company. So there's definitely this house call about no hikes. But still, I find this really interesting. It's sort of usually you think of the bond market as the smart money and the stock market as the dumb money. In this case, it's the stock market saying you guys are fooling yourselves if you don't see what's happening with oil, if you don't see what's happening in some of these other disinflationary inputs. And frankly, what's happening politically, this isn't a Fed that's going to hike.
I think we are having that debate in fixed income, though. Of the rate strategists that are coming on, there is a debate right now about whether this switch up at the Fed is a change in style or a change in substance. Is it a change in policy or how we communicate policy? And we'll spend the next few months trying to figure this out.
If you believe that it's a change in style and not substance, and you think that actually what they're going to end up doing is, well, if you think that they're going to end up keeping things on hold, then you buy the front end of the yield curve. And we've seen a little bit of that over the past couple of days because people are saying, hold on a second, maybe this has gone too far.
Son, good to see you.
Good to see you.
79.50 on the S&P 500 year-end. New price target over at Wells Fargo. Osun Kwan. Equity futures are right now positive by 0.7% on the S&P. Massive outperformance on the Nasdaq, up by more than 2% so far this morning. Let's give an update on stories worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. President Donald Trump kicking off the United States' 250th birthday celebration with a rally-style speech on the National Mall. The speech is the first of many events in the administration's Freedom 250 programming that will stretch over 16 days. Anthropic accusing Alibaba of trying to illicitly access its AI models. Sources telling us here at Bloomberg, Alibaba used nearly 25,000 fake accounts and nearly 30 million message exchanges with its chatbot Claude, targeting its most prized capabilities. Qualcomm shares rising in the pre-market. The company forecasting sales of more than $15 billion a year by fiscal 2029, thanks to the booming market for AI components and data centers. And tune into BTech at 11 a.m. for Ed Ludlow's interview with Qualcomm CEO Cristiano Amon. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you for the update. Up next on the programme, the President calling out big oil.
ExxonMobil, it's Chevron, it's Shell, it's BP. They're not reducing the prices. We are doing a big investigation on it.
Who does that sound like? Up next on the programme, Brian Gardner of Stifel, live from New York City this morning. Good morning.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Micron higher by 18%, around those levels throughout much of this morning, up 18.5 right now. That's lending itself to this move right here. Across the board, equities higher on the S&P, on the Nasdaq. On the Nasdaq, up by 2.2%. In the bond market, things stabilise going into PCE a little bit later. Yields on the front end of the curve, twos around 4.15, contributing to that move, this move in crude. Crude, check it out. It's just crazy to see this down in the 60s. WTI at 69, Brent crude at 72.
So you have two things going on. More barrels moving to the Strait of Hormuz. Secretary Wright yesterday actually talked about 72 ships, 20 million barrels transited through the Strait. Also, did you see this? Iraq are reporting potentially maybe going to leave OPEC because they want to hit higher quotas. This is the UAE effect, and you can start to see more countries saying, look, the UAE left. They're getting as much product out as they want. Why do we need to be beholden to the kingdom? We're going to go too.
There's an old saying in financial markets that if you want to make a fool out of someone, ask them for a forecast of crude, right? That's been the story the last 3 months.
People underestimated how much supply-demand dynamics would adjust, how much demand would come out of the market coming from places like China. And right now, the market's getting flooded with barrels. Some of the anecdotal stories of the calls inbound about, hey, you want to buy my oil, gives you a sense of how the demand dynamics haven't changed as quickly as the supply dynamics seem to be adjusting.
It's such a strange first half of the year. The first quarter felt like a lifetime. Second quarter, gone.
Absolutely. And you look at what the main driving narrative has been. I mean, we've been through tariffs, we've been through rebates, we've been through this question of the Strait of Hormuz, we've been through AI, we've been through the bus, we've been through Venezuela.
With the capturing of Nicolas Maduro,
I mean,
who's sitting in a jail just a few miles south of us.
Wild.
At the halfway point of the year, I think half of Wall Street ready to retire. Let's talk about energy. Under surveillance this morning, the president calling out big oil.
We are not seeing anything at the pump by comparison to what it should be. We should be, in my opinion, at $2.25. ExxonMobil, it's Chevron, it's Shell, it's BP. They're not reducing the prices commensurate with what's happening. We are doing a big investigation on it.
So here's the latest this morning. The president ordering the DOJ to look into oil companies, saying gas prices should be $2.25, the national average holding just below $4. Bloomberg's Tyler Kendall has the latest from Washington. Hey, Tyler.
Hey, John, good morning. Well, this is really underscoring the mounting frustration from President Trump about how higher costs are becoming a political liability as we head into the midterms, now alleging anti-competitive behavior. Though the industry has pointed out that gasoline prices don't adjust immediately to changes in crude because the effect has to move through the supply chain and it can take weeks to get from pipelines to processing to distribution. Plus, local gas station operators see their margins shrink when there are quick climbs in the wholesale costs, which typically means that they are more inclined to lower their prices gradually when they're setting those final prices at the pump. Now, we did get a response from the industry, according to the American Petroleum Institute, which represents many of these companies. They said in part in a statement, quote, "Our industry shares the goal of delivering relief at the pump and restoring stability to global energy markets." Now, President Trump isn't alone in his criticism. This is very reminiscent of the bid by the Biden administration to investigate these big oil companies amid the price spikes related to the conflict in Ukraine. But, John, this feels very notable considering that the Trump administration is considered to be very aligned with the oil industry when it comes to collaborating on the president's push for more domestic drilling and his domestic energy agenda. Bloomberg News did report in April that the U.S. Energy Secretary and Interior Secretary called up these executives directly and asked them to try to boost supplies in a bid to bring down costs.
Tyler Kendall with the latest. Tyler, thank you. Brian Gardner of Stifel writing the following. After the midterms, the president will have less incentive to not blow things up. The chances for political volatility and chaos are rising. Brian, we called out the financial illiteracy of the left, of the senator of Massachusetts, of the Biden White House when they said these kind of things. Why are we seeing it from the Republican White House now as well going into the midterms?
This is what you get in a populist era of politics that we're in, Jonathan. It's playing to the public in ways that you don't see in normal times. So, we're going into this midterm election, and the president does feel the pressure on prices, on affordability, and he's trying to push on whatever levers. Now, I think we got to take a step back because there have been similar threats throughout. Right? We go back to January. You're just talking about how the first quarter, seemed like a long time ago. Well, in the first quarter, he was threatening caps on interest rates of credit card companies and banks. And so that never came to pass. So I think we need to take some of this, the threats against the oil companies with a large grain of salt. But he does feel emboldened to go out and going into his last 2 years, he's not going to be restrained by normal political factors. So I think we're going to see more actions by the White House where he wants to impose a legacy. So there's going to be chaos and volatility in the future.
Brian, I was traveling with the president a few weeks ago, and I asked him if he felt like it's odd to be on the same side of some policies like Senator Bernie Sanders. And he said, actually, on economics, sometimes they do align. Are you saying we're going to see more of that after the midterms?
I think the chances are high that, yes, we will. Don't forget, let's go back. I'll give you another example. After the November elections, with the election of the new mayor in New York, the two of them met and had a fairly cordial conversation. As somebody observed, game sees game. So the president and Mayor Mandami see in each other that populist tendency, those populist qualities, how they play to the public at large, and an angry public. What does the public want? They know how to play on that to advance their political agendas.
Yeah, I think yesterday he called Mayor Mamdani handsome or good-looking dude that's charismatic. At the same time, he's having a massive fight with his own party when he went to the GOP steering lunch. Are we going to see more of this kind of Real Housewives of D.C. kind of blow-up meetings going into the midterm election?
I think, yes. I mean, it's kind of head-scratching to the political class and to Republican strategists because it does wind up inflicting self-imposed wounds, self-inflicted wounds. It does not help Republicans going into the midterms. Voters are going to be voting on as a referendum on the president and the president's party. And what this does is it makes them look ineffective, confused, chaotic. And voters don't want that. I think there's been a clear message throughout the last couple of cycles. voters are discontent, they're unhappy, but they also want stability. That's why they went with Biden in 2020. That's why they went with Trump in 2024, because they didn't think that Biden fulfilled that. And Trump was going to be somewhat more normal and controlled, but then compared to Biden, and what are we getting? We're not getting that. And the voters are not getting that. And so I think all of this is just against the president's political interests and his party's political interests.
Right, and maybe voters want that at large, but with the primary system, what you get at a lot of the different, whether it's Democrat or whether it's Republican, the more extreme candidates, I just wonder how much we can expect an acceleration of that in the midterm elections, given what we've seen in the New York elections recently, and more broadly, just sort of this populist wave that's gaining traction.
It's not just a populist wave, but it's an era where the voting electorate of the two parties are big chunks of them are sitting out. So we talk about populism, we talk about the extreme candidates that are being nominated in the primary system. Well, 75 to 80% of each party sits out at primary. So people will bemoan the lack of moderation, of centrism. Well, if you want centrism, you got to go out and vote, and in order to beat the wings. The two wings are dominating the primary processes, and the center is sitting it out. So that's why we're in the position that we're in.
What do you think that means for policy? I mean, what should people on Wall Street be watching in terms of policy shifts? Is it AI restriction? Is it, when it comes to the housing market, this one aspect of it right now in limbo, but still the institutional investors won't have the ability to play in this market as much? I mean, how much is this going to actually make its way into policy?
I think there are limits on how much it makes its way into policy. I mean, you know, I ticked off a couple of examples of some Trump proposals from early in the year that did not happen. The rhetoric around antitrust was quite heightened after the 2024 election. We thought we were going to get kind of an extension of the Biden antitrust policy. That didn't happen. I think Washington is kind of in a position where everybody kind of sings the same song, but not maybe from the same hymnal. They're singing a tune, but not the same words. So there's going to be talk about AI restrictions. There's going to be talk about affordability, as there has been, but getting to an agreement on how to address that, there's a big gap between the two parties, despite the fact that the president and Bernie Sanders and Elizabeth Warren will agree with each other from time to time. Getting them in a room and actually hammering out a deal is much more difficult. So I think the market kind of sees that. They see the lack of progress and productivity coming out of Washington, and just chalk this all up to political rhetoric and political grandstanding. And that's why I don't think we've seen a follow-through from the political rhetoric into the market so far.
Brian, it's good to see you. It's always great to catch up. Brian Gardner there of Stifel. In many ways, this set the tone for the start of the year. Do you remember capping interest rates on credit cards? You've brought up housing, restricting investing in housing. That set the tone, really, at the start of the year.
Yeah, what's actually gotten through, though? And I think this is important, right? How much is this jawboning, whether it's calling out Exxon? Well, he's no friends of Darren Woods, right? We've seen that time and time again. Chevron, et cetera. Is this sort of jawboning to try to say, look, I'm doing something. Check this out. I'm doing something on affordability, rather than an actual policy prescription?
Do you remember in early January, there was a phone call between President Trump and Elizabeth Warren, and it was about capping credit card interest rates?
Yeah.
Stunning.
That set the tone for the year. But to your point, not much got done.
I love the idea of humming along to the same hymnal, but having different words. It sounds like my family trying to sing along to a song.
What is the latest, Casabramo? What's the latest fight? I haven't shared one of them for a while.
It's been a lot of joy recently. It's
Oh, okay,
end of
beautiful.
year.
Come
People
by
are
out.
ready for the summer.
Everyone's bullish.
Going out late, so I don't see them.
Terrifying.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
3-day losing streak on the S&P 500, about to snap that later on this morning, with equities pushing higher on the S&P by 0.6, on the Nasdaq 100 by 2 full percentage points off the back of some stunning numbers from Micron. We'll spend some time on that in just a moment. 2s, 10s and 30s in the bond market going into PCE data later on this morning look like this. 415 on 2s, 10s around 440, a drop back from 450. Nice rally just yesterday. We get a little bit later this morning. Just bear in mind, once you've got CPI and PPI, Wall Street has a pretty good idea of what PCE will look like.
And if the Wall Street estimates are correct, we're going to get 4.1% year-over-year core PCE acceleration, which would be the highest or the fastest pace going back to April of 2023. That's the bad news. The good news is some people will argue that is going to decelerate from here because of oil prices going down. Is it? That is the big debate right now on Wall Street.
We are committed to 2%. Inflation is a choice. All the kind of things you're hearing from the new Federal Reserve Chair, Kevin Warsh. Does that mean they need to hike to get from 4 down to 2?
I have to ask the task force, because right now the task force is examining whether that is the correct metric to use and whether that actually overweights some of the components coming from AI that could potentially not be as sticky and, frankly, be less relevant to what the Fed policy rate is.
But also, the Fed might be in a position to punt this a little bit. We just had a resolution in terms of a 60-day ceasefire and oil prices coming down. What's going to be baked into this PCE is obviously when oil prices, gasoline prices, diesel, et cetera, were much higher. Where are we going to be at the end of the summer?
We're getting a helping hand right now, at least from energy. Check it out. Brent and WTI declining once again. Brent this morning, 73, down about 1%, just off the lows of the session. WTI in the 60s, at 69.80, and down by 0.8% so far this morning.
The barrels are moving, and demand structurally may be permanently diminished. I keep thinking about what Dan Striven said yesterday of Goldman Sachs, that the level of shift that you saw over in China to electric vehicles, even in Europe, has been stunning and rapid, and that the increase in oil consumption just isn't there in the same kind of way as a result of the structural demand destruction that you've seen.
Without the shift in China, the stockpiling too, that China went through over the last year, so they could pull back on imports, pull back on refining as well. Without that, they have a different story. They really helped out.
Oh, absolutely. China came to the rescue of the global economy, almost came to the rescue of this administration. They buy the lion's share of Iranian crude. Maybe the administration was willing to forgo any issues in the past they've had with China. I imagine this came up at their conversation in Beijing, because without China doing this, you would have seen prices much higher.
A full round trip on crude, a volatile one, an exhausting one in many ways for everyone. 2 hours away from the cash open. Let's get you some morning movers, some single names. Yahara has more. Hey, Yahara.
Hi, John. The bar was high and Micron more than cleared it. Shares are rising 17.5% in the pre-market after it issued a blockbuster forecast saying that margins jumped nearly 85% last quarter. Its CEO saying that there's still no line of sight to supply catching up with demand, and he sees shortages remaining beyond 2027. Also helping to lift the chip trade this morning is Qualcomm. Shares are rising 0.2% after saying it expects nearly $15 billion in AI data center revenue by 2029. It's a dramatic shift for a company that made its name supplying chips to smartphones. Now it's chasing the AI infrastructure boom. And we end on Alibaba, those ADRs falling nearly 3% in the pre-market after Anthropic accused the Chinese tech giant of illicitly accessing its Claude AI model despite its best efforts to try and keep that out of China, showing how far, if the allegations are true, showing how far companies are willing to go to access those leading models. John?
Yahara, thank you. Thank you for the update. On our radar this morning, our top story, then Micron shares surging in the pre-market. The chip maker delivering blowout earnings with a gross margin of 85%. Micron's results easing concerns around AI-fueled growth. Elsewhere, as Yahara suggested, Anthropic accusing Alibaba of launching a large-scale effort to, quote, illicitly access Claude with the use of nearly 25,000 fraudulent accounts. Anthropic seeking additional government support to counter unfair practices by Chinese rivals. And finally, Google, expecting to lose 2 of its AI researchers to rival Anthropic. Sources telling us here at Bloomberg the staffers are key contributors to Google's Gemini. Their exits are the latest in a series of high-profile departures.
So I did spend some time trying to find out how much Jonas Adler and Alexander Pritzel were being paid to leave Google and go to Anthropic, which is, of course, the operator of Claude. Couldn't find it. I'm guessing quite a bit. Right
it's
now,
like
the
baseball contract money.
Probably
Right before an
beyond,
IPO.
because ultimately this is probably the key existential race. And if you think that Micron can see insatiable demand, right now every single tech company has insatiable demand for talent that can give them the next best thing, that can get them the leg up for the most expensive models. And right now, you have to wonder how much this is contributing to some of the underperformance of some of these names, whether it's Google, whether it's Meta, whether it's Amazon, or even Microsoft. It is difficult for them to retain talent when they cannot promise the kind of moonshot from an IPO and the shares that they might receive that you would get if you go to the likes of Anthropic.
Signal Fire, a venture capital firm, did a study last year, and this is what they found. DeepMind engineers are nearly 11 times more likely to leave for Anthropic than the reverse. Is this even awkward a little bit for Alphabet, given the fact that they compete, but they're also a partner as well when it comes to Google and Alphabet? I imagine right now, before the IPO, this is where you'd want to get in.
Wouldn't you rather be that kind of rich, like rich and no one really knows your name, as opposed to rich and everyone knows who you are?
Yes, that's.
I mean,
right?
That's
These guys
living
get
the
paid
dream.
Is that
tens,
really a
hundreds of millions
question?
of dollars.
I mean,
no,
yeah.
some people want to be famous, Bramo. I just don't, I'm not interested in any of that. If I could earn that kind of money and no one knew who I was, amazing.
I'm not that picky. Whatever you want to throw at me, that's good. I'm glad.
You could sit courtside in the Knicks. You could sit front row at World Cup. No one knows you're there.
The camera. I hate that about the World Cup, by the way, since you bring that up. The celebrity cam, what's that about? I don't care. I don't care who's in a stadium.
Are you not entertained, John? I thought we went over this yesterday.
I don't need that to entertain me.
I like the
Welcome to
celebrity
America.
cam. I like the celebrity cam.
See?
When
Why?
it's,
There
when
you
it's
go.
on Mike Bloomberg, get to see who he's sitting.
Okay, that's different. That's the
courtside
boss.
Knicks.
All right, of course. That's different.
Oh,
Love the celeb cam. Let's turn back to our top story this morning. Micron shares surging on its blockbuster forecast. Heath Terry of Citi Research writing the health of the AI trade will continue to be defined by the irresistible force of enterprise demand, meeting the immovable object of inference capacity. Heath joins us now for more. Heath, good morning. Good to see you.
Yeah, good morning.
Let's pick up on that enterprise demand. Just how robust is that right now?
Look, it's incredibly robust. We'll get Q2 numbers in a few weeks, but if you look at what we've seen over the last few quarters, we've gone from 28% year-over-year growth in Q1 of last year to 33% in Q2 to 53% in Q3 to 91% to 141% in Q1 of this year. Like that kind of bend in the S curve that we're seeing here, and we believe it's going to accelerate again in Q2. That's the best proxy for what's happening in enterprise demand, and anybody who works at a Fortune 500 type company that is pushing this into production can tell you they're seeing it in real time.
There is a rush to build out capacity to meet all this demand. Yeah. Some companies are benefiting more than others. Micron with 85% margins. Other companies that are doing a lot of the spending right now are being punished. Their stocks are being punished. This is a thing we keep bringing up. Do you think that changes the trajectory for spending?
Look, no, I mean, not anytime soon, because the companies are getting real returns on this. The market right now is not giving the companies that are spending on this, the hyperscalers, the kind of credit that they normally would for a couple of different reasons. But the biggest one is there is this gap between when you have to start spending and building all of this out and when you actually start seeing the returns on it. If you look at cash return on cash invested, which we believe is sort of the best gauge of the returns that they're actually generating on this, the hyperscalers are generating 29% returns on this investment. Very stable. It was 29% in Q1. It was 29% in Q4. If you have the ability to borrow at 6% or to issue equity and get a 29% return on it, you're supposed to do that, regardless of what your stock price is doing. And while the stock prices aren't doing what Micron's stock price is doing, they're hanging in there enough that investors haven't rejected this, right? Google issued $85 billion worth of equities. The market didn't really blink.
Well, just to build on what John is talking about, maybe people are still lending and they're still able to raise cash. Nonetheless, it's getting a little bit hairy for the likes of Microsoft, down 18% for this worst monthly performance going back to 2008. You see Oracle down more than 30%. Are we starting to see the beginnings of investor pushback that maybe hasn't put teeth in this trade by withdrawing cash, but certainly has put a little bit of notice around that capital?
Well, the thing that we have to remember, particularly when it comes to Microsoft and Oracle, is those are both software companies. Look at everything else in software and what those stocks have done. The market's not responding negatively to the acceleration in growth that you're seeing at Azure, the returns you're seeing at Azure. It's responding to the other 70% of Microsoft's business that is software. It's responding to the biggest part of Oracle's business, which is software. And so I think that's that, if anything, should encourage more investment in this area, particularly as we start to see the acceleration in Azure revenues through the end of this year, which we believe the market will respond positively to.
We've seen this rolling ball of cash, and as we heard from Sebastian Page earlier, everyone's looking for the choke points. Yeah. The next place where you're going to see things just sort of shoot exponentially higher because of this insatiable demand and a limited supply. After memory, what's next? I mean, do you have your eye on kind of those choke points?
I mean, we do. I mean, the choke points sort of exist throughout the supply chain right now. Memory is obviously the biggest one. Anthropic told you that very loudly a few weeks ago when they raised their most recent round. They had the opportunity to choose strategic partners. They could have picked anyone they wanted. They chose three: Samsung, Micron, and Hynix. And so, like, if anyone who's surprised by what's happening with Micron today and what's been happening with high bandwidth memory didn't pay attention to what Anthropic told them. The next point after that is it's at interconnect, it's in storage, it's in labor in a very big way, and of course it's in power. We've been talking about that for so long. It's also, because of what you see with Micron, it's very much in semi-cap equipment because we do have to make more memory, we do have to make more chips, we need more compute, we need more storage and memory.
Do you think some of these companies along the supply chain, we could potentially see these issues emerge later in the year or next year as they build this out, are undervalued right now?
Well, I mean, so we've been saying this like from maybe I started at Citi a year ago. The first thing that we said is you want to be where the bottlenecks are, and that has continued to be the case, and we sort of stuck with that. You have, this is where pricing goes. You were talking about sort of the underperformance of the hyperscalers. You want to be where people are spending money, not necessarily with the people who are spending the money, and so that's going to continue to be the case. We would argue it's not even so much undervalued; it's just estimates are too low. Consensus numbers aren't high enough because the amount of infrastructure that is going to get built, the amount of pricing increases that you're going to see, that, you know, irresistible demand, immovable supply, the only thing that breaks in that is price. You saw it in the Micron number, 85% gross margins. Memory companies are not supposed to have 85% gross margins. Eventually that will settle out because that's what cyclicals do, but we're a long way away from that happening.
You said that one of the choke points was in labor. Are you talking about Jonas Adler, or are you talking about Dave, who constructs some of what we're seeing with the hyperscaler buildings?
So it's certainly both. There is not a lot of talent out there that has the capability of advancing these models the way that level of sort of the Jonas Adlers of the world do. I have no idea. Okay, but I mean, if you look at some of the stuff that was announced last summer, right, when Meta was doing these deals, right, Anthropic is doing these deals now, Meta was doing them last summer, it was 6, and in some cases, you know, I mean, it was you know, very large sort of, you know, in some cases, billion-dollar kind of pay packages over multi years. And when you look at sort of the acquisition hires that many companies have done, it falls into that hundreds of millions and beyond kind of level. That said, what I was referring to is very much, it's the electricians, the plumbers, the construction people that actually have to build these data centers. There are very few people in the world that have the skills to be able to build at the level that these data centers require, and those people are in massive demand right now. And deservedly, they're getting paid a lot more too.
Yes.
Yeah.
I think that's the takeaway here.
Yeah, no, it really, I think that I need to give some new recommendations to my children.
Heath, it's good to see you. Thanks for being here.
Thanks for having me.
Breaking it down, just a real clinic there for us. Heath Terry of Citi Research. I think that's the second time so far this morning. Basically, the takeaway is the runway is longer than you think it is when it comes to a lot of these themes.
Micron kind of threw that in everyone's face overnight. I mean, the idea that we could see that kind of gains, then the rhetoric coming out of the company saying, we have no idea when the demand is going to start to fade, because right now, it's just to the moon.
Micron this morning, up by close to 18%. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. OpenAI unveiling its first custom AI chip developed in partnership with Broadcom. So far, the chip, called Jalapeno, is showing cost savings of roughly 50% and will be integrated into large data centers from OpenAI backer Microsoft and other partners. Cerebrus share is falling to the lowest since its IPO in Wednesday trading following the company's earnings. Cerebrus' annual revenue forecast falling short of analyst expectations. The reaction underscoring the sky-high expectations for AI chip companies. In sports, South Africa qualifying for the knockout stage of the World Cup for the first time after beating South Korea 1-0. Switzerland edging past Canada to finish in the top of Group B. And Brazil beating Scotland 3-0. Tonight it's Team USA facing Turkey in its final group stage match. And that is your Bloomberg Brief. John.
Vonnie, thank you. The Tartan Army, just the winners of the World Cup so far. Sad it's not really worked out, but just fantastic to see what those fans have done in the northeast of this country.
It's been fantastic. I mean, honestly, I love the spirit that we have brought. I mean, all of the fans have been pretty awesome.
It's pretty cool, right?
Yeah.
I like the Norwegian rowers.
Yeah, the Norwegian rowers, I was going to say.
Amazing.
You know, the Scots are pretty wild. You've got, of course, the Brazilian yellow army that seems to be going around the country.
Miami.
Yeah, I mean, be everywhere. It's really, it's been fun.
They're having a good time too.
Yeah.
All right. Up next on the program, the Fed's hawkish tilt.
We don't think the Fed and Chair Walsh are going to be able to raise interest rates like the bond market is priced in. It's part of Chair Walsh establishing his independence, new sheriff in town.
Up next, we'll catch up with Megan Swiber of Bank of America. Bank of America looking for 3 hikes this year.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream. And a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start in the 3rd floor or the lobby. You actually have to start in the basement.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
The AI trade upended for about 3 days, and not even that really. This morning, equity futures up by 0.6% on the S&P, up by 2 percentage points on the Nasdaq. Micron in the pre-market is absolutely flying. The coverage will continue right here on Bloomberg TV. Micron up by 18% in early trading. So the take trade is doing okay. What about the rate hike debate? Twos right now, 10s, 30s in the bond market look like this. Twos around 4.16, yields picking up just a bit, up a basis point. Going into PCE data later on this morning. Under surveillance this morning, the Fed's hawkish tilt.
We don't think the Fed and Chair Walsh are going to be able to raise interest rates like the bond market is priced in. One time is just symbolic. It doesn't do anything really for monetary policy. It's part of Chair Walsh establishing his independence, new sheriff in town.
So here's the latest this morning. PCE data due out in just less than an hour's time. Rising inflation expected to reinforce bets the Federal Reserve will raise rates in the coming months. The team at Bank of America calling for 3 hikes this year. Megan Swiber writing, Walsh is a Fed chair who wants to be actionable. The task forces are not a tool to buy time, but a tool to get things done. We think the market can price in a higher probability of a July hike. Megan joins us now for more. Megan, good morning.
Good morning.
This is the debate on this programme right now, style versus substance. You don't just think this is style, you think this is substance. There's a shift here.
We think that this is substance, John. And what was really shocking to the market, not so much us, because we were on more of the hawkish side of the equation, coming into the meeting last week was just Walsh's commitment to bring inflation back down to 2%. And this notion that the Fed has been missing on this mandate for not just 1 or 2 years, but 5 years. We get the PCE data this morning. PCE is really where the problem sits, not so much CPI, certainly not inflation expectations if you're looking at market pricing. And this is what the Fed has to acknowledge. They still have this very firm commitment to 2% PCE. And the data this morning we think will warrant a Fed that's going to have to hike rates sooner and get out from behind this problem that's been persisting for 5 years.
And to your point, not just hike once,
not just
twice,
once.
3 times this year. How well priced is that story?
It's not well priced, we think. And my sense talking to a lot of clients, a lot of investors on this is that there's still a very big contingent that do not think that Walsh will deliver hikes at all. And that really comes from more of this inertia that we've seen the market trade with over the past year, that Trump was going to appoint someone to the Fed who was just going to blindly be able to cut rates. We also have this global dynamic going on as we see hikes getting taken out of European curve, gilt curve, and that's because those hikes were very much more so predicated on the inflation coming from oil. This is not the case in the U.S., where we have much more strength coming from core numbers, coming from services inflation. And that really is what underpins our conviction that the Fed is going to hike here.
What about the task forces? Don't they have to get started?
I don't think, Lisa, that they're going to wait until we see the conclusions of these task forces to actually action anything. We actually take a very different notion than I think many in the market who have been looking at this task force mandate and saying that this is just a way for Walsh to buy himself some time. He's going to rethink what the inflation mandate looks like. He's going to think more differently about what data to look at, think more about Fed communication. We think that that is just another signal that Walsh is someone who wants to step in there and get the job done. And if he can get in there, do 75 basis points of hikes, reverse what the Fed did last year in terms of those insurance cuts that we saw, it gets the Fed back to a better place where they can say, we've delivered now on this inflation mandate, and we can cut rates back down to wherever they think neutral is.
What do you think will be the trigger in terms of the data that we're going to be getting, not just today, but over the next few weeks, that will allow the Fed to actually take action as soon as July?
Lisa, I think it just has to be similar to what we've been seeing in recent months. Break-even payrolls creation, everyone has been thinking is very, very low. Payrolls numbers on a 3-month average basis have been, more than double, close to triple what many economists were expecting in terms of what that break-even number is. We see another strong payrolls print. That's a go sign for us from the Fed. It's also, of course, going to come down to the inflation data. And a big issue here that we get pushed back on is certainly in coming months, month over month, CPI, PCE is going to be negative on a headline basis. But what the market's got to very quickly then do is take the CPI data, as it has been doing, and try to imply what that means for PCE. And we'll get the data this morning, but it does seem to us like it's going to be a signal that the Fed needs to get out from behind the curve.
How many hikes are you expecting before the midterm election?
Well, we're expecting the Fed to go in September, October, so ultimately 50 basis points. It's not really, in our view, this importance of midterms. It's this acknowledgement of the issue for voters more broadly, that inflation has been one of the key leading issues around consumer sentiment.
Yep.
Everyone knows that. The Fed knows that, and they need to get their credibility back.
The White House would like long rates down, not just short rates.
Yep.
Long rates are coming in relative to the move we're seeing
yes, John.
in twos. When you sit with the team right now, how does your outlook for short rates inform your outlook for long rates?
So it's quite different right now. When we think about curve moves, everyone on our team is much more so in this flattener camp. I actually just recommended a trade this morning to actually implement this flattener trade in real yields versus nominals, because if we do see the Fed getting out from behind the curve on inflation, there's actually more room that inflation compensation, the way the market prices that, can decline. And we do see in periods of time where the Fed is hiking to offset these inflationary pressures, real yield curve can invert. So for us, it's more of a story that front-end rates are moving higher versus 10-year rates. If the market takes this Fed messaging as they're going to get in there, they're going to quickly hike, then it allows them to get back to neutral in later years. It may actually result in a twist flattening of the curve, where you have front-end rates moving higher and 10-year and out rates moving lower.
Thoughtful stuff. Megan, thank you. Megan Swiper there of Bank of America. We've seen that flattening come into this market.
Yeah, not though with real yields. Just to pick up on what Megan was talking about, right now 10-year real yields are about 2.2%. They're close to that high point level that we saw back in 2023 of 2.5%. You could argue this is part of what we're seeing with the wobbles going on in some of the risk assets. If you start to see that come in and you get that curve flattening to potentially get to that inversion, that's fascinating. It gives you a sense of how the Fed might be thinking about this too, actually.
Something to look for going into year-end, potentially, and over the next few months. The task force, not just a talking shop, not just designed to delay time, at least in the opinion, the view of Bank of America, designed to get things done.
If this president wants to get rates lower, and he's talking about 10-year yields, then this might be the only way to do it, is to potentially hike rates in the front end.
Did Besant allude to that this week?
Yeah.
Kinda.
Yeah, howitzer.
Kinda. Coming up, Liz Ann Saunders of Charles Schwab, the former New York Fed President Bill Dudley, Stephanie Roth of Wolfe Research, Darius Dow of 42 Macro, all of that in the third hour of Bloomberg Surveillance just around the corner. It's up next.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space. Excellent reporting.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving something.
Yeah, probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersachi in El Ola, Saudi Arabia, and this is Bloomberg.
Right now, the problem is inflation.
We've been flagging the breadth of inflationary pressures for some time.
The FOMC has to be particularly attentive to its mandate around price stability.
The economy is going to strengthen. Inflation probably is going to slow down.
Our view is that we're going to see peak rates and peak inflation in the second quarter of this year.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your scores. The price action looks like this. Equity futures up by 0.6% on the S&P 500, up by 2% on the Nasdaq. Thanks to this move, Micron in the pre-market flying all morning, up by 17% so far. And the outlook for stocks apparently is getting better and better. We've had upgrades to price targets of Wells Fargo, of Barclays, at JP Morgan. Now SocGen taking its S&P 500 target to 8K.
What's fascinating is you haven't seen participation in some of the biggest names out there. You've seen some of the biggest hyperscalers actually losing tremendous value over the past month, even as you see the equal weight outperforming up 1%. You have the likes of Microsoft down 18%, Oracle down 30%, Google down 8% so far in June. Nonetheless, people are looking at the rotation, people are looking at the profits, people are looking at Micron and the other semiconductors, Western Digital, et cetera. And they're saying, you know what, there still is upside here because it is real. And if you doubt that it's real, take a look at Micron earnings and weep, because ultimately it is delivering in the 85% margins.
That's the tech trade. Let's get to the bank story. Check out JP Morgan in the pre-market. These headlines just crossing the Bloomberg terminal. There was a time right before Lloyd Blankfein steps aside that a race started between two co-presidents. Going into that, JP Morgan making a similar announcement, Lisa, this morning.
Yeah, Doug Petno and Troy Rohrbaugh are named co-presidents, and Marianne Lake has decided to retire. What we're hearing is that Troy Rohrbaugh will be the CEO of Consumer and Community Banking. What we see from Doug Petno is he's going to be CEO of Commercial and the Investment Bank. This comes, of course, as people are thinking about the succession of Jamie Dimon as CEO. There have been a number of people who have been elevated. Right now, we have to imagine that Doug Petno and Troy Rohrbaugh are squarely in the lead to overtake that C-suite position.
At least you know the bank well. Typically, when you speak to Jamie Dimon, we've all seen him ask the question repeatedly, how much longer? He will say 5 years. 5 years. After those headlines, what do you think the response would be this morning?
You know, he's already moved back from that. He said he still has a lot of leeway. Of course, there is also a question of whether he could remain chairman while a new CEO comes in, because right now Jamie Dimon is chair and CEO. We have seen a number of other banks take moves to create a succession plan and then get the person in place over the past couple of years. The speculation is going to be very hot, especially because these two individuals were pegged as likely successors in the past, along with a few others. It seems like the crew is narrowing down.
And the move from Marianne Lake kind of speaks for itself, doesn't it?
She's not going to be it, and that is what people are going to assume.
JP Morgan in the pre-market up by about 1/3%. More details on that for you when we get them. Coming up this hour, we'll catch up with Liz Ann Sanders at Charles Schwab with the AI trade bouncing back, the former New York Fed President Bill Dudley on the risk behind the Fed chair's new playbook, Stephanie Roth of Wolf Research reacting to the latest inflation data. That inflation data about 26 minutes away. We just had a conversation around the table about 3 hikes this year with Bank of America. They're looking for those hikes to start maybe as soon as July.
And that would follow core PCE coming in what is expected to be 4.1%, the hottest level, the fastest pace of acceleration going back to April of 2023.
Let's begin this out with stocks gaining after Micron earnings sparked a new wave of momentum for the tech trade. Liz Ann Sanders at Charles Schwab noting there is same bus risk from enormous concentration in narrow cluster of semis, hyperscalers and memory chip makers. Liz Ann joins us now for more. And Liz Ann, whenever you get the jitters, everyone wants off the bus. And then you get a rally on a stock like Micron, everyone wants off again. How concerned are people out there about being in the same trade?
Well, I think many of the cohorts, institutional cohorts that play off of each other's positioning, systematics, long-short hedge fund community, the commodity trading advisors, and then I would put the retail trader in the mix too. And they are playing actually crowded trades and looking to potentially press some shorts. And that is really short attention span money moving rapidly. And that's why you're seeing these incredible rotations under the surface. And it's now happening at that sub-sector, even sub-industry level. And I think that kind of backdrop in this environment of short-termism with narratives that can change really quickly, or you get an earnings report like we did last night, and it's just rapid-fire movement of money.
Liz Ann, when it comes to the fundamentals, and I know lots of leverage has been built up around the fundamentals, but let's focus on the fundamentals. We're asking the question, look at the spenders, they're under pressure. Meta, Microsoft, those stocks are in bear markets. When do they pull back on the capex? And the takeaway, the reaction we've had this morning, Liz Ann, is ultimately this runway for this spending is longer than you think it is. These themes can carry on. There's a lot of oxygen still left up here. Do you see it quite the same way?
I do. I think the runway is long for spending based on the demand side of the equation. I think what we're starting to face now, though, are constraints as it relates to inputs and costs. And at the corporate level, the sort of utilizers of AI and the spenders on AI from an enterprise standpoint, you're now finding that there's starting to be a little bit of a pushback because costs have gone up so much. In fact, you guys know Rick Wurster, our CEO. He and I had an interesting email exchange last week, talking about in some cases now there's the reassessment of the cost of human capital, maybe in relative terms looking somewhat inexpensive. So I think that's the stage we're in right now.
Liz Ann, how do you view the hyperscalers that are being beaten up as they are the spenders on all of this capex that seems to be just ever growing?
They're the dull new objects. If you look at a cohort like the Magnificent Seven, those stocks from a price performance standpoint, the best performer, which is Alphabet, isn't even in the top 200 of S&P 500 performance. And when you talk about contribution to return, because you have the multiplier of their extremely large cap size, you don't even have any of the 7 in the top 10 in terms of contribution to return. And I think there's finally an awakening to this shift in focus away from those early players of the AI trade. It's still embedded in a lot of the concentration that exists in portfolios, but you're starting to see increased pressure because of that desire to rotate into more attractive areas.
And it's more attractive areas in whether it's the memory chips or other areas that are supply constrained that are related to the tech trade. But it's beyond that also to the concept of the efficiencies that are built from AI and others. I'm just wondering how much the broadening out trade hinges on the Fed remaining on hold, on inflation going back down, on the acceleration that we expect later today to be the peak of where we are in terms of price increases.
So I think the market has embedded in its expectations now that the Fed is at best on hold, and obviously the market pricing in hikes. And you do see some rotation to take advantage of where there's sort of more or less correlation to the rate cycle. It's also the case, though, that this broadening out is not just within the AI space. It's more broadly within the market. Part of the reason why the Russell 2000 is so handily outperforming the S&P is because it's got exposure in areas like healthcare and biotech. And I think that that's an interesting story that's being less told right now. Over the last year, it's single-digit percentage of S&P stocks that have outperformed the index itself. Over the past months, it's 60% of S&P stocks have outperformed the index itself. You've had these down days where you've had positive breadth. I think that's an interesting story that's getting told under the surface of these cap-weighted indexes.
Lizanne, though, what kind of stock market could we see if we get the 3 hikes that Bank of America just told us they're expecting 2 before the midterm election in November?
I think the market would probably have to go through a digestion phase if it is 3 hikes. I think that there's still sort of this hope that the inflation fighting credibility that Kevin Warsh obviously expressed, that may be enough to restrain things. And if you see some volatility in the market, you can see financial conditions tighten in a way that maybe takes a little bit of that pressure off the Fed. But notwithstanding a different look to the Fed under Kevin Warsh, the bottom line is they're still data dependent. So with every data point that we get in, more so on the inflation side of the dual mandate, maybe a little bit less on the labor market side, unless you get an extreme move in the labor market, either toward the positive or toward the negative. I think those expectations around Fed policy are going to continue to jump around.
Lizanne, just to wrap things up, on the disconnect between crude and what's happened with rates, what's your reaction been to that? And does it complicate the broadening out story?
I think there may be something to the notion that even though the move significantly higher in oil prices did not cause a major strain on the economy, I think there's validity to the idea that maybe lower oil, lower gas prices in an environment where consumers still obviously want to spend, that could provide a little bit of boost to the economy, which could in turn exacerbate the inflation problem. Not to mention the fact that there are inflation feeders that are not just oil. AI is an inflation story. Money supply is an inflation story. So I think that's what's getting built into expectations here.
Lizanne, appreciate your time as always. Lizanne Summers of Charles Schwab joining us on the rates market on equities going into PCE data in about 20 minutes' time.
Yeah, and a real key question here is how much has the market already baked in the expectation of true rate hikes on the heels of what a lot of people are expecting is incredibly hot core PCE.
Let's get you an update on stories elsewhere this morning. Some breaking news crossing just moments ago. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Yeah, a change at the top of JP Morgan. The bank announcing Troy Rohrbaugh and Doug Pinto, the co-CEOs of the Commercial and Investment Bank, will become co-presidents of the company effective immediately. Marianne Lake, currently CEO of the Consumer and Community Bank, is retiring after more than 25 years with the company. President Donald Trump criticizing big oil, accusing firms of overcharging consumers.
Gasoline prices should be much lower at the pump. And the oil companies are possibly gouging. I hope they're not, otherwise they're going to be in big trouble. They're going to be in big trouble. We're not going to play games.
The president ordering the DOJ to investigate the company, saying gas should be $2.25 a gallon, not $4, which is currently the national average. Ares' flagship private credit fund capping redemptions at 5% again. The fund saw requests to withdraw more than 14% of shares outstanding as of April 30th. The announcement follows similar moves in the private credit market. And that is your Bloomberg Brief.
Hey, Vonnie, thank you. Appreciate the update. Let's get to JP Morgan in the pre-market. Check it out. Not seeing a big move here. We're up by about 0.1%. But I think you're seeing a big development in the C-suite and the future leadership of this company.
Yeah, it had been 5 people who had been elevated, and it seemed to have been some sort of race, and people wanted to sort of try out for the job in real time. Now we have a whittling down, and it seems like there are 2 people left, Doug Petno and Troy Rohrbaugh, who both are being elevated to be co-presidents of JP Morgan. This is what the race is. Mariana Lake, who has been exactly how they should react.
Just have a finite life. I mean, the Fed has basically got to conduct monetary policy, not just over the next 6 months, but over the next number of years. So I think the reliance on task forces, maybe it buys him some time to think about what he really wants to do. But at the end of the day, these task forces are not a replacement for the Fed communicating about how it's going to act as economic conditions change.
Right now, Bill, when you take a look at the inflation rate, when you take a look at the oil input, but also the broadening as we're seeing it in PCE, which we're going to get in about 9 minutes' time, do you think it is appropriate for them to hike at least once, if not twice or 3 times this year?
Well, I think that the case for monetary policy becoming a bit tighter is pretty compelling to me for 2 reasons. Number one, we've been at this level of rates or higher for 3 years, and the economy is still at a 4.3% unemployment rate. So what's the evidence that monetary policy is restrictive? And second, financial conditions are really accommodative. The board has a model of financial conditions, and right now it shows the impulse to growth over the next year is over 1% positive on GDP growth. That's the highest since late 2001, early 2022. So I think that easy financial conditions, no evidence that monetary policy is restrictive at a time that you've missed your target for more than 5 years, does create a strong argument for tightening monetary policy. I'm aligned with Alberto Musil, Lori Logan, but what I think doesn't really matter. It's really what Kevin Warsh is ultimately going to do. One thing that's going to help a little bit in his, in giving him a little bit more time is this is probably the really last bad headline inflation report we're going to have for a while, because with the decline in oil prices, when we get the inflation data for June, headline inflation at both the CPI and PCE level is going to decline quite significantly.
But what about the housing market? Isn't it still fair to say what we have is highly restrictive for housing?
Well, I think housing is not doing well for a couple reasons. The main reason, though, is lack of demand because we don't have any labor force growth. So if you don't have labor force growth, you don't have household formation. If you don't have household formation, you don't have a lot of demand for houses. There's also an affordability issue in terms of what level of income you have to achieve to be able to buy a house. But I don't think, you look at mortgage rates, are mortgage rates particularly high? I mean, they're high relative to the last 15 years or so. But if you go back prior to the great financial crisis, mortgage rates in the 6.5% range, no one would view that as particularly high.
Well, it is high, though, if you're sitting on a 3% rate and you refuse to move because then it doesn't offer up a lot more housing for everyone else.
Well, there is a lock-in effect. Then people are, deciding not to move because they don't want to lose the advantage of those very low mortgage rates. But if they move, they're demanding another house. So I'm not sure that, that really is going to have a big effect on housing affordability. The big question, I think, for housing affordability is what can you do about zoning? What can you do about land use to basically allow more homes to actually be produced? Increasing the supply of housing would then weigh on housing prices, and that would make housing more affordable. But I don't think it's really a big interest rate problem, frankly.
Bill, just a final thread, a few questions. Just on this institution, you've worked at it a long time from your position at the New York Fed, going down to Washington on so many occasions. How easy is it to change this institution?
Well, there's certainly a lot of inertia in the sense that you have staff that are going to be there a lot longer than Kevin Warsh is going to be there, for example. And the staff has a lot of pride in their work, and deservedly so, because they have a tremendous amount of expertise. But you can definitely move things if you have a better mousetrap. When I went down to the New York Fed after the second day I was president of the New York Fed, I basically said, my mantra is best idea wins. The best idea that people come up with should actually dominate, regardless of where it comes from. And I think the board staff, the staffs of the Federal Reserve banks really subscribe to that. So if Kevin Warsh and the task forces come up with better ideas, I think those best ideas will actually win.
Bill, it's good to see you. It always is. Thank you, sir. Former New York Fed President Bill Dudley on this Federal Reserve. Going to get this inflation print in about 5 minutes' time. And as Bill pointed out, this could be the worst one. And then we move on to better prints in the months ahead, given this move in energy.
Better is a relative term, though, especially when we're talking about the highest inflation going back to April of 2023. And would that be enough? I mean, I'm thinking about Bill Dudley being sympathetic with the Lori Logans of the world saying, and the Beth Hammocks of the world saying he would be in favor of tightening policy. Does it matter what Kevin Warsh thinks if a number of the committee members are in favor of, say, raising rates as soon as July, like Bank of America thinks?
I'm hoping to be talking about 3s and not 4s, but 3s are still a problem.
Yeah, but this is the point, is that we haven't seen it come down, and it is accelerating in a number of different places.
And we are looking for a 4 handle in just a moment on PCE year over year. That break in inflation data just around the corner. Stephanie Roth of Wolf Research joins us to break it down. That data a few minutes away.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
The open about 60 minutes away. The data is 20 seconds away. Equity futures on the S&P 500 positive by 0.6. On the Nasdaq, some real outperformance. The Nasdaq 100 up by 2 percentage points. In the bond market, we won't be talking about Micron. We'll be talking about PCE in just a moment. Yields up by a single basis point. The 2-year around 4.15. Up a basis point or two on 10s to 4.41. With the economic data, let's cross over to Enda Karen for more. Enda, that data about to cross any moment now.
Yeah, so we're seeing a fall in personal spending, but on the core PCE index on month up 0.3%. John, that's in line, and the headline basis on month up 0.4, just a touch below expectations. So looking on the monthly numbers for PCE, either coming in line or a touch below, perhaps hinting at not as bad a story as some concerned, but nonetheless, these numbers do confirm that PCE, which is the Fed's preferred inflation gauge, remains well above where they want it to be, well above their target. We know some of this story is down to airline fares, to portfolio fees, its import costs, and healthcare costs have been part of it. We'll have to break down the detail as we go. But these numbers, as I say to you, more or less in line, but certainly not where the Fed would want them to be, and it leans into this new hawkish narrative that we have.
Expectations matter. Small downside surprise on headline, opening the door to this move at the front end of the yield curve. Yields were pushing just a little bit higher by a basis point. Now they're dropping by about 2 basis points to the front end of the curve. Check it out. Two's down by 2 to 3 basis points at the moment. So back down to 412. In the last few days, we were looking at 420, so that's a real repricing at the front end of the curve. Yields down. That unlocks this move at the equity market level. Equity futures pushing higher once again, up by 0.8% now on the S&P 500, up by 2.4 on the Nasdaq 100. An early move, as we often say on this programme, not always the right one, but this is the early move off the back of this small downside surprise on PCE.
Yeah, people were worried that potentially it could show signs of acceleration. We really have to dig into the details to understand where some of the inflationary inputs are. Just to give the exact numbers, 3.4% core PCE on a year-over-year basis. That would be the highest since November of 2023. The headline PCE price index coming in at 4.1%. That's the highest going back to April of 2023. Again, it matters the components. How much of this is going to fade? And can that give you true relief that the Fed can look past this, even though we still are way above that 2% target?
And the 4 is bad, 3's not great. But is this as bad as it gets, looking out through the summer now, given the developments we're seeing in energy?
Well, that is the big question, John. So, to your point, these numbers are from May. It's ahead of the Iran deal, whatever one's views on that are. If that energy story holds and plays out, we're obviously going to see wild swings on headline inflation, and obviously that will trickle through the inflation story. But nonetheless, these numbers where we are right here, right now, are probably the reason why Fed officials are looking at PCE with a 3 handle by the end of the year. Even if the energy story holds together, will it be enough to get PCE, back below 3 and heading towards its target? That remains a big ask, John, because it's not just energy. Remember, there's the AI story, there are pockets of services inflation, and there's the rental disinflation story, which hasn't gone away. So I think right here, right now, the inflation story remains an open book, leaning towards the hawkish side of the debate.
Andrew, it's good to see you. It always is. Thank you, sir. Enda Curran of Bloomberg News down in Washington, D.C. Good to see personal income and personal spending coming stronger than expected as well. We better even talk about jobless claims at 8:30 on a Thursday morning these days, because you can guess where jobless claims are. 215. I'm not even looking. What are we? 215. I looked. 225. The right kind of downside surprise.
Yeah, you must have looked, but at the same time, you would be forgiven for just assuming that it was right around there, and that is coming down. Again, you're not seeing signs of that. The fact that personal income, just to sort of reiterate what you were just saying, John, coming in hotter than expected at 0.7% versus 0.4%, gives you a sense that maybe there is heat under the market. I mean, there are a lot of ways to read this. The components really matter.
Equity futures up by 0.8. On the Nasdaq, we're up by 2.3%. Let's get to the details. Stephanie Roth of Wolf Research joins us around the table. Stephanie, good morning.
Good morning.
We've had a chance to look at the details. How bad is this? How much better is it than expected?
I mean, I think it's certainly better to see that your core PCE number came in lighter than I would say, even though it met consensus. There were many out there that feared it would be rounding up closer to 0.4%, which was a legitimate risk. So if you look at core PCE inflation, it came in at 0.32. There were many that were thinking it would come in above that 0.35, which would push it up to 0.4. So I think that's some of the market's reaction, because it was, I guess, the worst case scenario would have been avoided. Now, the question, of course, is on a go-forward basis, what are we going to see in terms of the inflation data? Now, much of the impact on core is not really related to the Iran war. It's not really related to energy prices. It's been a combination of lingering tariff effects, AI, importantly, and then, of course, you have the Iran war. So the next couple of months, are you going to see a notable disinflation? You kind of need to see core PCE running 0.2 or below for the Fed to feel more comfortable in this environment.
So, Stephanie, this is important because we've noticed the same thing in financial markets, a disconnect between the move in crude and the move in interest rates. And what you can see is a massive round trip on crude, wiping out all the wartime gains. And yields at the front end of the curve are still higher by 70 basis points relative to where they were at the end of February before this war started. There is a belief this Fed still hikes, even if this inflation data improves from the 4s down to the 3s. Do you see it the same way?
Yeah, I think we're in an environment where there's not that much time for the Fed to be able to feel comfortable about the inflation path. And Chair Warsh last week kind of set the stage for, we'll see what happens in 6 weeks. Is the data going to be better enough in 6 weeks for them to feel better? and again, maybe in September. So our base case is that the Fed will ultimately stay on hold and it'll be the markets doing the work, but the path has gotten a lot narrower for that. You really need to see all of the inflation prints, surprise to the downside from here. You need to see a bit of a rising unemployment rate, as you often do in the summer. But if every single data point doesn't fall in line, then the Fed is going to go.
Is this a sign that the Fed is actually easy on the monetary policy, that not only is the rate not restrictive, but it actually is accommodative in the face of the build-out of AI? Or do you think that this is exogenous factors that are creeping in or that are just 1-2 punches, whether it's the tariffs or whether it's the oil prices or whether it's some of the AI inputs?
If the Fed hikes 1 or 2 times, even 3 times, that's not going to impact the AI trade, right? AI is still going to be an important force for the economy. So it's a lot of, I guess, to your point, it's somewhat exogenous factors that don't really rely on, the level of interest rates so precisely. It doesn't really matter because the ROI on this investment is so much higher than the current level of interest rate that it doesn't really matter. These projects are going to get done, the investment's going to happen, and growth is going to be quite solid. And then, of course, you were talking earlier on the show, housing is still an issue, but it's a relatively small part of the economy, and everything else is running relatively firm.
So can we make any conclusions about the Fed's policy rate and its influence over the inflation? Or right now, are these two kind of diverse from each other? Are they kind of speaking to another era that has become obsolete, kind of in support of these task forces that are going to reassess exactly what the role is of this institution?
Yeah, I mean, interest rates still matter. So to the extent that it matters for financial conditions, if they end up falling through with the the couple of rates hikes that are priced in, let's say they even do 2. That would at least match what market's pricing, and that could sort of keep financial conditions stable. They don't really want to be easing financial conditions in this environment. So surprising in a dovish way at this point could just fuel some additional inflationary pressure, specifically coming from risk assets. But that said, rates are not that restrictive for most of the economy, but some of it just has to kind of run its course. The AI stuff is sort of a short-term trend that is very important, and eventually it will be disinflationary. At the moment, it is inflationary.
How weak would the labor market have to be for the Fed either to stay on hold or consider maybe even bringing up a cut?
So in order for them to stay on hold, I think you need to see, 4.4 over the summer, maybe 4.5 on the unemployment rate. For them to be considering a cut, I think it needs to be notably higher than that, and then seeing signs of disinflationary. Core PCE running, in the notably below 0.2%, and the unemployment rate really starting to head significantly higher, and payrolls surprise to the downside. Now, this is the whole big story to get to a place where they're cutting. It's a really difficult story to tell how they actually get to those cuts. But it would be an environment where the labor market surprises in a meaningful way. And it's kind of hard to see that momentum deteriorate so quickly.
Bill Dudley was with us 15 minutes ago. Bill reacted the same way many people did to the news conference. Why did the new Fed chair find it difficult to draw a distinction between offering forward guidance and articulating the reaction function of the committee?
I think he didn't want to make any promises. He also didn't want to commit to hikes, especially at the first meeting. But it was interesting that Trump, during that meeting, made the comment about whatever that they're doing, whatever they are doing in this meeting, and maybe they'll hike rates. It doesn't really matter. So it was interesting to see that he backed off, because that was a big argument many people were making for Warsh coming in and being a more dovish chair.
But he didn't back off yesterday. The president literally said low interest rates will solve everything. Get the interest rates down.
But he at least he didn't attack Warsh in that moment. Of course, he's still always going to be a low interest rate guy. But the fact that in the first meeting he didn't start the path of going after Warsh is notable, because that at least separates the two. He's always going to want low interest rates. And, eventually maybe they can get there, but this is not the environment for that.
We saw the same thing from the Treasury Secretary, that's for sure, earlier this week at the Economic Club in New York event here in New York City. Stephanie, it's good to see you. Thanks for being here.
Thanks for having me.
Stephanie Roth there of Wolf Research. Following this data, the preferred read on inflation for the Federal Reserve, at least for now, because that might change later in the summer. PCE coming in at the strongest level going back to 2023, spring of 23.
Yeah.
April to be precise.
So right now I'm looking at some of the components under PCE and what actually was the acceleration. Services came in pretty hot, contributing a significant portion of that, also non-durable goods. So when you take a look at this, it doesn't look like this is as much directly related to oil prices as other factors. This is sort of the spreading out, the broadening out in services side inflation that has the likes of Austin Goolsbee concerned. And you see that in a lot of this data.
Speaking of higher prices, this from Apple. The team just breaking the numbers for us. It comes from Apple, raising prices on Mac, iPad, across the board. You're seeing these prices to counter the cost of memory and the memory shortage. This is the Micron story in many ways as well. And this stock is down by 0.4%, but that's the reality from the AI spend that we're seeing, that theme, the expense we're seeing and the pass-through to the end consumer.
If you bought MacBook Air a couple of days ago, then congratulations.
Like Lisa.
You avoided a $200 increase for that MacBook Air because that price is increasing to $1,299 from $1,099. MacBook Neo, similar. Look, this again goes to the way that the AI trade is leading to inflation. As Stephanie was just saying, it is leading to real near-term inflation that you're seeing show up in consumer goods. Now, the big question here is, do you get demand destruction from this? Or do you ultimately just get people saying, ugh, really, again, and then plunking down their plastic?
Look at the commentary from the company. Rapid expansion of AI data centers created a memory surge. We've never seen a component price increase this much, this quickly.
Yeah, ka-ching Micron. I mean, it's sort of an example of how quickly they were able to raise prices in the 85% margins. But this, again, how much are we going to see this not just in Apple, but also in cars, also in any other component that you end up buying, any other consumer electronic that requires memory?
Tim Cook did warn us in an interview recently in the Wall Street Journal. He said it's unavoidable when it comes to raising the price of iPhones, and now it's the whole suite of Apple products. I hear this and hear what they're saying in terms of this is because of the AI build-out. This is another reason why the American voter in November is going to hate these AI companies and want them addressed. They want data centers in their backyard. They want their electricity prices going up. And no one wants to spend more on their iPhone.
How much longer can this go on? There is some runway here. We've been told that repeatedly, and Apple is telling you something similar this morning.
Yeah, we're not at a point where we're saying this is going to end anytime soon. The company was saying that they've shielded their consumers for months now with absorbing the price increases. They can't. And they said, ultimately, these constraints are going to last for a long time. We've heard the same thing from Micron. And guess what? I mean, this is why you could get hoarding. This is why people might say, oh, that's not great. But if you get in now, it's going to raise another $200.
People. Who's hoarding?
You nailed that trade, Bram. I will give you that one.
Thanks. That's
all right.
the one thing I've actually
nailed. You can
nailed.
have that one. Apple this morning is down by about 0.75%. Micron is surging. Equity futures this morning up by 0.8%. PCE, on one read at least, a small downside surprise relative to expectations. That unlocks this move at the front end of the yield curve, down by 5 basis points on twos, your 2-year, a break of 4.1% so far this morning. The opening bell about 47 minutes away for equities. Let's get you an update on stories worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. So recapping the data we just got. PCE, the Fed's preferred inflation gauge, meeting estimates, jumping 0.3% for the month of May. Jobless claims coming in at 215,000 last week, below the estimated 225,000. And personal spending for the month exceeding estimates, rising 0.3% versus the expected 0.2%. A change at the top of JP Morgan, the bank announcing Troy Rohrbaugh and Doug Petno, the co-CEOs of the Commercial and Investment Bank, will become co-presidents of the company effective immediately. Marianne Lake, currently CEO of Consumer and Community Bank, is retiring, the move fueling speculation about who will eventually replace CEO Jamie Dimon. Ford named the top mainstream brand for new vehicle quality by J.D. Power for the first time since 2010. Bloomberg's Matt Miller spoke to Ford CEO Jim Farley and asked him about the company's success.
That human motivation to pay attention to everything is amazing. Look, we make 85% of our vehicles in the U.S., Matt. That means these are U.S. factory workers versus even our domestic competitors. They're some of the biggest importers in the U.S. We're not building these vehicles in South Korea or Japan. These are American workers beating Toyota and Hyundai and our domestics who import their vehicles. We beat them all.
And you can hear Matt's full interview with Jim Farley at 9 a.m. Eastern. That is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thank you very much. Up next on the programme, we'll set you up for the day ahead. Plus, we'll catch up with Darius Dale of 42 Macro on how the Fed could pose a headwind for markets. Right now, no such headwind. Equities bouncing up by 0.8%.
we are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel. And energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
It's Bloomberg Money.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
It's certainly better to see that your core PCE number came in lighter than I would say, even though it met consensus. There were many out there that feared it would be rounding up closer to 0.4%, which was a legitimate risk. The question, of course, is on a go-forward basis, what are we going to see in terms of the inflation data?
That was Stephanie Roth of Wolf Research weighing in on the latest inflation data, 4.1%, a number we haven't seen going back some 3 years, April 2023. A small downside surprise if you look at something very, very specific like the headline number month over month, which was 0.4 and the estimate was 0.5. That unlocked this move in the equity market, up by 0.9% on the S&P, on the Nasdaq up by 2.4, adding some more weight to a rally that was really triggered by a massive move from Micron in the pre-market. We'll spend some time on that name in just a moment. In the bond market then, two-year yields are lower off the back of that move on inflation, down by 4 basis points, twos at 4.1%. Are you encouraged by the idea that this is as bad as it gets maybe through the summer? The headline's going to be Apple's raising prices. That's going to be the headline on inflation. You're going to have to pay up for your favorite electronic device.
Yeah, what's next, right? And that's the issue, is that this is a broadening out. If you take a look at the details of this particular report, Stephanie was just breaking them down in the break, saying that it is coming largely from international airfares. So thank you, World Cup, and all of those Brazilian fans coming here in first class, but also just in general because of oil prices and financial markets. Going forward, though, how much is coming from personal electronics, as well as the services sector that have to deploy more cash in order to buy some of those personal electronics to fuel their businesses? So a lot of questions here going forward.
Plenty of questions, and we'll spend some time on them in just a moment as we count you down to the open about 40 minutes away. Let's get you some single names, some morning movers. Yahara has more. Hey, Yahara.
Hi, John. We start with the stock of the moment. Micron shares are adding to gains, up 18.3% in the pre-market after it issued a blockbuster outlook and said that margins jumped nearly 85% last quarter. Its CEO saying that he expects the memory shortage to continue beyond 2027. And for that reason, as you said, we are now seeing Apple hiking prices on products like its MacBook. And this just confirms the bottleneck that we're seeing. And for that reason, we are seeing the entire memory trade up this morning, with SanDisk up 16% in the pre-market. But the broader chip ecosystem is also up because of Qualcomm. Shares are up 10.4% in the pre-market after it said that it expects $15 billion in annual AI data center revenue by 20 29. It's a shift from a company that made its name supplying chips for smartphones, but now it's going all in on the AI infrastructure boom, and even said that Meta will start using its newest data center processors. And we end on a fun one. It is day 2 of Wendy's meme mania. Shares are up nearly 12% in the pre-market after they saw their best day in 5 years yesterday with a 26% pop. And it all started with a Wall Street Bets post to save the company that triggered what we're probably seeing as a short squeeze. So shares up again today. John.
Yahara, thank you. Thank you for the update. The Bulls getting so much good news, aren't they? Think about it. Micron, fantastic numbers. After the close yesterday, surging in the pre-market. Energy, rolling over the banks. Buybacks, dividend boost, passing the stress test, all of that good stuff. Capital returns picking up. And then just a small, decent surprise on inflation. Tiny downside surprise on PCE. Something to worry about. Darius Dowd of 42 Macro says the Fed may elect to tighten now so it can ease even more later. Investors should buy the dip, but be patient. Trees don't grow to the moon, even if there will eventually be data centers in space. Darius joins us now for more. Darius, good to see you, buddy.
Great to see you guys.
Should I be worried about the outlook for this Federal Reserve?
Yeah, I'm not worried. I think they're, I said this with Tom earlier, I think they're going to play action pass so they can set up the run. They have to spook the markets and regain some of that credibility on inflation fighting just so that they can create more scope to ease monetary policy in the ensuing year.
Let me just jump in. Is it a communication exercise? Can you achieve that through communication alone, or do you need to actually hike interest rates?
I think interest rates are the wrong tool. I think it's a balance sheet exercise, in our opinion, because we think they need to target the speculative excesses at the top part of the K-shaped U.S. economy. And so right now, the Fed's got to take reserve management purchases to zero and threaten the market that they may reinstate balance sheet runoff in order to take some of the, the pressure out of financial markets that's, leading companies like Apple to tighten, to raise their prices.
Is that what you're expected to see this summer, or is that too soon?
In our opinion, based on our outlook for what the likely, sort of net result of the 5 task forces is likely to be, we think it'll be a dovish net result. Not all dovish, but a dovish net result. So in order for them to create scope for that, kind of create a runway for that, they're going to have to take some steam off the boil from an inflation fighting perspective in the coming months.
How exactly would that be effectuated with the balance sheet, and where in the risk asset market would you actually see the ramifications of that?
I think if the S&P 500 is down 10 to 15% and the Fed says, okay, enough is enough, you take the steam off the boil. I mean, right now we're annualizing on PCE, core PCE inflation at 3.5%, supercore north of 4%. Now, these are some pretty uncomfortable numbers. And so ultimately, we know we're at peak inflation. Those numbers are going to come down, but the rate of change of those that's deceleration could be an issue for the market in the context of what we just saw with Apple. Fun fact: I wrote my senior thesis at Yale about how a market-based economy can't have a single-payer healthcare system because it would drain resources from the other sectors of the economy and push up inflation. That's exactly what's happening right now with AI and Apple.
So right now, that's part of the reason why you're seeing inflation where it is. And you're saying that in order to lower that inflation, you need to see some sort of significant drawdown in equity markets. How are you positioning ahead of that, or how are you recommending positioning ahead of that?
Well, the first step of the trade, and we think it's already on, is the source of funds trade, where the investors are using, these sort of AI providers, particularly the hyperscalers, to capitalize the AI adopters and the businesses in the economy that have been left behind, not just in this particular market cycle, but for 10, 15 years. In our opinion, we think that trade is durable. We talked about it last time we were on the show. We think that trade is durable. It has multi-year legs. But if the market's down, 10 to 15% in S&P terms this summer or this fall, nothing's going to work. I mean, what do you hide out? Yeah, volatility.
Darius, it's good to see you.
Yeah,
it always
great
is, buddy. Thank you, buddy. Darius Dale there, 42 Macro. Just another dimension, another way of thinking about this Federal Reserve. And there's a range of views right now because a lot of people are filling in the blanks because there were so many in the news conference just last week.
Yeah, we're all moonlighting as task force members because ultimately we want to know the answers. That said, is this a feature or a bug, the lack of understanding of the response mechanism for the Federal Reserve? And ultimately, you got people lining up on both sides.
But John, I think you asked the right question. Can you set deterrence alone just with communication, or do they actually need to deliver on that hike to actually show they really do care about getting inflation closer to target?
There's a sense they might have to deliver. For now, though, this equity market's enjoying what it's got. We're up by 0.8% on the S&P 500. Yields are declining. Inflation, a small, very small downside surprise. The debate continues. Coming up tomorrow, Alex Altman of Barclays, Eddie Fishman of CFR, Russ Brownback of BlackRock, Cameron Dawson of New Edge Wealth, Bramo, Anne-Marie. Long weekend? Long weekend, is that what's happening?
Yes.
Good for you.
Lisa's working.
Grandma's working, just not on the show.
I'm taking
long weekend. Is that a long weekend? Rio again?
No, I'm not going to Rio.
Oh,
no.
I'm going to
Aspen. Aspen for the weekend, darling.
Okay. Maybe I will too.
You're welcome to join.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US, or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
And we have 30 minutes until the start of the cash trade. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, the AI trade is back on big time. Micron revives confidence with a blowout forecast.
And then down on Wall Street, JP Morgan reshuffles its leadership, setting up a fresh race to succeed Jamie Dimon.
And can AI replace experience? Ford CEO Jim Farley says not yet.
That human motivation to pay attention to everything is amazing. Look, we make 85% of our vehicles in the U.S., Matt. That means these are U.S. factory workers versus even our domestic competitors. They're some of the biggest importers in the U.S. We're not building these vehicles in South Korea or Japan. These are American workers beating Toyota and Hyundai and our domestics who import their vehicles. We beat them all.
We'll have more from that interview in just a few moments after Ford tops all mainstream competitors in quality on the J.D. Power survey.
I'm really excited for that conversation, also because you asked about F1.
Yes, we talked.
I'm excited for other reasons, but I'm also
about
excited
Max
for that.
and Le Mans. Jim loves racing, obviously,
Okay.
as you can see from where Ford is active, like
Correct.
everywhere in motorsport.
So we'll hear that one in about like 10 minutes?
Yes.
Okay.
Yes.
In the meantime, the story's all about
focus
Micron.
back on Micron.
Yeah, I mean, it's the story of the morning, just considering how much some of the chip makers had sold off earlier in this week, where Micron comes back and is like, don't worry, guys, we got this. It's cool. They reassure investors that demand is strong for the near future. Analysts say that this earnings is the best visibility into semis and believe that supply shortages mean that an AI bubble will not burst in 2026. And we're going to talk to Jake Silverman about this in a moment. But margins, they're predicting 86%. Apple has to hike the prices of all their things. The AI trade having big ripple effects.
Yeah, I'm excited to look at the EEO function on the Bloomberg to see if they're trading now at 11 or even 12 times forward earnings. Qualcomm also lifting risk sentiment after forecasting $15 billion in annual data center related sales by 2029. The CEO, Christian Amon, says custom chips for everyday items like smartphones are a huge opportunity, and Qualcomm is up 8% in the pre-market, Danny.
Let's get more into Micron. Revenue beating expectations by 16%. Only just slightly higher than what Bloomberg Intelligence analyst Jake Silverman estimated. But Jake was already very bullish. His thesis comes true, and Jake joins us now. Jake, again, it's this 86% margin that they're forecasting. I mean, do they just have the ability to have high prices, and whether you're Apple or you're NVIDIA or one of the hyperscalers, you must pay?
I mean, it's all pricing power, yeah. I mean, when you look at gross margins, we're so far beyond historical precedent at this point. It's kind of a question of how high can they really go. You know, we do think that the margin growth will start to dampen a bit because they're starting to sign these long-term contracts, like they mentioned, average about 3 years, $100 billion of minimum contracted value. And so, you know, really the margin story, though, it's all pricing, and it continues to be pricing because unit growth is just limited. There's capacity constraints in the entire industry, and so they're unable to ship as many bits as the market demands, and that's just going to drive pricing up.
How much longer? I mean, when you start seeing margins that are nearing all, right? I imagine more competitors will want to build capacity as well. So that's going to come on quickly.
Well, the problem is that there's just a long lag time between when you can actually build this capacity and when it starts to actually have wafers coming out of the fab. I mean, it can take up to 3 years. I mean, if you try to build these fabs really fast, maybe you can get under that 3-year mark. But still, I mean, if AI demand continues to accelerate, even with some demand destruction potentially on PCs, smartphones, consumer-related products, there's not really any specific supply alleviation that's going to come in the next 2 years. So, I mean, our view is that at least through 2027, probably into 2028, we're going to see pricing increases. But we're also probably not going to see 60, 80% quarter-over-quarter growth. Probably going to start to decelerate at a pretty rapid clip. Doesn't mean that we won't see upward revisions in that period, though.
Even so, again, NVIDIA's best quarter ever for their margins was 77%. So it's like even blown that out of the water. And I just wonder how much you look at that and say that's just bad news for a lot of other people. Like surely for the hyperscalers when they're building out data centers, this is taking up the lion's share of their budgets.
Yeah, I mean, look, if they're increasing their margins, Micron and peers, someone's paying that margin, right? And so as long as pricing continues to increase, hyperscalers, other customers, I mean, if you're buying an iPhone today, I think they made an announcement this morning about MacBooks and other products. You're going to have to pay up for that as well. And Apple's trying to protect their margins, which unfortunately comes out of our pocketbooks, right?
Yeah.
So, yeah, hyperscalers have to pay. I think the reason that they're signing these contracts, though, is because they want some pricing stability. It doesn't mean that pricing won't increase, but at least they have an idea of how many bits can we actually lock in through 2030, for example, and on top of that, what pricing are we actually going to pay within some sort of band? So they kind of have an idea, get a little bit more comfortable with some of these pricing agreements long term.
Okay, Jake, thank you very much for joining us. Yeah, Apple increasing, I think it's a 20% increase across their products and prices. Bloomberg Intelligence analyst Jake Silverman. Elsewhere, JP Morgan has announced leadership changes upon Marianne Lake's retirement. Troy Rohrbaugh will take on Lake's role of CEO of Consumer and Community Bank and named co-president with Doug Pento. Pento will also become the sole CEO of the Commercial and Investment Bank. Bloomberg finance reporter Catherine Doherty joins us now around the desk. And whenever there's people moves at JP Morgan, the question always is like, oh, is Jamie getting closer to retirement? Is this all succession?
That's right. It sparks a whole new round of questions. And I think not only is there the question of who will succeed Dimon one day, but there's now this question of Marianne Lake. What will she do next? Yes, she is retiring from JP Morgan. We will not see her in this role that she has held, and she was really talked about as a potential successor. So if that is not going to happen, it raises the question of what's next for her. She is likely to take on a role in the industry, so it's just a matter of where she ends up. But thinking about JP Morgan's future, you do have these two new co-presidents that are taking on these roles. It sets up an opportunity for both Troy and Doug to really step up, and both the consumer bank, the commercial bank, they're going to take on this co-president leadership, and it's once again going to put them in the limelight for potential successors to Dimon.
Yeah, I mean, Jamie Dimon said that this is an important step in their thoughtful process around succession planning. But it seems like they just keep throwing out or discounting those that are closest to the throne.
That's right. However, a co-president role is putting you very, very close to that throne.
Right,
So,
and she was in it, and now she's out,
and
right?
that's absolutely
and Jen
right.
was in it, and now she's out. So, like...
But Jen, I believe it was
she's
her
COO.
own,
Yeah.
and it was her own choice to take herself out of the running. So we are kind of narrowing the list, but you're making a very good point that it seems that every couple of months we hear an update in terms of some leadership changes that bring up these questions, and then we never get as close to announcing the one day biggest question of who is going to succeed Dimon as CEO. But the comments today from Dimon himself, he's saying that it marks an important step in the board's thoughtful process around succession planning. I don't know if I'm reading into that further than I need to, but it is supposed to be, I think, another signal of where things could go in the future of the biggest U.S. bank.
Catherine, we also heard from Jefferies yesterday, which tends to be one of the first financial institutions to post earnings. It feels like maybe this is another quarter where they're out of step with the bulge bracket banks because their earnings didn't look great. It's their asset management division. Is this still First Brand's hangover? What's going on there?
So the asset management division, yes, still has some lingering. They're working through both Hildene, which they announced a few months ago that they would be buying a 50-50 stake. So that is something that they're working through, and it's going to carry through into potentially another quarter, into the third quarter. But their core businesses, investment banking, trading, were up 50+%. So they're really highlighting not just the strength in the second quarter, but looking ahead, there's a lot of commentary in their statements today. I talked with President Brian Friedman yesterday about their pipeline, which they are really looking forward to the rest of 2026, highlighting a lot of strength. They're talking about confidence that they're seeing from both consumers and from their commercial clients about M&A in the future, IPOs. So there's a lot of rosy commentary, but you're right. In terms of the asset management business and expenses, those were two drags that some analysts were calling out today that I believe is what is the reason for the share reaction that you're seeing being down.
All right, Catherine, thanks so much for joining us. Catherine Doherty, our finance reporter on the moves at JP Morgan and the stress test results and what's going on at Jefferies. Let's get to economics because we had a ton of data out at 8:30. Personal spending unexpectedly climbed in May as Americans power through the inflation fallout from the Iran war. Let's bring in Bloomberg macro strategist Michael Ball. So income and spending are a surprise. PCE is not a surprise because we can calculate it ahead of time, but still the core number quarter over quarter was up 4.4%. We're at a 3-year high with inflation.
Yeah, it came in line. The monthly was about 0.2. There was worry because the super core for CPI was a lot hotter. And obviously, when we get PPI and we get the import data, we kind of know what PCE is going to look like. So this was right in line. The market took some comfort. You saw the initial jump in risk sentiment, which had already been kind of going all night because of Micron. But again, the consumer spending data is probably the best news, because after we got the final Q1 revisions, we saw consumer spending in Q1 marked way down. And that was obviously old news by now. And the Q1 data actually went up because we had less imports. But that was a kind of eye-shocking final estimate, which we now know that the consumer really was decelerating in Q1. So we want to see that obviously pick back up. We don't want growth just to be about the AI CapEx. We need to have this consumer step back in.
Are we also, though, about to get a round of AI-fueled inflation if companies like Apple that are consumer-facing are hiking prices by 20% because of memory costs?
Yeah, it's funny because finally we're starting to see estimates of the tariff impact finally stabilizing. We know the headline from oil will come off. We'll take some time for gasoline and all that to work its way through.
Well, hang on. We're going to get a new round of tariffs, right? So.
Well, TBD. Yeah, you're right. It's very hard to keep up with what's going on there. It seems to be kind of a whack-a-mole what section we want to use and what the impact will be. But let's just say the actual effective tariff rate now is more stable and that we've already seen that come through. But to your main point, yes, the consumer is now going to have some kind of electronics / capital goods impact. And I don't know what to think of that because I don't know how often I touch points on these things, but it's real.
All right, Michael, looking forward to your coverage, continued coverage. Check out MLIV Go on the Bloomberg terminal to follow macro strategist Michael Ball and his colleagues. Let's look at what's going on in the markets after that blowout report from Micron. We get the NASDAQ back up more than 2% on the futures trade. You have S&P futures up 0.75%. The 10-year yield coming down, and 438 looks pretty low right now, as well as Brent crude at 73.25.
Elsewhere in individual moves, one of the ones we've been talking about all morning about Apple raising their prices to counter the memory chip shortage plaguing hardware firms is a 20% hike. Shares not even off 1% on that.
Wendy's surging again after becoming a meme stock yesterday, with viral Wall Street bets posts saying investors need to, quote, save Wendy's before it's too late. And the stock is up another 10% in the pre-market.
Good for Wendy's. Ford also in the news, Matt, so I hear.
Yeah, Ford, the top mainstream car maker in the latest J.D. Power initial quality survey after rehiring hundreds of veteran engineers, graybeards, they call them. Plus, they're using technology and new factory processes. I mean, they were number 15 in quality in 2023. They were number 10 last year. So regaining the number one spot.
Isn't there also a bigger AI story here? I wonder how many companies are going to have to follow that path and be like, oops, we let go too many people. We actually do need humans.
It's something we're going to hear about from Jim Farley, the CEO of the Ford Motor Company, on the other side of this break. This is Bloomberg Open Interest.
Welcome to Bloomberg This Weekend. I'm David Gurray.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that.
And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Let's get out of high interest. Look what's happening around the world. Venezuela's earthquake death toll has climbed to 164, with over 1,000 people injured after powerful back-to-back quakes struck near Caracas. Rescue crews are searching collapsed buildings as outages persist across the country. The government has launched a $200 million reconstruction fund, while the U.S. and the UN are sending humanitarian aid and search and rescue assistance as well. Iraq is warning it could leave OPEC if the group doesn't raise its oil production quota. Baghdad says it remains committed for now, but wants an output ceiling that reflects its growing capacity. An Iraqi exit would be a major blow to OPEC, raising the risk of more oil supply and renewed price competition among producers. And Ford says AI alone wasn't enough to fix its quality problems. The automaker rehired 350 veteran engineers to retrain AI tools and mentor younger staff. Importantly, the strategy helped Ford become the top-ranked mainstream brand in J.D. Power's latest initial quality survey. I spoke with the CEO, Jim Farley, this morning.
It took us 4 years of hard work to be an overnight success story, because now what I'm seeing is the team really focusing on long-term durability.
Can you get into specifics of how you did it?
Yeah, if you were to visit today the Rouge plant where we make the F-150, Matt, what you would see is a whole control center around data and quality data. So we measure the torque of every one of our fasteners. We have AI tools for vision systems. But most of all, it's just old-fashioned hard work of our team members all working together to pay attention to the very small details that will make a difference between a perfectly built Ford and an okay built Toyota. It's just an incredible attention to every single detail.
So, I mean, it's interesting now that we're in the age of AI and we're talking about this technology killing jobs, but it seems like in your case, it's really experienced human workers that made the big difference.
It did. I have to say, the process coaches, the area coaches, you know, they get up every morning. They look at the last shift's quality data. We look at how many vehicles are repaired. And we work that process every moment of every day. Every employee walks into any one of our plants. They know exactly, are we winning or are we losing yesterday and today? Everyone is fully aware of where we stand. We know exactly where Toyota is. We knew exactly how to, you know, where we needed to get to beat Tundra and Super Duty better than any of the other domestic competitors. And so everyone is aware exactly the quality that's coming out of our plant in any particular shift every 50 seconds. And that human motivation to pay attention to everything is amazing. Look, we make 85% of our vehicles in the U.S., Matt. That means these are U.S. factory workers versus even our domestic competitors. They're some of the biggest importers in the U.S. We're not building these vehicles in South Korea or Japan. These are American workers beating Toyota and Hyundai and our domestics who import their vehicles. We beat them all with American workers with the attention to detail.
It's an incredibly compelling narrative. I agree. Of course, being at Bloomberg, we're focused on the numbers, and quality issues, recalls, and the like had dragged down profits and margins to some extent over the past few years. Can you quantify in dollar terms how much this will contribute to your recovery this year?
hundreds of millions of improvement. We're seeing our warranty coverages come down. We're seeing our recall costs come down. These are all contributing to literally hundreds and hundreds of millions of dollars of a tailwind for Ford on cost. But we didn't stop there. We also negotiated our parts costs with our suppliers. We've looked at all of our bill of material and even our manufacturing inventory in our plants and all our manufacturing logistics costs. All of that we think will save between $2 and $3 billion of controllable costs this year versus last year without restructuring.
How important is this for Ford Pro, and does it change the picture at all?
Well, good question. I would say for Ford Pro, really what this means, Build Ford Tough really means something to our Pro customers on the vehicle side. But what we're really seeing there is an obsession with long-term powertrain durability. We're testing every engine, 200,000 to 300,000 miles with transmissions, axles, everything. So those Pro customers who use their vehicles literally 90% of the day to run their business, they can not only be happy with 90-day quality, but also 5 to 10-year quality. That's what it means for our Pro customers. They absolutely love. We're approaching 1 million subscriptions now for Pro.
That was Ford CEO Jim Farley. We're going to play more from that interview in the next hour. I will make a quick correction on behalf of Jim and the Ford team. They think that they'll save about $1 billion in costs without restructuring. He said it could be 2 or 3 this year. But it was fascinating that they are now looking at maybe 30 to 40% subscription growth in the Ford Pro business. I mean, that's annual recurring revenue, right? Which isn't what you typically think about from a car maker. BMW started trying that years ago, and Ford has been really successful with that at Pro. He also said he cannot confirm that Max Verstappen is going to race for Ford Red Bull next year. I mean, he is going to stay in F1, right? Max has said that, but we're not yet sure if he stays at Ford Red Bull.
There's been a lot of speculation that he does leave. Maybe he goes to Mercedes. I don't know who loses the seat at Mercedes. But, I mean, that would be such a huge... George probably. Russell. It would be such a huge loss for Red Bull Ford. I mean, it's also so cool to see Ford in F1, I have to say. And I love that you get to ask Jim Farley about these things.
Yeah, and it was very cool because he talked about the fact that their powertrain was they were so successful at adapting to the new powertrain that they're being held back by the rules, this sort of balance of power in
By the way,
F1.
how much relationship is there between Ford developing these engines for F1 and using that same technology back in their consumer business cars?
Of course. I mean, that's been the story since, racing began. That technology bleeds into the things that, if you get a new Raptor, and you're looking at a turbocharged V6 engine that makes, close to 500 horsepower. So that all comes from F1 technology.
You can be your own personal Max Verstappen.
That's right. But hopefully not in a pickup truck on the FDR.
Correct. Coming up on the show, we're going to catch up with UBS strategist Nadia Lovell on the inflation outlook and tech volatility after that blockbuster beat from Micron. That's still to come. You're watching Open Interest.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
We break 3 days of losses. We turn to gains saved by Micron after a huge earnings beat by 16% yesterday and margins of 85%. NASDAQ up 2.2%. The S&P up 0.8% as yields come in as Brent crude continues to drop. On the other side of this break, we'll have your market open alongside Nadia Lovell.
As an exchange, what can you do to make it more attractive to be a publicly traded company?
Talk to our customers. We spend a lot of time with our listed companies, listening to their concerns, particularly the offices of the CFO, head of IR, listening to their pain points, general counsels as well, and then act as an advocacy group for those companies to really focus on structured reform to allow a company to tell their story in the most efficient way possible and reward them for the good disclosures that they are making in the market.
Is there any sort of financial innovation that you could drive to get more companies to list? Tokenization has come up.
Well, we did announce our tokenization initiative earlier this year. We already built the technology, we've already done a variety of proof of concepts. It allows for instantaneous settlement, 24/7 trading. It importantly allows for the rights associated with a share to move into that electronic form, but is going to be a platform that runs in parallel to our more traditional exchanges.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you the most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
All right, moments away from the start of trading. This is Bloomberg Open Interest. I'm Matt Miller. We are looking at a pretty decent rally today after a blowout number from Micron. Many blowout numbers from Micron in terms of earnings, but the 86% margin is really the eye popper. S&P futures up 0.75%. NASDAQ futures gaining more than 2%, and Dow futures up about 0.5%. We've got a couple of IPOs as well. Doncaster's ringing the opening bell at the New York Stock Exchange. Lynn Martin is back. And down at the NASDAQ, you've got DSC, which is Dasuche Holdings. They make like some kind of AI application layer stuff for car sales, for used cars. So both are automotive, right? Doncaster's is automotive and aerospace, and Dasuche is helping people sell used cars, I guess in China.
Themes of this, well, actually makes sense. They're both red and white themed, it would seem. So similar like vibes going on with both of them. Anyway, more importantly than vibes, I'm looking at Micron this morning. And Matt, maybe you can check this when you get back to your seat, because I just have a feeling that Micron is getting dangerously close to the market cap of Meta, or I can look it up in a moment, with this 17.7% gain. Thank you very much. I will play for time while you do that. So we're up 17%. You mentioned it. The margins were just crazy for Micron. 85% this quarter, 86% by year end. The hyperscalers have to pay that. Apple has to pay that. It is hoovering up the capex of all of these companies. But the good news is it reassures investors that demand is strong for the near future. Analysts also just point to this earnings being the best visibility in semis, and that the supply shortage means an AI bubble will not burst in 2026.
So Micron is worth $1.382 trillion.
Yes.
Meta is worth a little over $1.4 trillion.
Okay.
So they're almost there.
So close.
And by the way, so the whole PE outlook obviously resets with a different earnings number and, and a stock that's almost 20% higher. The forward PE is now back down to less than 9. Wow. So Micron's forward PE is 8.92.
Yeah, it's still being priced like it has that like cyclicality of chips, and I wonder if that's going to change given what we're talking to Jake Silverman about
Well,
earlier.
I'm going to ask Nadia Lovell about that in just 1 second. But let's first look at Qualcomm, also lifting risk sentiment after forecasting $15 billion in annual data center-related sales by 2029. The CEO there, Christian Amon, says custom chips for everyday items like smartphones are a huge opportunity. That's maybe a segment of the chip sector that we've been looking away from as we're so focused on high bandwidth memory. Let's bring in UBS Global Wealth Management Head of Global Equity Strategy, Nadia Lovell, joining us here on set. Good morning.
Good morning.
Thank you so much for coming to the show on a day when, I mean, fears of an AI bubble have been dispelled for now, and some of these stocks just look cheap. What do you think about like 8-9 times earnings on a stock that's run up 1,000% in the last year?
And what that is telling you is that the earnings is there, right? You're not seeing multiple expansion. As you said, the multiple has been coming in. And this is why we remain bullish on the AI outlook. I mean, when you think about it, like, this is a different cycle. This is a different memory cycle. I know historically people have looked at memory as being cyclical, but there's something happening structurally. As we get more AI agents, as we move towards AGI, what makes us uniquely human is our experiences and learning from those experiences, and that requires memory. So we think that memory is going to be a part of the structural story for AI, stickier, and have a longer legs to go within the trade. And yes, you've seen the stock run up, but we think that there's still more to go because the earnings momentum is with them, and we think that the estimates probably still remain too low. When we think about the CapEx cycle, we are looking for over $800 billion this year in global AI CapEx. That could reach over $1 trillion next year and even grow further from that in coming years. And so we think that these CapEx beneficiaries all the way to play the immediate AI story.
I just look at those margins and how much the hyperscalers need to spend and think surely that's bad news for others. And I think about other things that need to go into data centers, things like optics or energy or resources. If the hyperscalers have to spend so much of their CapEx on things like semis, on Micron, on memory, isn't that bad news for everything else that goes in because there's just less money to go towards the other components?
Not at all. Like, the way we sort of position in our transformation, innovation, opportunity AI portfolio is very much in line with some of the areas that you have talked about in terms of exposure to semi, high bandwidth memory, other part of memory, optics, network interconnectivity, and so forth. But we also think that it's important to also look at some of the platform companies that will be able to the scale. This leg of the trade of the AI is definitely a focus on the infrastructure names, but at some point it will also transition more to the monetization and the application layer of the AI trades. So we think that it's important to have diversification across that. And it's not necessarily, absorbing all of the attention from the other areas. It's just the way we are in the cycle right now. And we do think that the opportunity set continues to broaden out. I mean, you argue just a few years ago, there was a different stock that we all talked about, right? We're not talking about it so much more. We're talking about the memory. So it's important to focus on where the bottlenecks are, and those will change over time.
I am fascinated by the Apple story because I'm old enough to remember when Ben Bernanke was citing a drop in iPad prices. And some reporter in the pool said, I can't eat an iPad. But this really is part of the bigger inflation picture, isn't it? I mean, we're seeing substantial price increases from these memory chip makers, and maybe they're not even rising up to spot now. But as a result, the producers that use these products are having to raise prices 10, 20, 30%. Does that worry you?
Yeah, you are seeing some impact from the AI capex boom and prices and the tight supply chain that's feeding through inflation. But when you think about from a consumer inflation, I mean, consumer electronics isn't a large part of the bucket for CPI, and so we don't expect any meaningful movement off of the price increases that you're hearing from some of these smartphone providers.
But the numbers are high. The inflation numbers. I mean, 4.4% was the core PCE quarter over quarter.
But you look at some of this, right? Some of this also has to do with tariffs. I mean, our economists put anywhere about 80 basis points or so are being contributed from the tariff pass-throughs, and so we think that will start to fade as we get into the back half of the year. I think the focus should be more on are we at peak inflation, and not necessarily where we have been, but where we're going from here. In our view, we have seen peak inflation, and we think that inflation will start to moderate from here. No, it will take us some time to get back to the 2% target, but reality is when you have the fade-in effect of tariffs, you now have the energy complex that's coming in. We think that by the time you get to next year, inflation is much lower than where it is today, and that will give the Fed some room to be able to adjust monetary policy and cut.
Well, adjust monetary policy. They'll just be sitting in committees.
Right.
They've got task forces. Yeah.
Okay, wait, hang on. The thing with the task force, because I was thinking about this today. So you have all these task force, right, that theoretically put together all this stuff that maybe is more dovish and allows you to cut. Nadia, does it even matter, though, what the task force come up with? Because you need the rest of the FOMC to agree to these things. Is the task force just a play for time for Kevin Warsh, but ultimately make no difference when it comes to policy?
No, I think it could make a difference when you have 5 different initiatives around a task force to sort of reassess everything. But at the end of the day, the Fed is going to be data dependent as well, right? And so if the data is moving in a direction that we want it to go, particularly from an inflation standpoint, we also think that the bar for a cut, despite the fact that the market is pricing in, nearly 2 cuts for this year, our base case is that we think that the Fed remains on hold, and we think that the bar for a cut is high. That would require acceleration of inflation expectations to be significantly higher. Also, it would require for growth to reaccelerate from above to above 2.5%, and the unemployment rate to come down, probably something with a 3 handle. We're just not seeing that in the data today, and there's nothing to give us reasons to think that the data will look like that in 3 months to justify the Fed to move to a hiking cycle. What it does mean from our view of the hawkish read is more that the Fed is probably on an extended hold, right? But we do think that the data will shift such that the Fed can cut in the first half of the next year. Now, we do appreciate some risk to that view, but we think that it's more likely to be a longer hold than, say, a pivot to a hike.
For some reason, Bank of America is still forecasting 3 hikes for this year.
That's kind of been a joke.
The task force.
Yeah.
I know. It's been a point of contention.
We don't think that the Fed is going to move until at least a task force work is done. And, indications are that we'll start to get something in the fall, and the work should be done by year end. So it feels like the Fed, there's enough of the data to allow the Fed to remain on hold while a task force does this work. And the task force could eventually shift the Fed to be more dovish.
Okay, Nadia, so great to have you on.
Thank you.
Wonderful to see you. That's UBS Global Wealth's Nadia Lovell. Let's get a check on your equity markets because it is Micron and the chip makers and the semis and memory and all of that is leading this market higher. We're up 0.5%. Breath is pretty good. We have 357 or 58 stocks moving to the upside. So again, Micron adds 26 points to the S&P, which is up 40 points right now. So more than 50% of the gains of the S&P 500 are responsible by, or Micron's responsible for that. SanDisk also having a good day. AMD, Applied Materials, Intel, Seagate, West Digital, all of the biggest contributors to the advances of the S&P are semis. And all the decliners are Mag 7s. Meta is on track for its worst month since 2008. Apple, the biggest loser in terms of points, down 4% after they announced a 20% hike in the cost of their products because of Micron, because of how much memory costs. Amazon, Alphabet, Microsoft, all of them having a very bad day. Mag 7 so far from leading this market again. So when it comes to the movers, again, tech does well because of the chip makers, not because of Mag 7. Communications is down because of the Mag 7. So your top buckets are infotech, industrials, healthcare, and utilities, Matt.
It's, I picked a bad year to have to upgrade my iPhone.
Yeah. No, it's true, you did.
And my MacBook.
But maybe, look, like President Trump, and, you know, I want to ask Mark Gurman about this. President Trump yesterday was talking about oil prices and that they want to investigate, the DOJ wants to investigate. Like, what if Apple's the next target and he investigates why they're hiking prices?
And he has a really good relationship with Tim Apple, so maybe he gets a call. Coming up, we'll talk about all of this with D.A. Davidson's Gil Luria. He says Micron is offering investors the best view of the AI semiconductor market. He joins us next. Then we're going to talk to Mark Gurman about these Apple price increases, 20% hikes across the product lineup. So that's going to hurt. This is Open Interest.
Wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is, like, very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Technology is embedded in every aspect of our lives, and that revolution is playing out in real time. From finance to defense tech, AI to entertainment, from the road to the stars. Bloomberg is bringing you the stories of companies and people that are pushing tech to new frontiers and the politics reshaping global tech markets. I'm Ed Ludlow, live in San Francisco, and this is Bloomberg Tech.
Every weekday, only on Bloomberg Television.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Let's hear from the sell side and get your top calls this morning. First up, Barclays cutting Jack Daniels maker Brown-Forman, saying its fundamentals are lagging peers. Demand for spirits is staying pressured and weighing on margins. Cossar shares are down 2.5%. Next up, JF Securities, they've cut Dell, saying the stock's valuation looks stretched after a sharp rally. They also say that the current valuation suggests limited upside, especially as its PC business moderates. I gotta imagine, though, this sell-off is more just because of the high price of memory that Apple and peers are trying to deal with. So Dell down 9% this morning. And finally, analysts are very positive on Micron. The chipmaker blew past expectations and said AI demand is still going strong. Citi, Cantor, and D.A. Davidson are all raising their price targets. Analyst Gil Loria says Micron has some of the best visibility in the chip industry and that the AI memory boom, Matt, is far from over.
Let's, in fact, talk to Gil Loria right now. He joins us from D.A. Davidson, where he is the head of tech research. He has a buy rating on Micron, as Danny just showed you, with a $2,000 price target. Gil, give us some color, if you could, about pricing power and the pricing environment that we're in right now, because I imagine the executives at Micron don't want to push companies like Apple to a place where they find these prices unsustainable or very difficult to deal with and have to raise prices on everything 20 or 30%.
That's right. So memory is now so important that Micron gets to dictate the terms. And what they could have done is maximize short-term profits, let prices go to the moon, and hurt their customers by doing that. They decided, no, what we're going to do is we're going to trade off some of the upside to make sure we have downside protection, to make sure we have visibility for the next 5 years. So they went ahead this quarter and signed long-term deals with all these companies, 5-year deals that say, hey, there's a floor price. You're going to prepay us that floor price for the next several years to make sure we eliminate all of our downside. And in exchange, we're going to cap the prices as well. So you, our customer, the hyperscaler and Apple, have visibility. This is a different memory market than it's ever been. The power these companies have now is completely different. And the reason is that the nature of the memory market has completely changed. It's gone from 3 years ago being a commodity storage device to now being a key part of how AI is delivered. And that's the value these memory companies have. And now they're realizing that value, cementing it and locking it in for the next 5 years.
Gil, could demand destruction exist in this industry, or does it not matter if Apple sells less products because on the AI side of things, that demand isn't going anywhere?
So let's divide the market into its two pieces, right? There's the data center market. That's where the high value added memory is going to, especially high bandwidth memory. That's what a lot of what they just locked in. That is the part of the market where the prices have gone up, the demand is great because of AI. That's the key value-added market. Then there's the handset and PC part of the market. That part is a lot more commoditized. The prices have gone up there a lot. But again, they just helped Apple by locking that in for the next 5 years. Apple has visibility. In exchange, they're paying more and raising the prices. Now, what's important to note about Apple is, yes, there's going to be some demand destructions as prices go up by, say, $100 for a handset or a computer. But relatively speaking, the price is going to go up a lot more for Apple alternatives because they're at lower price point, and the increase is still going to be $100. So Apple is in a position to actually gain share as prices go up across the board because on a percentage term, their products are going up by less than the low-end Android devices and the PC market. So from an Apple perspective, there's two sides to the coin. Yes, there's going to be some demand destruction as prices go up, but they'll actually be in a position to gain share because it's going to hurt their competitors more.
Gil, what happens when, if everybody floods the market with capacity? There's so many high bandwidth memory chips, we don't know what to do with them in, say, 3, 4, 5 years. And I've seen this happen with DRAM and Micron specifically in the past, and you have multiple times, I'm sure. How far off is that? And does a company like Apple then just find someone else?
That's many years off. And actually, the memory market is actually, believe it or not, one of the least competitive markets. It is truly an oligopoly. DRAM and HBM is really just SK Hynix, Samsung, and Micron. And because all these companies make their own chips, there's nobody else coming in. If there was, we would know 2 to 3 years ahead of time. Now, all three of these companies are expanding capacity. There will be some capacity coming online in 2028, et cetera. But demand is growing so fast that that capacity is probably not going to be enough either. So this ramp could last longer. But again, going back to my previous point, I really want to emphasize, this is a different memory market than the one that collapsed in 2023. Back then, it was entirely invoice-based. It was a true commodity. It was a fungible product. You could buy it from Micron. You could buy it from SK Hynix. You could buy it from Samsung. It is no longer the case. NVIDIA co-designs its GPUs with the memory makers, so it's buying a specific type of memory for what they're doing. So it's no longer a commodity. And what really put an exclamation point on that is they signed these 5-year deals now. It's a completely different market than the one in 2023 that scared everybody away from memory. We would argue that memory is a better market than CPUs right now. Not that you could tell from the stock, AMD and Intel are trading at 40, 50 times and above.
Right.
Micron, as we sit here today, is trading at less than 10
Gil,
times earnings
I just want to jump in because I've only got literally 30 seconds here. But if Trump can order the DOJ to investigate gasoline prices, what's to stop him from investigating this market and higher prices that are being pushed to consumers?
That's exactly why it makes a lot of sense from Micron to just lock in prices where they are now and not keep raising them, to make sure that they're not challenging their customers, they're not infuriating the government. They lock in the prices, they eliminate the downside, they're allowing themselves to go to investors and say, it's a different memory market.
Right.
You can pay a much higher multiple for our stock.
Okay, Gil, thank you very much for joining us. D.A. Davidson, head of tech research. That is Gil Luria. And again, as we've been discussing, Apple is raising the price of Macs, iPods, and iPads rather, and home. No one has iPods anymore. iPads.
Oh my God! Do you even remember? You had an iPod?
Yeah, of course.
When you were 8.
No, I was older than 8. It had the little spinny wheel. Listened to it in the gym. It was great. Okay, so it's those things, home devices, all to counter memory chip shortages. Price hikes range from $100 to over $500. So the high water mark, I think that's about 20%. Mark Gurman, Bloomberg managing editor, has been covering this story for us. Mark, I mean, just break down, like, historically, just how big these price hikes compare to moments past. Is this a real squeeze that Apple is facing right now?
As far as I'm aware, there is no precedent. There is no moments past. Apple has not, at least as long as I've been covering the company, which has been well over 15 years at this point, a broad set of price increases like we saw this morning. Mac price increases, iPad, Apple TV, HomePod Mini, Vision Pro. We're talking about very significant changes here to the starting prices of Macs. The MacBook Air going up a couple $100, the iMac going up a couple $100, Mac Studio going up by $500, Mac Mini going up by a couple $100. You saw the entry-level iPad go up by $100, the iPad Mini go up by $100. Even something as small as the Apple TV set-top box is going up from $130 to $200. And if you follow the set-top box market, that's a huge price increase when a lot of these devices are in the $50 to $99 range.
And it's a year, I mean, it's a year in which I have to personally upgrade almost all of these things. But that's because of AI. I want to be able to, vibe code a whole bunch of Claude bots, so I need a new computer. And I imagine everybody's in the same boat, or many people are in a similar boat, right? Gil Luria was just saying that the lower price competitors to Apple also are going to have to raise prices due to the memory chip situation. So do they gain market share even as they raise prices at an unprecedented level?
I'm not sure how much of an impact these price increases are going to have on purchases to begin with. They're going to launch their new university offer next week, I believe. So this is their back to school special that will help people jump in there. The MacBook Neo at $700 is still a really good deal. The MacBook Air at $1,300 is still a pretty competitive deal. These price increases are happening really in back to school season, where most of these laptops and Macs are getting purchased ahead of the holiday season. At the same time, this is going to do good things for overall revenue. Profits are probably going to stay in line given these price increases. Yeah, and to the previous guest's point, other companies are raising prices as well. So it's not like Apple is unique here. In fact, they've been one of the laggards, and I say that in a positive way, for price increases. They've been shielding customers, as they say, for many months on this now. We've seen several other PC makers and consumer electronics companies already raising prices. So Apple's really coming in late here. And, for the first time, they're coming in late for a good reason.
All the device makers getting crushed today, so the market making its own decision. Dell also down 9.5%. Mark, quickly, I mentioned this to Gil Loria, too, this idea of politics coming in. The president is no stranger to speaking to Tim Cook. Affordability is on the ballot for the midterms. Apple products are obviously highly visible, just given the amount of Americans that purchase them. Is there a real risk here that there's some political risk to take into calculation now?
Yeah, I don't think there's political risk. I think that consumers have been prepared for this moment for several months. There's been an understanding just among people that prices are going up right now in the technology landscape. And I think there is an understanding from people, even though this is like really nitty-gritty stuff, that this is happening because of AI and because of memory and some such. And I don't think the average person is going to make this a political thing.
Mark, great to get some time with you. Really appreciate you joining us. Mark Gurman is Bloomberg's managing editor and our Apple whisperer. Always read his columns to catch up on the latest. And we're going to do that in the next hour with Adam Hetch from Janice Henderson. We're going to talk or hear more from Jim Farley, as well as Bob Sloan, as the market turns from gains to losses.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
Oh! You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. When you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizon's Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg. bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Bersetchi in El Ola, Saudi Arabia, and this is Bloomberg.
News. I'm Sherry Preston. Rescue teams have been racing to areas hardest hit by a pair of powerful earthquakes in Venezuela. They struck within a minute of one another, killing at least 164 people, injuring nearly 1,000 and trapping many beneath collapsed buildings. Secretary of State Marco Rubio in Bahrain for a gathering of Middle East countries, saying the U.S. search teams are already on their way there.
The airport there is badly damaged, so we'll have to rely on the Department of War to deploy assets there. And then we're also helping them with some overhead imagery, especially in coastal areas where they don't have full visibility over what the damage has been and what the impact has been.
The number of people killed and hurt in the quake is expected to rise. The price of oil has gone down as more ships pass through the Strait of Hormuz. The price of everything else, however, is still high. ABC's Jim Ryan with more on inflation numbers released this morning.
The government's favorite measure of inflation was up 0.4% from April to May and 4.1% above May of 2025. Take out the volatile food and energy components, and the PCE showed a more modest increase month to month and year to year. Wall Street's investors fear that inflation would be worse, so the major stock indexes went into today's trading on a high note. Jim Ryan, ABC News.
The markets have just opened. Right now, the Dow is up 224. Madrid hit 107 degrees yesterday, Paris 104, and London 102. ABC's James Longman with more on the great Western European heat wave.
The heat dome has even caused power outages. One UK hospital declared a critical incident after cooling systems failed, and Europe's tourists are caught in the middle.
A lot of things got shut down, so it was really disappointing.
The Eiffel Tower and Louvre once again restricting hours. Hundreds lining Paris canals and pools to escape the heat.
Dozens of people have drowned trying to cool off. Here in the United States, triple-digit temperatures in the Southwest expected today, including red flag fire warnings in Utah. You're listening to ABC News. Will Taylor Swift and Travis Kelce tie the knot at Madison Square Garden over the 4th of July?
New York City officials tell ABC News an event company has filed a permit requesting closure of the street outside Madison Square Garden from July 2nd to July 4th, a potential sign of planning for a Swift-Kelce wedding reportedly taking place July 3rd. The official said the permit application also requested permission for an exterior canopy that could be used to conceal comings and goings, and listed the size of the event between 500 and 999 people.
ABC's Aaron Katursky. An explosive Capitol Hill meeting on Iran and a change of heart following it. ABC's Mary Bruce with more on a fight over the War Powers Resolution, which passed by the Senate Tuesday night, a vote that was reversed last night.
Motion is not agreed to.
Senate Republicans reversing course to align with the president, rejecting a previous bipartisan rebuke of Trump's war powers. Two Republican senators, Bill Cassidy and Rand Paul, changing their votes. The about face coming just hours after the president's meeting with Senate Republicans on Capitol Hill descended into a shouting match over the war in Iran. Trump furious, lashing out at several Republicans, including Cassidy, who previously voted to limit his war powers.
Sharp increases in prices for Apple products, between $100 and $300 for each device. Apple says it's caused by a surge in AI products. Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, originals and the Bloomberg Business app.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we're streaming live on YouTube as well. Scarlett Fu out today on assignment. Not to worry. Alexis Christophorus is sitting in for Scarlett for the next 2 hours, so we are in good shape. Supreme Court day today. I see one red headline crossing the Bloomberg terminal. Supreme Court shields Bayer from Roundup cancer warning suits. The stock is halted in Germany and in Europe, up 3% today, but ADRs in the U.S. up about 12%, so we'll have more reporting on that going forward. Coming up today, we'll check in with Mandeep Singh, Global Tech Research Head at Bloomberg Intelligence, get his thoughts on Micron, some really, really good numbers there. So that stock is trading higher. Thomas Hainlin, National Investment Strategist at U.S. Bank Asset Management, get his thoughts on the markets. Rob Barnett, Bloomberg Intelligence, Senior Energy and Commodities Analyst. We'll talk to him about the oil markets. We got oil, WTI crude oil sitting right around $70 a barrel, down sharply from where it was during the beginning of the war. Stuart Paul, U.S. economist with Bloomberg Economics, who give us his thoughts on that PCE data there. So we'll keep an eye on that. But right now, let's kick this whole thing off. We'll go down to Washington, D.C. Amy Mars with the Bloomberg Business Flash. Amy.
All right. Thank you, Paul. This Bloomberg Business Flash is brought to you by IBKR. For the past 3 years, Interactive Brokers' individual clients averaged 24.3% annually, beating the S&P 500. Lower costs and access to 170-plus global markets matter. Visit ibkr.com/performance. This is crossing the Bloomberg terminal. The Supreme Court is shielding Bayer from tens of thousands of claims that its Roundup herbicide should have been labeled as a cancer risk. It is a ruling that will help end a decade-long flood of lawsuits that have cost the company more than $10 billion. And checking the Bloomberg terminal, Bayer shares are now interrupted for volatility. They've stopped shares for Bayer for now. We have got economic data and Micron's outlook lifting stocks. We do check markets for you all day long at Bloomberg. S&P 500, 0.2% higher. NASDAQ's about 0.5% lower, and the Dow is about 1% higher. The 10-year Treasury yield at 4.36% and the 2-year yield at 4.09%. The Federal Reserve's preferred inflation gauge rose to a new 3-year high in May as gas prices peaked. PCE rose 4.1% last month from a year ago. That's the most since April of 2023. And if you take out food and energy, prices were 3.4% higher from last year. The U.S. economy grew at an annualized 2.1% pace in the first quarter, faster than previously estimated. First quarter GDP revised up 2.1% compared with the second estimate of 1.6%. Weekly jobless claims fell 12,000 last week to 215,000. That's another sign of a stable job market. Micron Technology shares now nearly 10% higher after the memory chip maker gave a stronger outlook than expected. And Apple is raising prices of iPads, Macs, home devices. They're offsetting cost hikes caused by a shortage of memory chips and storage. Apple shares now 4.5% lower. Also want to throw this in there for you. Blue Owl Capital in advanced talks now to buy a minority stake of the NBA's Cleveland Cavaliers. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Intelligence with Alexis Christophorus and Paul Sweeney.
Amy Mars, thank you so much. We appreciate that. Alexis Christophorus sitting in for Scarlett Fu today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. As Amy is just reporting, I got some red and green on the screen here today. Let's take a look at some of the stocks on the move today. We can do that with Bloomberg's Avalon Purnell. Avalon, what are you looking at today?
We have to start off with Micron, that's ticker MU, currently climbing about 11%, though earlier today it did touch a record high. And that's after the memory chip maker gave a stronger than expected outlook for the fiscal fourth quarter. Wall Street was really looking for Micron to bring more assurance for the AI trade, and it seems like it succeeded. It even got an upgrade from Erste Group, who said that the stock is still reasonably valued despite its recent bull run.
All right, let's talk a little Dell, because sort of below the radar here, but the stock's getting hit today, and it's one of the biggest losers, right, for the S&P 500.
You're absolutely correct. That is ticker Dell, currently sliding about 7.4%, making the company, as you said, one of the worst performers. And that's after GF Securities downgraded the computer stock to hold from buy. At issue is the more than 200% rally since Dell reported fourth quarter results in February. The analyst, Jeff Poo, sees limited upside for Dell now, given those really elevated expectations. And he also says it's potentially just an uncompelling risk reward right now.
Okay, what do we got? Techni?
Yes.
Okay.
Not a name that we mentioned.
No.
Yes, that is ticker Tech, and you're probably not going to hear it that often anymore now that it has been bought by Merck KGaA. That is the German Merck, not the U.S. Merck. It's currently surging about 19% most intraday since 2024, and it was purchased for about $11.3 billion. This acquisition will help to expand Merck's life sciences franchise, and what is kind of important, though, is that the Wall Street remains very split about this. William Blair views the valuation as a bit disappointing, but says that regulatory risk may have complicated other bids for this company. Still, others are saying that the portfolios are very complementary, so it could be a good fit.
It's the largest acquisition for Merck Germany in like a decade.
You're absolutely right, yes.
So I tell you, in that healthcare business, the pharma business, lots of M&A activity.
For
Avalon,
sure.
thank you so much for joining us. Avalon Purnell, equities reporter for Bloomberg News. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Let's talk some technology here today, because we had a nice print from Micron last night, as Avalon was just talking to us about, and that was been good for that. Good for the AI story a little bit, which is, I think, just as is natural, I think, people asking questions, have we gone too fast, too far, that type of thing. Mandeep Singh joins us here, Global Tech Research Head at Bloomberg Intelligence. Mandeep, what did you make of the Micron Technologies earnings last night?
I mean, whenever you see 70%, 60% quarter-over-quarter price increases, that tells you everything from a gross margin standpoint. And a company like Micron going from negative gross margins, just 5 or 6 quarters back to now 85% gross margins. It's like as cyclical as it can get, but it just goes to show that we are in an environment where the supply is really constrained and everyone wants more memory. And, whether you're a device maker or you're a cloud player, you want more memory, you're willing to pay up for that in the spot market, and that's why you're seeing these kind of prints. Is it sustainable? No, but for now, I think they will continue to see very strong tailwind from a pricing perspective.
Is that a Micron story, though, Mandeep, or does it go further out in the industry? Is their report, in essence, easing concerns here about the AI trade?
No, look, there are 3 players, and that's where, when I go back, even 30 years with the Windows cycle, it wasn't the case with the cloud buildup. During the time of cloud buildup, there were still 3 players. But if you go back, 30 years, during the Windows buildup, we had about 20 players who used to sell, memory. And after that cycle ended, and it did peak, we came down to almost 3, and we have had 3 players for the last, almost 2 decades. So clearly this market has consolidated in a big way because of the boom and bust, going back to that Windows cycle. And that's where, these players do have an advantage, because it's an oligopoly that determines how much supply we are going to grow, how we are going to go about that capacity expansion. And that's why, this is going to be a lot more slow than what people anticipate in a normal environment where demand is off the charts, but you're just not adding supply. And that will remain the case for a while.
So earlier today, Mandeep, Tom Keenan and I were talking to Bloomberg Intelligence semiconductor guy Jake Silverman. And I told him that you threw him under the bus yesterday, saying that these chip makers should have known this demand was coming and planned for it. When is the semi industry going to get its capacity to a point where it can meet demand, do you think?
I mean, look, right now, all the hyperscalers have to raise capex for 2027 simply because memory is very expensive. It's not going to result in more data centers being added just because all of them have to pay up for memory. They have to pay up for GPUs. And so that's where, you know, at some point, there will be demand destruction. It'll probably happen more on the consumer side first. But clearly, even on the data center side, I think there will be a point where you will see demand destruction because the prices will remain elevated for very long.
Mandeep, we have to talk about Apple because CEO Tim Cook warned us this might be coming, and here it is. They raised prices today on Macs, iPads, home devices, the Vision Pro. I do want to point out they did not raise prices on the iPhone, Apple Watch, or AirPods, though they say there are hints that could come possibly in September. But how big of an increase is this? Because one has to wonder when a company like Apple starts talking about needing to offset costs and pass them along to the consumer. You wonder what that means for the rest of the consumer tech industry.
Yeah, I mean, look, everyone will get tested on their pricing power when it comes to, these hardware OEMs. And especially on the consumer side, there are some companies that do have pricing power, such as Apple, but there could be others where they may have to absorb these higher costs. And that's where it'll be interesting to see, what happens with the likes of AMD, Intel. Maybe NVIDIA does a better job in terms of handling their supply chain and locking these long-term agreements. But there will be ripple effects in terms of these higher memory costs and what it means for the margins of some of the hardware makers.
Mandeep, why is Microsoft down 20-25% this year?
Same thing. Everyone knows that they will be increasing their capex in 2027, and it will be at least a 40 to 50% increase in capex, not because they'll be adding more data centers, but because of memory costs. And in the case of Microsoft, because they don't have their own LLM, everyone is questioning what is the ROI now, because OpenAI is also available on Amazon AWS, so that exclusivity has gone with OpenAI, and there are a lot of concerns being raised about what happens to Microsoft's on-prem business because of what's going on with just AI adoption right now.
All right, Mandeep, thanks so much. Appreciate it. Mandeep Singh covers all the technology stuff for Bloomberg Intelligence. We can ask him hardware, software, anything. He does it all, so that's good stuff. This Independence Day, folks, join Bloomberg this weekend for a special live show from the Intrepid. David Gura, Christina Ruffini, and Lisa Mateo will be celebrating America's 250th birthday all morning on the deck of the Intrepid, right on the Hudson River. Watch and listen live on Bloomberg Television, Bloomberg Radio, and Bloomberg Business app. Saturday, July 4th, starting at 7 a.m. Eastern. I know you're a New York City gal. You've been to the Intrepid, I'm sure.
I've not only been there, I have slept on the Intrepid. There was a camp out with the Boy Scouts. It was so much fun. It's an incredible place and great museum. And I mean, you can't beat the location right there on the Hudson.
Yeah, it's great. So again, people that are in the city looking for something to do, go to the Intrepid. Very, very cool tour.
And a patriotic thing to do with that.
Exactly right. And there's actually a submarine right next to it. You can tour that.
Very cool.
As well. So all going on at the Intrepid. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:21 on Wall Street. I'm Amy Morris. The Supreme Court has sided with Bayer, the maker of Roundup weed killer, blocking thousands of lawsuits alleging it failed to warn users their product could cause cancer. Bayer shares jumped on the news, now 18% higher. The Federal Reserve's preferred inflation gauge rose to a new 3-year high in May as gas prices peaked. PCE rose 4.1% last month from a year ago, the most since April of 2023. Take out food and energy, and prices were 3.4% higher from last year. Traders have pulled back on expectations for rate hikes slightly in the wake of the mild PCE print. Some disappointing numbers on personal consumption in the first quarter. Traders still pricing a quarter-point increase by the October meeting, but have reduced bets on a second hike in the first quarter of next year. We do check markets for you all day long here at Bloomberg. The S&P 500 is up 0.3%. NASDAQ down about 0.4%, and the Dow now up 1.3%. The 10-year Treasury yield at 4.37%. The 2-year yield at 4.1%. WTI crude oil now at closing in on $71 a barrel, and Brent crude is just over $74 a barrel. The U.S. economy grew at an annualized 2.1% pace in the first quarter, faster than previously estimated. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
All right, very good. Appreciate that, Amy Morris. It is Alexis Christopher sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio. Another red headline crossing the Bloomberg terminal. I'll bring it to you. Supreme Court lets Trump's DHS revoke deportation protections. So that is just out. That was something that we will have some more reporting on going forward. Let's get back to these markets here. We've got kind of a mixed day on the screen here as Amy was just reporting. Let's check in with Thomas Hanlon. He's National Investment Strategist, U.S. Bank Asset Management Group. He joins us from Minneapolis via that Zoom thing. Tom, it seems like this market is now, focusing really on the fundamentals, which have been really, really solid earnings here. There have been the black swan of the war in Iran and maybe some of the energy shock there. But by and large, this market seems to be moving and focusing on earnings. What are you looking at?
Hey, good morning, Paul and Alexis. Thanks for having us on. You hate to overuse the phrase Goldilocks, but that's kind of the environment we have right now, Paul. So, when you look at corporate results or the data, consumers are spending, banks are lending, businesses are borrowing and investing, and that's all turning into corporate revenues and 15% operating margins on S&P 500 companies. A lot of that's falling to the bottom line for earnings growth.
So what do you expect? I mean, earnings, I guess, are going to start unofficially July 14th when the banks report. But in general, what are you expecting to hear from the latest earnings reports?
Yeah, we'll get the start. We've had a kind of handful of companies like Micron and Darden so far this week, but the big news starts to come the second or third week of July. And obviously, we're going to look across the banks and see what's going on with consumer health, whether it's kind of spending or it's what's going on with their credit quality. And then we're going to get into tech spending and get into business investment. And we're going to look for those three catalysts to say, what does the second half of the year look like and what can 2027 look like? Can you grow into those 23% earnings growth expectations for this year and 16% for next?
How do you think about the allocations, stocks and bonds here, Tom? I mean, I can sit there and clip a coupon on a 2-year Treasury at 4.1%. That seems like a pretty attractive place to be.
Yeah, we've got Treasury yields at levels that people haven't seen for the last 3 to 5 years. But for our clients, we're kind of helping them with their long-term investment goals. We still think the orientation lends to own a little bit more stocks than bonds. We're targeting U.S. large cap stocks just because we think that's where the highest visibility and perhaps some of the buffer from the Iran conflict is. So a little more stocks than bonds. And within that bond market, the Treasury market, yields are attractive, but we think you can earn extra yield in places like mortgages that aren't backed by the federal government. Look at the consumer health, the homeowner health, home equity values. We think there's additional yield that you can capture there. And then the third part is, if you think about, look at the markets today, what's up, industrials, materials, the physical economy continues to do well. And that kind of triumvirate of AI investment, electrification, and bringing supply chains back close to home, that's kind of where we're looking across market opportunities for clients.
Tom, what about some alternatives to stocks? What do you like right now?
Yeah, we like something like, it's called global infrastructure. It's not a very well-known, sometimes people don't think of it as an asset class. Again, you get to own things like materials, industrials, energy stocks that really are participating in that physical reconstruction. You can't have a data center without access to electricity and water. You can't bring back, defense, production and manufacturing without having all the connectivity to the physical infrastructure. So we like to pair stocks and bonds with something more real asset oriented like global infrastructure. And then for clients that are qualified, we think the reinsurance market is still a place where you can capture additional yield. So that's another attractive non-traditional stock and bond place that we're helping clients orient towards.
Yeah, to that front, I'm looking at the Dow's up 750 points. Almost half of that is due to Caterpillar. Caterpillar's up 5.7% today, up 83% year to date, and up 182% trailing 12 months. So just an extraordinary performance by Caterpillar. Again, as it gets some of the tailwinds from AI. Brings us to the question, Tom, kind of what is your AI call these days? I mean, I guess initially most investors, we just kind of said, let's throw money at the chips, and that's still a good way to play it. But a lot of folks are thinking about some alternative ways to play the growth of AI in this economy. How do you guys think about it?
I think there's three ways you can own that, Paul. One is obviously the providers of AI services. Those are your mega cap tech companies. It's just you're having to evaluate those almost like oil stocks now because of all the investments they make. Doesn't make those bad investments, but perhaps it's just a different kind of investment that people are used to. And then you've got the picks and shovels, and that's everything from the semiconductors and the memory companies, but again, all the way down into the physical infrastructure that you have to build to make that happen. And then really how this pervades into the economy and the companies that use it and utilize it to improve their productivity, improve the goods and services that they supply and compete with other firms in their business lines. So the three ways is, the service providers, the picks and the shovels, and then the companies that adopt it and do well doing so.
Tom, thanks so much for joining us. Really appreciate it. Thomas Hanlon, he is National Investment Strategist at U.S. Bank Asset Management Group. Here, some more headlines, red headlines crossing the Bloomberg terminal regarding the Supreme Court. The Cook ruling likely next week. Supreme Court finishes opinions. The Supreme Court says Monday will be the next opinion day. So we'll have that for you.
We're also waiting for the birthright citizenship ruling to come down.
Yep. So
they're still busy.
Those are the two big ones, and they're saving them for last year. I'm looking at WTI crude oil up about 50 cents here, but it's just under $71 a barrel. Yesterday we traded some oil below 70 in the $69, $68 range. So a sharp pullback here. Question is, where do we go from here? Rob Barnett joins us, Bloomberg Intelligence Senior Energy and Commodities Analyst. When you look at Brent crude, Rob, it's $74. It's kind of erased most of the wartime premium here. How should we think about the price of oil going forward here? Has anything fundamentally changed since the war?
Well, very good question, Paul. So it is interesting that we have round-tripped the entire war premium that we saw after the U.S.-Iran conflict kicked off. But I would note that the oil price is still up about 20%, something like that, year to date. And the conditions at the start of the year were fundamentally bearish. The expectation was quite a bit of oversupply. And I think the market, now with the Strait of Hormuz reopened to some extent with some flows coming through, we do seem to be revisiting that mindset of oversupply. But I think the big question is, do we try to refill the inventories that we depleted over the last 4 months or thereabouts? So if your mindset is you got to refill the inventories, well, we're not an oversupplied market. If the inventories don't matter, then we are oversupplied perhaps here at the moment.
So talk to us for a moment about gas prices, because I think folks see this big pullback in crude and they're like, oh, I'm going to start feeling that at the gas pump. We're not really yet, right? I mean, the average is $3.91 a gallon, according to AAA. President Trump said yesterday he wants the Justice Department to look into why gas prices aren't falling as quickly and as robustly as we're seeing crude. Just connect the dots for us as to why it's not a one-for-one.
Well, it will be a one-for-one over time. There's just a little bit of a lag. So if you were to plot the U.S. average retail gasoline price against oil price, you're going to see a very tight correlation, perhaps with a week or two lag in between. And so I think that you'll expect that the gasoline price will follow the oil price very closely. And there's no fundamental reason that it shouldn't. So my expectation is that you'll see gasoline prices quickly follow what we've been observing in the oil market.
Rob, what do we know about the damage done to some of the infrastructure in the Middle East from the war and how that may impact supply coming out of that region?
Yeah, so there has been some reported damage, most notably to the Qatari gas export facility. So I think on the damage side of the equation, there's probably more of a story there to think about the global LNG, liquefied natural gas balance, as opposed to the oil one. Quite interestingly, at the start of this year, we were already in a supply excess situation. And when we look out into the second half and even out to 2027, one thing that perhaps wouldn't have been on your radar is that we may actually see rising output from Iran itself, which perhaps exacerbates the supply picture even more. There probably are some lingering questions about, well, how quickly can you get oil pumping and flowing from certain fields in Iraq, perhaps, or places like that. But I think those impacts will be pretty marginal. And unless there is sort of continued geopolitics, maybe a deal can't be reached, straight shuts down again or intermittently does. I think when you look out to 2027 at this stage, you would be sort of seeing an oversupply from a fundamentals perspective, but it all hinges on some of these geopolitical questions.
Reporting that you mentioned Iraq, and Reuters is reporting that Iraq is considering leaving OPEC if the oil producer group does not allow them to significantly increase oil production. How much of a blow would that be to OPEC in the 30 so seconds we have left?
Sure. Well, look, I think we already saw UAE exit OPEC earlier this year. They've signaled they intend to produce more. I think the coalition does seem to be fraying, and it's the cartel's ability to influence prices is clearly sort of they struggle with this idea of the individual countries wanting to maximize output. And so I guess if Iraq was the next shoe to drop in terms of OPEC, that perhaps wouldn't be that surprising at this point. And it lends to that idea that maybe next year we see an oversupply, especially if OPEC can't rein in production.
All right, Rob, thanks so much. Appreciate it. Rob Barnett, Senior Energy and Commodities Analyst at Bloomberg Intelligence, giving us the latest here on the global energy space. Again, WTI crude oil sitting just below $71 a barrel. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 10:40 on Wall Street. I'm Amy Morris. A Supreme Court ruling has shielded Bayer from tens of thousands of claims that its Roundup herbicide should have been labeled as a cancer risk, a ruling that will help end a decade-long flood of lawsuits that have cost the company more than $10 billion. Bayer shares now 17% higher. Consumer spending accelerated in May, even as prices rose at the fastest pace in more than 3 years, suggesting Americans are powering through the fallout from the Iran war. The Fed's preferred measure of inflation, the PCE price index, rose 4.1% last month from a year before. Excluding food and energy, prices were up 3.4%. More from Bloomberg's Enda Curran.
And the headline basis on month up 0.4, just a touch below expectations. So looking at the monthly numbers for PCE, either coming in line or a touch below, perhaps hinting at not as bad a story as some concerned, but
Bloomberg's Enda Curran. A separate report shows the economy grew by 2.1% in the first quarter, faster than previously estimated. Traders have pulled back on expectations for rate hikes slightly in the wake of the mild PCE print. Some disappointing numbers on personal consumption in the first quarter. Traders are still pricing a quarter-point increase by the October meeting, but have reduced bets on a second hike in the first quarter of next year. And we do check markets for you all day long here at Bloomberg. The S&P 500 is up 0.4%. NASDAQ is down about 0.25%, and the Dow is up 1.4%. The 10-year Treasury yield at 4.36%. The 2-year yield at 4.1%. WTI crude oil now just over $70 a barrel, and Brent crude is approaching $74 a barrel. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Intelligence with Alexis Christoforous and Paul Sweeney.
All right, Amy Morris, thank you so much. We appreciate that. Alexis Christoforous sitting in for Scarlet Food today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio, and we are streaming live on YouTube as well. EcoGo, ECO Go on the Bloomberg terminal gives you all the key economic data that gets released. It's a calendar. Yeah, 20 data points today came out. I mean, if you're an economist, today's your day. So that's why we checked in with Stuart Paul. He's a U.S. economist at Bloomberg Economics, joining us live here in our studio. Let's start with PCE, Stuart. I'm a headline guy. I don't like to peel back the onion. That's your job. I see the PCE year over year of 4.1%. That's not what the Fed wants to see. Talk to us about how you're viewing inflation these days.
Well, it's definitely not what the Fed wants to see. 4.1% is an inflation pace nearly double the Fed's target, right? But of course, we're already through the month of June where global energy prices have come off about 30%. And so the Fed knows that headline inflation is going to soften starting when we get the June data. I guess we get CPI on, July 14th. So in just a couple of weeks, we're going to start seeing some headline disinflation. What matters, I think, more now for anticipating where core inflation is going is what's going on underneath the surface, particularly when it comes to labor-intensive services and some critical core goods, things like furniture, electronics, and so on. We're starting to see some disinflation in those core goods categories. We're past peak tariff pass-through, right? That's really, we're a year past Liberation Day, right? And so a lot of favorable base effects are kicking in within core goods. Labor-intensive services price pressures also just really aren't there, which the Fed is going to appreciate. What we really saw today in the core is things like portfolio management costs pushing up core inflation. And that's really downstream of the equity market. It's interesting. And so when the Fed is able to, untangle all the different items within the core and see, well, it's really easy to explain what's putting upward pressure on the core right now. We know energy prices are going to put downward pressure on the headline, and the labor market spinning some sort of wage price spiral doesn't seem to be contributing very much to the core right now. All told, I think that the Fed can remain on a hold for a pretty prolonged period. They don't need to get ahead of themselves by hiking perhaps prematurely.
And also this report, because it's a May number, does not take into account the big plunge we've seen in oil prices.
That's right.
So I just want to
talk a little bit stale.
Talk to you about consumer spending, which we also got today, up 0.7%. That was stronger than expected, right?
It was a little bit stronger than expected. Most folks were looking at about a 0.6% increase for headline nominal spending growth. This is what's a little bit interesting, is that the April data were revised down just a hair. And so that sort of explains the upside surprise when you look at it in growth space. When we look at what was most interesting on the spending side, you would think that people would be pulling back, given that throughout the month of May, gasoline prices were still very high, about $4.50 a gallon throughout most of the country during the month of May. But spending was really broad-based during the month. You saw it across goods and services. Where there's an interesting dynamic is that core goods prices, as I mentioned, are fading, but volumes on the spending side are still pretty solid. So it seems to be the case that firms are becoming a little bit more discerning in what they're trying to experiment with. I think they recognize that they're not able to fully pass through some of the cost pressures that they've been facing. So to maintain volumes, price pressures in the core have been fading just a little bit, particularly in goods.
But you know, it's interesting that Apple in this environment decided to pass along those costs to consumers, saying today that they're raising prices on a number of different items. Not the iPhone yet.
Yeah, look, Apple is in an interesting space where just the chips shortage generally is something that they are unable to avoid. But when you look at something like furniture, these are big ticket items, these are interest rate intensive items, these are cyclically sensitive items, and they don't have chips where there's just a global shortage. You're starting to see a little bit of fading pressures on prices. You're starting to see a little bit of less pass through of those tariff costs. And so consumers are starting to look at those goods again. They're starting to load back up.
So again, we had the personal income up 0.7%. That was pretty strong relative to forecast. So and personal spending was up 0.7%. It seems like the consumers out there, they're employed, and they're spending money.
The consumers out there, they're definitely employed. I mean, it looks like we have, what, about 115,000 jobs added per month on average so far this year. When I look ahead to next week, we're probably going to see a pretty strong jobs number. When I look at high-frequency data, it implies something like 180,000 jobs added in the month of June.
Okay.
A really solid reading. So folks are definitely employed, and that's definitely been helping the spending outlook. The personal income numbers, the top line number, is kind of fake, though. That's 0.7% monthly growth.
Oh, man.
That 0.7% monthly growth includes a massive surge in payments to farmers under different federal programs. And so that
so that sort of inflates it.
Yeah, that headline number is a little bit inflated. When we look at labor income growth, which is really, you know, what's driving the consumer, it's still solid, 0.4% month on month. We're running at an annualized pace over the last 6 months. We're looking at an annualized pace of about 4.5% to 5%. That's a little bit too high for comfort, but it's not quite as strong as what the headlines would suggest right now. So what we are seeing is that consumers are out there, they are spending, that labor income growth is supporting spending. Beyond that, favorable wealth effects are supporting spending. And beyond that, elevated tax refunds up about 20% year on year. Those elevated tax refunds are also helping spending. So what the Fed really needs to do is sit back and think to themselves, is this cyclical strength that we need to lean against, or is this a series of idiosyncratic shocks that will eventually run out of steam? And I think that given the discord that we see on the committee, the divergence of views, they're just going to sit on their hands throughout this year.
All right, Stuart. All right, hey, you know what? Early this morning, I was talking to Andrew Cizarowski. He was in our studio. He's a bond portfolio manager for Morgan Stanley up in Boston. He's a crazy skier like you are. You guys should hook up, because I just do this groomed blue trails. That's how I roll these days.
Okay.
But these guys, they do the crazy,
fancy stuff.
The crazy stuff.
Yeah, Andrew's a good guy. I'm sure he's a great skier.
All right, you guys.
So you made a friendship today.
Would be happy to mix it up with him once we get snowfall.
Exactly. Stuart Paul, he's a U.S. economist for Bloomberg Economics, joining us live here in our Bloomberg Interactive Broker Studio. Again, just looking at the ECO Go function on the terminal. It's chock full of activity
today, right?
We have 20 data items across the tape. From
we didn't even talk about GDP.
I know GDP.
Durable goods. So much to talk about.
Yeah, initial jobless claims came in at 215,000. It's kind of where we've been. The consensus was 225, but that's kind of right in there. Economy is chugging along. That is for sure. Looking at the stock market here this morning, the S&P is up 32 points. The Dow is up 700 points. Thank you, Caterpillar. And the NASDAQ is down 73 points. WTI crude oil up just slightly, but still below $71 per barrel. More coming up. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, we got Alexis Christophers sitting for Scarlett Fu and Paul Sweeney. We're live here in our Bloomberg.
Are you eating a peanut?
No, I'm eating. This is my goldfish.
Oh, your
break.
goldfish. Yes.
At 10:35, I go for goldfish.
Mm-hmm.
And if they're not there, my day is ruined.
Oh.
I'm totally off the rails, but they were there today, so we're in good shape here. Earnings season. Let's talk about it. Micron Technologies came out with some numbers last night. Stocks up 12% today, but that's not the good number. The good number is year to date up 300%. Wow. Over the trailing 12 months, up 800%. So, and this is a $1.3 trillion market cap company, people. So there's some real money being made by investors here. This is not a pink sheet, which my next guest doesn't know what a pink sheet is, but it's not a pink sheet stock. Jake Silverman, semiconductor analyst for Bloomberg Intelligence, joins us here. What'd you hear from Micron last night, Jake, that's got the market pretty positive here?
Yeah, I mean, it's continued upward pricing momentum. All of that is, for the most part, AI driven. I mean, look, we've seen healthy PC smartphone demand, but that's not the real story, right? We're seeing hyperscale CapEx continue to grow at an incredibly high rate, and memory is becoming an increasingly large portion of that, but it's really on pricing. Demand is strong because of AI build-outs, right? We're shifting from an AI training or environment to AI inferencing, and that's just increasing the amount of memory that you need in these data centers. The memory intensity is going higher. But then we're also seeing longer-term contracts being signed by customers. Micron talked about 16 last night. $100 billion of revenue contracted, going all the way out in some cases to 2030.
Wow. So, of course, now the bar continually gets raised for a company like Micron. Was there anything sort of in the minutia of this report that, I don't know, is maybe a mini red flag for Micron or for the greater industry?
Yeah, so it's the interesting thing is, it's truly minutia, because I think Mark, the CFO, mentioned ASC 606 last night. Not something you typically hear on memory calls. But the interesting thing about this is they talk about floor pricing in some of these agreements. I think they have 25% of their revenue or bits contracted out. But they're talking about getting up to 50% or so of that demand getting contracted. Now, that leaves another 50% that isn't potentially going to get contracted. So when we start to see a downturn, the floor pricing on those contract agreements, they're talking about healthier margins than even the last cyclical peak, which would put it at, north of 60% probably, which is pretty...
So still an enviable position.
It's still enviable, but it's also a question mark is when does the downturn occur and what happens to the rest of the business that isn't contracted out? And, what are the margins on the floor pricing for some of those contracts anyway? It's all just, there's a lot of question marks and a lot of unknowns, and unfortunately we're just not going to really know near term what's going to happen. It's too far out because capacity in the industry just can't keep pace with demand.
All right, Micron, trailing 12-month stocks up. Micron, trailing 12-month stocks up 825%. SK Hynix, up 925%. Western Digital, up 980%. Seagate Technology, up 640%. Is there any way to differentiate between these companies, or do you just shut up and buy them all?
Well, so the thing is, SK Hynix, they have the capacity, they have a stronger HBM demand base because of the capacity and because of their history with NVIDIA than Micron. Micron has about 20 to 25% DRAM market share, a little bit lower on NAND. SK Hynix has that capacity base, Samsung has that capacity base, but also if you look at Samsung, they have tons of other businesses. It's just that no one seems to care as much about them right now because memory is doing so well. But they have a foundry business, they have smartphone, all sorts of consumer appliances.
I mean, they're all up in it.
And then you look at Western Digital and Seagate, and they're not even memory, they're storage. And it's hard to differentiate, but they have their own duopoly scenario going where they're the main players in that industry, and they're not increasing capacity either. And so you have several different dynamics all going around, but how do you really differentiate between Hynix and Micron and SanDisk? It's really difficult.
Did this report from Micron appease investors' worries about the AI trade, or is this going to be like a short-lived situation?
I think what it really did is, the reason I mentioned the floor pricing is because I think that was what investors wanted to know is, will these contracts get renegotiated and take step down pricing when the cycle starts to turn, assuming you still think these stocks are cyclical, which in my point of view, I still think that memory is cyclical. It's just that we might see some structural changes in the way that the pricing volatility changes. It might just be less volatile and maybe even actually elongated. But it also might mean that instead of having tens of billions of dollars of cash burn, you might not see any cash burn at all in the industry. It could be razor thin in terms of free cash flow. But yeah, investors, I think, are looking at this and they're trying to figure out, is this short-lived? Is this long-term? Are we going to actually see a real cycle play out? What's the length of that cycle? And I think the floor pricing and the more talk about contracts, how many customers, I think that starts to appease some of that anxiety.
Yep. All right, Jake, thanks so much. Appreciate it, bud. Jake Silverman, semiconductor analyst for Bloomberg Intelligence, joining us live here in studio. Of course, if I had my banking hat on, I'd be calling all these companies and say, let's go sell some stock. But they don't really need it. So for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research the next hour. Bloomberg Intelligence coming up in just moments. We've got the S&P 500 up 23 points. We got the Dow up 640 points. Almost half of that is Caterpillar having a good day. NASDAQ down 98 points despite the move higher in Micron Technologies. The NASDAQ 100, which is really the tech play, that's up 0.4% here. WTI crude oil slightly higher, but still below $71 a barrel. Gold sitting right around $4,000 per ounce. It was $5,000 just about 2 months ago, so a pretty significant pullback there. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
All right, folks, coming up in this hour, we have Alexis Christopher sitting in for Scarlett Fu. I'm Paul Sweeney. We're live in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Coming up, Michelle Kasky, Bloomberg News reporter on commuter delays due to the World Cup. Don't I know it? You can't get out of Penn Station on these game days. It is definitely a pain. If I were in charge, it would be different people. I'm telling you that right now. Qualcomm CEO Cristiano Amon, he's going to speak with Bloomberg Television anchors Ed Sullivan and Romain Bostic. We're going to carry that interview live around 10 minutes after the hour, give or take. Tiffany McGee, CEO and CIO of Pivotal Advisors, get her thoughts on these markets. And Michael Halen's going to join us. He's the restaurant czar. He covers all the restaurants for Bloomberg Intelligence. We got a lot going on. Darden shares fall. Is Wendy's a meme stock? When did that happen? So anyway, we'll have that. Plus, we're going to have a playback, a cool conversation that our own Matt Miller had with Ford CEO Jim Farley talking about the Ford company and the auto biz. So all that's coming up in this hour. Right now, let's head down to Washington, D.C. Amy Mars and a Bloomberg Business Flash.
All right, thank you, Paul. The Supreme Court shielding Bayer from tens of thousands of claims that its Roundup herbicide should have been labeled as a cancer risk. It is a ruling that will help end a decade-long flood of lawsuits that have cost the company more than $10 billion. Shares of Bayer now 19% higher. We've got more economic data. Micron's outlook lifting stocks. Checking those markets. We do it for you all day long here at Bloomberg. S&P 500 up 0.3%. NASDAQ down 0.3%. The Dow up 1.2%. The 10-year Treasury yield at 4.37% and the 2-year yield at 4.1%. Let's check out oil now. WTI crude oil is approaching $71 a barrel. Brent crude right at $74 a barrel. The Federal Reserve's preferred inflation gauge rose to a new 3-year high in May as gas prices peaked. PCE rose 4.1% last month from a year ago, the most since April 2023. If you take out food and energy, prices were 3.4% higher from last year. The U.S. economy grew at an annualized 2.1% pace in the first quarter, faster than previously estimated. Weekly jobless claims fell 12,000 last week to 215,000, another sign of a stable job market. Micron Technology shares now 13% higher after the memory chip maker gave a stronger outlook than expected. And Blue Owl Capital is in advanced talks to buy a minority stake of the NBA Cleveland Cavaliers. Sources tell Bloomberg the size of the stake is expected to be between 5% and 10%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Intelligence with Alexis Christoforous and Paul Sweeney.
Amy Morris, thank you so much. We appreciate that as always. Alexis Christopher sitting in for Scarlett Fu. Scarlett will be back on Monday. That's what people are telling me here. So we got red and green on the screen, as Amy was just reporting. Let's take a look at some of the stocks on the move today. We can do that with Maria Claracobo, crypto reporter, Bloomberg News Ecuador supporter. Maria, what are you looking at today?
Hey, thank you for having me. Today I'm watching Apple. That's ticker AAPL. Bloomberg News reported today that the company is raising prices of Macs, iPads, home devices, and the Vision Pro, and its shares fell as much as 5% today. The price hikes went live on its online retail store today, but the company did not raise the prices of iPhones, Apple Watches, AirPods prices, but it did hint at a future hike for prices for those items, and so they might be coming at some point as well.
Could be happening maybe in September, we're hearing. Because don't they have their event in September?
They do.
Another event in September. Okay. So, and some of these prices are kind of significant. I was looking at, was it the Mac, one of the Macs up by $200?
That's right.
That's big. That's big. Okay, let's talk about Trip.com. What's going on there?
Yeah, so that would be ticker TCOM, and their shares are falling today. The company reported adjusted earnings for the first quarter that missed analyst estimates, And the online travel agency also expects a slower second quarter revenue growth. I think this one's especially interesting because it gives us a read on how consumers are acting in today's economic environment.
It's funny because we had a guest earlier from Allianz and they have a report out on travel, and they said it's still bullish on travel here, but they should talk to the folks at trip.com maybe. All right, Wendy's, the home of the Baconator. I'm a huge fan. What's going on at Wendy's?
Yeah, well, I love their spicy chicken sandwich, so that's why I chose Wendy's. And that would be ticker WEN. And their shares are climbing today after rallying 26% on Wednesday. And we do think that a meme stock crowd is behind the moves. Retail trades piled into Wendy's on Wednesday after there was a post on Reddit's Wall Street Bets page that urged its members to save Wendy's before it's too late. So Wendy's is indeed becoming a bit of a meme stock.
All right, very good. I'll still go there.
Do you know one of their most ordered menu items? Hot and crispy French fries.
Really?
I haven't tried them, but I'll give them a shot.
If you like the spicy chicken, maybe that'll work for you.
Good combo.
I didn't know that was a thing. Okay, very good. We got some good stuff there from Maria Claro-Cobo. She covers all the equity markets for Bloomberg News. We appreciate that. For folks around the country, the World Cup is occurring in many, many cities across North America. Here in New York City, it's kind of a tough thing here to get people because you can't park at the stadium. So I don't know how people get there, but they get there through mass transit and some other means.
And I think they're paying through the nose to do it, too.
Yes, exactly right. So Michelle Kasky joins us here. She's a reporter for Bloomberg News. What are we seeing in terms of commuter delays at when World Cup happens? What are we seeing?
Yeah, this is definitely a situation where, first, thanks for having me on. And it's definitely a situation where if you're a regular New Jersey commuter, you really need to do your homework before you head out the door. Is there a World Cup match going on today? If there is, what does that mean for service? Because they do restrict travel out from Penn Station back to New Jersey for 4 hours before a match. It's only serving World Cup.
4 hours?
It's 4 hours. Sometimes they don't need to use that whole 4 hours, but many times they need that time to be able to get tens of thousands of people through, get them over to Secaucus, and then from Secaucus they get them to the stadium.
Has it been going okay thus far?
Knock on wood.
Okay.
Today there's a match. What is it? It's a 4 p.m. match, Ecuador versus Germany. This will be the fourth match at MetLife. The first three have gone okay. No major hiccups, no major meltdowns. And then the big one's going to be July 19th is the finals. Mm-hmm.
Yeah, I mean, I've been riding New Jersey Transit every day for 40 years. It's a pain. I mean, it is an inconvenience. I just can't get over. Yeah. I saw a tweet from New Jersey Transit, because that's the only way you get information, but it's a good social media. It works. We successfully transported 30,000 fans from MetLife Stadium back to 30,000 is nothing.
Right,
I mean,
on a daily basis,
how many people for 30,000?
But in a shorter period of time.
Yeah, but I mean, get on my train to, it's packed.
It's packed. It's
anyway,
people.
But again, has there been any pushback from riders like me, or do we just take it?
You guys are taking it.
Yeah.
Well, what's the choice?
You guys are taking. I think, they're really your choices are limited. Yeah. I mean, some people are alternating their travel. Either they're working from home more, like on match days, just work from home, or they take the path. New Jersey Transit buses are still running. Okay. But again, you're going to hit traffic with that. And also, I think it also helps people know that this is temporary. Yep. There are 8 matches total.
That's it. Mm-hmm. You know, can I just say, I mean, I'm just going to throw this out there. I'm sure they thought about it. But what if there were like trains just meant to bring people to and from the matches that came on designated times, and people either signed up to be on a particular train or something so that they wouldn't have to affect people like my friend Paul Sweeney?
It's you do need to have a special World Cup train ticket to get on New Jersey Transit to get to MetLife. And again, there's this designated window of time when you're supposed to get to Penn Station and catch your train. And then they just keep rolling out trains again to get over into New Jersey.
I was there the last match day. I left before that shut down, and it was Norway was playing. And so the Norwegian fans were all over the place, singing songs and chanting, and I was like, oh boy.
Did you see the rowing?
Yes.
They do the rowing.
I
I
saw
love
that
it.
in Penn Station. But, you know, I walked from the PATH station on 6th Avenue and 34th Street over to Penn, which is one block. They have 34th Street between 6th and 7th shut down, and they have the gates so to wind you through to get you there.
Just pedestrian
Yeah,
and
so, I mean,
to line up the
it's a good
the
system. I
riders.
think it's working, but and there's a little bit of
And
inconvenience.
it's not
but
just New York and New Jersey, though, right? I mean, to be fair, there are other major cities.
Absolutely.
Like, is Boston?
Boston, there are matches in Boston. A lot of folks from Scotland in Boston because there's been some Scotland matches there. Seattle, Houston, Dallas, Kansas City.
Lots of cities are dealing with
this. Yeah, it's when you get this many people, this many visitors in your town, it can be a hassle, it can be a headache, but it also brings in a lot of excitement.
Yep.
It brings in economic activity, so you got to live with it.
Yeah, I mean, a lot of people bash New Jersey Transit, but I've ridden it every day for 40 years, and it gets me where I need to go. 99% of the time, I get there.
And it's
safe,
on time? It's on
more
time?
or less on time.
Okay.
I mean, I don't know. What's the alternative? The only problem is I'm worried about my tunnels falling on top of me.
Oh, that's right. Yeah.
So the Gateway project, that worked out great. I mean, I ride that every day now, and that's a huge improvement. And they did that quickly. They built that thing quickly.
Yeah, Gateway, it's still going.
Yep.
You know, they haven't shut it down completely.
The bridge thing that they
the
completed.
portal bridge you're thinking of.
Yes,
absolutely.
They did a good
And
job.
again, that was another headache. I mean, regular riders needed to find alternate ways of getting back and forth between Manhattan, but you know, everybody got through it. It wasn't fun at the time. But again, you're saying it's better service afterwards.
Yep. All right. Very good. We appreciate that. So we'll all deal with it because we're New Yorkers. That's what we do. Michelle Caskey, she's a reporter for Bloomberg News. Appreciate getting that reporting. Right now, let's check in on Bloomberg Television anchors Ed Ludlow and Maine Bostic. They're speaking with the Qualcomm CEO, Cristiano Amon, and we'll go to that in just a moment when they're ready. But when you think about Qualcomm, there's a story right smack in the middle of the AI story. So let's go to this discussion. Qualcomm CEO Cristiano Amon with Bloomberg's Ed Ludlow and Romaine Bostic.
Yeah, very good. Happy to talk to both of you guys. Look, this is an exciting time, especially because we kind of upgraded our non-handset revenue as we've been diversifying the company from 22 to 40 and enter the data center market. And $5 billion in fiscal 27, it's a high confidence number that we have based on customer engagements we have right now. Most of the revenue is from custom ASIC engagement that expanded since the acquisition of AlphaWave. And you started to see in that revenue some of this innovative technology we came up for accelerators that doesn't require HBM memory is our high bandwidth compute. And as we keep executing on those customers, we're excited to see that revenue going to about $15 billion in fiscal 29.
I am curious, Cristiano, when it comes to those longer-term targets and the bridge between the short term, so what you have put out there for 2027, is there any sense, I know you haven't named the customers that get you over that bridge here, but is that going to fill the hole of that $5 billion based on the $1 billion that we already know is out there?
Look, the $5 billion, as I said, it's, I'll give you the composition. I think what I can say right now, I think, as you'd expect, a lot of those contracts are governed by non-disclosure. We have one large hyperscaler customer in the United States, one large hyperscaler customer in China, and then we have some other engagements that we had on a data center. That is all into the $5 billion. So the $5 billion it's a very high confidence forecast to which we have the customers, the capacity, the memory allocation, and everything. As we think about the engagement we have today, and also we talk about a contract that we have with Meta, also for 2 generations of the CPU, especially as we position ourselves for the agentic CPU opportunities, that those engagements are into the $15 billion number. For Qualcomm, as a new entrant, those are great numbers, but really, when you look at the scale, what's happened in the data center, You would imagine as we execute and we show our differentiation, there could be upside, but we're just, being focused on the engagements we have today.
I do have to ask, though, and investors seem pretty pleased with what they heard yesterday about you articulating this longer-term data center strategy. But I'm curious, I mean, you famously exited the data center business back in 2017, 2018, and I know there were a lot of reasons for that went beyond your operational control. But there was a lot of competition then. There's probably even more competition today. Why do you think you can get it right now compared to what it was 8 years ago?
Yeah, look, the circumstances, I think, when we started on the CPU, actually, I know people talk about data centers as a general term, but we started a long time with an ARM-compatible ISA CPU very early. There was a big software barrier. This was before AI. And, at the time, I did not, the market wasn't ready for it, only until later. So it was kind of probably the right decision for Qualcomm at the time. This is a different conversation. It's a different data center right now. This is about AI. But it's a valid question, right? So I will give you the same answer that I gave when we entered the automotive business, when we entered the industrial business, and everything that we have been doing to diversify the company. Those are fast-moving markets now, changing with technology. So where we really focus is not what the data center is doing today, but what the data center is going to be doing tomorrow. The data center is now moving to agentic. That's why you see CPU companies on the rise. You see demand on the rise. The data center is being disaggregated. It's not one single GPU that does everything. You have different hardware. And we're coming out with a comprehensive portfolio. We have a CPU. We have a new memory solution that is not a memory from the memory provider. It's actually been designed by Qualcomm that doesn't require HBM. We have a different accelerator for the disaggregated compute. And we have our semiconductor scale, which is good for custom ASICs. So that's what we're doing. If technology matters and you have fast innovation cycles, there's room for Qualcomm.
Bloomberg Tech live on Bloomberg Television and Bloomberg Radio all around the world, and we're speaking to Qualcomm CEO Cristiano Amon, and a big part of Qualcomm's story is custom silicon now, ASICs. You mentioned it a moment ago, Cristiano. Bloomberg reported on May 26th that ByteDance was one of those hyperscaler companies, and at the time Qualcomm didn't comment. How is that going to work? There is a distinction between an ASICs program and export of accelerator, which is your own name on it, within the current confines of the US export controls that are in place?
Well, we're still not commenting on it, but I'll tell you that like everybody else that has a significant portion of their data center revenues also with customers in China, there's a very clear set of regulations and specifications that you have to follow. And you should expect that Qualcomm is complying with those. And I think there's different types of products that are destined for China, and those are the ones that we are shipping to our China customers.
Thank you. The data center business is multifaceted. So ASICs, your own accelerators, and now CPU. But the market's in a place where NVIDIA or AMD, on an annual basis, bring a new generation of technology, right? And so the question that a lot of people pose for you, Cristiano, is by the time the accelerators come to market and the CPUs in 2028 and customers deploy them, will they not be obsolete? Is it not too late to kind of get into those markets when you look at the peers and how they deploy?
Absolutely not. Look, I get this question all the time, and I think if that was true, Qualcomm will not diversify from phones and enter the automotive industry, enter the industrial, into the robotics, into the broadband. And I actually believe it's exactly what I said before. I'm going to give you a simple answer. There are 4 vectors of differentiation of the accelerator. First of all, we know that power matters. If you look at the demand that exists in the data center right now, it's a demand that's going like this, and the energy available is like this. So it's perfect for Qualcomm because what we do is very power efficient. We design our technology always thinking there's going to be a battery on the other side and we're going to have efficient in power consumption. That's one vector of differentiation. The other one is what I said. We design for the future which does not have the memory constraint that you have today. We don't have to move a lot of data between the accelerator to memory, and that reduces thermal, reduces power consumption, and increases the memory bandwidth. And we don't have to use expensive HBM. We have the ability to do this at a much lower cost. Number three is we are coming in with very high density of transistors with our accelerator, and we're not a small company. I think we ship 40 billion components a year. We do more than 30 new chips per year on leading nodes, and I think we have the ability to execute. And if the data center is changing because of agentic, and the data center is changing because of disaggregation, there's an entry point for Qualcomm.
I am curious, Cristiano, particularly with Meta and Dragonfly, how confident are you that Meta will still be there in 2028 as a partner? And I ask that only not so much from the Qualcomm side, but Meta has sort of moved around a little bit with some of its strategies and how it's approaching AI. Is the agreement that you have with them, is that basically firm?
Look, two parts. Yes, we have a contract with Meta. That's why we talk about them as a customer for 2 generations, and it's very significant for our CPU. We have a very unique CPU. If you look at some of the metrics we provided, and I think we have a track record to have a good CPU. The second part of the question, I will never bet against Meta. You know, they have incredible first-party applications. They have a lot of data. They have a lot of data from consumers. They're well-positioned. We are on the early innings of AI. Anybody that believes right now that whoever the players are on AI, this is what is already defining. This is a decade long, and I think if what we learned something about the internet is technology is going to move very fast and the players are going to change. Right. I will not bet against Meta.
Cristiano, can I just jump in on Meta really quickly? What I find really interesting about it is the relationship was already there, right? Snapdragon in Quest. I've spent a lot of time down in Palo Alto on the Orion project, kind of looking at what's under the hood. How much did that existing relationship on the consumer electronics side get the win on the data center side?
Oh, it's 100%. Look, at the end of the day, this is not one-time relationship. We have built over a long period of time a strategic relationship. And what happened once you have those relationships in place and we have more products, you have the trust, you have the capability of execution. And by the way, this is also true what happened on custom ASIC. We bought AlphaWave. They have some engagements, but now they're part of Qualcomm. Qualcomm has broader relationship with some of those companies, and I think that just scale, and that's exactly what you're seeing.
Well, can I ask you a little bit about that? You mentioned AlphaWave. You've obviously, you have Ventana, you have the modular deal. You made a lot of acquisitions in a relatively short period of time. I guess my question is twofold. A, should we expect more anytime soon? And based on the acquisitions that you've done, have you actually already sort of integrated that into some sort of sellable product that's already sort of out there as one?
Yeah, 100%. Yeah. Look, if you look at our track record, right? So especially as I think about the diversification of the company. First was automotive. We bought Arriver, and that is now the stack that you see on BMW for highway autopilot. Mm-hmm. We bought Nuvia, and you see now our CPU showing up not only in PCs and phones and automotive, but now in the data center. Mm-hmm. We bought AlphaWave, and you see us now into the connectivity business and the custom ASIC business. And the modular acquisition is incredibly exciting. I actually don't think the industry investors really understand what that acquisition is. I think my prediction is people are going to read it 3 or 4 or 5 times, and eventually they're going to get it, which is an industry-friendly alternative that we're going to make it available upon close to everybody. So all of those things.
And that modular acquisition, Chris Latner, he's sticking around?
Absolutely. Yeah. That's why you can see, if anything, what you should see about this acquisition, by being an all-stock deal, it means that the founders are now fully vested on the future of Qualcomm. And I think that's another thing that investors did not understand. They asked me the question, why at this size acquisition do an all stock? It's because they're all now committed to the future of Qualcomm when we're connected together. So all of those things is part of us doing that. And to your question is, there are going to be some other acquisitions, but as we have been very disciplined, as we're building industrial, some of the acquisitions we did, Arduino with 33 million developers, would focus on industrial, Edge and Pulse. Now you see us doing data center. Future acquisitions are focused on data center and robotics, which is another area of investment for Qualcomm.
Cristiano, smartphone and AI PC is still there for you, right? And you'll be aware of the world that we woke up to this morning in memory with Apple raising prices as well. Has your outlook for the PC and smartphone markets changed or shifted at all for this year, next year?
That's a great question. I think you have to look at those markets very short term, and you need to look at this market so what's happening in the midterm. For the very short term, I think the whole world is dealing with this memory situation right now, which is not great. And I think I respect the companies kind of make choice to different industries, but then what happened is you don't have a demand problem, and mobile and PC, you have the memory availability and prices. I think what you saw the message from Apple. So we even expect, when we think about, for example, the Android market in China, I think when you think about year over year, when you look at 27, expect it to be flat to probably a down bias. And that has all to do not with demand, but with the memory situation. Right. But the other part's more interesting. There's a lot of clarity right now because of agents, how this market is going to change with AI. Very, very clear. And I think we see a lot of those phones now becoming, the customers of the phone is the human and the agents. And that is changing the architecture of the devices.
Qualcomm CEO Cristiano Amon and Bloomberg's Romain Bostick. Fantastic conversation. Thank you both very much indeed.
All right, there you go. Qualcomm CEO Cristiano Amon speaking with BTV anchors Ed Ludlow and Romain Bostick. Qualcomm stock up 3.7% today, up 20% year to date, up 30% over the trailing 12 months. So having a good run there. All right, right now let's get a little bit of a reset. We'll head down to Washington, D.C. Amy Morris for Bloomberg Business Flash. Amy.
It is 11:26 now on Wall Street. Thanks so much. I'm Amy Morris. The Bloomberg Business Flash now brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. Get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free. Go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. The Supreme Court has sided with Bayer, the maker of Roundup weed killer, blocking thousands of lawsuits alleging it failed to warn users the product could cause cancer. Bayer shares jumped on the news, now 19% higher. The Federal Reserve's preferred inflation gauge rose to a new 3-year high in May as gas prices peaked. PCE rose 4.1% last month from a year ago, the most since April of 2023. If you remove food and energy from that, prices were 3.4% higher from last year. We check markets for you all day long here at Bloomberg. The S&P 500 up 0.2%, NASDAQ down 0.5%, the Dow up about 1%. The 10-year Treasury yield at 4.38%, the 2-year yield at 4.11%. Oil erased pretty much all of its wartime gains after flows through the Strait of Hormuz ramped up following progress on a U.S.-Iran peace deal. WTI crude oil now at $71.50 a barrel and Brent crude just over $74.50 a barrel. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Intelligence with Alexis Christoforous and Paul Sweeney.
All right, Amy, thank you so much. We appreciate that. We've got Alexis Christoforous sitting in for Scarlet Fu today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio, and we're also streaming on that YouTube thing, and we're also streaming at Bloomberg.com. I think that's the internet here. So looking at the markets here, as we heard from Amy, kind of red and green on the screen, but this is a market that's been moving higher despite some of the crosswinds, headwinds out there. If you think about tariffs, the war in Iran, things like that, it just doesn't matter for this equity market. Let's talk to somebody who does this stuff for a living. Tiffany McGee, she's the CEO and CIO of Pivotal Advisors, joining us here in our studio. Tiffany, thanks so much for joining us here. What's the conversation you're having with your clients these days?
Yeah, I mean, well, like you said, the market continues to be resilient despite all the ups and downs and craziness and unpredictability going around in us. And so, earnings are holding up. A corporate, spending is really kind of being boosted by AI-related investment. So all those things are great. And I think that, one of the things that concerns me, well, first, I think an interesting point is that leadership is really broadening. Mm-hmm. So we look at emerging markets up almost 28% year to date. Also, value is outperforming growth with all this AI chalk, that's a little bit surprising. Up 16%, but it's outperforming in a really, really big way because growth is up about 4.5%. And then, small caps are really leading this year, up over 20%. So, and then we're also seeing sectors outside of the Mag 7 kind of contribute, like industrials and materials. So I think that that's a really good story, and that's the kinds of things that I like to see.
Mm-hmm.
But Tiffany, you say that if you own the S&P 500, you sort of think, oh, I'm good here, I'm diversified.
No.
Not necessarily the case.
Yeah, so U.S. equities are now over 60% of global market cap. So if you are in an S&P 500 index fund, which probably worked for you for the past several years, your portfolio is probably highly concentrated, and so that's really a big concern. Everything that we do, our clients are institutions, but everything that we do is based in asset allocation, and so portfolio concentration is really a big risk. And it's not just for the high net worth individuals out there, institutions out there. I'm thinking about the people that have 401ks and 403bs.
Yeah.
Also, traditionally, when you think about how those flows go, there's a lot of concentration in target date funds, kind of like the set it and forget it. A lot of those happen to be index funds. So, thinking about, doing things a little bit differently to kind of avoid that concentration is something that I would consider.
Talk to us about how do you do it a little differently? How do you offset that?
Yeah, so one of the things that I would do is, consider kind of rebalancing, but keeping region and country at the forefront, being mindful of that. Also thinking about investing in things like defensive equities. So defensive equities, we call them defensive equities. They're almost like liquid alts is another term, like a hedge strategy, but something that trades on an exchange, something that is very accessible to traditional investors. We use a company called Global, but it's really based on your risk tolerance, but it really works to kind of hedge that market volatility, and also using a core and satellite approach, coupling passive strategies and active strategies, using those active strategies to get into places where the index might be less efficient.
Mm-hmm. How do you think about U.S. versus rest of the world? Because when the tariffs did go on last year, we had a lot of folks say, kind of fleeing the U.S. markets, including the U.S. dollar, and going outside of the U.S. We've seen some of that come back. How do you think about the U.S. versus rest of the world?
Yeah, so again, everything that we do is grounded in asset allocation. So, and diversification for me, I always preach the gospel of diversification. Mm-hmm. So, we are still at Pivotal, have a high conviction when it comes to investing in the U.S. But again, as you start to think about diversification, again, I just mentioned earlier how well emerging markets are doing, and that's very related to that AI spend and that trend. But I think that you have to really think about your factor exposure and really make sure that you have a really well diversified portfolio. And I'm a big believer in people, in investors, especially new investors, really kind of thinking about this and doing their own research. But this might be a good time for people to talk to like a professional, because again, it's really you really want to make sure that your portfolio is diversified. And diversification goes far beyond just stocks and bonds and international.
Talk to me about how you are approaching the AI trade. Are they pure plays for you? Mm-hmm. How are you sort of getting exposure for your clients?
Mm-hmm. Yeah, so I think about this in kind of like three ways. So again, I love asset allocation and diversification. And so I think that there are these different phases of AI, right? And so I think that you have to own the creators, what I would call the creators, the builders, and the adapters. And so that first phase was the creators, right? Like the NVIDIAs, the Microsofts, Amazon, all of those, all the ones that we continue to hear about. Those are the companies that kind of built the foundation. But then they're like the builders, right? Kind of building the infrastructure of AI, which is equally as important. So like your Broadcom, your Vertiv, Eaton, Taiwan Semi, I think those are important too, to get exposure to that. But then that third phase is the adopters, right? So companies that are